Much awaited CA Interlaw exemption oriented mega marathon is here. Just wait a minute. Having resources alone doesn't give you marks. You have to utilize them properly. And in this introduction to marathon, I'm giving you instructions which you have to follow them. Then only you can score maximum marks. You can even score exemption. Trust me. First of all, this marathon is applicable to May 26, September 26, Jan 27 examinations. The total duration of this marathon is 26 hours. If you see my earlier marathons, my main focus is covering all the concepts. But in this marathon, I covered all the concepts. Before each and every chapter, I gave sections chart and I narrated a story to remember these sections also. And also, very recent examinations, very recent past 3 to 4 examinations, how ICA twisted the concepts. Yes, I decoded all the things. And I also gave some tips, how ICA is going to ask questions. See, most of the examinees fail because of surprise element in the examination hall exam paper. So that surprise you are going to bypass after listening to this marathon. Trust me. This marathon of 26 hours is divided into 3 parts. Part 1, Part 2, Companies Act. Part 1, 10.5 hours, weightage 35 marks. Part 2, 6.5 hours, weightage 35 marks. And Part 3, Other Laws and LLP, 5.5 hours, weightage is 48 marks. You can see here Part 1, Prospectus, Incorporation, Deposits, Charges, MGT, Dividends. Part 2, Share Capital, Accounts of Company, Audit and Auditors, Foreign Company, Preliminary. And Part 3, LLP, FEMA, General Clauses Act, Interpretation of Statutes. My suggestion, watch LLP and Foreign Company after completion of all other topics of Companies Act, because you'll find a majority of the provisions that are there in other chapters of Companies Act. Similar provisions you will find. These two are not a new concepts, they are just byproduct of all other chapters of Companies Act. So watch these two chapters after completion of all other chapters in Companies Act. Clear? And throughout this marathon, I used my master notes. You can download it in Shrestha website, Shrestha for CA and CMA. Just go through the free resources tab. Here, CA Inter, P2, Corporate and Other Laws, DV Subramaniam sir. Just click on it. You'll find my master notes, you'll find my question bank, and you'll find my running notes. Master notes. So this is of just 220 pages. All the important words were highlighted, technical words were highlighted, and after completion of each and every lecture, after completion of each and every chapter, go through my question bank. This question bank is compilation of all MTPs, past 6 attempts MTPs, RTPs, and previous examination papers. So once you finish watching the chapter lectures, if you go through the question bank, you will assess yourself to what extent you will gain confidence. Automatically you will gain confidence. If you are able to solve many questions, almost all the questions, your confidence levels almost will be good. And for moderate topics, I used my handwritten notes. This is my handwritten notes. You can download this from the same website. Clear? So master notes, question bank, and running notes. And sir, suggested speed for watching these lectures. My suggestion, standard speed is enough. 1 is enough. But if you are someone who are able to grasp concepts very quickly, you can watch them at 1.25 speed. But don't go beyond that. Why? Because at 1.5 or at 2, you will hear, but you can't retain the concepts for long duration. You may listen, but you can't retain them. And one more point, sir, directly I'll jump into one section, sir. I'll skip one section, I'll jump into another section. No, every concept is interlinked. Why? Because you see case scenario, multiple choice questions. So some mixture of 2-3 chapters they are asking, mixing some 2-3 chapters they are asking 3-4 MCQs. And most importantly, LLP FEMA General Clauses Act. LLP FEMA General Clauses Act. Compulsory case scenario questions are coming from this chapter. So don't take risk. Don't take this chapter's choice. Is it clear? So I wish you very, very all the best. Continue watching this marathon. Take care. So let's continue marathon with the next concept. Chapter 3, Prospectus and Allotment of Securities. Section 23 to Section 42. So total 20 sections we are covering in this chapter. First of all, what is the importance of this chapter? A company came to public and asking 500 crores money. You and I are common investors. But tell me, how can we trust company? What we know about the company? Tomorrow if company cheats us, what is the remedy we are having? So to build a trust between company and the investors, there is a single document, and that single document is nothing but prospectus. So in this chapter, we are covering the topics like what is meant by prospectus, various types of prospectus, and how lawmaker is going to protect innocent investors from the fraudulent companies. In case in the prospectus, if there is any false statement, wrong statements, incorrect statements, we call them as misstatements. So what would be the consequences? Who are going to get the punishment? And once, after issue of prospectus, after receiving application money, then what is the next step? Allotment of securities. So what conditions a company should satisfy for making allotment of securities? And between company and the investors, there will be a middleman who encourage investors to invest their money into the company. That middleman is none other than underwriters. So definitely they charge some remuneration. We call it as underwriting commission. For payment of underwriting commission, what conditions we need to satisfy? This is one part of the chapter. And there is another part of the chapter. The other part of the chapter is private placement. Sir, instead of going with this large number of regulations, instead of this heavy compliance cost, is there any simple route to raise money, sir? Yes, there is a simple route to raise money, but it is limited to 200 investors only. That we call it as private placement. So this chapter is of how many parts? 2 parts. Prospectus, private placement. In prospectus, you will find definition of the prospectus, contents of the prospectus, requirements of the prospectus. Getting it? Next one, types of the prospectus, misstatements in the prospectus. Next, allotment of securities. And finally, second part, that is private placement. So first we will see how to remember section numbers. So this chapter, prospectus, it is a key document in the capital markets. To raise money from the public, companies use this tool. So first of all, we are having 2 types of companies, right? What are the 2 types of companies? Private and public. Public company can raise money by offering its securities to the public at a large, by offering securities to the identified persons, by offering securities to the existing members. First one comes under public offer, which requires a document called prospectus. Second one comes under private placement, and third one comes under rights issue. Whereas private company will have only 2 options. One is from the existing members, that is under rights issue, and the second one is from the identified persons, that is private placement. So that is section 23. We completed section 23. Next one, section 24. Since public money is getting involved, there is a statutory body which monitor these kind of activities. That statutory body is SEBI, Securities Exchange. Yes, SEBI. So here SEBI is having some limited powers. And here companies are classified into 2 types. Listed companies, companies in the process of listing, and all other companies. So listed companies, companies in the process of listing for the purpose of issue and transfer of securities and non-payment of declared dividend. These 2 activities in the 2 companies. Which 2 activities? Issue and transfer of securities. Next one, non-payment of declared dividend with respect to 2 companies. Which 2 companies? Listed companies, companies in the process of listing are administered by SEBI. And these 2 companies, all other activities and all other companies, complete activities are administered by MCA via Companies Act 2013 and rules made thereunder. So this is like power distribution. Section 24 is about power distribution. Next one, we can see requirements of the prospectus and types of the prospectus. Requirements of the prospectus. First thing, contents. So what would be the contents of the prospectus? Contents is section 26. If you want to change these contents, what procedure we need to follow? That is variation of contents of the prospectus 27. 26 is about contents. Changing the contents is nothing but variation 27. And next one, offered security should be in demat form 29. Offered security should be in which form? Material form or demat form? Demat form 29. And advertisement of prospectus 30. So these are requirements for making public offer. Requirements to remember this section chart. Requirements of making public offer: contents of the prospectus, variation, offered security should be demat form, advertisement of the prospectus. Now coming to the types, we are having only three types of prospectus. But for section numbers purpose, I'm telling five. Easy to remember: DOSRA. D stands for deemed prospectus, that is 25. O stands for offer for sale, 28. S stands for shell prospectus, 31. R stands for red herring prospectus. A stands for abridged prospectus. So the missing sections 25, 28 and remaining types you can see 31, 32, 33 in the order. So what is 23? Public offer and private placement. What is 24? Powers of CG and SEBI. Clear. Next, what is 25? Deemed prospectus. 26, contents of the prospectus. 27, variation of the contents of the prospectus. 28, offer for sale. 29, demat form. 30, advertisement. 31, shelf. 32, red herring. 33, abridged. Next one, any fraudulent statement in the prospectus, we call it as misstatements. Then what would be the consequences? Criminal liability, civil liability. Civil liability, 5 letters. How many letters? Civil, 5, 35. Other than civil, criminal liability, 34. Next one, punishment to the defaulter, section 36. Next one, rights of the aggrieved party, 37. So here you can see for fraud, consequences, misstatements, criminal, civil, 34, 35. Punishment to the defaulter, 36. And what are the rights available to the aggrieved party? 37. And finally, securities. Here you just remember a biscuit company name, that is Parley G. P stands for personation. A stands for allotment. R stands for recognized stock exchange. And G stands for global depository receipts. So GDR is also one type of security only. So under securities, 4 sections we are having: personation, allotment, recognized stock exchange and global depository receipts. Clear? With this, 42 sections over. So simply, what is section 23? Public offer and prospectus and private placement. 24, 2 letters CG, 4 letters SEBI, powers of CG and SEBI. And 25, deemed prospectus. 26, contents. 27, variation of contents. 28, offer for sale. 29, demat form. 30, advertisement of prospectus. 31, shelf. 32, red herring. 33, abridged. Once over. 34, criminal liability. 35, civil liability. And what is the punishment to the defaulter? 36. Rights available to the aggrieved party? 37. 38, 39, 40, 41, about securities: personation, allotment, recognized stock exchange, global depository receipts. And finally, section 42 is private placement. So this is just overview of this chapter. Now we will see what is a prospectus. And when prospectus is required. So the definition: prospectus is any document described or issued as prospectus. Take any document for the time being. If the document contains name prospectus, then it becomes prospectus. So here the intention of lawmaker is to define the definition of the prospectus. The intention of lawmaker is, once a document becomes prospectus, then he will apply this chapter to that document. Any document is proved to be prospectus, then chapter 3, prospectus and allotment of securities, and rules made thereunder will automatically apply. So first of all, what is a prospectus? Any document described or issued as a prospectus is a prospectus, and includes. So 2 parts of the definition. First, means. Next, includes. Includes red herring prospectus, shell prospectus, deemed prospectus. So what prospectus means? It's a document described or issued as a prospectus, and includes 3 types of prospectuses. One is shelf, second one red herring, third one deemed prospectus. And deemed prospectus, very simple to remember, just CAN. Sir, what is CAN? C stands for circular, A stands for advertisement, N stands for notice. Any circular, advertisement, notice, if the purpose is inviting offers from the public. What is the purpose? Inviting offers from the public. Regarding what? Regarding purchase or subscription. Of what? securities. Then it becomes a prospectus. Easy to remember. See, CAN, circular, advertisement, notice, or any document. The purpose is inviting offers from public for what? Purchase or subscription of securities of a body corporate. Then it becomes prospectus. Once the document become prospectus, then we will apply chapter 3 and rules made thereunder. Clear? Sir, when this prospectus is required, sir, when this prospectus is required, whenever company is making public offer, whenever company is making public offer, prospectus is required. Then what is a public offer, sir? What is a public offer? Here also, public offer, there is no exhaustive definition about public offer. This is an inclusive definition. So here we are not defining the term public offer, but here we are covering the list of items covered by the public offer. So public offer includes IPO, FPO, OFS. So what is the difference, sir? IPO, after incorporation, for the first time if it is making public offer. After incorporation, maybe after 20 years or 30 years or 50 years. For the first time if they are making public offer, it is IPO. After IPO, every public offer will be treated as FPO. Clear? And what is this OFS, sir? What is this offer for sale, sir? You know, existing members of the company, sometimes if they need money, they will authorize company to sell their shares to the public. Sir, directly they can sell them, no sir. Directly they can sell their shareholdings, no sir. They are not selling 100 shares, 200 shares, 300 shares. They will sell 1 million shares. Imagine 1 million, that means 10 lakhs into 100 rupees, 10 crore rupees. Directly, readily, if a buyer is available, you know, under transfer agreement, they will transfer it. Getting my point? So, if the quantity is bulk, if the amount involved is huge amount, you know, these existing members will authorize company to sell their holdings. Now, that's what company is making an offer for sale of existing member securities. We call it as OFS. This is not a separate one. Under IPO or FPO, we will have two types of offers. One is fresh issue, two types of issue. One is fresh issue, other one is OFS. Getting my point? Very recently, Kalyan Jewellers, you know, I think 3 years back or 4 years back, Kalyan Jewellers made a IPO. It comprises of two offers. One is fresh issue, other one is OFS. Like existing members, promoters, they are offering some 400 crores worth securities. At the same time, company is also asking 800 crores money for expanding its business activities. Clear? So, because of fresh issue, company paid up share capital will rise. Getting my point? Whereas for OFS, in case of OFS, company will not get any additional 1 rupee. Company will give shares of the existing members to the public. Company will collect money and company will give it to the existing members. So, there will be no impact on the balance sheet because of OFS. Because of fresh issue only, balance sheet gets affected. Paid up share capital will increase. Are you all getting my point? Tell me. So prospectus, what is a prospectus? Any document described or issued as a prospectus is a prospectus. Includes shelf, red herring, deemed. Deemed prospectus means circular advertisement notice. The purpose is inviting offers from the public for purchase or subscription of securities of a body corporate. When prospectus is required, whenever company makes public offer, prospectus is required. What is a public offer? IPO, FPO, OFS. Next, section 24 already covered ma. Issue and transfer of securities and non-payment of dividend for the listed companies and companies in the process of listing, and all other matters are managed by the central government tribunal ROC. Clear? Only these two matters in these two companies are administered by SEBI. All other matters are dealt by CG. CG means MCA. How MCA will take action? By way of Companies Act 2013 and the rules. Next one, definition of securities. Just give one time reading. Here in securities definition, one point is important. Security excludes ULIP. ULIP. What is ULIP? Unit linked insurance policy. Remember blindly, security means tradable instrument. What? Tradable instrument. That means if I get it tomorrow, if I want, I can sell it. If I am able to sell it, that is tradable instrument. Tradable instrument is a security. If you take unit linked insurance policy, there is investment benefit as well as risk benefit is also there. If an insured person die, he will get compensation. Investment can be transferred, but risk benefit can be transferred. Are you getting my point? Suppose I took a insurance policy on my vehicle. You didn't took the policy, but your vehicle got damaged. Now can I transfer my policy? Can you claim money, insurance money? Can you claim it? No. So risk based investments, ULIP, unit linked insurance policies, they are not covered under securities. Getting my point? Only this one point you have to remember. Security excludes unit linked insurance policy. Securities do not include instruments providing combined insurance and investment benefits such as unit linked insurance policy. Next important definition, listed company. Important. Maybe May 2026 attempt 4 marks question might come on this definition. What is a listed company? Very easy to remember, ma. What is not a listed company? Difficult. What is not a listed company? Difficult. Observe carefully. A listed company is one that it has its securities listed on a recognized stock exchange. For the time being, we all know NSE, BSE. On any one stock exchange, if our security is getting listed, our company becomes listed company. Simple definition. But exceptions are very important. Exceptions. Certain companies are not considered as listed companies. Which companies? Public company, private companies. Public company that have not listed their equity shares. Equity shares listed or unlisted? Unlisted. What is the status of equity shares? Unlisted. But have listed their NCD. What is NCD? Non-convertible debentures, which were issued on private placement basis and getting traded on recognized stock exchange. Then it is also an unlisted company. Next one, non-convertible redeemable preference shares. First of all, preference shares cannot be irredeemable. Preference shares can never be irredeemable. Okay, so non-convertible preference shares which were issued on private placement basis and they were listed on recognized stock exchange, then also company is unlisted. Very, very important. Just answer my questions. Just answer my questions. Suppose there is a company A Limited. A Limited is having 3 securities, equity shares, debentures, preference shares. Equity, suppose equity is listed, Now tell me, A Limited, listed company, unlisted company? Straight away, listed company only. Straight away, no need to think listed company. Now look for the combinations. Next combination, equity unlisted. Debentures, convertible debentures. Which were listed on recognized stock exchange. Now also this is a listed company only. Suppose, sir, non-convertible debentures, sir. What is the nature of debentures? Non-convertible. Offered under public offer. Public offer is done. Now listed company, unlisted company. Now also listed company only. Sir, non-convertible debentures which were offered under private placement basis and equity shares are unlisted only, sir. Then that company is known as unlisted company. Getting the combination? Equity must be unlisted. Debentures, we should talk about non-convertible debentures and how that non-convertible debentures were issued under private placement basis. So the combination would be like this. The combination is unlisted equity plus non-convertible debentures which were offered under private placement basis. And even though they got listed, the company remains unlisted. Next combination, same, unlisted equity plus non-convertible preference shares offered under private placement basis. Even though these got listed, the company is still unlisted company. This too is for public company. For private company, first one, preference shares option is not available. Only NCD is available. Private company, only NCD is available. Getting my point? Everyone? So combination, unlisted equity. Equity should be unlisted. Non-convertible debentures offered under private placement basis, even though they got listed, company is still unlisted company only. So this is for both public company as well as private company, and this one is only for public company. That's it. So remember these points ma, which is listed, which is unlisted, very very important. Can I proceed? Yeah. Foreign listings ma, public companies, I'm talking about which company? Public company that have not listed equity shares on Indian stock exchange but whose equity shares are listed in foreign jurisdiction as specified under section 23 subsection 3 also remains unlisted company only. So here this is like a third type of security, imagine, or equity, I mean third type of security or equity shares only. Equity in India unlisted, but same share is getting listed in foreign stock exchanges, maybe Dow Jones in America, London Stock Exchange in England. So equity is getting listed outside India, but still that company will be treated as unlisted. Suppose if the same equity is listed in India, then it becomes listed company only. Can I proceed? So tell me, what are not listed companies? What are not listed companies? Public company, type of securities, equity unlisted, maybe debentures, NCD under private placement, preference shares, non-convertible preference shares under private placement. Even though these both got listed, it is still unlisted companies only. Whereas for private companies, only one security I'm talking, NCD. And public company, equity in India unlisted, same equity is getting listed outside India, then also the company remains unlisted only. Clear everyone? Next one, section 24 already completed. Prospectus definition over. Matters to be stated in the prospectus. Matters to be stated in the prospectus. Prospectus shall be dated and signed. To check whether prospectus is latest one or not, every prospectus should be dated. And this indicates date of publication. When it reached public, when it was given to the public, that is what date of the prospectus. It should be signed and it should contain information and reports on financial information as specified by SEBI in consultation with CG. So whatever information SEBI is asking, you furnish that information in the prospectus. Additionally, submit this information, declaration about compliance, declaration of compliance. Nothing in the prospectus is against to or inconsistent to Companies Act, Securities Contract Regulation Act, SEBI Act, and rules and regulations made under these statutes. You know, in one attempt, this first point was tested for 5 marks. Direct theory question, first point was tested for 5 marks. Dated, signed. Contain information specified by the SEBI. Contain a declaration which is not contrary to the being a company, Companies Act. Public money is involved, so SEBI Act. What is getting involved? Securities, so Security Contract Regulation Act. Next one, sir, prospectus is required whenever company makes public offer. But whenever company is not making public offer, prospectus is not required. So simply, if offer is made to the existing members, we call it as rights issue. In case of rights issue, prospectus not required. And for the shares debentures uniform with previously issued and quoted on a recognized stock exchange, this can also be tested. A tricky point. Sima, advertisement is needed for what? What product? New product or old product? New products. Already issued securities, you know, already offered securities to the public. In 2015, I offered securities to the public. That time, I got 97% subscription. So balance 3%, right now I'm offering. In 2026, right now I'm offering balance 3%. That means this 3% is belonging to a class which was already offered to the public, for which already I prepared a prospectus and I gave it to the public. Now offering this 3% of these securities, prospectus required or not required? Suppose along with this 3%, new class of security I'm bringing and I'm offering to the public. No prospectus required, 100% required. For old product, advertisement is not necessary. Similarly here also. Next one, filing with ROC before publication. Before you publish prospectus, before you give it to the public, file a copy of prospectus with ROC. It's not registration. It's just filing requirement. Registration means we need to wait for ROC confirmation. Whereas filing, we just file a copy and we can publish it to the in the open market. Next one, expert statement. If you want to include expert statement, these conditions to be satisfied. First of all, expert should be independent. That means he should not be connected to the company's promotion, incorporation, and management. And he must give written consent to include his statement in the prospectus, and such consent should not be withdrawn before filing with ROC, and a declaration by the expert should also be included. Express declaration. See, what is the need of inclusion of expert statement? You know, who is doing business? Directors. Who is preparing prospectus? Directors only. Then how can we trust prospectus? Unless an independent person express opinion on it. That independent person is here is nothing but expert. So to include expert statement, he must be independent, he must give written consent, and he should not withdraw that consent till a copy has been filed with ROC. Include all these 3 points in the prospectus. We complete these 3 points. Next one, prospectus is having a validity of 90 days. Prospectus is not having unlimited validity. It is having a validity of 90. Sir, why 90? Every listed company will present quarterly financial information. Will file quarterly financial information with ROC. 1 quarter means 90 days only. So 190 days is getting over means the information your prospectus contains is outdated. Whatever information your prospectus is containing, it is outdated. Come up with a new prospectus. So once you file a copy with ROC, it should be given to the public within how many days? 90. Disclosures. What are all the documents you are giving to the public along with prospectus? Just write a note of it. So along with this prospectus, underwriting agreement is there, expert consent is there, stockbrokers rating point of view, some documents we attached. Just you mention the documents attached, and a copy has been filed with ROC as per subsection 4. You mention these disclosures. Punishment for contravention, any non-compliance, like giving prospectus after 90 days, or giving prospectus to public without filing with ROC, or without prospectus if you are making public offer, or expert statement that conditions not complied but still you are including a expert statement. Any non-compliance, punishment, company 50,000 to 3 lakhs, and every person authorizing the issue of prospectus, namely directors, expert, promoters, the person connected with the prospectus will get same punishment. What is the punishment? 50,000 to 3 lakhs. Getting my point? So simply artificial person, company, and natural persons, nothing but promoters, directors, experts will get same punishment, 50,000 to 3 lakhs. Next one, issue of securities in demat form, section 29. So there is a difference between material form and dematerial form. What is the difference? Suppose the material in your hands is a material form, and the material that you can see on the screen is demat form. One simple example I'll tell to understand this topic. You need to pay 1 lakh rupees to your creditor. You bought items of worth 1 lakh from your creditor. You need to pay that 1 lakh. 1 lakh physical cash, one option. Second option, 1 lakh in bank account. You are in Chennai, your creditor is in Mumbai. Now which one is safe, secure and fast for payment? Money in the bank account, money in your hand? Money in the bank account. Just you can enter the beneficiary details, you can enter the amount, you can enter OTP, that's it. Amount will be debited and amount will be credited to your creditor account. And the other option is either you going to the creditor or creditor coming to you, which is a time taking thing, or you need to deposit that money with a post office. Post office people will take that amount. We used to have that concept long back, black and white days, telegram money order, that option is there. Right now no one is using it. So here, transparency point of view, when money is in account, transparency will be there. So where money is going, everything you can monitor, but money in your hands you can't monitor. So from income tax point of view, from Government of India point of view, capital gain calculation, you tell me, if shares are in material form, you are having shares and you are giving it to your neighbor or you are selling it to other people, you tell me, can government monitor this kind of transactions? Can government ask you to pay capital gain tax? No. But if shares are in demat form, every transfer will be recorded by your stockbroker. He will give that information to the Government of India. Government of India will compare with your, the details with your income tax return. If you are not paying money, government will come and ask tax. Getting my point? So transparency, safe security point of view, security should be in which form? Demat form. Everyone? So demat form mandatory to two companies, company making public offer and prescribed class of companies. So Government of India, central government is having power to prescribe some companies who can issue securities only in which form? Demat form. The company shall comply with Depositories Act 1996 and its regulations. So simple just one point. For example, I'm having money. I need to give that money to my creditor C. So we are having options called GPay, or PhonePe, Paytm, etc. So through this, I can easily send money to my creditor. Similarly, a shareholder, NSDL, CDSL, these are custodians of securities. What is the role of NSDL, CDSL? Custodian of securities. National Security Depository Limited, Central Depository Services Limited. These two are custodian of securities. And these shareholders are connected to these custodians through depository participants, namely Motilal Oswal, Jiroda, Carvi, 5 Paisa, Grow, Upstocks. All these are depository participants. They are like Google Pay and PhonePe. They are like Google Pay and PhonePe. Like, you know, in SBI I'm having money. How much balance I'm having in that account? So GPay, if I ask what is my account balance, GPay will tell that information. Similarly, Jiroda, Carvi, Motilal Oswal, all these are depository participants. They give us access to the NSDL, CDSL. So whenever I want, I can buy the shares. Whenever I want, I can sell the shares. There is a brief concept about demat form of securities. Clear? So other companies may means mandatory, optional, optional. Convert existing material securities in demat form, issue securities in physical form, issue securities in demat form. But only two companies, demat is mandatory. Which two companies? Companies offering securities to the public and prescribed class of companies. Who will prescribe? Central government will prescribe from time to time. Next one, advertisement of prospectus. Advertisement of prospectus, section 30. See, advertisement is not mandatory. Advertisement of prospectus is not mandatory. But if you decide to advertise your prospectus, then what would be the contents of advertisement is section 30. What section 30 is telling? If you want, you can advertise your prospectus, but that advertisement should contain following contents. Sir, what are the contents, sir? Simply MOA contents, ma. MOA contents. You tell me name, object, capital, liability, association, situation, right? On the top of the advertisement, you will see company name. Okay. Next one. What is the object clause of the company? O over. Liability of the members and the amount of share capital of the company. That means capital clause or liability clause over. Name of the signatories to the memorandum. That means association clause. Number of shares subscribed by the signatories. Nothing but association clause only. And capital structure of the company. Capital structure of the company means how much is the debt portion, how much is the equity portion. In FM, you have read about capital structure of the company, right? So debt portion how much, equity portion how much. Sir, what about situation clause, sir? Array, I told you on all official publications, 7 components should be there. Name, SIN, registered office address, telephone number, mail ID, website, and fax. So when you are giving the 7 components, one such component is registered office address. That means situation clause is also there. Getting my point? Advertisement is not mandatory, but if you want to advertise, these contents should be there. What are the contents? MOA contents plus capital structure. You remember like this, MOA contents plus capital structure. Over. Next, coming to the types of prospectus. Shelf. Tell me, what is the validity of the prospectus? What is the validity of the prospectus? Just now I told 90 days. From which date? 90 days from the date of filing with ROC. Remember that event date. 90 days from the date of filing with ROC. It's not date of publication. When you are filing it with ROC, from that date onwards, 90 days. Generally, students will be confused. 90 days from the date of publication. No. 90 days from the date of filing with ROC. Now, there are some companies, say for example, infrastructure companies. They need money to carry infrastructure activities, but they don't need money on day one itself. Say for example, some metro project is going on. Imagine that metro project is of 4 phases, north, east, west, south, like that, or you can fix area names also, but 4 phases. I can start phase 2 only if I complete phase 1. I can start phase 3 only if I complete phase 1 and phase 2. I can start phase 4 only if I complete 1, 2, 3. Getting my point? So for these 4 phases, the money I need is 1000 crores. Each phase 250 crores. Listen to me carefully. Each phase how much my requirement? 250. If I collect 1000 crores on day 1 itself, I can't use 1000 crores on day 1 because until I complete phase 1, I can't start phase 2. Getting my point? So I need only 250 on day 1. After 3 months, I need another 250. After 6 months, I need another 250. After 9 months, I need a last 250. So I decided to make 4 public offers. What Companies Act is telling? For each public offer, prospectus is required. Every public offer, if you are asking me to prepare prospectus, you tell me, is it a one day activity, preparation of prospectus, filing with ROC, making public offer? No, it takes a lot of time, and my expert team will work on it. Getting my point? My expert team will work on it. So lot of time and lot of money will be involved. So every time public offer, every time, if you're asking me prospectus, it is a costly thing. But on day one itself, collecting 1000 crores, I don't want, because 750 crores, 75% of the money will be idle. So what to do? Then lawmaker came up with a concept called shelf prospectus. Generally, prospectus is a non-durable product. Once public offer is done, next place it will go to dustbin only. But this prospectus, even though you complete one public offer, you can preserve it in the shelf. How long I can preserve, sir? How long can I preserve, sir? 365 days. That is nothing but 1 year. When you are making first public offer, from the first public offer onwards, this prospectus will be active, will be valid for the 365 days. So what is the validity of the shelf prospectus, ma? It will be valid for 1 year from the day of first public offer. Remember this point. When first public offer is made, from the date onwards, 1 year, this prospectus will have validity. See, I may issue self prospectus on 1st January 2026, but this date is not relevant. The relevant date is when I made first public offer under this shelf prospectus. Suppose I made it on 1st February 2026, then this prospectus will be valid till 31st January 2027. Suppose second public offer under this prospectus, I am making it on 1st May 2026. If you observe, 3 months completed. If you observe 3 months completed, during these 3 months, there may be some material changes. There may be some material information which was not there in the shelf prospectus. So that material information, like creation of new charges, changes in the financial position of the company, like nothing but balance sheet. Balance sheet we give as on date. So changes in the financial position and creation of any new charges that happened during these 3 months, we will give one document called information memorandum, which contains these two informations. So the applicant at the time of second public offer, he should read not only shelf prospectus, but also he should read information memorandum. Suppose third public offer, company is making on 1st August 2026. Now during this period of 6 months, whatever new charges were created, whatever changes in the financial position is there, these two information should be compiled in one document called information memorandum. So applicant should read shelf prospectus plus information memorandum at the time of third public offer. Getting my point? So in this shelf prospectus, only important point you have to remember is validity of 1 year from the date of first offer. Next important point I'll tell you, just wait. Yeah. Shelf prospectus allows company to issue securities for subscription over a certain period without issuing new prospectus each time. Shelf prospectus shall be filed with ROC at the time of first offer of securities, and for subsequent offers during the validity period, no new prospectus is required. So I told you 2 points are important. Shelf prospectus validity is 1 year, which will be calculated from the first public offer. From the first offer under that prospectus, yes, it will have a validity period of 1 year. And second important point about information memorandum, this 4C point. Remember this 4C point. So what all about information memorandum? It includes material facts about new charges, changes in the financial position of the company. And coming to 4C point, any applicant wishes to withdraw after the changes were made known, the company shall refund all the subscription money within 15 days. See, just now I told you example, under shelf prospectus, company decided to make how many public offers? 4 public offers, right? At the time of first public offer, our requirement is 250 crores, but we received applications for 300 crores. So how much amount extra we got? 50 crores. So the applicant told to the company, sir, next time allotment, next time offer is there, no sir, you please adjust our money in the next public offer. By the time of second public offer, managing director of the company resigned, or company created some new charges. So definitely this information must be known to the applicants, yes or no? So to these applicants, who deposited money in advance, applicants who deposited money in advance, they should be given one opportunity to withdraw. We should communicate the changes happen in the company. If they decide to withdraw, then company should refund that money within 15 days. So today I decided to withdraw. Within next 15 days, that amount should be returned to me. No adjustments allowed. Adjustments not allowed. Refund. Refund is compulsory. Within how many days? 15 days. Remember this time limit. So in the entire shelf prospectus, 3 time limits are there. One is 1 year from the date of first public offer. Second one is withdrawal option. How many days is there? 15 days. Once you decide to withdraw, within next 15 days, company should refund that money. And third limit, information memorandum shall be filed with ROC along with the fee before any subsequent offer of securities under shelf prospectus within 1 month prior to issue of a second or subsequent offer. In my example, I decided to make second public offer when 1st May 2026, exactly 1 month before. That means on or before 1st April 2026, I need to file a copy of information memorandum with ROC. Getting my point? Next, in one attempt, about shelf prospectus, question was asked by using these points, the highlighted point. Information memorandum filed with ROC along with shelf prospectus deemed to be prospectus. Please discuss. Getting my point? Straight away, direct theory question. Information memorandum filed with ROC along with shelf prospectus deemed to be prospectus. So comment. Now after reading that question, students got doubt. Deemed prospectus, that question he is asking, or about shelf prospectus he is asking. That doubt students got. And surprisingly, majority of the students answered deemed prospectus only, because deemed to be prospectus, right? So they wrote content of deemed prospectus. So fifth point equation is shelf prospectus plus information memorandum is equal to prospectus. Clear? Everyone? Shelf prospectus, 3 limits, just write in the margins. 1 year validity, 1 year from first public offer. Next one, withdrawal, refund within 15 days. Refund within 15 days. Filing of information memorandum. Filing of information memorandum 1 month prior to subsequent public offer. Subsequent public offer. You just write these 3 points. Entire shelf prospectus is over. Can I proceed? Everyone? So the next concept is red herring prospectus. Red herring, next concept is red herring prospectus. Then I'll come to deemed prospectus. So I think soft copy 1 or 2 pages got deleted, ma. I'll change it. Don't worry. I'll replace it. Don't worry. So shelf prospectus over. Next one is deemed prospectus. Next one is red herring prospectus. See, the beauty of red herring prospectus is, just a small example. I'll take an example of mobile. A mobile with some features. Say for example 50 megapixel camera, RAM 8 GB, storage some 128 GB, battery also some 3750, etc, etc. So if this mobile comes to the market, how much you are ready to pay? This kind of mobile, battery backup some 1 day, for example 1 day, camera 50 megapixel, and RAM 8 GB, storage 128 GB. So generally how much you will pay to this kind of mobile? Tell me one figure. 15,000. Okay, 15,000. Suppose if mobile company fix price of 25,000, will you buy it? Will you buy it? No. If mobile company fix a price of 5,000, will you buy it? Definitely you will buy it. In both the cases, either you losing the money or company losing the money. Getting my point? Suppose 25,000 case, if you see, no one will buy it. Company products are just waste. Getting my point? In case of 5,000 rupees, you are buying it, but company is losing some opportunity cost. If company fixed 15,000 rupees, company would have received how much extra for each unit? 10,000 rupees. So similarly, security is also having some parameters. Like, in FM, you know that capital budgeting decisions, IRR, PE ratio, price earning ratio, return on capital employed, return on equity. Do you remember all these parameters? So looking at these parameters, you are thinking, if this security is available at 110 rupees, we are ready to buy. Imagine if company fixes share price of 125. What you will think? A share is overrated, no need to buy. In that case, will company get minimum subscription? No. That means public offer is waste. If company fix price as 90 rupees, then everyone will buy. What public expectation? 110. How much company is receiving? 90. That means 20 rupees security premium. Company is missing or not? So when company is not sure about its price, company will not fix issue price and company will leave that matter to the market forces. Market forces means simply demand and supply. In perfect competitive market, you all know demand and supply will fix the price of the product, right? So here company will fix a price band like 100 to 120. Now interested applicants, what they will do? They will quote high prices. At what price company received maximum number of applications? Where the frequency is very high, company will fix that price. So this prospectus is incomplete prospectus. Incomplete with respect to what? Issue price. If I don't know issue price, I cannot fix either quantity of the securities or I can't fix total amount I'm going to raise from the public, because issue price into number of securities is equal to amount that can be raised from the public. If I don't know one factor, I can't calculate another factor. So that's why issue size, issue price, quantum of securities I'm offering to the public, I'll keep them blank. So basically what type of prospectus is this? Incomplete prospectus. Red herring prospectus is nothing but incomplete. We use red herring prospectus in case of a book building offer. So company will ask market forces to fix a price and company provides a price range like 100 to 120. Underwriters collect orders from the fund manager specifying the number of shares and price they are willing to pay. So after issue of red herring prospectus, company will fix a subscription period. By the end of subscription period, company can know at what price they received maximum number of applications. That means company can fix the issue price, company can fix the issue size also. So finally company has to prepare one more prospectus, we call it as final prospectus. So under red herring prospectus, total how many prospectus we will see? 2. One is incomplete, the other one is complete. We will see incomplete before public offer and we will see complete prospectus after public offer. So red herring prospectus helps companies raise funds by timing the issue and book building based on favorable market conditions. It leaves the price and quantity of securities open for decision after the issue closes. Red herring prospectus is a prospectus that does not include full details about the price, quantity of the securities to be offered. A company issue red herring prospectus before issuing final prospectus. Important point is time limit. Red herring prospectus shall be filed with ROC at least 3 days before opening of subscription list and offer. Section 26 prospectus should be filed before we go to public. Before publication, we file prospectus with ROC. Whereas red herring prospectus, 3 days before opening of subscription. You all know that big billion sale, right? In Amazon, Flipkart, big billion. So they will give 1 week prior notice. So Ramjan season or Ugadi season or, maybe Christmas season, Sankranti season, they will give intimation at least 1 week before. So here also, before you open subscription list, same like that offer period only, before you open offer period, 3 days before, file a copy of red herring prospectus with ROC. Time limit is important. In shell prospectus, what is the time limit for filing information memorandum with ROC? 1 month before public offer. 1 month before making subsequent offer. Here it is not public offer. Here the event is opening of subscription list. Before opening of subscription list, at least 3 days before, file a copy of red herring prospectus with ROC. It contains same obligations as prospectus. Difference between red herring and final prospectus shall be highlighted as the variations. After the offer closes, the final prospectus shall be filed with ROC and SEBI containing total capital raised, closing price of securities, any missing details from the red herring prospectus. These three will be highlighted in final prospectus. So that is all about red herring prospectus. Next one, abridged prospectus. See, this is not a type of prospectus. First of all, this is not a prospectus at all. This is just application form. See, generally prospectus will have 550, 600 pages. And roughly 1 week time period they will give for making an application. You tell me, investor point of view, is 1 week sufficient to read entire prospectus? And today, as per the data, as per the government sources, some 5 crore individuals are having demat accounts. If company wants to distribute one prospectus to each and every individual, 5 crore copies are required. Each copy how many pages? 550 pages. Imagine printing cost is 10 paisa only. So that means one copy of prospectus need 50 rupees. 5 crore copies into 50 rupees means 250 crores printing cost. Again courier charges. Imagine another 250. So next day headlines, because of printing cost a company became bankrupt or insolvent. Yes or no? So that means company point of view, printing cost, transport, courier charges not viable. Investor point of view, reading 550 pages document is also not viable. So thinking these two difficulties, lawmaker came up with a concept called fast track prospectus. So this will be around 25 to 30 pages which contains only material information, and this should be attached to the application form. So investor, before filling up that application, investor will go through the abridged prospectus. He will come to know about all the material information and finally he will sign the document. Getting my point? Sir, right now is this happening? In online, when you start filling up an application form, it will tell terms and conditions. Without reading, we will tick I agree to it. Yes or no? Sir, I didn't read, sir. It's your mistake. I don't know about this. Ignorance of law is not an excuse, right? So that's it. So abridged prospectus is like a fast track prospectus. It's a summary of the prospectus. Abridged prospectus helps to reduce the cost of publishing large number of prospectuses which must accompany application forms for shares or debentures in a public offer. A requirement: every application form, simply application form, shall be accompanied with abridged prospectus. So for easy understanding, SAP means security application form, and AP is nothing but abridged prospectus. Abridged prospectus is not required in the following 3 cases. Which 3 cases? Already these 2 cases we know. If securities are not offered to the public, then it is not a public offer. If it is not a public offer, prospectus will not come. If prospectus won't come, then abridged prospectus will not come. And offer made to the existing members. This is a rights issue. For rights issue, abridged prospectus required. First of all, prospectus are not required. And next one, agreements or advertisements inviting underwriters to enter into underwriting agreements. So if you are inviting underwriters to enter into underwriting agreements, for that advertisement also abridged prospectus is not required. Next one, if a person wants complete prospectus, he can request for complete prospectus, and it is the duty of company to serve complete prospectus to the requested person, or else company will be penalized 50,000 for each default. So in this section only 2 defaults will be there. One is giving security application form without abridged prospectus, that is one default. Second default is to the requested member if company is not sending abridged full prospectus. If any member requests for full prospectus, if company is not sending full prospectus, that is default 2. For each default, what is the punishment? 50,000 fine. Understood? No time limits in this abridged prospectus. Next one, deemed prospectus. In this entire concept, this second point is very, very confusing point. Deemed prospectus will come only when there is a deemed public offer. When there is a deemed public offer, deemed prospectus comes into the picture. and this is not a separate prospectus. First of all, in reality this prospectus will not exist. It is a precautionary measure. We had a rule, right? Prevention is better than cure. This is a preventive measure, precautionary preventive measure. I'll explain you one small example. Just suppose company, if it is offering securities to the public at a large, definitely it should prepare a document called prospectus. It should be filed with ROC. SEBI regulations will also apply. Correct? To bypass all these rules and regulations, simply to suppress them, what company will do? Company will try to enter into a contract with say for example mutual fund companies, Aditya Birla mutual funds, example Aditya Birla mutual funds. Why? Because these people will have public money only. So company will make allotment or agree to make allotment, either allotment or agreement to allot securities in the name of Aditya Birla mutual funds. In our concept, this is known as issue house. Technically we call it as issue house. So what is the intention of allotment of securities in the name of issue house? The intention is Aditya Birla mutual funds will sell these securities to the public at a large. Getting my point? Allotment happens in the name of issue house. And what issue house is doing? Is it holding the securities or selling the securities to the public at a large? Selling securities to the public at a large. Now if I ask company, where is prospectus? What company will tell? Sir, I allotted securities to only one person, identified person. This is a private placement. Prospectus will not come. If lawmaker go to Aditya Birla mutual funds and ask where is prospectus, what this issue house will tell? I'm not giving my securities. I'm not making allotment of my securities. See, I'm the member of the company. I'm the owner of the company. I'm having a right to sell my assets. So I'm selling those shares. I'm not making any public offer. So why should I give prospectus, or why should I file prospectus with ROC? So do you agree with issue house contention? Yes, issue house contention is correct. Company contention is also correct. But total plan is illegal. Why company is making allotment in the name of issue house? With a view to transfer all those securities to the public at a large. So to avoid such kind of cases, lawmaker came up with a concept called deemed public offer. My dear issue house, whatever offer for sale of securities you are doing with public, I assume it as public offer. It is deemed to be public offer. And whatever document you are giving to the public regarding the securities, I will assume it as prospectus, deemed to be prospectus. Now you tell me, who will issue deemed prospectus? Issue house. Issue house will give deemed prospectus. Generally, who will give prospectus? Company. But deemed prospectus is something will be given by issue house. That's why who will sign deemed prospectus? Who will sign deemed prospectus? If issue house is a company, deemed prospectus will be signed by 2 directors. If issue house is a firm, partnership firm or LLP, then deemed prospectus shall be signed by at least half of the partners. Not less than half of the partners means at least. That means if 10 partners are there, how many partners should sign deemed prospectus? 5 or 6? 5 only. At least means greater than or equal to. So 5 partners signing this deemed prospectus valid. So you tell me, for high commissions, do you think issue house will accept this kind of contracts? Definitely not. Understood? At the same time, lawmaker also observed some genuine cases. Genuine cases should not be punished. Only fraudulent cases should get punishment, not genuine cases. So whether this offer by issue house to the public, whether it is deemed public offer or not, for that 2 conditions lawmaker prescribed. Condition number 1, securities offered to public within 6 months of allotment, then it is deemed to be public offer. Or full consideration for securities has not been received by the company at the date of offer to the public. Full consideration has not been received by the company from the issue house. To understand this more, just one small illustration. See company C Limited what is our company? C Limited. Issue house is IH and second one is public. second one is public. So here, imagine allotment is 1st April 2026. C Limited is making allotment in the name of issue house when 1st April 2026, and issue house is offering the same securities to the public. If such offer happens within 6 months of allotment, say for example 31st August 2026 only they are making offer. Is it within 6 months or after 6 months or within 6 months? Then this is deemed to be public offer. For this, prospectus provisions are applicable. Sir, no sir, they are making offer on 31st December 2026, sir. That means within 6 months or after 6 months? After 6 months. Now, is it deemed public offer or not deemed public offer, sir? You need to understand whether issue has paid amount to C Limited or not. Suppose securities, total worth of securities is 1000 crores ma. Allotted securities worth is 1000 crores. As on 31st December 2026, issue house already paid 1000 crores, sir. Already paid 1000 crores. Nothing is left. Then it is not public offer. It is not deemed to be public offer. No, sir. By the time of public offer, they paid only 990 crores, sir. How much is pending? 10 crores. Even single rupee pending also, it is deemed to be public offer only. Are you all getting my point? Everyone, when offer is deemed to be public offer, either offer is made within 6 months of the allotment, or at the time of making such offer, company didn't receive whole consideration. That means even a single rupee is pending, whole consideration not yet received. Then in a reverse way, just to understand, in a reverse way, when that offer is not deemed public offer, very simple, offer should be done after 6 months. When offer should be done after 6 months, and by the time of making offer, whole consideration has been discharged. Simply this example, if you remember, offer is made after 6 months, and at the time of making offer, issue has already paid complete amount to the company. Then only not public offer, prospectus provisions will not apply. So genuine case, that is a genuine case. Understood, everyone? This is the only tricky point. Understood, everyone? So when offer is a public offer, either within 6 months or consideration is pending. When it is not a public offer, after 6 months and consideration has been discharged. Contents of the deemed prospectus, section 26 contents plus additional 2 contents. Sir, what are the additional 2 contents? Out of 1000 crores, 970 crores already received, sir. Sorry, 990 crores already received. Net amount received, and to be received 10 crores to be received. And time and place of inspecting contracts. There is a contract between C Limited and issue house, right? That contract document should be displayed for inspection. Now you tell me, will anyone follow this one? Will anyone follow this concept? Will the issue house take this much responsibility? Even if they take responsibility, will they tell to public, we are doing some cheating practices? So this is just a precautionary preventive measure. That's it. Reality, you won't find this. In reality, you will find section 26 prospectus, 31 shell prospectus, 32 red herring prospectus, and 33 abridged prospectus. And here, additional reading. Practical questions, case study point of view, practical questions. In examination, some case study questions will come from this additional reading. Already one question came. Public includes even a limited class of people. Like, if I'm giving offer to all the chartered accountants in India, all the chartered accountants, they may be how many in number? Some 4 to 5 lakhs. Small number only, no sir. But still, they are also treated as public only. See, any number greater than 200, any number greater than 200, it is deemed to be public offer only. Up to 200, it comes under private placement. Clear? Document marked for private circulation only, offered to a group of people, still counts as prospectus if it is given to the public at a large. Even though document contains for private circulation, but if it is given to the public, it is deemed to be prospectus. Single private communication does not qualify as an issue under the Act. Publicity is required to call it as prospectus, to call it as public offer. Private and confidential documents are not subject to the prospectus regulations unless made public. Same point, BD pointer, but reverse way. So confidential documents will not come under prospectus definitions. But if you are giving to the public, if you are making some publicity, it becomes prospectus. Clear everyone? Next, offer for sale. Already discussed with you offer for sale. In offer for sale, what happens? Existing members, existing members, maybe promoters, or venture capitalist. Promoters or venture capitalist will authorize company to sell their holdings to the public at a large. Now, whatever offer made by the company to the public, it is treated as OFS, deemed to be public offer. For OFS also, prospectus is required, because public offer definition, if you see, public offer includes IPO, FPO, OFS. So here, say for example, promoters, venture capitalists, they are offering 600 crores worth of securities to the public. So definitely company should prepare a document called prospectus. Preparation of prospectus, filing with ROC, filing with SEBI. Definitely costly things are, or free things are costly things. Imagine company incurred expenditure of 20 crores in this entire process. How much company incurred expenditure? 20 crores. Now who should bear this 20 crores is the question. And the answer is members who authorize company to sell their holdings, they should bear expenses. So at the time of refund of the monies, like public, they invested 600 crores they paid 600 crores to the company. Company will not remit 600 crores to the existing members. Company will remit only 580 crores. That point is important. See, members selling shares shall authorize the company to take all actions on their behalf for carrying out the transaction and reimburse any related expenses. In the OFS, third point is very, very important. And fourth point, in case of OFS, these three conditions will not apply. These three provisions will not apply. Which three provisions? Minimum subscription. First of all, this is not an allotment, this is a sale. So minimum subscription will not come. Minimum application value will also not come. And a statement by the directors regarding utilization of funds. They are not using this money for the business. They are just returning the money to the existing members. So that's why how they are utilizing the funds, that provision will also not apply. That's it. These 3 points. Clear? Everyone? So with this we completed 5 types of the prospectus. Shelf, that cheat code I told you, right? DOSRA 25, 28, 31, 32, 33. Deemed prospectus we completed. OFS, shelf, red herring, abridged. Next one, section 27, variation of the terms of the contract, objects of the prospectus. Before I make public offer, first of all, for making public offer, I had some necessity, right? I'm having some necessity, that's why I'm making public offer. For that necessity, I need 600 crores. For example, is this an actual value or estimation? See, company is asking 600 crores from the public to start a new business. Is this 600 crores estimate or actual figure? Estimate. Until completion of project, no one knows whether 600 crores is sufficient or not. It is just an estimate. Suppose the project was completed within 540 crores only. Company is having surplus funds of 60. So with this 60, company want to start a technology business, which is not there in the prospectus. Can they do so? Answer is no. Why? Company can utilize last rupee of public money only for the stated objects. Only the objects stated in the prospectus, for that objects only company should spend. 1 rupee also they can't spend for other purpose. But if they want to spend, then they need to comply section 27. See, prospectus is like a base document. It's a contractual document between company and the allottees. So if I want to change the terms and conditions, mutual consent of the parties is required. And here how much consent is required? Special resolution. And I need everyone participation. That's why voting shall be conducted through postal ballot. Getting my point? See, listed company shareholders, do you think they will live in only one city? No. You will find listed company shareholders throughout the India. It's not possible for some people to come to the registered office or to come to the AGM venue. So that's why voting shall be conducted through postal ballot. So here, before I call for a meeting or before I ask for a resolution, I need to give a notice. Along with the notice, I need to give an explanatory statement. In that, I need to give a justification. So that justification, like, original purpose, some manufacturing activity, total money raised 600, money utilized 540, progress on originally proposed objects 100% over, unutilized amount 60 crores. What is the proposed variation? I want to start some tech business. Justification, today everything is getting simplified through technology. So simply I'll give SWOT analysis, strengths, weakness, opportunities, threats, justification. Proposed time frame, maybe I can finish this one within 9 months. Clause wise details of the original objects. In prospectus, like original objects, you might have given some 2 pages paragraphs. So wherever you are seeking variation, each clause wise, variation, you need to publish. I mean, you need to give a text. Risk factors of the new objects, that's what SWOT analysis means. Any other relevant information for the members to make an informed decision, other material information. So purely this is all about what? For getting a approval from the members, we are giving complete information to them. Clear? Next one. The notice of special resolution shall be published in 2 newspapers. One is in English and the other one is vernacular newspaper, and notice shall be posted on company's website. This is important point, ma. Even with members approval also, company can't do one thing. Even with members approval also, company can't do one thing. What is that one thing? Investment in listed equity shares of companies. That unutilized amount, you can't use it for one purpose. You can't prohibit it. What is that one purpose? Investment in listed equity shares of the companies. The reason, if I don't mention this point, companies will artificially create speculation. Companies will artificially increase the prices. Getting my point? See, Reliance Industry got some money, some extra money. They're having some 50 crores. With that 50 crores, maybe Reliance Finance, Geo Finance companies, that Geo Finance company or some other companies, they may raise the share prices by creating some artificial demand. So speculation activities are not allowed, ma. Prohibition on speculation. If you want to make investment in your private subsidiary companies, you can do it. Subsidiary private companies or other companies, you can do it. But listed equity shares of listed companies, not allowed. Buying, trading, dealing in equity shares of any other listed company, not allowed. This is a tricky point, can be tested. They will narrate a beautiful story. One of the promoter raised a voice that he want to make investment in a listed company, listed equity securities. Since share prices are increasing, we can make a profit of it. Allowed or not allowed? Not allowed. Dissenting shareholders, special resolution means what? Votes in favor greater than or equal to 3 times of the votes against. Suppose I got 80% votes in favor, 20% votes against. Now with the 20% dissenting shareholders, what we should do, sir? Can we continue them? No, they should be given exit offer. And the important point is, who should give exit offer is the important point. If you tell company should give exit offer, it will come under buyback provisions will come. So company will not give exit offer. Only promoters or controlling shareholders will give exit offer. Also think logically, if company is giving exit offer for the 20% dissenting shareholders, 600 crores they collected. 600 crores into 20% means how much? 120 crores to be returned. Or a company is having idle funds of how much? 60 only. So how company can give exit offer? So remember this point, ma. Exit offer should be given by the, not company, but by the promoters or controlling shareholders. Can I proceed? Next one, misstatements in the prospectus. Here exception is very important. In misstatements, exceptions are very important. See, first of all, misstatement means it may be false or inaccurate statement, or it may be a misleading statement. Yes, here you can see the statement may be misleading, or that statement is wrong. So when we call a statement as misstatement, either wrong statement or misleading in the context. It's nothing but half truth, ma. I'll tell you two examples. One is, company is regularly paying dividend at the rate of 20%. It's true actually, but they are paying dividends from capital profits. That information they didn't mention. Are you getting my point? Company is paying dividends regularly at the rate of 20% out of capital profits, but out of capital profits is not mentioned. So that information is true, but misleading in nature. Is it a misstatement? Yes, it is a misstatement. Everyone, suppose companies is having a net profit of 5%, but they are telling it's 20%. Now this is a false statement. This is a false statement, either misleading in nature, or if it is a wrong statement, we call it as misstatement. Then what is the consequences for the misstatement, sir? Person will get punishment under section 447. Every person authorizing the issue of prospectus, namely all the directors, experts involved in that prospectus, promoters of the company, all people will get punishment under section 447. So I told you at the beginning of this chapter, what if public is getting cheated? What is the remedy? Very simple, 447 punishment. But two exceptions are there, very, very important. The statement or the omission was immaterial. The statement or omission was immaterial. For example, my company turnover is 699 crores, 90 lakhs 70,300 rupees. Instead of writing complete figure, I told company turnover is 700 crores. If you observe, there is a difference. Yes, some 9 lakhs 69,700 rupees difference is there. But is it material or immaterial? Immaterial. If I add another zero, zero has no value. If I add another zero, now this is material. Getting my point? Either prove that misstatement is immaterial or had reasonable grounds to believe that statement was true. For example, if you have watched Shivaji movie, imagine that project worth is 400 crores. 200 crores already Rajni sir is having. Remaining 200 crores he came to public and he collected money from the public. At the time of making public offer, Rajni sir had all the permissions. But when work is in progress, suddenly when there is a change in government, new government, what it did, it cancelled previous government GO and it told that project is illegal. Now you tell me whether Shivaji sir will get punishment or not under this section 34 criminal liability. Answer is no. Why? At the time of making public offer, whatever statements made by Rajni sir are completely true. But due to change in government policies, it became illegal. So either prove that there are reasonable grounds to believe the statement was true. If you are able to take any one defense, then you will not get punishment under section 447. So this is a criminal liability. It's not a matter of public loss. So here public loss is not a matter. If there is a misstatement in the prospectus, section 447 will come. And civil liability. Civil liability. Here public loss will be there, Public loss will be there. There is some loss to the public. Public believed that prospectus contained material statements and public believed that prospectus contained correct statement and they subscribed shares at 100 rupees. Total some 1 crore shares are there. Each share how much 100 rupee. When fake news came to the when original news came to the stock market, company gave some false statements in the prospectus. When that matter reached public, share price fallen from 100 to 30 rupees. Now on each share, how much is the loss? 70. 70 into how many shares? 1 crore shares. Total loss to the public is how much? 70 crores. This loss should be compensated. This loss should be compensated by who and who, sir? Company and every person involved in the prospectus, that is director, proposed director, promoter, expert, person authorized issue of such prospectus, maybe CEO, CFO, CS. Every person involved in the prospectus and company should compensate public loss. And their nature of liability is joint and several. Their nature of liability is joint and several. However, they can take 3 defenses. One is, sir, I withdrawn my consent from the prospectus before it was issued to the public. Before it was issued to the public, I already withdrawn my consent to the prospectus. I am not the one who was involved in this public offer. This is one defense. Second defense, without my knowledge, company issued prospectus. After becoming aware of this fact, I'm giving notice to the public. Don't believe that I'm the person involved in the prospectus. Give public notice. Or last defense is, I believed expert. Expert gave a statement. Based on the statement, I gave my opinion. Getting my point? Say for example, I'm a proposed director of the company. One chartered accountant or one registered valuer, he gave a report stating that this project is a positive NPV, net present value positive. Are you getting my point? Positive NPV, advisable. That's why I gave my consent to the prospectus. There is some miscalculations in that report, but I believe that expert. I believe the qualifications that expert possessed. So that's why I gave my opinion. Or else I wouldn't have given my opinion. Like that, if I take my stand, I will get exemption. Getting my point, ma? See, differences I will tell you. 34, 35 differences. 34, whatever fine you are paying, it will be credited to government account. Criminal liability. 35, whatever amount you are paying, that amount will be paid to the investors, suffered investors. Are you all getting my point, students? Everyone? Compensation you will find in 35 civil liability. Fine you will find under section 34 criminal liability. Exceptions are very, very important. There are total 5 exceptions. And remember, 34, 35 are not dependent sections. Like, you know, if 34 is coming, 35 won't come. Or 35 coming, 34 won't come. No, no, they are independent. Depending on the situation, 34 will come, also 35 will come. For example, there is no public loss, ma. There is no loss to the public. Now only 34 will come. Why misstatements in the prospectus? 34 will come. Sir, public are also at loss, sir. 34 criminal liability, 35 civil liability, both will come. And what are the 5 stands, ma? What are the 5 stands? First one, prove that misstatement was immaterial. Second one, had reasonable grounds to believe that misstatement was true. Third one, withdraw your consent from the prospectus. Fourth one, give public notice. Fifth one, believed expert. And you know, 2 times a question came there, you know, promoters of the company believed directors and gave opinion on the prospectus. Will they get exemption? Answer is no. Just give one time reading to this additional reading points. All these are case laws summarized into 2 to 3 lines. Like, you know, third one, if you see, statement about company's turnover was true only considering production capacity, but misleading if referring to the actual production level. Court held this as a misleading statement due to ambiguity. This is very simple, ma. You know, if you want to buy a bike, in advertisement, what they will tell, 80 kilometers per liter. What is the mileage? 80 kilometers per liter. But actual mileage would be 60, 65. If you ask them, they will tell, don't apply brakes frequently. Speed should be like 40 to 60. Speed should be fixed. Road should be smooth. You know, in that case, we need to buy that one, you know, treadmill. So you need to keep bike on it. Then you will get 80 kilometers per liter mileage. Lot of assumptions they will tell. So here also same, you know, actual production capacity and maximum production capacity both were given. Court held that this is a misleading statement due to some ambiguity. Can I proceed? Next one, remedies for misstatements in the prospectus. One attempt, you know, a question came from this topic only. Remedies. You tell me, if I obtain your consent by way of fraud, undue influence, misrepresentation, coercion, then contract will be valid or you tell me voidable. Voidable at the option of aggrieved party. Prospectus is also a contractual document. By furnishing some false or fraudulent statements, I am getting your consent. That means, is your consent free or under fraud? Under fraud. That means consent, you know, that means the contract becomes voidable at the option of aggrieved party, nothing but investors. So it's up to you what remedies are available to you. You know, you can treat that this is a misleading and you can apply for rescission. Rescission means cancellation. That means you will give back your shares and you will take back your investments. Effect of rescission, the agreement to buy shares is voidable at the option of subscriber. If cancelled, company will remove the subscriber from the register and return complete money along with interest and other incidental costs. Say for example, legal expenses. Compensation for damages from non-fulfillment of the contract can be claimed under section 75 of the Indian Contract Act 1872. Exceptions, when rescission is not available, important points. You know, for section 35 also these 2 points are applicable, ma. If you want to claim compensation, you must be allottee in the primary market. You must be allotee in the primary market. See ma, we are having two types of markets, primary, secondary. Every day we are seeing Nifty, Sensex market, share prices are going up, coming down. That is a secondary market. Public offer, prospectus, allotment, that is a primary market. That means there should be a direct contract between you and company. If you're a subsequent acquirer, that means what? You didn't got shares in the primary market, you bought it from the original allotee. Will you get any remedies? The answer is no. The answer is no. So you won't get remedies under section 35. You won't get remedies here also. So subsequent purchasers from the market cannot resign the contract, and subscriber to MOA cannot cancel the contract, because subscriber to MOA, he was already a member at the time of incorporation of company. So he can't claim, rescission because of misstatements in the prospectus. Everyone. So these 2 points are tricky and important. Subsequent purchases from the market. That means in the secondary market, the buyers will not get this remedy. Not only this remedy, but also 35 civil liability compensation benefit also will not come. And right of action for the damages. If misstatement amounts to the fraud, investor has a right to claim damages even if the company is in liquidation. There was a fraudulent misrepresentation in the prospectus, person intended to act on it, and person suffered the damages. And damages for deceit, nothing but fraud only. So deceit remedy is available under section 19 of Indian Contract Act. Same 3 points you will see prerequisites. So prospectus should contain misstatements, and you must be original allotee, and you must be deceived by that misstatement. Same conditions. Very, very, very simple. Just apply Indian Contract Act. When you know something, there is a fraud, you will be having two options. Either you can cancel the contract, or you can continue the contract by claiming the damages. Are you getting my point? Under section 35, you can continue the contract, but you can claim that 70 rupees loss. I told example, right? 100 rupees you subscribe the share, but share price fallen to 30. So 70 rupees loss you can claim, and you can continue. That is one remedy available to you. Or no sir, I won't continue at all. Then rescission is the next option. In case of rescission, you will get back your 100 rupees per share. Also, you will also get back some incidental amounts, like you filed a case, you filed a complaint in the court, that legal charges, and you suffered, you are under some mental stress, even that will also be compensated here. But to get these rights, 3 conditions. Prospectus should contain misstatement. You must be original allotee, and you acted on the faith of the prospectus. Getting my point? Sima, Paytm, if you remember Paytm, since listing, it never touched issue price. Paytm company share price, it was around some 1900, I'm not sure, some 2200 rupees, I think IPO price. Right now, Paytm share is getting traded at 1000 rupees. Straight away, how much loss is there? 1200 loss is there. But can investor get the 1200 loss? No. Why? Because prospectus didn't contain any misstatements. It's the market forces, demand and supply, made that price at 1000 rupees. So since there is no misstatement in the prospectus, you can't claim rescission, you can't claim compensation also. Clear? So with that, misstatements over. Next is 36. Punishment for the defaulter, I told. Punishment for the defaulter. So what is this section 36? Sima, if a prospectus contain misstatement, 34, 35 will come. That's why intelligent managing director, what he is doing, he is giving complete correct statements in the prospectus. At the same time, backdoor, he went to underwriters and he's telling, manipulate the brains of investors. You tell them our company will have a bright future. You motivate them to invest their money into the company. Now underwriters are creating some manipulation scenes. So you tell me now, who is the defaulter? Company? No. Why? Prospectus contain complete information, correct information. Then who is the defaulter? Stockbrokers, underwriters. So for the underwriters, what is the punishment? That is section 36. That is punishment under section 36. You can see here. Person knowingly, recklessly makes false, deceptive, misleading statements, deliberately hides material facts to induce another person to enter into agreement for acquiring, disposing, subscribing, underwriting securities to secure profit to any of the parties from fluctuations in securities value, for obtaining credit facilities from a bank or financial institution, will get punishment under section 447. Simply to remember this entire story, Harshad Mehta sir scam 1992 better. How he inflated share prices, you all know. Even recently released Lucky Bhaskar movie. Yes or no? Share prices rigging. Best scenario. What is the punishment to Harshad Mehta sir? 447. Sir, what is the punishment under section 447? What is the punishment under section 447? Let me show you. See, punishment under section 447. You need to check like this. Yeah, you need to check like this. Whether fraud involves public interest or not. You know, public interest affected or not. Because of Harshad Mehta sir, public interest affected. Satyam scam also, public interest affected. Then don't compare fraud amount with anyone, with any statutory limit. Don't compare. Punishment is fine minimum amount involved in the fraud, maximum 3 times of the amount involved in the fraud. End, it's not or, end. Imprisonment minimum 3 years, maximum 10 years. Speed okay na? Everyone? Yeah, okay. Imprisonment minimum 3 years, maximum 10 years. No sir, there is no public interest. Public is not at loss. There is no negative impact on the public. Now you have to compare fraud with statutory limits. Statutory limit is 10 lakhs or 1% of the company turnover, whichever is lower. I repeat, 10 lakhs or 1% of the turnover, whichever is lower. If fraud is greater than or equal to this amount, then same punishment, but imprisonment there is a change. Instead of 3 years, 6 months. Since public is at safe, since public is not at risky position, so imprisonment got reduced to 6 months. Same punishment, there is no change. So this is nothing but, you know, fraud with greater magnitude. This is nothing but fraud with greater magnitude. Others, this is nothing but fraud but lower magnitude. No public interest, sir. Public interest not affected, and that fraud is also small amount only. Small amount means how much? Less than 10 lakhs or less than 1% of the company turnover, whichever is less. In that case, fine up to 50 lakhs or imprisonment up to 5 years. Sometimes 1 plus 1. Both. Clear? See, public interest affected. Don't make any comparisons. These comparisons are not at all relevant. Right? Highest punishment. Sir, no public interest, sir. There is no impact on public interest. Then you need to make comparison. Is it a greater magnitude fraud or lesser magnitude fraud? Greater magnitude fraud, same punishment with reduced imprisonment. Lesser magnitude fraud, only fine or only imprisonment or both. 55. You can remember 50 lakhs, 5 years or both. Can I proceed? So with this one is over. These 2 points, tricky points. Wrongful gain means what? The gain from unlawful means that the person is not entitled to, not entitled to. Whereas wrongful loss means what? Loss from unlawful means that the person is legally entitled to. Observe the difference, ma. Gain not legally entitled, loss legally entitled. Example, this quarter company profits are very, very high. If this information reaches public, automatically current share price 80, no, it will go up to 150 rupees. So before we publish this information, MD, he is purchasing all the shares at current market price 80. And once price reached 150, he is selling them at 150 rupees. Now you tell me, because of this transaction, because of this insider trading, how much profit he got? 70. Is he legally entitled to do? You tell me, insider trading allowed or prohibited? Prohibited. That means not entitled, but he earned 70. That is wrongful gain. Suppose this time our results are worst. If market knows about our results, 80 will come down to 20. That's why he is selling all his shares at 80. When share price came to 20, he is buying them. So actually, if he is not doing it, he should incur a loss of how much? 60. But since he is doing insider trading, he is saving himself from this loss of 60. Actually, he is entitled to the loss, but he is skipping the loss. That we call it as wrongful loss. Gain means not entitled to. Wrongful gain not entitled to. Wrongful loss means legally entitled to, but he is not bearing that loss. Next one, ma. Section 38, punishment for personation. Personation is nothing but changing the identity. I think next month elections, right? next month elections. Do you know the concept of rigging? Vote rigging. Simply one person will cast some 100 votes, 200 votes, 300 votes. We call it as rigging. Or some people, what they will do, they will change their appearance and they will cast another vote. This is also like that only. This is also like that only. For example, one of my friend Amit Kedia, for example, his name. He filed one application in the name of Amit Kedia. Legal, no problem. He want more number of securities. That's why he is filing another application in the name of Kedia Amit. And another application with just Amit. Another application only with Kedia name. One person is entitled to file how many applications? One. But changing his order of names, he is filing application for, he is filing how many applications? 4. Because of doing this, what happens, one application, natural demand. 4 applications, artificial demand. When demand increases, automatically price of securities will go up. At the increased price, these people will sell the shares, and innocent public, they will think about increasing, prices are increasing, but in fact prices will not increase, they will come down. Now innocent public is at loss. So if someone is doing this kind of things, personation is nothing but changing identity. Personation means changing identity. Why he is changing the identity? To get more securities. Makes or abets. Makes means he is doing the crime. Abets means he is allowing someone to do the crime. He is allowing someone to do the crime. So filing application in fictitious name or makes or abets multiple application in different names, combination of the names for acquiring securities, induces company to allot or register securities in a fictitious name, then that fellow will get punishment under section 447. Then that fellow will get punishment under section 447. You can see here, any person will be liable under section 447. This content should be disclosed in the in the prospectus. In each and every prospectus, section 38 should be reproduced. And still, if that fellow is making a mistake, if convicted, court will order for disgorgement of any gain made by the person, seizure and disposal of securities found in the person's possession. Like, I got 10 crore shares at 20 rupees. Right now, 20 rupees, market price, it is 60. Right now, how much it is? 60. At 60, I sold 4 crore shares. So what is my gain? What is my gain? 40 rupees is my gain. 40 into 4 crores, 160 crores is my gain. This amount I invested in some land and buildings. Now court is having power not only to seize balance securities of 6 crores, court is also having power to seize this land and building which was bought using the money which he got from this source. Disgorgement of gains. Any gains he made, from that gains any property was created, court is having power over that property. And all these amounts will be transferred to which account? IEPF account. In dividends chapter, we had a point, refund of IEPF amounts. IEPF, what would be the debits? First one is refund of monies. Second one is distribution of discharged gain. So this amount first this amount will be transferred to IEPF. From there, the suffered investors will get some benefits. That's it. Clear? Next one, actions that can be taken by the affected parties, 34, 35, 36. It's a class action suit. If there is only one victim, he can file one case. But because of misstatement in the prospectus, do you think only one person will be victim or lakhs of people? Lakhs of people. Imagine some 5 million people. That means 50 lakh people got suffered because of misstatement in the prospectus. In the absence of this section, what happened, all these 50 lakh people will file cases. Now, how many cases? 50 lakh cases. When the subject matter is same, when the culprit is same person, and victims had same kind of suffering, why 50 lakh cases? All these 50 lakh people can file one case, that is nothing but class action suit. Because of this administrative burden, the pressure on the courts will be released. And court will not conduct separate inquiries. One inquiry commission is enough to complete this case. So that is what section 38 class action suit, class action, gift of the Companies Act. Clear? Next one, 39 conditions for allotment of securities. Two conditions are important. for allotment of securities, two conditions are important. One is minimum subscription and the other one is minimum application money. First of all, what is meant by allotment? What is meant by allotment? It refers to appropriation out of previously unappropriated capital of the company. Shares comes into existence only upon allotment. This will come only in fresh issue. This will not come in OFS. Why? In OFS, already capital was appropriated. See, according to this definition, allotment means first we will create a capital. Based on your applications, we are making an appropriation. It's like a cut. We are distributing this entire capital among you based on your applications. So appropriation of previously unappropriated capital is nothing but allotment. Who can make allotment? Board of directors. By passing board resolution, they will make allotment. And shares comes into existence only through allotment. For making that allotment, two conditions are important. What are the two conditions? One is minimum subscription and the other one is minimum application money. Minimum subscription means what? Generally, people will tell 90% of the public offer. See, that is not minimum subscription. Minimum subscription means amount stated in the prospectus as minimum subscription, but it should not be lower than 90%. As per SEBI rules, it should not be lesser than 90%. Suppose in prospectus, if I mention my minimum subscription is 97%, what is minimum subscription? 97%. If I mention 80%, then what is minimum subscription? 90%. Getting my point? If I fix 97, it will be 97. If I fix 80, then it will be 90 only, because as per SEBI, it should not be lesser than 90. And minimum application money, how much? As per Companies Act, 5% of the face value, but as per SEBI, 25% of issue price. Listed companies should follow which act? SEBI Act. So, as per SEBI Act, what is the minimum application money? 25% of the issue price. These two conditions company should satisfy within 30 days from the date of issue of prospectus. Which two conditions? Minimum subscription and minimum application money. Remember, see, this is day 0 ma, that is nothing but issue of prospectus. Issue of prospectus. Now by day 30, I need to fulfill minimum subscription and minimum application money. So I'm having how many days time limit? 30 days. If not, I need to refund. Sir, refund should happen within how many days? Within 15 days. Sir, within 15 days from day 30? No. Within 50 days from closure of subscription offer. Subscription list. Suppose I fixed subscription periods like this ma. 11th day subscription will open. 20th day subscription will be closed. Now 15 days calculation is not from day 30. 15 days calculation starts from 20th day. 20th day. Very simple. On 20th day itself, I know whether I received minimum subscription or not. So from that date onwards, within 15 days, I need to refund all the application monies. Let me read it. If minimum subscription isn't met within 30 days of issue of prospectus, the amount paid on application shall be refunded within 15 days from the closure of the issue. Closure of the issue means when issue period is getting completed. Subscription period when it is getting completed, from that date onwards within 15 days I need to return. So don't get confused like this, 30 plus 15. It's not 30, it's not 30 plus 15. 30 is for satisfaction of the conditions. 15 is from the date of closure of offer period. Can I proceed? In case company made a default, then interest at the rate of 15% per annum will be added. In the entire prospectus chapter, you will find 15%, 12% interest rates. Private placement, you will find 12%. Prospectus, you will find 15%. And interesting point, who will pay this interest? It's not company. Did directors in default or OID, officers in default. The people responsible for such default, they are liable to pay interest. How much interest? 15%. Under private placement, company will pay interest. That too how much? 12%. Can I proceed? And all application money shall be received in cash or through banking channel? Through banking channel. And it should be kept in separate bank account, section 40. And it should not be utilized until allotment gets completed. See, application money for each security shall be at least, yes, minimum application money, I told you. Once allotment, once you finalized allotment, return of allotment should be filed within 30 days in form PAS3 with the prescribed fees. In case of delay in filing, then what is the punishment? 1000 per day during such delay continues, maximum 1 lakh rupees. Okay na? In case of delay in filing, in case of delay in refund of the amounts also, this penalty will come. So what is the penalty? 1000 per day up to 1 lakh rupees. Return of allotment, here attachments you need to understand. So what attachments we will give? List of allottees, number of securities allotted to each and every allottee. List of allottees means name of the allottee, address of the allottee, occupation if any, and number of securities allotted to each allottee. What is the applicable form? PAS3. And what is the time limit for filing this form? 30 days. 30 days from the date of allotment. Additional attachments in this ABC tricky points. Suppose my company wants this property. The worth of this property is 20 crores. And company want to settle this consideration by issuing shares. So this is a allotment of shares or not an allotment of allotment. Whether company is getting cash consideration or non-cash consideration non-cash consideration. In that case, additional attachment is you need to give this land property document. Land property document you need to attach. Getting my point? So get a valuation certificate from the registered valuer, land and building. So 20 crores is the worth of security we are making allotment. Whether the building is also having worth of 20 crores. Attach the document. No sir. Suppose sweat equity shares. Do you remember sweat equity shares? Do you have any idea about sweat equity shares? For employees' efforts, to compensate employee efforts, we may allot sweat equity shares at free of cost. In return, we may get some intangible assets, intellectual property rights, which may not be available in documented forms. Now, lawmaker is asking, you make that contract, you execute that contract in writing. If at all stamp duties are applicable, pay that stamp duties as per Indian Stamp Act and attach that document. Also attach report from the registered valuer for valuation of the consideration. These are the additional attachments only in case of which consideration, you tell me? Cash consideration or non-cash consideration? Non-cash consideration. Can I proceed? In case of bonus shares, just attach members resolution copy. In bonus issue also, company won't get any cash consideration. There is also non-cash consideration only. Next one. Securities to be dealt within stock exchanges. Before making public offer, in the prospectus, you need to mention the stock exchange names with whom you filed an application. Suppose I filed application with NSE, I filed application with BSE. Now until I get approvals from these two stock exchanges, I can't make allotment. I can't proceed with allotment of securities. So technically, for making allotment of securities, 3 conditions I need to fulfill. What are the 3 conditions? Minimum subscription, minimum application money, listing on the recognized stock exchange. How many? It's up to you. You can file application with 1 stock exchange or you can file application with 2 stock exchanges. But if you are filing application with 2 or more stock exchanges, you need to get permission from all the stock exchanges with whom you filed an application. Suppose sir, I filed application with 6 stock exchanges. 5 gave approval, only 1 rejected. Now can I proceed with allotment? No. You can't proceed with allotment. Then what is the solution? Refund all the application monies. Refund all the application money. Until then, maintain all the application money in separate bank account. That money can be utilized only for 2 purposes: adjustment against allotment of securities or repayment of monies if company is unable to allot securities. And do you remember agreement in restraint of legal proceedings? Do you remember that agreement in restraint of legal proceedings? Valid or void? CA Foundation, Indian Contract Act. Agreement in restraint of legal proceedings. Void. Same point here also. If I impose any conditions on the applicants, so telling that even if I don't get minimum subscription, even if I don't get minimum application value, even if I don't get listing permissions, I'll proceed with allotment. You have no right to question me. If I put any conditions like that, those conditions stands null and void. And non-compliance punishment, company 5 lakhs to 50 lakhs, officer in default 50,000 to 3 lakhs. Non-compliance means before getting approval from stock exchanges, you are proceeding with allotment. Before making allotment, you started using application money. Next one, payment of underwriting commission. I told you underwriting commission is a reward paid to the underwriter for doing that mediation services. It's not only mediation, broker. This is what difference ma. Broker and underwriter. The difference is unsubscribed shares, underwriter will take. Underwriter will subscribe unsubscribed shares. So he's having more risk. Broker, he just provide mediation services like Paytm. It is providing a platform to the customer as well as business person. Getting my point? So underwriter is taking a risk of minimum subscription. So he is entitled to the remuneration. Now conditions. For commission, what are the conditions? First one, AOA authorization. Sir, AOA silent, sir. Then amend AOA. Section 14 is there, right? Alter AOA, insert this point. Next one, commission can be paid out of issue proceeds. This is source ma. Either issue proceeds or company profits or both. In the entire conditions, they never told that commission should be paid in cash. So that's why commission can be paid in cash, commission can be paid in kind also. We had two practical questions where one construction company paid underwriting commission in the form of giving flats to the underwriters. Is it allowed or not allowed? Answer is allowed, because underwriting commission, there is no condition to pay it in cash only. We can pay them in kind also. But source, either issue proceeds or company profits or both. Rate of commission, you can remember, right? For shares, how much? 5% or AOA rate, whichever is lower. Suppose in AOA, the rate mentioned is 3% ma. 5 or 3, whichever is lower. What is applicable rate? 3. For debentures, 2.5% or rate mentioned in AOA, whichever is lower. And you need to make a disclosure, with which underwriter you entered into underwriting contract. And what is the commission rate? What is the amount of commission? How many securities were underwritten by the underwriter? So everything you need to disclose. Most important underrated point. No commission is to be paid to the underwriters for the securities not offered to the public. As per SEBI norms, 20% of the public offer should be subscribed by promoters. Balance 80% only you can take from public. Now our issue size is 100 crores. Now can I pay underwriting commission, say for example 5% on entire 100 crores? The answer is no. Because risk of minimum subscription won't come from promoters. Promoters definitely will subscribe how much? 20 crores. There is no risk on this. Risk is with securities offered to the public 80. So 5% commission is restricted to securities offered to the public, that is 80 crores. If company pay commission on the shares not offered to the public, that is a non-compliance. Remember this point. So far not tested, but important point. Commission will not be paid on the securities which are not offered to the public. So in private placement, in rights issue, underwriting commission allowed or not allowed? Not allowed. A copy of commission contract shall be submitted to ROC at the time of filing prospectus. So with this, 95% of the chapter is over. We are left with only two small concepts. Private placement to GDRs. Private placement is small concept only ma. It looks big but small only. See what happens in the private placement. Company one side, other side identified persons. These identified persons, max to max how many? 200. While counting 200, 2 people are excluded. How many people are excluded? 2 people. Qualified institutional buyers and employees under employee stock options. So while counting 200, you need to check if qualified institutional buyers are there, exclude them. If employees are there, exclude them. And this count to 200 is applicable per security, per financial year. That means if company is having equity, debentures, preference shares. Now company can make private placement up to how many? 200. That means total 600. And this limit is not company lifetime. This limit is per financial year. So this year 200 equity members, next year 200 equity members, or next year 200 equity members. Allowed us, sir? Allowed. Or this year only debentures 200, equity shares 200. Allowed us, sir? Allowed. Getting my point? And this 200 limit is not applicable to NB housing finance companies, and just a second, housing finance companies and NBFC only. Yes, NBFC. This limit is not applicable to housing finance companies and NBFC. So regarding 200 limit, 4 points are there, ma. Who are excluded? Is it company as a whole, or is it company securities as a whole, or company 200 is applicable to all companies? One by one, 200 excludes two people, 200 is per security, 200 is per financial year, and 200 limit is not applicable to housing finance companies and NBFC companies. Sir, who will identify these persons, sir? Board of directors will identify them. Board of directors will prepare a list. Suppose they prepared a list with A, B, C, D, E, F like that. Now offer will be given to only A, B, C, D, E, F only. Sir, can A renounce this benefit to H? Can B renounce this benefit to his neighbor N? Can C renounce this benefit to his friend, for example, P? The answer is renunciation not allowed. If renunciation is allowed, this is not a private placement. This is deemed to be public offer. Sir, can I advertise this private placement document? If you advertise it, it becomes public offer. Publicity not allowed. Renunciation is also not there. Sir, can I do private placement like this? April month private placement sum 50. June month private placement sum 60. December month private placement sum 40. And March month private placement sum 50. Can I do this? Yes, because overall count is 200 only. You can do it. At a time it should not cross 200. Throughout the year also it should not cross 200. Clear? In regular class, I use it to tell the logic of private placement. The logic behind private placement is, if I go with public at a large, you know what happens? Unknown people will come and subscribe my company securities. Tomorrow in AGM, unknown people will also participate in the voting along with me. Their mindset, my mindset may not match. Whereas under private placement, I'll pick a person whose mindset will be exactly reflection of me. So tomorrow for any severe business decision or important emergency business decision, I can contact him, I can contact her, we can make decisions very easily. So that is a background, the difference between public offer and private placement. Okay, fine. So private placement, identified persons. Who will identify? Board of directors. Two, three important points are there. I'll discuss with you. This is an amendment, 1.5 year back amendment came. This amendment is countries, this is actually nationals. That means, simply citizens. So these kind of changes I did it in latest material. You can download it from the website. One or two pages are missing actually. I'll add it and I'll replace it in the website. Don't worry. So just one second. Yeah. Yes. So body corporate or national from the countries sharing a land border like Myanmar, Bangladesh, Nepal, Bhutan, Pakistan. These countries are sharing land border with our country. So these country citizens, if they want to apply for private placement, they need to get prior approval from the government and subject to FEMA rules and regulations also. 200 limit for security, excluded QIB, ESOPs, NBFC housing companies, they follow their specific regulatory limits. For them 200 is not applicable. Resolution point. Resolution. Sir, for making private placement, members approval required or not required? That is the point, ma. Yes, members approval is required depending on the nature of security. Depending on the nature of security. Just see me. So offered security you need to check. If it is equity, if it is preference, if it is convertible debenture. What? Equity, preference, convertible debenture. Special resolution is required for private placement. Each private placement of security, special resolution is required. If it is non-convertible debenture, you need to check the limits. Sir, outstanding debt. OS means outstanding debt plus proposed NCD. If it is greater than 100% of paid up share capital plus free reserves plus securities premium, then one special resolution for 1 year. This is nothing but borrowing powers of the company. Do you remember debt equity ratio? Ideal debt equity ratio 2:1, like that in FM you have read it, right? But as per Companies Act, debt equity up to 1:1, board of directors can borrow money without any members approval, up to 1:1. Beyond that, that means outstanding debt plus non-convertible debentures, up to, that means up to 100% of paid up share capital plus free reserves plus securities premium, board resolution is enough. Board resolution is enough. That means debt equity ratio up to 1:1, board resolution enough for NCD. If it is crossing 1:1 ratio, one special resolution for complete year. If it is equity, preference, convertible debentures, every private placement requires one special resolution. Getting my point? Suppose I decided NCD's private placement 3 times a year or 4 times a year. For all these 4 times or 3 times, one SR is enough. Suppose if I decide equity shares private placement 3 to 4 times, each time I need to take special resolution. Can I proceed? Next, an important time limits, ma. Private placement offers cum application letter shall be issued to the members within 30 days of recording their names. Once PAS4 is ready, within 30 days, give them offer letters and take money only through banking channels. Accept money only through banking channels. In case of joint shareholders, suppose you gave offer to PQR jointly, then application money should come from senior most person, that means whose name appears first. In one MCQ, this point was tested. Like offer was given to PQR jointly, application money was deposited by Q. Now company should accept that application money or reject that application money. Reject. First named person can only deposit application money, and company shall not utilize this money unless allotment is made or written off allotment is filed with ROC. Same points like section 40, ma. You can utilize application money only after adjustment against allotment and filing of written off allotment. So until then, keep all the money in separate bank account. What is the time limit for allotment? 60 days time limit for the allotment. Within 60 days from the receipt of application money, within 60 days from the date of receipt of application money, allotment should be done. If not allotted, it shall be refunded within 15 days. If refund is not made within 15 days, then company shall pay interest at the rate of 12% per annum from 60th day onwards. In deposits, I will touch this point. In deposits also this point is there. If not refunded within next 15 days, it becomes deposit. Listen carefully, ma. This is day 0, that is receipt of application money, AM, application money received. By day 60, you do allotment. By day 60, you do allotment. Or else by day 75, you refund it. By day 75, you refund it. If not refunded, you need to pay interest. From which day onwards? Not from day 60, day 76 onwards. The interest should be paid from day 60 onwards. That means day 61 onwards. Expiry from the 60th day. That means from 61 day onwards. Simply for this 15 days also interest will be added. And what is the rate of interest? 12%. Do you remember section 39 interest? That interest is 15. Who will pay that interest? Directors in default. Here what is the interest? 12%. Who will pay this interest? Company. Are you able to find out the differences? Okay. Next one, filing with ROC, 2 times filing, ma. One is before making a private placement offer. The second one is after making allotment. Now ROC will verify to whom offers were given and to whom allotments were made. If names are matching, no problem. If names are not matching, it is deemed to be public offer. Prospectus provisions will apply. And what is the time limit for filing written off allotment in prospectus? 30 days. But here it is 15 days only. Minute points you have to remember. That is a public offer, no, lengthy. That's why 30. This is private placement. Only few people know. 200 only know. So 15 days. Attachments are common. Attachments are common. But only time limits are different. If not 1000 per day, their punishment is 1000 to 1 lakh. Here 1000 to 25 lakhs. Logically speaking, ma, 25 lakh punishment should come only if there is a delay of 2500 days, ma. 2500 days means 8 plus years. You tell me any company will do that kind of mistake? Until written off allotment is filed, the private placement is not said to be finished. And we had one more point, prohibition on further private placements. You can make new private placement only when previous private placement is either completed or cancelled. Keeping previous private placement pending, you can't make new private placement. In one examination, they asked a question like this: previous private placement is with respect to equity, number of members is 160. Proposed private placement is for debentures, number of members is 50, and this previous private placement is still pending. They asked two questions. One is 160 plus 50 210, is it a violation under section 42? This is question 1. Answer me, violation or not a violation? Not a violation, because it is per security. Second thing, whether the second previous private placement is valid or not valid. Answer is not valid, because previous private placement is pending. Sir, that is equity, this is debenture. No, there is no differentiation in the securities. The point is just private placement. If it is pending, you can't go with new private placement. Whether security is different also, not an issue. It is prohibited. Next one, you can make multiple offers to the same identified persons, no problem. Advertisements are prohibited, and no renunciation. Non-compliance, punishment ma. How much amount you raised, or rupees 2 crores, whichever is lower, this is the punishment to the company promoters directors, CPD. Company promoters directors will get punishment of how much amount raised through private placement by non-fulfilling the regulations, or 2 crores, whichever is lower. Along with that, refund, along with that interest. Refund with the interest. How much interest we have seen? 12% per annum. That's it. Irregular allotment. See, for making allotment, the conditions to be satisfied is prospectus you need to issue. Prospectus should not contain misstatements. Prospectus to be filed with ROC. Minimum subscription, minimum application money, listing permissions. These conditions you need to satisfy for making allotment. If you violate any one condition, and if you are still making allotment, we call it as irregular allotment. So simply, if you read the headings, enough. One attempt, 2018, if I guess 2018 or 19, 5 marks question came. Without issuing prospectus, if you make public offer and allotment, irregular. If prospectus contain misstatements and still you are making allotment, irregular. Non-filing of prospectus with ROC, but you made public offer, irregular allotment. Without minimum subscription, making allotment, irregular. Without getting minimum application money, making allotment, irregular allotment. No approval for listing, but still making allotment, irregular allotment. What is the consequences? Refund all the application monies along with interest, and also you will be punished under respective sections. Last concept, GDRs. Indian company. IC means Indian company. OD means overseas depository. DCB means domestic custodian bank. Example, Infosys, State Bank of India, or overseas depository, maybe HSBC overseas bank, for example. What happens is, suppose Infosys, to finance its branch which is there in USA, to manage its branch, it needs, say for example, $1 million. If company is having reputation both in India as well as outside India, then company can go for listing. It is having reputation in India, so it already got listed in the 1990s only. It was already listed in 1990s only. So now, for going to USA market, at that time direct listing outside India was not allowed. At that time, when GDR concept or ADR concept is there, at that time direct listing by Indian companies outside India is not allowed. That's why this concept gained importance. But now this concept will not gain that much importance. The reason, Indian companies straight away can issue their Indian companies straight away list their securities outside India. Section 23 subsection 3 already gave permission. So according to this concept, what happened, Indian company, Infosys, will allot securities in the name of overseas depository. Now who will be the holder of the securities? Overseas depository will be the holder. Based on this underlying asset, depository will create some acknowledgements. We call them as receipts. And since these receipts are issued by the depository, we call them as depository receipts. If they are getting traded globally, we call it as global depository receipts. So this overseas depository will offer GDRs to the local investors. So these people will deposit foreign currency with overseas depository. Overseas depository will transfer that amounts to the Indian companies. But since securities should not go out of India, all the physical custody of the securities will be with domestic custodian bank. So there will be an agreement between domestic custodian bank and overseas depository. That is nothing but custodian agreement. So who is the original owner? Overseas depository. So voting rights, dividend rights, who will enjoy? Depository only will enjoy. Sir, what about this GDR holders, sir? Will they get any benefits? See, that benefits overseas depository will pay. But voting rights are with overseas depository only. Why? Because as per register of members, overseas depository is the member. You see, you observe this one point. Holder of GDR can become a member of the company and vote only after converting GDR into shares. Until conversion, overseas depository shall vote on behalf of GDR holders as per the agreement between the depository and GDR holders and the company. So voting rights is with overseas depository only. Right now this concept is not that much significant because Indian company can directly go to USA markets and can list their securities in US markets. But this is a concept from Companies Act 1956. Understood? So with this, prospectus and allotment of securities we completed. Let's continue. Our next topic is incorporation of company and matters incidental thereto. You can expect one descriptive question from this chapter, 5 marks. If time is good, you can also expect one or two multiple choice questions. So from previous examinations question paper analysis, from past examination question paper analysis, one descriptive question is coming from this chapter, 5 marks. And coming to this chapter, total there are 20 sections. How many sections? 20 sections. Easy to remember section numbers with me. It starts with formation of company. First of all, you should have an idea about the company. Okay, so total we are having how many types of companies? Two types of companies, public, private. In private again, two types, other than OPC, OPC. Next, once you select a company, you will have three more options: limited by shares, limited by guarantee, unlimited company. So you should have an idea about formation of company. For formation of company, two documents are very important. You tell me which two documents? MOA. Sir, can I draft MOA, AOA according to my will and wish? MOA, AOA should comply with Companies Act. Once these documents are ready, you tell me, once these documents are ready, what is the next step? Incorporation. Incorporation of company. Along with incorporation, if you make an application with central government, sir, grant us a license. We are not meant for doing business, we are meant for doing charitable activities. If government gives you license, then you will be called licensed company. Once company is ready, you need to understand effects of incorporation and you need to understand effects of MOA, AOA. Just one line script over, one line script. What is the script? First, you should have idea about formation of the company. For that, MOA, AOA, two documents are required. Those two documents should comply with the Act. Once documents are ready, proceed with incorporation of company. Along with incorporation, if you make an application with CG for a license, then you will be called licensed company. Once company comes into the picture, what is the effect of incorporation and what is the effect of MOA, AOA? Easy to remember story. Section 3 formation of company, 4 MOA, 5 AOA, 6 Act, 7 incorporation, licensed company 8, incorporation 9, MOA, AOA 10. All these are section numbers. All these are section numbers. So what is section 3? Formation of company. 4 MOA, 5 AOA, 6 Companies Act, 7 incorporation of company, 8 section 8 company. You all know about section 8 company, right? Section 8 means section 8 company. Section 9 effects of incorporation. Section 10 binding effects of MOA, AOA. After that, company is ready, right? Company ready. See, if you are able to write, you write it, or else already handwritten notes is there. That handwritten notes I'll share it with you. In that already section numbers charts were already prepared. Just a second. Yeah, if you are able to write, no deviations, sir, I will write okay, right, or else this book is already available on website, so there you can download it. If you see section 3 to section 10 left side of the chart, and right side of the chart is about 10A to 16, and then company documents. So remembering section numbers will be very easy only if you remember the story. Next one, now company is ready, right? Once company is done, the next step is what? Commencement of business. Next one is commencement of business. Where to commence business? Company should have address, no? Before it start business, company should have an address. We call it as what? Registered office. Registered office. In front of or at the entrance of registered office, definitely we will display what? Name board. Yes or no? Or else company customers, company dealers, they will search for the company. That's why name board shall be displayed. And this name, I will revise this name, I will change this name because of two reasons: voluntary, compulsory. This name may be changed voluntarily or compulsorily. Compulsory means what? Some mistake happened, now that's why we are changing the name. Some mistake, that is nothing but rectification. Rectification. Section number 16. Section number 16. Voluntary change, compulsory change, every time whenever I change the name, I need to change two documents. Which two documents I need to change? MOA, AOA, because in MOA name clause will be there, in AOA also name of the company will be displayed. So I need to alter what? MOA, AOA. Every time I alter MOA, AOA, I need to make a note of it. Sir, my MOA altered, my AOA altered, like that note is compulsory. So far how many sections we completed? 10. Yes or no? Effects of MOA, AOA 10 completed, binding effects of MOA, AOA. So next one is 11, but 11 omitted. Section 10A was introduced. Next one, registered office 12, altered MOA 13, altered AOA 14, alteration to be noted 15, rectification of name 16. See, altered MOA, what is the section number? Altered MOA 13. 1 plus 3, take calculator. 1 plus 3, what is our section 4? So altered MOA 13. What is altered AOA section? 14. 1 plus 4, 5. That means original AOA is 5 only. Clear, everyone? To remember section numbers, I am telling, see, from Companies Act only 10 practical questions are coming. In 10 practical questions, if you are able to write section number, 10 marks bonus only, right? A student writing complete answer, section number not written, randomly some 3 marks out of 4 3, or out of 5 4 marks they are giving. But if you are writing section number, 1 out of 100 papers he is seeing section number, that to correct section number means he will try to give more marks. So 10 bonus marks only. If you are able to remember, then remember. Having ability, then do it. No sir, confusion why sir, ignore, no problem. Okay na. So commencement of business 10A, registered office 12, altered MOA 13, altered AOA 14, alteration to be noted 15, rectification of name 16. So far we have seen 4 documents, MOA, AOA, altered MOA, altered AOA. 4 documents are there. So those 4 documents I call them as company documents. Company documents. So here 2 branches, those branches will be like this, see, for documents 2 branches, for company 2 branches. Company, yeah, documents. anyone can request for these company documents. Sir, I need these physical documents. If you want, you can make a request. And to the requested member, company will service the documents. Company will serve the documents. Company two branches. CS. C stands for conversion of companies. S stands for subsidiary company. Subsidiary company. Company two branches. Conversion of companies, subsidiary companies. And service of documents. Which documents I need to serve? Authenticated documents are, that means signed documents are, unsigned documents are. I need to serve signed documents only. That signed documents, again two branches. Deeds, contracts. Next one is negotiable instruments. Nothing but bills of exchange, checks. Negotiable instruments, bills of exchange, checks. Now request for documents is 17. Conversion of company 18, subsidiary 19, service of documents 20, authentication of deeds contracts 21, authentication of negotiable instruments 22. So 17 to 22, 6 sections. Request 17, 18 conversion of companies, 19 subsidiary not to hold shares in holding company, 20 service of documents, 21 authentication of deeds and contracts, 22 execution of bills of exchange. So in this way 20 section numbers over. Let's see chapter 2, incorporation of company and matters incidental thereto. Promoter definition. Promoter, who is a promoter? Who is a promoter? One who promotes something. That is a traditional meaning of promoter, but as per Companies Act we had a definition. Promoter, three people are treated as promoters. One is named promoter. Tell me who? Named promoter. And second one is controlling promoter. Who is second one? Controlling promoter. And who is the third one? Shadow promoter. Shadow promoter. Name means where, sir? In the prospectus of the company, in the annual return of the company. See, every company annually they need to file two forms, AOC for financial statements, MGT 7 annual returns. In the annual returns, whose name appears as a promoter, that fellow is a promoter. Company making public offer, they need to prepare a document called prospectus. In the prospectus, who has been named as a promoter? He is also a promoter. So what is the first point? Named person. Naming may be in the annual return or prospectus. Second one, controlling promoter. Controlling promoter exercises control over company affairs directly or indirectly as a shareholder, director, or otherwise. In otherwise, if you want, you can also write creditor. Creditor will also be a promoter only. Suppose your business needs some 10 crores money. You are having only 4 crores. Balance 6 crores, you went to one financer. He is ready to give that amount. But he told, I don't want any ownership. Why? In case if he take ownership, he can enjoy profits. But if there are losses, he need to bear that losses. So I don't take any ownership. But any decision you take tomorrow, you have to take prior permission from me. Tomorrow if you want to take any decision, today only you take permission from me. Now who am I? Creditor. But still I am controlling the company. Am I a promoter of the company? Yes. Controlling person is also promoter. Maybe a director, like managing director. Maybe a member with more than 50% of the capital. Clear? See, if you apply this B point, Mukesh Dhirubhai Ambani sir also becomes promoter of Reliance Industry Limited. Actually, who promoted Reliance? Dhirubhai Ambani sir. Is he alive? No. But right now, who is the promoter? Mukesh Dhirubhai Ambani sir, because he satisfied B point. And what is the C point? Shadow promoter. Shadow promoter. On whose advice, directions, instructions that board of directors is accustomed to follow. Like you take Tata group of companies. Right now, Ratan Tata sir is not there. But when Ratan Tata sir is alive, all the directors of Tata group of companies were used to listen Ratan Tata sir instructions. He is neither promoter nor shareholder nor director, but still Based on Ratan Tata's or advisor's instructions, directors did lot of things. As a result, shadow person, not visible to the public, but still he is also treated as promoter. Promoter. Getting my point? Suppose one live example if you want. There is a movie, for example. In that movie, two directors are there. Mr. Sahayam, Mr. Bhai. See, this movie is about Surya sir. S2, I think. Singham movie only. That only. So Sahayam and Mr. Bhai, they are used. They are dealing which. They are doing which business? Drugs business. But these two people follow one person instructions. Who is that one person? Tyagaraj. So until director revealed that secret, every one of us thought that these two people are villains. This fellow is a good person. But one day, when our police find that yes, this fellow is also dealing with these people, now automatically this person becomes what? Promoter. On paper, is he a promoter? No. But these two people use it to listen to him secretly. So that's what? Shadow promoter. But there is a problem with C point. The problem with C point is, today Mukesh sir is doing business, right? He's a director of company Reliance Industry Limited. He's doing business. Being a director, you tell me, will he have complete knowledge of Companies Act? So suppose someone approached you to appoint you as a director. Wait, I'll read entire Companies Act. Will you do like that? Or simply if you know business knowledge, you will become director? Business knowledge if you are having, you will become a director. But after becoming a director, complying Companies Act is definitely a headache. For that, you recruited me, a professional. For each decision, you are paying me. Now, based on my advices, you are doing everything like preparation of financial statements, maintenance of books of accounts, conducting AGM. Now, based on my advisor's instructions, you are doing business. No. Will I be treated as promoter? No. Why? I'm just a professional rendering services in professional capacity. So, as long as professional rendering services in professional capacity, he will be excluded. Our role is to provide professional services. Suppose, in addition to professional services, I'm telling to Mukesh Ambani sir, there you can have one more contract with one supplier, or this year increase the sales, this year you increase the net profit. Like this, if I'm giving any business ideas also which is outside my professional capacity, then automatically I becomes promoter. Getting my point? See, in our question bank there is a question, one question. Mr. Kumar, for example, he is a chartered accountant as well as MBA. He was appointed. Uh, he was appointed as a no. He was appointed as a strategic manager. For example, strategic manager. The role of the person is strategic framing strategies. For example, now he is making some strategies, advising the directors. Directors are accustomed to follow that Kumar. Now, will Kumar become a promoter? The answer is yes, promoter, if he is not having MBA degree. Since he is having MBA degree, he can also frame strategies, business strategies. In SM, you might have read about this SWOT analysis, strengths, weakness, opportunities, threats. Yes or no? So, being MBA graduate, he can render business strategies also. So that's why he will be not treated as promoter. Just go through that question once session is over. Go through the question bank once every, after completion of today's session, go through the question bank and try to solve all the questions. You'll get confidence. CA and MBA, that question is there. So since he's a MBA graduate, he can frame business strategies, but still he is treated as professional only, not treated as promoter. And next one, how many number of promoters a company can have? Only one or more than one? More than one. And what would be the status of promoter? Only individual can become promoter. Other than individuals can also become promoters. Other than individuals also. For example, you see subsidiary company. Who is the promoter of subsidiary company? Holding company. So promoter need not be individual. Promoter can be group. Promoter can be partnership. Promoter can be company also. Next one. Section 3A, minimum number of members. This is also an exceptional point. See, for a public company, how many members are required? Minimum 7, maximum unlimited. For a private company, minimum 2, maximum 200. OPC, minimum 1, maximum 1. Do you remember director limits? For public company, minimum 3, maximum 15. For private company, minimum 2, maximum 15 only. For OPC, minimum number of directors 1, maximum also 15 only. Clear? Don't get confused with number of directors with number of members. Both are different. Number of members, public company 7 to unlimited. Private company 2 to 200. OPC 1 to 1 only. But directors 3 to 1 minimum. Maximum in all companies, maximum number of directors is 15 only. And the company can be limited by shares, limited by guarantee, unlimited company. IFSC companies are licensed to operate in IFSC, International Financial Service Centers. The example, Gift City. IFSC is altogether a different concept, ma. If you want to do business in India, banks will support you. Suppose I'm having a branch in Canada. I'm having account with, say for example, Canara Bank. Here I get money in rupees or dollars or rupees. But I want to finance my foreign branch, Canada. Now I need to borrow rupees. Again, I need to convert that rupees into dollars. Again, supply of dollars also. Investing the dollars outside India also. Again, I need another banking channel. So headache, lengthy procedure. Instead of that, if a particular unit is having branches, particular bank, for example, particular bank is having branches all over world. Now here, if you deal with that bank branch, Canada branch will finance your Canada branch. Getting my point? Say for example, HSBC bank, for example, HSBC. It is operating both in India and Canada. If I deal with HSBC Indian branch, if I provide any property as security in India, HSBC Canada branch will finance my Canada branch. It's like connecting all the dots, connecting the entire world. That's it. IFSC. Nothing there, nothing much to learn about IFSC companies at CA inter level. But these are just like connecting chains, connecting dots. Fine, ma. So section 3, just now I discussed. This is section 3A. Breach of minimum number of members. If the number of members is reduced below 7 or below 2 and the company carries on business operations for more than 6 months, every person who is a member during the time that it so carries on business after 6 months and is cognizant of the fact that business is carried on with reduced members, such members shall be sued severally for the entire debt incurred during that time. See, lawmaker is clearly telling you, if you are a private company, minimum how many members are required? 2. If you are a public company, minimum how many members are required? 7. These conditions you should satisfy not only at the time of incorporation, but also subsequent to incorporation throughout the life of the company. Suppose after 3 years of incorporation, suddenly in my public company, number of members fallen from 7 to 5. What is the statutory limit? 7. How many members are there right now? 5. Now lawmaker is telling you, increase that 5 to 7 within how many months? 6 months. If you do it, separate legal entity is with you, that character will be with you, members liability will be limited. But if you don't increase within 6 months from 5 to 7, after 6 months, debts incurred by the company is not liable. Who is liable? Members are liable. All the members are, no, members having knowledge of the fact that company is doing business with reduced number of members. For example, one example, there is a company C Limited. In this C Limited, total 7 members are there. A, B, C, D, E, who are living in India. F living in France, doing business on behalf of company. G is in Germany, doing business in Germany. Now one day, Mr. D and Mr. E died. Say for example, this happened on 31st March 2026. At that time, total company debts is 50 crores. Now lawmaker is giving a time of how many months to increase 5 to 7? 6 months. So to this add 6 months means 30th September 26. At that point, total debts increased to 60. So that means new debts taken by the company, how much? 10. Assumed no outstanding debts were repaid. outstanding 50 is getting continued, but additionally how much they borrowed? 10. Did they increase 5 to 7? No, they didn't increase 5 to 7. And Mr. F, Mr. G, since they are outside India, they are not having knowledge of the fact that company is having only 5 members. Now they continued business operations. Somehow ROC came to know. ROC came to know on 31st December 2026 that company is having still 5 members only. Sir, how ROC will know, sir? Are in annual returns, changes in members also you should give. Exactly on 31st March, 7 maintained fall into 5 fall into 5. ROC upon verification on 31st December, company is still continuing with 5 only they came to know. It came to know, ROC came to know. Now during these 3 months, October, November, December, additional some 30 crore new debts they borrowed. So total as on 31st December, what is the total debts? 90 crores. Now my question, who are liable for how much amounts? Who are liable for how much amounts? A, B, C, F, G. All 5 people are liable. Only ABC are liable. Only ABC, because F, G, they are innocent. They are not having knowledge of the fact. ABC liable. For which amount they are liable? For 90 crores, 60 crores, 30 crores, 10 crores, 50 crores. ABC liable. Is it clear? First of all, why FG not liable? Just look at the condition one more time. FG is not liable because they are not having knowledge of the fact that business is carried with reduced members. So FG exempted. Now ABC are liable for which debt? Entire debt incurred during that time. That time means which time? My question, option A, 50 crores. See, this is not a regular lecture. I can't give you more time. You tell me. Option A, 50 crores. Option B, 60 crores. Option C, 10 crores. Option D, 30 crores. Option E, 10 plus 30, 40 crores. Which option is correct? Which option is correct? And the answer is 30 crores. Why? Because separate legal entity is there till 30th September. After that, there is no separate legal entity concept. Getting my point? I'm giving you 6 months time to increase your number. So for that 6 months also, company only liable only. But after 6 months, company already lost separate legal entity character. So there is no concept of limited liability. ABC gets unlimited liability. And their liability is also joint and several. That means A, B, C, they are liable for 10 crores, 10 crores, 10 crores. Suppose B became insolvent. Now A is liable for 15, C is liable for 15. Suppose C became unsound. Then entire 30 crores who should bear? Mr. A should bear. So this is another tricky point. During that time means after 6 months. It's not during that 6 months. Can I proceed? Next one, section 7, procedure for incorporation of the company. Procedure for incorporation of the company. If your time is bad, you can expect this question, because last 3-4 attempt question papers, if you see, there is no direct question. Everything is scenario based question. For a surprise, if they ask, write down the documents to be submitted to ROC for incorporation of company, then you have to write all these points. Direct theory question. Section 7, incorporation. My question, is incorporation mandatory? Is incorporation mandatory? Yes. If you see definition of company, company means company incorporated. Incorporation is mandatory. For incorporation, you need to file a bunch of documents with ROC. Sir, what are those documents? What are those documents I need to file with ROC? See, one side you can see promoters, other side you can see ROC. Which ROC? In whose jurisdiction you are going to incorporate company with that ROC? Suppose I want to incorporate company in T Nagar, Chennai. Then ROC will be ROC Chennai. I want to incorporate company in Bangalore, ROC Bangalore. That means in whose jurisdiction? In whose ROC jurisdiction you want to establish registered office with that ROC? Suppose, sir, I want to incorporate a company in Hyderabad, but I want to submit documents to ROC Chennai. Possible or not possible? Not possible. So one side ROC, other side promoters. Now let's see the list of documents. First one I told you, signed MOA, signed AOA. Second one, declaration. Declaration by professional. Tell me, professional means who comes under professional according to this section? CA, CMA, CS or advocate. Not employees, in practice. Practicing professionals. And director or manager or secretary involved in the incorporation of the company. They should submit a declaration regarding compliance of act. Regarding compliance of act. Have you submitted exam application for May 26 exams? Last paragraph, if you see last paragraph, I so and so hereby declare that the information furnished by me is correct and complete. Yes or no? Actually, ICA has to verify each and every one of you, but ICA is giving that declaration. If you select it, that means you are bound by the declaration. Getting my point? Even you download any app from Play Store, first you will see terms and conditions, later you will see one box. So this is also like that only. ROC should check each and every one company application, but ROC is having lot of works. Daily hundreds of applications are filing with ROC. Now if ROC verify each and every document, daily it can incorporate how many companies? One. Ease of doing business or difficulty of incorporating company? Difficulty. That's why ROC is expecting a declaration from the professional. CA, if you give this declaration, I blindly accept this application. Regarding what? Compliance of act. Company's incorporation is as per Companies Act and rules made thereunder. And there is one more declaration. This declaration is signed by subscribers, first subscribers, and this declaration is signed by directors of the company. Sir, this declaration is regarding what, sir? This declaration is about last 5 years we never committed any offense. No offenses regarding promotion or incorporation or management of any company. No guilty of misfeasance or no guilty of fraud, no guilty of trust. Sorry, no guilty of fraud, no misfeasance, no breach of duties. No breach of duties. And second point is for proposed company incorporation. For proposed company incorporation, every document is complete and correct. For proposed company incorporation, every document we are filing with ROC is complete and correct. Why this point? If you have committed an offense under Companies Act, next 5 years you will be banned. Next 5 years you will be banned from incorporating another company. You all know about Satyam fraud, right? Satyam scam. Satyam Ramalingaraju sir, once again if you allow him to incorporate a company, will he do good things or fraudulent things? Yes or no? Once you are convicted by an offense, if I allow you immediately to incorporate another company, you will do fraud only. That's why 5 years ban. So last 5 years I was never convicted by an offense. There is no breach of duty. Suppose last 5 years in one company I'm the director. One day out of personal needs I used company money. Now is it a breach of trust or not? It's a breach of trust. Once I was convicted for that offense, next 5 years professional ban. Understood? And for the proposed companies incorporation, whatever bunch of documents I'm giving to you, they are complete and correct. This is third declaration. Fourth one is address for temporary correspondence. Suppose I'm giving these documents to ROC. If ROC finds that one document is missing and he want to ask that one document, now you need to send a letter, yes or no? To which address he will send a letter? To this address. Address for temporary correspondence. This address will be valid until you have registered office. Once you have registered office, this address will be removed. Next one. Next one. Consent of first directors. Consent of first directors and interest of directors in other body corporates. Interest in other entities. So directors should give written consent to the company. See, after incorporation we will become directors of the company. And we are having interest in these business entities. Why? First, to identify related party transaction, we should know about related parties. Yes or no? Who will be the related parties? The entities in which director is having interest, they will become related parties. So before naming you as a director, you should give written consent, as well as you should submit a list of business entities in which you are a director or you are a shareholder. So these documents you prepare and submit to ROC. After verification, ROC will give certificate of incorporation. Let's see the material. MOA, AOA, declaration, formation of the company, by a professional. Next one, director, manager, secretary, regarding what? Compliance with Companies Act. So one declaration is about compliance. Another declaration is about themselves. Don't get confused with C point, ma. C point, post incorporation, you will find it. C point, you will find post incorporation. Post incorporation, you will find C point. D point, declaration by each subscriber first director. They are not convicted of any offenses. They are not found guilty of fraud. All documents filed with ROC are correct, complete and true information. And address for correspondence till registered office is established. And the details of directors and subscribers. Generally details means what? Name, photo, parents name, nationality, date of birth, place of birth, educational qualification, occupation. Next one, PAN, email, phone number, proof of identity, residential proof. If the subscriber is already a director or promoter, provide those details. This is to identify related parties. That's it. If body corporate subscribes to MOA, then you have to give this information. To body corporate, father name, photograph, available or not available? Not available. So separate list has been given. Name, SIN, registered office address. GLN is for companies incorporated outside India, foreign companies. For companies, certified board resolution copy. For LLPs, certified resolution copy. For foreign entities, copy of certificate of incorporation and registered office address. These are the additional attachments. Company can't sign a document, right? On behalf of company, one director will sign, whether the director is authorized or not. To check that, board resolution copy, certified resolution copy, and copy of certificate of incorporations. Details of the first directors: name, DIN, nationality, residential address, proof of identity, consent to act as a director. And H point, this is for special companies, like if you are a banking company or a stock exchange company, then you need to take prior permissions from RBI and SEBI. For Nidhi company, declaration under section 406 shall be submitted. One time this question was tested for 6 marks. That is long back, 2018, like that. 8 years back, this point was tested. This question was tested. Clear? Issue of certificate of incorporation. ROC registers all documents and issue certificate of incorporation confirming company incorporation is as per Companies Act, and that certificate also contains PAN number. Allotment of SIN. SIN is a 21-digit alphanumeric number. It starts with L or U. L stands for listed. U stands for unlisted. Next 5 digits indicates industry code. Next 5 digits indicates industry code, which business they are doing. Based on that, industry code will be given. Next one, state name. AP, Andhra Pradesh. TN, Tamil Nadu. Next 4 digits, year of incorporation. And next 6 digits is the serial number of the company in the register. Next 6 digits is the serial number of the company in the register. Say for example, Reliance SIN. L stands for listed. Industry code is 17110. State of incorporation, Maharashtra. Year of incorporation, 1973. Okay. So in between this AP and after year of incorporation, you will find 3 digits, that is about nature of the company. PLC stands for public limited company. PTC stands for private limited company. OPC stands for one person company. And last 6 digits, serial number of the company in the register. Clear? So in certificate of incorporation, you will find SIN. You will also find PAN. And this is important from MCQ point of view. Now the bunch of documents you filed with ROC, you need to preserve them. How long? Till the liquidation of company. How long? Till the liquidation of the company. Where, sir? At the registered office. So place of maintenance of these documents, registered office. Period of maintenance till liquidation of the company. And right now all forms are e-forms. E-forms means electronic forms. Manual filing is not there. So all these documents we will attach in incorporation document. Clear? So simple to remember ma, 6 points ma. First one MOA AOA, second one declaration, third one declaration, fourth one address for temporary correspondence, next one details of the subscribers, next one details of the directors including written consent of the directors. Coming to the declaration, two declarations: complaints declaration, past present declaration. Past means 5 years, present means present companies incorporation. Okay na? Complaints declaration who will file? Director and professional. And present and past declaration, present and past info declaration who will file? Directors and subscribers. How many years ban is there? 5 years. So last 5 years I didn't commit any offense. Last 5 years no breach of trust, no guilty of no fraud at all. Next one, May 24 attempt, if I am not wrong. This point was tested for 5 marks. First question, this one only. Signing of MOA and AOA. Unexpected point. Signing of MOA AOA. See, right now this much nonsense is not there. Signing, digitally signing is there. But our lawmaker, who is our lawmaker? Experienced person. Experienced person means 20s or 60s? 60s. 60s means internet person? Outdated person? Outdated person means electronic signing or manual signing? According to him, this point. According to experienced lawmaker, signing. How signing will be done? Attach the signature. Add name, description and occupation. Suppose if subscriber is illiterate. Right now all of us are illiterates only, because how we will unlock our mobile? Will you sign it a thumb? Thumb only, yes or no? Illiterate people. Technology should upgrade us, but what technology is making? Again illiterate only. Okay, so illiterate subscriber, what? Thumb impression. But illiterate person means one who can't read and write. Then if he affixing thumb impression, is it right or wrong? Maybe right, maybe wrong. That's why a literate person should read everything in the document and he should explain to that illiterate person. So once illiterate person affixing the thumb mark, that literate person who explained the content, he should also sign. He should also sign under the thumb impression. Okay, this point came for 1 mark. This question was tested for 5 marks. In that 1 point is illiterate subscriber. Next one, typewritten printed details of the subscribers and witness as acceptable. MOA need not be in writing form. It can also be in typewritten form. Typewritten form means, example this one, this material is typewritten form. Manual writing means, for example, this one. This one is a manual writing. Next one. This is also important. These 2 points came for 2 marks. Body corporate as subscriber. Suppose one company wants to incorporate another company. Now first company, can it sign MOA of second company? Possible? You tell me. Company existence is decided by which document? Certificate of incorporation. Yes or no? Will it have a human presence? Do you think it will have 2 hands, 2 legs? No. So that's why body corporate as a subscriber, who will sign? Authorized director or officer or employee. How authorization will be given? Through a board resolution. Next one, LLP as subscriber. MOA, AOA shall be signed by authorized partner. How that authority will be given? When all the partners agree, okay, this fellow will sign on behalf of LLP, that fellow will sign on behalf of LLP. Next one, this is also an important point. In case of body corporate or LLP, the authorized person cannot act as subscriber to MOA and AOA simultaneously, simply to avoid conflict of interest. Either you act as representative capacity or act in personal capacity. Both at a time not possible. For example, A limited company is there, wants to incorporate B limited and wants to hold some 90% of the paid up share capital. Now in A limited, I am one director. Mr. V is one of the director. A limited authorized me to sign this 90% of the paid up share capital of B limited's MOA. Now I'm signing on behalf of A Limited. Individually, I want to sign B Limited. Both at a time. Allowed or not allowed? Not allowed. Both at a time, not allowed. Either act in your personal capacity or act in your representative capacity, but both not allowed. That is the meaning of this note point. Next one, foreign national as subscriber, non-resident, resident. Foreign national but resident, sir. Give business visa. Just give business visa, sufficient. Sir, I'm not having business visa, sir. I am a person of Indian origin. Then business visa is not applicable. Person of Indian origin, overseas citizen of India also, business visa is not applicable. See ma, whether you are a real person or not, how to identify your Aadhaar card? If you are a foreign national, for you Aadhaar card will be there. Suppose if you take USA, green card something, green card will be there, it seems. Whether that green card is valid or not, is it a forged one or original one? I can't verify. From India, I can't verify. You do one thing. Before you submit the documents, ask your, notary public, ask your government officials to verify your documents. And if you submit, if you produce those verified documents, we accept it. Suppose what happened if you see Singham movie, Danny only you take. How many passports is having? Some 40 plus passports is having. That means all are originals or fakes? Fake only. So whether it is original or fake, how to know? If you are Indian citizen, Indian resident, your Aadhaar card is enough. But if you are a foreign national, you need to produce some other documents which should be already verified one. Who will verify? That is the point. Residing outside India, notarized by notary public, verified by the notary public. If your country is not part of Hague Apostille Convention, then your document should be verified by a diplomatic or consular officer, like embassy, for example, embassy. You are already residing in India, submit business visa. Business visa is not applicable to these people, persons of Indian origin, overseas citizen of India. Suppose you are having a Aadhaar card, you went to USA, you worked for 3 years, now you came back. You are a person of Indian origin only. For you, submission of business visa are not required. If you submit Aadhaar card, sufficient. Okay, na? Very simple. You, person of Indian origin. And another example, say for example, take Bill Gates. Or Facebook founder, Mr. Mark, you take. Or Alibaba founder, Mr. Jack Ma, you take. For them, Aadhaar card is there? No. That country documents, ask your country's government officials to verify, produce those documents enough. Can I proceed? Everyone? Now, certificate of incorporation came. Later, we found mistakes. For incorporation of company, we submitted false information. For example, all of you are minors only. I want to incorporate a company. My company main business is imports and exports. What? Guns, missiles. Legally or illegally? Illegal only. Now you tell me, if I'm the director of the company, will I be arrested or not? I'll be arrested and I'll be punished. That's why what I did, I collected your Aadhaar cards. All of you are minors, but I forged your Aadhaar cards. Suppose your original date of birth is 2012. I made one as 0, now 2002. Minor or major? Major. Submitted these documents. ROC gave certificate of incorporation. Later your parents came forward. Now you tell me, company was incorporated by furnishing correct information or wrong information? Wrong information. Then what are the consequences? That is a point. One attempt, this point was tested for 5 marks. Let's see. Furnishing false information. You need to understand the stage of incorporation, ma. See here, submission of information is of two types, ma. False or suppression of material information. Suppression of information. See, half truth is also false only. Yes or no? Half truth is also false only. False means wrong statement. Suppression of information means that is also wrong only. Now you need to check the status of incorporation. Whether company incorporated or not yet incorporated. Sir, company not yet incorporated, sir. Our ROC identified before incorporation only. Then, my dear applicants who signed this form, come forward. Yes, for you section 447 punishment. What is 447 punishment? Imprisonment 3 years to 10 years. Fine. Minimum amount involved in the fraud, maximum 3 times of the amount involved in the fraud. In prospectus, I will discuss with you that section number, ignore. Sir, company already incorporated, sir. then punishment is to two people. One is applicant and the other one is company. To both people punishment will come. To the applicant, for you 447 only. And to the company, what is the punishment to the company? Yes, this point was tested for 5 marks, not entire concept, only this point was tested for 5 marks. Sir, what is the punishment to the company if it was incorporated by furnishing false information? And the answer is NCLT may order for alteration of MOA AOA. All these people are minors. Remove the names from the MOA AOA. Alteration of MOA AOA. It may order for alteration of MOA AOA, or it may order for removal of name of the company. Removal of name. It may order for winding up of company. Winding up of company. It may order for members liability limited to unlimited. Members liability limited to unlimited. Or it can pass such other orders as it deems fit. Total 5 points ma. Total 5 points. Change in management, that means alteration of MOA AOA, because first directors of the company are the one whose names were mentioned in AOA. First directors of the company. Who are the first directors of the company? The persons who are named in the AOA of company as first directors, they are the first directors. So change in management, that's what I will write, alteration of MOA AOA. Second one, removal of name. Third one, winding up of the company. Fourth one, members liability limited to unlimited. And fifth one, such other orders as it deems fit. Now you may get a doubt, sir, what is the difference between second one and third one? Third one, I'll implement when there is a transaction in the company. Suppose you borrowed money from vendor, you bought stock from another vendor, you took advance from the customer. When there are some transactions, you tell me just a removal of name alone sufficient. Settlement of transactions required a settlement. That is nothing but winding up. In winding up, what we will do? We will take the money and we will settle all the creditors. In case there is no transaction, just a company was incorporated, there is no transaction at all. Now why to order for winding up? Just to remove the name from the register. Getting my point? So NCLT may pass any such orders. But before passing any order, NCLT will give an opportunity of being heard to the affected persons. Like in many court scenes you have seen it, before passing an order, judge will ask culprit, is there anything to tell before I pass final order? That's what opportunity of being heard. And NCLT will also consider all the transactions entered by the company. Just look at the point ma. If any person provides false or incorrect information, what punishment they will get? 447. This is pre-incorporation ma. That means incorporation not yet done. Suppose incorporation already done, sir, then all the people involved in the incorporation will get which punishment? 447. So after becoming CA, after getting certificate of practice, don't blindly sign all the forms. Sir, that fellow is paying me 20 lakhs. No, sir. That fellow is paying me 20 lakhs. No, sir. So now if you sign the document, maybe in the document, all this story, what I said, if it is there, you will get how much? Minimum, the fees you collected. Maximum, 3 times of the fees you collected. Bonus, holiday is also there. Imprisonment is nothing but holiday period only, vacation. 3 years, no need to do anything, just sit in the jail only. Yes or no? Next one, tribunal orders. Modify MOA, liability unlimited, removal of name, winding up, issue such orders. But before passing that orders, reasonable opportunity to be given, and company NCLT will review the company transactions. Okay, see, our system follows Bhagavad Gita, for example. Why? Because as per our Hindu, whatever we are following, creation power is with Brahma, right? Destruction power is with Yamadharma Raju. Have you heard of it? Have you heard about this? Brahma and Yama. Similarly, company creation power is with ROC. But ROC is not having power to destroy the company. Who is having power to destroy the company? NCLT. Okay, application will be forwarded to NCLT. Next one ma. Section 7 we completed total. Next one, section 8 company. Sorry. Section 3 OPC. In OPC, you have to remember 3 points. Qualifications to disqualifications. privileges. Qualifications, disqualifications, privileges. Qualifications. To incorporate OPC, a member or nominee should possess two qualifications. Can you tell me what are those two qualifications? Natural person. That means artificial person. Allowed or not allowed? Can an Infosys company, can Infosys Limited incorporate OPC? No. Benefit is given only to the natural persons. And this benefit is only given to Indian citizens. Indian citizens. And this benefit is given to Indian residents. Previously, before COVID, this condition is there, but right now this condition is not there. Sir, we studied that period of stay 120 days is there. No, sir. If you want to check residential status, the residential status for this section is 120 days in the preceding financial year. Getting my point? But technically, NRI can also incorporate OPC in India. Only how many conditions are there? Two conditions. Don't get confused with the third condition, ma. See, only a natural person who is an Indian citizen, whether, that means resident is not a criteria. Only two conditions, criterias. Incorporate OPC nominee. Resident in India means period of stay 120 days in the preceding financial year. Some students get confused about this point, like, only if they satisfy 120 days condition, then only they can incorporate OPC. No, no, no. Even if your period of stay is 1 day in the preceding financial year, you can incorporate OPC. On these questions, how the questions came previously, for example, there is TK OPC Limited, in which Mr. Tarun is member of the company, and Kishore is nominee. Kishore is nominee. For example, Kishore want to study MSc in USA. MS in USA. For this, he want to go to USA for 3 years. So he will be not available for the next 3 years. Now Tarun is having a doubt about his nomineeship. Whether nominee can be continued or change of nominee required. Answer. Change required can be continued. Did you understand the question? There is a company TK OPC Limited. Mr. Tarun is a member. Kishore is the nominee. For the purpose of MS in US, he went to US for 3 years. Actually 2 years, no sir. For him, foundation should be strong. He wants strong foundation. So he want to read 1 more year extra. Now you tell me. So Kishore leaving India, is there any need to change nominee, or can nominee Kishore be continued? Change or continue? Continue, because residential status is not a criteria. Suppose if Kishore, after getting a MS qualification, if he want to revoke Indian citizenship, now change of nominee is mandatory. Understood? Qualifications, two qualifications of member nominee over. Next, OPC qualifications, ma. OPC qualifications. Here, instead of calling it as a qualification, I'll call them as disqualification. OPC cannot start Section 8 activities. Or OPC, for you, profit objective should be main objective, not charity. Section 8 not allowed. NBFC also not allowed. Why? You are a very, very small individual. For NBFC, lot of controls are there. OPC, lot of relaxations, conflict. Investment in body corporate is also not allowed. Investment in body corporate is also not allowed. Why? For making investment in body corporate, you can do it in a individual capacity. Why OPC? See, OPC cannot take up 3 activities. Which 3 activities? Section 8, NBFC, investments in NBFC. Sorry. Section 8, NBFC, investments in body corporate. And last one, privileges. What privileges? Cash flow statement not required. AGM not required. Why? Meeting required 2 people. In OPC, how many people are there? How one person can meet himself? AGM not required. Annual returns can be signed by director. No need of CS. Same benefit is for a small company also. Same benefit is for small company also. First of all, AGM not applicable means lot of relaxation only. Chapter 7, only 1 or 2 sections will apply. See, this point is important, ma. Maximum in how many OPCs he can continue membership? 1. maximum 1. But unintentionally, if you become member in 2 OPCs, just listen, XOPC, YOPC. In XOPC, X is the member. In YOPC, Y is the member. Coming to the nominee, in XOPC, Y is the nominee. In YOPC, X is the nominee. You understood? You understood the example? Now one day, X became a late X. That means died. Because of this, Y became member in XOPC. Now he is holding membership in how many companies? 2 companies. Will it be allowed? No, because maximum 1 OPC only. So if this is the situation, lawmaker is giving 180 days time limit. Within 180 days, Y need to decide. Y need to decide whether to continue with X or Y. That another company can be liquidated or can be merged with another company. Or these 2 OPCs can be merged under fast track merger process. You will read at final level, don't worry. But within 180 days, corrective action should be taken. Can I proceed? Minors cannot become members and nominees cannot hold shares with beneficial interest. OPC cannot carry Section 8 activities. OPC cannot engage NBFC activities. OPC cannot carry investment activities. Nominee. About the nominee, one small chart. You know, nominee position may become vacant in 3 situations. Nominee position may become vacant in 3 situations. Which 3 situations? Suppose nominee is resigning, that means he is withdrawing the consent, withdraw of consent. Before naming someone as nominee, you have to take written consent from that fellow. If he withdraw the consent, nominee position is blank. Clear? Or member removing nominee. Member removing nominee. This time member is not liking nominee. And third one, nominee becoming member. Nominee becoming member. When this will happen in last case when it will happen? Member became insolvent. Member died. Member cancelled his citizenship. Now in all these cases, nominee automatically becomes member. So nominee becoming member means present nomination clause vacant only, yes or no? So in these 3 cases, nominee clause become vacant. So within 15 days of vacancy, like withdraw of consent, for example here, Mr. Y want to resign from XOPC nomination. Y should give notice to XOPC as well as X. After happening this, within 15 days of vacancy, X should appoint new nominee. And the same shall be communicated with the ROC within 30 days. Remember 2 limits, remember 2 time limits, 15, 30. What is for 15? 15 days of vacancy. 30 days of vacancy. Within 15 days of vacancy, appoint new nominee. This case also same only, nominee becoming member, here also same case only. Within 15 days of vacancy, appoint new nominee. Communicate the same with the ROC within how many days? 30 days of vacancy. Understood? OPC concept completed with this. Sole member nominate new nominee within 15 days. The member can replace the nominee. A new nominee shall give prior consent, but everything shall be communicated with ROC within 30 days. Within 30 days of nominee becoming a member, within 30 days of withdrawal of consent by nominee. In both the cases, nominee was vacant, nominee clause was vacant. So within 30 days of such vacancy, communicate with ROC about new appointment. Benefits: no cash flow statement. Annual returns can be signed by the director. One board meeting is required for half yearly. Even this is also not applicable in OPC if OPC is having a single director. If OPC is having single director, even that point is also not applicable. But in OPC, if 2 directors are there, how many board meetings are required every year? 2 board meetings. One is Jan to June, other one is July to December. Because generally remember, if year is there, you have to interpret it as calendar year. Before year, if they mention financial year, then you have to interpret it as April to March. OPC file financial statements within 180 days from the end of financial year. Change in nominee, not alteration of MOA. If I'm the paper setter. Next time, if I want to set up a question paper, on this E point, I will narrate a 3 marks question. Like, whatever situations I explained here, I'll narrate the same story, and at last I will write a point like this. The member of the company is having a doubt whether change of nominee requires alteration of MOA or not. Please advise. Change of nominee requires alteration of MOA. Please advise. Now you have to tell whether change of nominee, is it a alteration of MOA or not an alteration of MOA? Read this E point. Change in nominee shall not be deemed to be an alteration of MOA. That means section 13 alteration of MOA will not apply. Everyone getting my point? See, second chapter is having variety of topics, ma. That's why the discussion will be like this. But if you see third chapter continuation, a simple concepts only you will find. In second chapter, we are having lot of dry topics. So that's why I'm quoting one example. Is it clear, everyone? So the next concept is Section 8 company. In Section 8 company, you have to remember 3 points. Like in OPC, you have to remember, like OPC, you remember 3 points, right? In Section 8 company also 3 points. First one is conditions for incorporating Section 8 company. Condition number 1, MOA object clause should contain SARC objects. SAERC. It stands for, S stands for science or social welfare. A stands for arts. E stands for education, environment, protection. R stands for research. C stands for culture, commerce. So objects should contain either social welfare or science or sports, or next one, arts, education, environment, protection, research, commerce, culture. Next one, what to do with profits, sir? Can I distribute profits among the members? No, dividends are strictly prohibited. Then what to do with the surplus? Surplus invest in promoting other objects of the company. Other objects of the company. The only difference between Section 8 company and trust is incorporation. Getting my point? Section 8 company will have a separate legal entity character, which we discussed under characteristics of the company. One incorporation enough for India, entire India, that license will be valid. But coming to trust to society, what happens? Generally, these trust and society registrations are limited to states only. So better transparency and monitoring is possible only in case of companies. That's it. Trust to society, Section 8 companies, all these three will do same things. But Section 8 company will have better visibility. Why? Because trust is limited to the state, societies are limited to the state registrations only. Whereas company, it is having wide scope. So what are the conditions you need to comply for incorporation of Section 8 company? Object clause, you should have SARC objects. Dividends prohibited. Next one, surplus invest in other objects of the company. Privileges. Coming to the privileges of Section 8 company. So this point they can test you. Partnership firm generally cannot become member of a company because partnership firm is not having any legal status. Whereas in Section 8 company, even partnership firm can also become a member. Next one, minimum number of directors concept, independent directors concept, nomination remuneration committees, all these are not applicable to Section 8 companies. Even members will have limited liability only. Members will have limited liability. These are the privileges. Along with privileges, there are some disadvantages. For alteration of MOA, for alteration of AOA, in all companies, members approval is enough. But coming to Section 8 company, alteration of MOA requires regional director permission. Alteration of AOA requires registrar of company's permission. Reason is very simple. Suppose you started one Section 8 company. You went to each and every citizen of India. You explained about your company's concept and you collected money. Total fund collected by you is 250 crores. And you placed entire 250 crores in one room. Now you are looking at money. You are looking at society. Money, society, money, society. Finally, you will fix to what? Society or money? Money. Now, if you want to change object clause, if you want to use that money for public means, sorry, if you want to use that money for your personal use means, you tell me ethically valid or invalid? Invalid. That's why alteration of MOA objects require permission of central government, but power already transferred to regional director. And alteration of AOA requires permission of ROC. Let's see the material. So charitable objectives apply profits for promoting objects. Dividends are strictly prohibited. And for incorporation, additional documents you need to submit along with section 7, section 7 incorporation. Along with those documents, these are the additional documents. You need to give 3 years financial estimates, like we are going to get donations in this form and we are going to spend that amount on the development of the society. 3 years financial estimates and a separate declaration from the professional that MOA AOA complied with section 8 requirements and all the legal requirements for company registration under section 8 have been met. Privileges, same privileges like company, but here for calling general meeting all companies should follow how many days notice? 21 days notice, but for section 8 companies 14 days is enough. Exempted from minimum number of directors, independent director requirements, no need to have these committees. Partnership firm can become member of section 8 company and members liability is limited. Disadvantage, for MOA alteration RD approval, AOA alteration ROC approval is required. Conversion of section 8 company into other kinds of company, that means you tell me conversion of not for profits to profit oriented companies, yes or no? Section 8 to other kind. So what is the procedure? First, special resolution from the members. For getting special resolution, you have to conduct general meeting, and for that you need to give notice. Along with notice, you should give explanatory statement under section 102 and make an application to regional director in form INC 18 along with that file required documents. Do you remember novation? Do you remember alteration? Indian Contract Act, alteration, novation. Novation means novation or alteration means what? Changing the terms and conditions. For changing the terms and conditions of a contract, mutual consent of the parties is required, yes or no? Here also there is a contract between company and members. Sir, what is that contract document name? MOA AOA. So if you want to change MOA AOA, mutual consent of the parties is required. So company want to change, of course it need to take permission from members. What type of permission? Special resolution. Once members give special resolution, go to central government, but power delegated to RD. Next one, notification requirements. Serve notice by registered post or hand delivery to the following people. Why? Being a section 8 company, you might have taken tax benefits. Like everyone has to pay 30% of the taxes of the net profits. 30% of the net profit as taxes. But section 8 companies, if they had a certificate from income tax officer, we call them as section 12A ATG. If they have those certificates, they're not required to pay taxes. So now after conversion, benefits still available will be stopped. Will be stopped. So communicate with these income tax authorities. Also communicate with government departments from where you are getting periodical benefits. If any authority wants to make an objection, they can raise objection within how many days of receiving the notice? 60 days. So that means RD will wait for 60 days. Up to 60 days, if there is no objection from these people, RD assumes that there is no objection for these people, RD will process the application. Publish a notice in 2 newspapers, vernacular and English newspaper. Sir, why? Who knows? Your old subscribers still every month they are making donations. So you need to communicate with public. So far we are section 8 company, but from tomorrow onwards or next month onwards, we are no more a section 8 company. Stop donating money. So communication to public is possible only if you advertise it in 2 newspapers. Vernacular newspaper, that means local language newspaper where company's register office is situated. English newspaper. Also publish it on company's website and central government notified websites within 1 week of filing an application. Now all the donors will stop making donations. Now if you observe, public will stop making donations and government departments will also stop giving privileges. Now from all ways, cut happened. Next one, RD will observe whether this company regularly filed all the financial statements and annual returns or not. If yes, processing will be done, or else you you remove all these defects. If application is made 3 months after the preceding financial year, attach financial statements certified by the CA. See, what is this point? See, 31st March 26 is the closure of financial year date, right? When you are filing application is important. If you are filing application on 31st May 26, what is the time gap between closure of financial statements and filing of application? 2 months, no problem. If the gap is more than 3 months, suppose you are filing application on 1st October 26, now how much gap is there? 6 months. For this 6 months, prepare financial statements, get them audited, and also file them, but they should not be older than 30 days. That means 30th September, till 30th September you prepared financial statements, you get them audited. Now by 30th October you submit to the regional director. Getting my point, ma? Closure of previous financial year and application date. If gap is less than or equal to 3 months, no problem. If gap is more than 3 months, for that gap period also prepare financial statements. But the point is, today financial statements over, the next day I can't go with RD. I may take some time, but that sometime should not be more than 30 days. Everyone. Next one, regional director's role. If RD is satisfied, approve conversion subject to the terms and condition. Before imposing any condition or rejecting the application, RD gives reasonable opportunity of being heard. That is normal point only. If he wants to confirm, he will confirm the conversion. If he want to oppose the conversion, then he will give one notice. See, because of these grounds, I don't want to convert Section 8 to other kind of company. And finally, if RD approves it, then conduct a general meeting, pass special resolution, amend MOA, AOA, file all the documents with ROC for fresh certificate of incorporation. So don't get doubt, sir. In first point also there is a special resolution. No, this special resolution authorizes company to file application with RD. And this special resolution is to amend MOA, AOA. Getting my point? Everyone? Next one, revocation of license to Section 8 company. Revocation. You told that, sir, we will provide education services, and you are providing how to kill a person services. You are providing training only. What kind of training? How to hold a gun, how to kill a person, how to kidnap a person, how to demand more money. You tell me, these activities are opposite to public policy or in favor of public policy? Opposite to public policy. Suppose your activity is supply of necessaries to needy people, and you are supplying drugs. When authority asked you, you are telling, sir, drug affected people, drug is needy only, no sir. Drug affected people, drug is necessary only, no sir. I am supplying correct only, sir. Now tell me, activity opposite to public policy or in favor of public policy? Opposite to public policy. So whenever your Section 8 company is not complying Section 8 conditions, that means you started profit objects. You are distributing profits among the members. You are not promoting company charitable objects, or you are doing an activity which is opposite to public policy. In all these cases, NCLT will come and give an opportunity of being heard, and it will revoke the license. Let's see. Central government already power delegated to RD. Okay, it's not NCLT ma, RD can revoke the license if company violates conditions of the license. I told you, right? Conditions, Section 8 conditions. Affairs are conducted fraudulently, objects are violated or prejudicial to public interest. Sir, affairs conducted fraudulently. For example, did you watch it Shivaji movie? Rajnikant sir Shivaji movie, 2009 I think it was released, 2009 or 7. So what is the main concept of Shivaji Foundation? He will catch black money. Under money laundering activity, he will send that black money to outside India. And again, he will convert that black into white in the form of donations. Now Shivaji Foundation is taking that money. So this Section 8 company was incorporated to do legal activities or fraudulent activities. Simply converting black money into white money. Understood? So affairs conducted fraudulently, objects are violated or prejudicial to public interest. Upon revocation, ROC shall add private limited or limited to the name of the company in the register. Next one, before passing any order of revocation, company shall be given an opportunity of being heard. Next one, sir, after revocation of license, what company will do? Will company still alive or will be closed? That is the next point. And the answer is company may be liquidated or company may be amalgamated with similar Section 8 company. After revocation, if it serves public interest, CG may direct company to be wound up under Companies Act. Wound up means we will sell all the assets and we will settle all the liabilities. If there is any surplus, tell me, this surplus will be distributed among the members or will be taken by the government? Will be taken by the government. Or amalgamate with another Section 8 company with similar objectives. Here a practical question can be posted like this. See ma, Hyderabad Sports Club is there. RD observed some irregularities in Hyderabad Sports Club and RD decided to close Hyderabad Sports Club. Two options are there. Either amalgamate with Delhi Sports Club or Hyderabad Environment Protection Club. Are you getting my point? Hyderabad Sports Club, they want to close it. One option they are having is merge with Delhi Sports Club. Another option is Hyderabad Environment Protection Club. So with which Section 8 company amalgamation is possible? Environment Protection Club or Sports Club? Sports Club, because similar objectives. In one attempt they asked a question like this, they want to amalgamate this company with another profit oriented company. Suppose Hyderabad Sports Club, another company like Reliance Industry Limited wants to acquire Hyderabad Sports Club. Is this amalgamation possible or not possible? Not possible, only with similar objectives. CG provides guidelines for winding up or amalgamation. CG has authority to approve and structure the amalgamation, determining the new entity constitution, assets, powers, rights and amalgamation and obligations. Simple ma, how to fix purchase consideration, all the things. Time limit for completion of amalgamation, accounting entries, powers, duties. Post wind up, the leftover assets, I call it as surplus, after clearing all the debts, shall be transferred to IBF, Insolvency and Bankruptcy Fund, or similar Section 8 company. Similar Section 8 company means Section 8 company with similar objectives. See here two options ma, two options, either wind up or amalgamate with Section 8 company. If amalgamation with similar Section 8 company happens, no problem. Suppose winding up, sir. In winding up, again I'll have one more option, that is after winding up, if any surplus amount is there, what to do with this surplus amount? Again two options, transfer it to government fund, that is Insolvency and Bankruptcy Fund, or transfer to similar Section 8 company. Clear? Next one, penalty punishment. Default in complying Section 8 requirements, company 10 lakhs to 1 crore is the fine, whereas officers in default 25,000 to 25 lakhs. In case of fraudulent conduct of the affairs, every officer in default is liable for action under Section 447. So fraudulent conduct example, best example, Shivaji movie only. Even Kanchana next part, I think that Moni series, if you remember Kanchana, Ganga, I think Ganga or another movie. One politician approached Raghu Lawrence and told that we will donate 100 crores to your trust. You take 30, balance 70, give it back. Now is it legal or illegal? Illegal. If Raghu Lawrence sir say okay, then Raghu Lawrence sir will get punishment under Section 447. But he didn't say okay, right? Understood? So Section 8 company completed. So in Section 8 company you have to remember conditions, conversion, revocation. Conditions, conversion, revocation. Conditions for incorporation. Quickly. Conditions for incorporation. MOA should contain SARC objects. Dividends allowed or prohibited? Prohibited. Next one. What to do with surplus? Promote other objects of the company. Now what are the additional documents I need to submit? 3 years financial estimates, complaints declaration by the professional. Okay na. Next one, conversion. For conversion, what is the procedure? First, special resolution. Next, file an application with RD. RD will process your application provided within 60 days he should not get objection from few people. Who are the few people? Chief Commissioner of Income Tax Officer, Charity Commissioner, CGSG departments. If there is no objection from them for 60 days, then he will process the application. But he will check one more point. All the pending returns filed or not filed, all the pending financial statements filed or not filed, and next he will verify what is the time limit from the previous financial year closure date. If time is more than 3 months, for that gap period also prepare another financial statements, and it should not be older than 30 days. After submission of all these documents, RD may decide either to approve or reject. But if he decides to reject, he must give opportunity of being heard. If he approve it, then pass special resolution, amend MOA, file all the documents with ROC. Game over. Revocation points. Revocation. In case of revocation, what are the criteria? What is the criteria for revocation? Violation of license conditions, affairs fraudulent, or opposite to public policy. Opposite to public policy. Now, after giving reasonable opportunity of being heard, RD may pass either of these two orders. Which two orders? Either amalgamate the company with similar Section 8 company or liquidation. In case of liquidation, if surplus is there, then again transfer it to similar Section 8 company or transfer to government fund, that is insolvency and bankruptcy fund. For next, fine. Fine to the company. How much? 10 lakhs to 1 crore. Officer in default 25,000 to 25 lakhs. And in case of fraud 447. Clear? All the points I covered. Next one, effect of registration. Effect of registration, company gets body corporate features. Company will get body corporate features. You can see here, all the subscribers will become members of the company, and it can acquire, hold, dispose the properties. It can enter into the contracts on behalf of, company will enter into the contract directly. No need of representative capacity. Can sue, can be sued. So simply these are the characteristics of a company. Next one, section 4. Section 4, MOA and its significance. MOA and its significance. See, the purpose of MOA. MOA, who should read MOA? Two people, one is investors, the other one is public. Simply, investors read MOA to assess the risk. To assess the risk. Recently, you have seen many, news about that new AI which was developed by USA. As a result, Infosys, Wipro, tech company shares are falling. Yes or no? 20 to 25% of the tech company shares were fallen because of new AI which was developed by USA company. So to assess the risk, first you need to understand the object of the company. Where you can read object of the company? MOA. And why public should read MOA? If I'm entering into contract with you, individual, I'll see whether you are a major or minor, whether you are sound or unsound, whether you are qualified or disqualified. But for a company being a body corporate, can I check these things? A company, are you minor? Company, are you sound, unsound? No. Company contractual capacity decided by MOA object clause. Simply object clause defines what to do, what not to do. Understood? So two people will read MOA. So shareholders, creditors, to know company powers and activities. It is a public document, so doctrine of constructive notice is applicable. Help shareholders how the money will be used. And if company is going beyond the MOA, we call it as ultra virus, beyond the powers of the company. Valid or void? Void ab initio. How many clauses are there? 6. Nemo. You can remember like this, You can remember like this. I remembered like this when I was a student. No class. Nemo, object, capital, liability, association, situation. In case of OPC, nomination clause. Tell me, changes in nominee leads to alteration of MOA, no alteration of MOA, no alteration of MOA. Next one, name clause in MOA. Very simple. Name of a company shall always ends with limited in case of public company, private limited in case of private companies, and IFSC in case of IFSC companies. Why? To identify. Limited indicates members liability is limited. Private limited means private limited company. But this rule is not applicable to two companies. Section 8 companies, government companies. Section 8 companies, no need to add words limited or private limited. Government company, even though it is a private limited, name ends with limited only. Next one. So what are the restrictions on the names? The name shall not be identical or similar to the name of existing company. It should not be undesirable in the opinion of CG. Undesirable names means if that name suggests association with CG or SG or local authority, prior permission from central government is required, or else you can't use these names. For example, I want to start a business of some infrastructure business in Chennai. Chennai is the capital of Tamil Nadu. Now, if I incorporate a company name like this, Tamil Nadu Capital Developers Limited, what people will think? Oh, this company is connected with state government. Yes or no? If I incorporate a company like this, V Rashtrapati Private Limited, what people will think? Oh, Rashtrapati is member of this company. So such kind of names become undesirable. Allowed or not allowed? Allowed with prior permission of CG. Prohibited words. These words are not allowed. Special entity names. If you want to use insurance, bank, stock exchange, IRDA permission, bank, RBI permission, stock exchange, SEBI permissions are required. And for undesirable names only, a list has been given ma. Plural singular names not allowed. Plural singular names not allowed. Suppose Green Technology Private Limited is there. What is the name of the company? Green Technology. Now I want to incorporate a name with Green Technologies Private Limited. Allowed or not allowed? Singular is there, plural not allowed. Type of and case of the letters. Suppose Reliance is like this ma. Reliance Industries Limited is like this. Now I want to incorporate a company like this. Allowed or not allowed? Not allowed. Use of different tenses. Next one, slight variation of spelling. Suppose I want to incorporate company like this. You tell me spelling same or different? Different. But punctuation, pronunciation same. This is also Reliance only. Yes or no? Next one, different phonetic spellings. Complete translation or transliteration. Like if you see BSNL, Bharat Sanchar Nigam Limited. Yes or no? Bharat? So complete English form, if I convert it, like Bharat India, I will write. Nigam, some other name I will use it. So complete transliteration or translation allowed or not allowed? Not allowed. Use of host name, like domain names. Order of the words, slight change in name, order of the names. Next one, use of definite or indefinite article, simply adding the Reliance. Addition of the name of a place to an existing name, addition, deletion, modification. So all these are like undesirable names only. Next one, reservation of the name. You tell me, for incorporation of company, first we need to prepare document called MOA. In MOA, what is the first clause? Name clause. So can I write name as per my own will and wish? No, that name should not be identical, that name should not be similar, that name should not be undesirable. So whether proposed name is available or not, for that first I will file an application using forms SPICE, SPICE INC 32. If name is not used, if it is available, then your name will be reserved for a period of 30 days. Sorry, 20 days. Name will be reserved for how many days? 20 days in case of proposed company, 60 days in case of existing companies. So during this 20 days, you need to prepare MOA, AOA, you need to prepare declarations, and you need to attach all the documents, submit it with ROC. So 20 days over, I forgot to submit the documents. Then what is the consequence? The name so reserved shall be cancelled and it will be available for public. Existing company, if they want to change the name, then they will use RUN, that means reserve unique name. RUN stands for reserve unique name. They will use it for reserving the name. And for existing companies, the change of name, the new name will be reserved for how many days? 60 days. For new companies, name will be reserved for 20. Why? Because for existing companies, if they want to change name, they need to alter MOA. Alteration of MOA requires members approval. Members approval you can take at general meeting. General meeting today, if you call, after 21 days only you will conduct meeting. So you tell me 20 days time period sufficient for existing company to change the name. That's why for them 60 days. Can I proceed? Next one. If you want any extension of the name reservation, standard time, what is the standard time? 20. But if you want more number of days, for extra 20 days, pay extra 1000. For extra 40 days, pay 3000. Next one, cancellation of the name. If a reserved company name was obtained using false information, what? If the reserved name was obtained using false information, company not yet incorporated, company incorporated. If company not yet incorporated, name will be cancelled and the applicant will be fined up to 1 lakh rupees. Company already incorporated, sir. ROC, after giving opportunity of being heard, may direct to change the name within 3 months. Strike off. Strike off is nothing but removal of name. Strike off is nothing but removal of name, or petition for winding up. Say for example, Fast Track. Have you heard about Fast Track watches, right? Fast Track is a brand of Titan company. It's a brand watch of Titan company. It's a trademark actually. I'm not supposed to use word Fast Track. But what I did, I forged the director signature of Titan company. Like they are giving NOC to me to use that name. And I filed an application, Fast Track Private Limited. I submitted information which was original of fake. Fake. Now ROC came to know about this matter before incorporation of company. Now what ROC will do? It will cancel the name so reserved. And applicant will get punishment up to 1 lakh rupees. 1 lakh rupees. Sir, ROC was somewhat, ROC gave certificate of incorporation also, sir. Now, Titan company will file an application with the government, sir. They copied our brand's name, sir. Now, ROC will give 3 months time. Change your name. That is nothing but rectification of name. Section 16, I am going to tell you. If you are listening to them, no problem. You are not listening. They will observe any transactions are. No transactions. Removal of name. There are transactions. Then petition for winding up. That petition will be filed with whom? NCLT. Understood? Everyone. Next one, situation clause in MOA. Situation clause in MOA. In situation clause, you will not find registered office address. You will find only name of the state where company's registered office is going to be established. In one exam, one practical question was asked like this. ROC rejected incorporation document since MOA situation clause is not containing complete address of the company. ROC contention valida invalida? Answer is invalid, because in situation clause you will not find company's total address. You will find only company's state name where company's registered office is going to be established. And importance of registered office, CIJ: communication, investigation, jurisdiction. Communication, investigation, jurisdiction. If income tax department wants to communicate something with company, they will send letters to which address? Director's address or company address? Company address. Address means registered office address. If income tax department want to conduct investigation, search and seizure, they will come to which address? Registered office. If you are having dispute with company, which court you can file a petition? The court where company's registered office jurisdiction is present. Suppose a company is situated in Hyderabad. You had a dispute with that company. Now you can't file case in Chennai. You need to go to Hyderabad. You need to file a petition in Hyderabad court only. Understood? So importance of registered office, again I am telling you, communication, investigation, jurisdiction. Next one, see, registered office address for receiving notices and communication. See, registered office is different, corporate office is different. Again, head office may also be different. Suppose you have some sentiment connection with your village. You can have registered office in village, and you can establish head office or corporate office in the city, no problem. Here I am talking about registered office. I am not talking about corporate office. In examination, to confuse you, they will ask a question like this. Company registered office is in village of Chennai. Company's corporate office is in Coimbatore. Now they want to change corporate office from Coimbatore to Chennai. Is ROC, is RD permission required or not required? Answer, not required, because I am not shifting my registered office. I am shifting which office? Corporate office. Getting my point? See, registered office is the place where all statutory registers are kept. Corporate office is the place where meetings are conducted. That's it. Next one. So within how many days a company should have registered office? 30 days of incorporation. Within 30 days of incorporation, company should have registered office. And it should maintain registered office all times to receive and acknowledge communications and notices. So remember, so this is the date of incorporation. For example, within 30 days, how many days? Within 30 days, company should have registered office. And within the same time limit, company should communicate registered office particulars with ROC. That means to have registered office and filing with ROC, same time limit, it is 30. Whereas for IFSC companies, it is 60. Object clause in MOA. Next one, object clause. In object clause, important point is doctrine of ultra virus. Ultra, that means beyond. Virus means powers of the company. See, from where company get powers? Object clause. What to do, what not to do, everything is there in object clause. Suppose Infosys is a technology company. Now, can Infosys invest funds in LPG gases? Right now, because of war pandemic, LPG gases prices will go up. So at lower prices, we will buy crude oil. At higher prices, we can sell. Easily, we can make a profit. Right now, $100 per barrel. There is a speculation. It may go up to $200. So investment 1 rupee, return also 1 rupee, 100% profit. Can they do that business? Like this only in examination, you'll get a question. And the answer is no. Already done. Then it is an ultra virus. Then it is ultra virus. Any act not stated in the memorandum is considered as ultra virus. No party, including outsider, can sue for enforcement or specific performance of such an act or agreement. Why? Because it is void ab initio. An act which is void ab initio cannot be questioned, cannot be enforced. Even it can't be ratified. Do you remember in foundation, a minor after attaining age of majority, can he ratify the acts done during minority? Can he ratify? No. Why? Because those acts are void ab initio. Void ab initio acts can never be ratified. Only valid acts can be ratified. That is the rule of ratification. Company at the time of this transaction, investment in crude oil, at the time company is not having power. So subsequently, can members ratify this transaction? The answer is no, because valid acts can be ratified. Void ab initio acts cannot be ratified. But they can ratify these three things. Which three things? Let's see. If an act is intra vires the company, but beyond the authority of the directors, company may ratify it in proper form. Suppose company can borrow money. Up to 50 lakhs, company can borrow with board resolution. Above 50 lakhs, company can borrow money only with members' approval. Now, company borrowed 60 lakhs amount. Is it within board powers? No. Without members' permission, they borrowed 60 lakhs. Now, if members approve this transaction, this will be valid. This is within the powers of the company only. It's not beyond, but it is beyond the powers of the directors. If the act is ultra vires, the directors' powers, shareholders may ratify it. If the act is ultra vires, the AOA, company can alter the AOA. Protection to the stakeholders. This doctrine protects shareholders and creditors by ensuring that company acts only within the defined objects. When you are investing money in Infosys, you thought of that money will be utilized only for technology. But if they are using money for crude oil, tell me, your money is at risk or not at risk? Suppose at $100 they invested money. Meanwhile, Trump sir, he became Baba, for example, Swamiji. He stopped the war. As a result, crude oil from $100, it fallen to $50. Now tell me, 50% of the investment lost or not lost? Lost. That means whose money is getting affected? Company money. Company money means whose money? Members' money only. So protect shareholders and creditors. And there is a case law on Ashbury Railway Carriage Company versus Ritchie. This is a case law on ultra virus. I'll just give you a brief synopsis about this case study. In this case study, Ashbury Railway Carriage Company is having power to make railway wagons, manufacture railway wagons, sell them, manufacture and selling. But one day Ritchie approached company for finance contract. If you read MOA of the Ashbury Railway Company, it contains engineering contracts, mechanical contracts, general contracts. Ritchie is telling, sir, I gave an offer, you gave acceptance, offer plus acceptance, promise. Promise supported by consideration, agreement. Agreement which is legally enforceable, it's a contract, general contract, you had power to finance me. But CS of the company is telling, there is no word finance contract in the MOA, therefore we can't finance you. Matter went to the court, and what court told is, yes, this is beyond the powers of the company. Any act beyond the powers of the company is simply void ab initio. Getting my point? For the first time, doctrine of ultra virus came from this case study only. But Ritchie argued that, sir, general contract, why it can't be general contract? In interpretation of statutes, we had a rule called rule of igisdem generis. As per rule of igisdem generis, in a combination of words, special words first General words next. Tell me what is the first? Special words. Next general words. General words will take meaning of special words. So engineering contracts, mechanical contracts, general contract means those contracts which are associated with mechanical and engineering but not finance. So therefore this is beyond the scope of the company and it is ultra virus. Now Richie asked, how can I know this point? Judge told doctrine of constructive notice. That means what? Notice is of two types ma. Actual notice, constructive notice. Actual notice means giving to you directly. Suppose tomorrow class timings will be 2:30 to 8. If I give notice like this is actual notice. Tomorrow class timings I will update in the WhatsApp group, I will tell. Suppose if I tell like that. Now it's your duty to go through WhatsApp group. Your duty to identify the timings and by the time you should come to the class. Yes or no? Tell me, ICA giving examination schedule to each and every student, they are publishing it on the website. Publishing on the website. Now what type of notice is it? Actual constructive? Constructive. Tomorrow no student can question, I don't know about the schedule, that's why I didn't attempt the exam, or else I would have got all India first rank. So without exam give me qualification certificate means will I say listen to all these stories? No. So once something is published on the website, it's your duty to go through the website. So like MOA, AOA also similarly like that only, because MOA, AOA you will file with ROC for incorporation. Once you file these documents, they become public documents. It's your duty to go through these documents. That's what doctrine of constructive notice. See, two doctrines I completed. Ultra virus, constructive notice. We had another doctrine. What is that another doctrine? Indoor management. I'll discuss with you later. Next one ma. Liability capital subscription clause. Liability. Limited by shares. Members liability is limited to the extent of unpaid amount. Limited by guarantee. Limited to the extent of guarantee amount. But if you see here, three amounts are there. Deficit. Deficit means what? Assets less than liabilities. Assets minus liability is nothing but deficit. Correct? Next one, winding up cost. You know, liquidator will come and liquidate the company. Will he do free of cost or will he charge some remuneration? Remuneration. So that is nothing but winding up cost. And next one, adjustment of rights among the contributories. Suppose ma, there are two people ma. 2 lakhs is the deficit amount. Each one should pay how much amount? 1 lakh, 1 lakh. Suppose A paid complete 2 lakhs. A paid complete 2 lakhs. Now what liquidator will do? B, you pay 1 lakh. This amount will be given to whom? A. It is nothing but adjustment among the contributories. See ma, one person depending on the situation name will change. Up to incorporation is known as subscriber. Who? Subscriber. After incorporation he will be called member. Once shares are allotted he will be called shareholder. In the event of liquidation he will be called contributory. Getting my name? One person only but four different names. Up to incorporation, subscriber. Upon incorporation, member. Upon allotment of shares, shareholder. In the event of liquidation, contributor. Clear? Everyone? Everyone. But here the liability, you know, present members will have liability ma. If present members are not paying the amount, then past members will also get liability. Sir, past members means how much duration past, sir? 12 months. Why 12 months? Because going concern assumption is for 1 year only, right? Going concern means not unlimited years. Standing on 31st March, am I able to do business till next 31st March? If answer is yes, going concern. If answer is no, no going concern. So that's why today company is getting liquidated. If all my present members are able to pay amounts, no problem. Any one present member is not able to pay amount. From whom he got the shares? Sir, so and so from X he got the shares. When this transfer happened? Within 12 months only. Now bring that X, ask X to pay the amount. Next one, share capital clause. You will find three amounts. First one is how much is the capital. Next one is number of shares. And next one is face value. These three numbers should be present. Simply my capital 10 crores wrong. Capital 10 crores wrong. It should be divided into number of shares with each face value. Can I proceed? Everyone. Next one, subscription clause. In subscription clause you will find the details of the subscribers. Forms and schedules ma. You know, in Companies Act we are having total how many schedules? 7 schedules. Do you remember? Schedule 3 is financial statements. Schedule 1 is about MOA and AOA. In first schedule, we are having 10 tables. How many tables? 10. A to J. A, B, C, D, E for MOA. F, G, H, I, J, AOA. You just remember this structure. Limited by shares. Just remember this structure. Shares. Next one, guarantee without share capital. Next one, guarantee with share capital. Unlimited company without share capital. Unlimited company with share capital. Remember this structure. First minus, next plus. Minus, plus. Now how to remember tables, just write in the order, chronological order, A, B, C, D, E. This is for MOA. Next one, AOA. Next one, AOA. For AOA also write like this only, F, G, H, I, J. After writing like this, just interchange these two. Interchange these two. Enough. Even if tomorrow if they ask, you can easily answer these questions. Getting my point? Share capital, guarantee minus share capital, guarantee plus share capital. Unlimited minus share capital, unlimited with share capital. Now A, B, C, D, E, tables of MOA. Tables of AOA, F, G, H, I, J, you write like that, just interchange G, H and I, J. Next one, this note point is also an exceptional point only. Ma, you tell me, you formed as an association, you did a business, there are some profits. Now to whom these profits, to whom these profits will be shared? Among the members or among the non-members? Among the members only. Yes or no? Any share of profit to an outsider, valid or void? Void. Similarly, here also you can see. In case of company limited by guarantee and not having share capital, giving any person a right to participate in divisible profits otherwise than a member shall be void. Other than a member, if you want to share your profits with an outsider, that is valid or void? Void. Clear? Section 8 company, if you take Section 8 company, sharing of profits among members also void only. That's why they may write a clause like this. Section 8 companies, sharing of profits not allowed, but any surplus is there, we will pay some 10% to a fellow Mr. X outsider. Now because of this note point, that will also become void. Understood? Next, articles of association, section 5. In these articles of association, this is main important point. If they want to test section 4, they will test this point only, entrenchment. Entrenchment. But before understanding entrenchment, you tell me, OR means how many votes should be in favor? It should be greater than votes against. SR means how many votes should be in favor? 3 times of the votes against, correct? You remember the equation, right? Special resolution means votes in favor should be 3 times of votes against. Ordinary resolution means votes in favor greater than votes against. Suppose if I say 90% voting power, if I say 90% voting power, that means votes in favor should be 90%. Now you tell me, out of these 3, which one is more easy? Which one is more easy? Easy to get. OR is more easy to get because it is more than 50% only. Second easy one is SR, because here 75% voting in favor is enough. Third one is extremely difficult because here we need to get how much voting power in favor? 90%. Getting my point? Now, generally to alter AOA, to amend AOA, special resolution is required. To alter any clause of AOA, what type of resolution required? Special resolution. In the place of SR, if you ask 90% approval, is it easy or difficult? Complicated or easy one? That process is known as entrenchment. That process is known as entrenchment. They will narrate a story like this. For example, Mr. V incorporated a company, V Private Limited, in which he will be the managing director forever, and he will be removed only on the basis of proven misconduct. That is the clause mentioned in AOA. But Mr. V is having a doubt. The doubt is, tomorrow, after planning for expansion, after going with series of public offers, V's holding in company will come down. Public holding in company may go up. If public is holding 75% of the paid up share capital of the company, with that 75%, they can easily pass special resolution, they can easily remove this clause, they can easily remove me from the position of managing director, correct? To get out of this kind of difficulty, to get out of this kind of situation, we requested you to advise. As a professional, you advise. Now what answer you need to write? Entrench articles of association. Instead of special resolution, ask to get some 90% approval. Getting my point, everyone? So that means if Mr. V is having, say for example, 11% of the paid up share capital, public is having 89% of the paid up share capital. With that 89%, can they alter AOA to remove me? No. Now the question is, this entrenchment, how to include in AOA is the question. And the answer is, you can include entrenchment either at the time of formation of the company. Sir, I forgot, sir. Okay, now by altering AOA, you can entrench your AOA. In that case, what kind of approval is required? If you are a private company, to alter AOA for inserting entrenchment provision, consent of all members is required. If you are a public company, special resolution is enough. See ma, in AOA total 80 clauses are there. Particularly one clause, say for example 46th clause, amendment need 90% approval. That is my context. So entrenching 46th clause is nothing but entrenchment of AOA. To entrench AOA, either it can be done at the time of formation of the company. You forgot. Then amendment. For amendment, how much approval required? If you are a private company, consent of all members is required. If you are a public company, yes sir is enough. But once you entrench your AOA, communicate the same with ROC. ROC will also record the same. So for communication with ROC, which forms are applicable? At the time of formation of company, SPICE form. Subsequent to formation, file a form MGT 14. Within how many days of entrenchment? 30 days after entrenchment. So in examination, they may ask you a question like, to alter private company AOA in order to insert entrenchment provisions, what type of resolution is required? And you have to answer unanimous resolution. For public company, special resolution. Can I proceed? These tables I completed ma. These tables I completed. Because here if you see shares guarantee plus share capital, but there guarantee minus share capital comes first. That's why I interchanged these two. AOA completed. MOA versus AOA. I'm telling, if our time is too bad, you can expect this one for 5 marks. Getting it? Because many students think that this is the easy question only, why this kind of questions will come. But this kind of questions only will come. So differences, content to supremacy scope. Just give one time reading. Fundamental conditions. Why fundamental conditions word they used? Name of the company, objects, what to do, what not to do, how much capital, with how much capital they are going to start, what is the nature of members liability, where company's register office is situated, and who are the subscribers of MOA. All these 6 elements you will find in MOA. That's why MOA is known as fundamental document of the company, constitutional document of the company. Whereas AOA, you will see internal regulations. See, one small point to define, to give difference of MOA and AOA, one small point. Small point is what to do, what not to do MOA. How to do AOA. Simply internal directors, board of directors, internal management powers, duties, everything you'll find in AOA. So which one is supreme out of MOA, AOA? Which one is supreme? MOA. And scope, which one is having wider scope? MOA only. Like simply, if MOA is like this, AOA would be like this. But compared with the Companies Act, these two documents are inferior only, because Companies Act is supreme. Doctrine of constructive notice I already discussed with you. Doctrine of indoor management. As per doctrine of constructive notice, everyone before dealing with company must have knowledge of company's MOA and AOA, correct? Being public documents, you should read these documents. But with respect to internal matters, like here one case study is there Royal British Bank versus Turken. One case study is there. I think it was shifted to CA Foundation syllabus. As per this case study, what happened, Turken gave some money to the Royal British Bank. Royal British Bank executed a promissory note, but the point is, to borrow that much amount, members' prior approval is required. Without members' prior approval, bank borrowed funds from Turken. On the date of maturity, when Turken went to bank new management told that, sir, old management borrowed money without permission, therefore your loan amount is null and void, we are not liable to you. Now what Turken questioned? Whether members give permission or not, it is an internal matter. Who am I? Outsider. Even your members had no control over day-to-day affairs. Tell me, can members participate in day-to-day affairs of the company? No. Then how can I know about internal matters? Even judge also told the same points. Outsider, no need to verify internal matters. As far as internal matters, he can make an assumption. So as per indoor management, who will be protected? Outsiders are protected. As per constructive notice, who will be protected? Company is protected. Getting my point? That's why indoor management is an exception to constructive notice. So simply, outsiders can assume that internal procedures were properly followed, need not to know about internal issues. Stakeholders do not need to verify whether meetings were held, resolutions were passed or not. Doctrine protects outsiders by assuming internal proceedings align with the documents filed with the ROC. And this is a old doctrine, and it's safeguard against abusing, simply misuse of constructive notice. Can I proceed? But this is very, very important. First, try to understand my question. If they ask you, write indoor management and its exceptions, you can straight away write this answer, right? But in 2019, if I'm not wrong, they asked a question like this. I say asked a question like this. Define doctrine of indoor management, or discuss doctrine of indoor management, and also specify the situations where constructive notice is applicable. Are you getting my point? Are you getting my point? Discuss doctrine of indoor management and also discuss the circumstances where constructive notice is applicable. Now what answer you need to write? Same answer only. Circumstances where indoor management is not applicable or circumstances where constructive notice is applicable, both are same, because exception to exception is nothing but general rule only. Indoor management is exception to constructive notice. Exceptions to indoor management means constructive notice is applicable. In that first point, if outsider is knowing irregularity, suppose in my example I told Turkend is an outsider. Imagine Turkend is a director. Without director's knowledge, general meeting will be called? No. But intentionally he is giving loan means he is having the idea of irregularity and still he is giving a loan. If you are having knowledge of irregularities, or if you are able to easily discover irregularities, then how indoor management is applicable to you? Sir, I took an assumption, sir. Blind assumptions not allowed. Getting my point? The rule does not apply to the forged documents because forgery is nullity. Forgery, effect of forgery is nullity. So for forged documents, even law is not applicable. Indoor management is also not applicable. Where there is a doubt about existence of an agency. Suppose in a company, A, B are the directors. Directors are having power to collect money from the debtors. One day, F, finance manager, approached a customer and collected money from the customer. Later he ran away. Now company liable or not liable? Answer is not liable. Why? There is no agency between company and finance manager. Agency is with only directors. So if there is a doubt on existence of agency, inquire and then you pay. No sir, I took an assumption. How can you took an assumption in such cases? Next one. When a precondition must be met before company can exercise certain powers. Like before company taking loan amount from you, company, 2 directors has to sign the document. But the document given to you contains only one signature. Now you must ask yes or no. If you are not asking, in future also you can't ask. The precondition is document should be signed by both managing director and whole-time director. But you got a document which was signed by only whole-time director. So now you can't take protection of indoor management. So remember these 5 points. If they want to ask a direct question, they will ask like this only. Circumstances where constructive notice is applicable, or circumstances where indoor management is not applicable. 5 points. Knowledge of irregularity, negligence. The second point is nothing but negligence, ma. Negligence. There is a scope to identify irregularity, but you didn't verify it. And third one is forgery. Fourth one is doubt about existence of agency. Fifth one is precondition. Precondition. 5 points, remember, can be tested for 5 marks. Doctrine of indoor management is exactly reverse to constructive notice, because constructive notice protects company, whereas indoor management protects outsiders. Section 6, very simple. Do you remember that in court you will see balance, right? Same like that only. Imagine balance. One side Companies Act, other side MOA, AOA, board resolution, members resolution, agreements executed by the company. So to which one we should give more importance? To which one we should give more weight? You tell me. Simple question only. One side act, other side 5 documents: MOA, AOA, board resolution, members resolution, agreements executed by the company. Which one is supreme? Act is supreme. So MOA, AOA cannot override act. What it mean? You tell me. Investment in body corporate. No. Section 8 activities. Legal or illegal? Tell me. Section 8 activities, legal or illegal? Legal or illegal? But for OPC, illegal. So in OPC MOA, if Section 8 activity is there, Companies Act is telling don't do. Now which one I should follow? MOA, Act? Act. Understood? Underwriting commission, maximum you can pay 5% in case of shares. That is Act telling. AOA you wrote 50%. Which one I should follow? Act. That means Act is having supremacy over MOA, AOA. Similarly, board resolution, member resolution also. Say for example, ultra virus acts can be ratified or cannot be ratified? Cannot be ratified. But members passed a resolution ratifying ultra virus acts. Now we should follow Act, we should follow member resolution? Act. So in case of inconsistency, Act overrides inconsistent provisions. Sir, in my AOA total 100 points are there. All 100 points null and void are? No, only inconsistent provision, one clause is void, remaining you can follow as it is. Understood? That is about section 6 completed. Section 6 completed. Did you solve problems? Schedule 3 managerial remuneration problems. To a single managing director, a public company can pay how much maximum remuneration? 5%. But when company made an agreement with MD, it wrote 8%. Act is telling 5, agreement is telling 8. Which one I should follow? Act. Understood? Examples just give one time reading. But in this, sometimes what happens, AOA sometimes will give permissions. AOA sometimes it will give permission to the company. If you want, you can follow different provision also. In that case, even though it is inconsistent, you can follow it. Getting my point? In section 106, I will remind you this point, ma. In section 106 and even section 47 also, I will remind you this point. Don't worry. Sometimes AOA voluntarily will tell company, you can follow me, or if you have independent choice, you can follow that one. So only those cases you can go beyond Act, but in all remaining cases, Act overrides MOA, AOA. Next one, ma. Effects of MOA, AOA. Ma, there is a contract between you and me. For example, this is a regular class. Imagine fees, for example, 6,000 rupees. 50% at the time of commencement of batch, 50% at the time of completion of batch. Now what duty you are having to me? Payment of 6,000. And what duty I am having to you? Coaching classes. Similarly, company is having a duty to comply with MOA object clause. Member is having a duty to pay call amount as and when company makes calls on shares. If member is not paying call amount, company is having power to forfeit the shares. If company is not following object clause, member can bring injunction order against company. Injunction order means stay order. Understood? Understood. That means company is bound to the members. Members are also bound to the company. That is all because of MOA and AOA. Again, I'm telling you, MOA, AOA are contractual documents between company and members. Members liable to company, company liable to members. My question, because of MOA, AOA, is company liable to outsiders? Are outsiders liable to the company? Because of MOA, AOA, is company liable to outsiders? Are outsiders responsible to company? If your answer is yes, listen to my question. I'll incorporate a Section 8 company in articles of association. In my Section 8 company, me and my friend, only two people are the members of the company. Okay. So in my AOA, I wrote a point. Prime Minister of India every month should donate 5 crores to my Section 8 company. And if you say MOA, AOA bind outsiders to the company, then Prime Minister should donate 5 crores to my entity. Yes or no? Every month. Say yes or no. Getting my point? If you think outsiders are responsible to company because of MOA, AOA, then I'll keep this point. Prime Minister should donate 5 crores to my Section 8 company. Who is Prime Minister? Is he a member? No, outsider. Getting the logic? So tell me now tell me, because of MOA, AOA, is company liable to outsiders? No. Are outsiders liable to company? No. Members to members also liable in one case, but not directly. If you see, members are not liable to each other, but members are liable to each other indirectly. See, directly they are not liable. No confusion at all. Directly they are not liable, but indirectly they are liable. Indirectly they are liable. Listen to the case study. One case study is there. D point only. D point only. See, our company is a private company. You are the members. In private company, transfer of shares freely allowed or restricted? Restricted. So if you want to transfer shares, existing members should acquire those shares. I'm the member come director. You came to me to sell the shares. I'm telling, I told that I won't take your shares. I won't take your shares. Now can you file case on me? Yes. Yes, because as per company AOA, existing members should take the shares. Existing members should take the shares. So I'll be compelled to take the shares. I'll be compelled to pay the consideration also. That is the judgment given in this case study. AOA requires the directors to buy the shares at fair value. Now the directors, despite members, were compelled to purchase the shares as AOA imposed that obligation. Clear? Next one, alteration of name clause in MOA. Alteration of name clause in MOA. Simple synopsis I'll tell you. Tell me, name clause where you will find? Name clause you will find in which document? MOA. MOA is a constitutional document between, MOA is a contractual document between company and members. Correct? See, company name will be mentioned in certificate of incorporation. This name will be as per MOA. If you want to change this name, you need to change MOA. For change of MOA, members approval is required. For that, general meeting should be called for. In that general meeting, we need to pass special resolution. Then alter MOA. File these two documents with ROC. Now ROC will change certificate of incorporation. Is this a benefit or not a benefit? Yes, benefit only. You can change name whenever you want. Reasons for change of name, whenever there is change in ownership, whenever there is change in nature of business. Getting my point? Name will be changed. Satyam company, when acquired by Mahindra brothers, they changed Satyam to Mahindra Satyam. Vodafone company, once acquired by Idea, name of the company was changed to Vodafone Idea. Yes or no? Change in nature of business, change in ownership, name will be changed. But this benefit of change of name is not allowed to company which is having one of the 6 defaults. This point you need to remember. One of the 6 defects, if they are having, name change is not allowed. Sir, what are the defects, sir? What are the defects? Look at C point. Look at C point. Defaulters. What defaults? not filing financial statements, not filing annual returns, not repaying deposits, not repaying debentures, not paying interest on debentures, not paying interest on deposits. Total 6 defects are there. 2 are non-monetary ROC filings, 4 are monetary debentures, deposits, interest on deposits, interest on debentures. Any one defect you are having, you are not allowed to change your name. Sir, then what is the remedy? Rectify all those errors, rectify all those defects. Immediately you can change the name. And what type of approval is required for change of name? Special resolution. Clear? Everyone? Two points you need to remember. One is procedure for alteration of name. Second one is prohibition on change of name. Procedure I told you. General meeting, pass special resolution, file a document with ROC. But here you need to remember one point. Existing company wants to change the name, whether proposed name is available or not. For that also they need to reserve the unique name. Using which system? Run. And that name will be reserved for 20 days or 60 days or 60 days. Okay. Next one, that is procedure. Second one is what? Prohibition. When prohibited? All 6 defects are any one of the 6 defects are any one of the 6 defects. Fine. Next one, rectification. Ma, when we will use the word rectification, ma? When there is a mistake, to correct the mistake, we will use the word rectification. Rectification of errors, right? So here, what mistake happened, sir? Are your name is identical to or similar to the name of existing company. Sir, why ROC allotted that name? Right now, everything got centralized. But previously, ROC used it to maintain record for each and every state separately. Tamil Nadu, one association named, incorporated one company with the name PQR Industries. 2 days later, in Andhra Pradesh, another association also incorporated with the name PQR Industries only. This happened because lack of communication. Getting my point? When mca.gov.in website came, when central government is collecting complete information, they observed that, oh my god, 2 associations using same name. Now, if central government is of opinion that, if central government is of opinion that 2 company names are identical or similar, or your company name is similar to the name of trademark. Reliance is a trademark. Logo is different, trademark is different, ma. For example, Shrestha is a trademark. Getting my point? So if you want to use the name of trademark, you have to take consent from the owner of the registered trademark, or else owner of the registered trademark may file an application with CGE. Sir, within how many years you need to file an application with CGE? 3 years. Remember, ma, this note point is for second one. On this note point, 2 times question came. 2 times question came in examination. Suppose, Mr. Rahul incorporated a company name with Taxman Publishers Private Limited. Taxman is a registered trademark. Owner of registered trademark filed an application with CG for rectification of name after 5 years of incorporation of the company. Is CG bound to order for rectification of the name? No. Why? Application should be filed when? Within 3 years. One time this question came. Another time question came like this. Another time owner of registered trademark filed an application within 2.5 years of incorporation of the company. Now managing director of the company, he contended that application should be filed within 2 years, not 2.5 years. Now do you agree with managing director of the company? Yes or no? No. Why? Application can be filed anytime within 3 years. One time question was asked for 5 years. Another time question is asked for 2 years. But one who remembered the 3 years will write the correct answer. See, 3 years of company's incorporation means when company was incorporated using that name, or when company changed the name. From the change of name or from the date of incorporation of the company, owner of registered trademark should file an application within 3 years. Same point applicable to LLP also. Can I proceed? Company shall change its name within 3 months by passing an ordinary resolution. For alteration of MOA, generally SR is required, whereas rectification of name, alteration of capital clause, OR is enough. Repeat, for alteration of MOA, what type of resolution required? SR. But for a rectification of name and alteration of capital, OR is sufficient. And within how many months name should be changed? Within 3 months of CG order. Within 3 months of CG order, name should be changed. Notice to ROC. After name change, company shall notify the ROC within 15 days and submit the order from the central government. ROC updates and issues fresh certificate of incorporation. If company failed, then ROC will, central government will give new name. Central government will give the new name, and ROC will update the register and issue new certificate as per central government order. Company can still change the name in accordance with section 13 even after rectification under section 16. Suppose central government gave one name which you didn't like. Now complying section 13, you can change your name. Can I proceed? But remember, section 13 we read 6 defects, right? 6 defects are there, right? Those 6 defects are not connected with 16. That means under section 16, if you want to rectify your name, no need to check your defects at all. Even the defects are there, you are bound to rectify the name because this is mandatory government order. Can I proceed? Next one, registered office importance already I told you. And what is the time limit to have registered office? 30 days. And what is the time limit for IFSC companies to have registered office? 60 days. And company shall file a form with a registrar of companies within how many days of incorporation? 30 days of incorporation. That form name is verification of registered office. Who will verify? Generally ROC should verify, but ROC is very busy. ROC delegated that power to a professional, practicing professional. So on behalf of ROC, practicing professional and director of the company will verify the registered office premises and file INC 22 with ROC. What is the time limit? For normal companies, 30 days of incorporation. For IFSC companies, 60 days of incorporation. Name board. Name board. One time this point also tested for 5 marks. See, there is no important unimportant points. There is only 2 points. Tested points, not tested points. If they want to give tricky exceptional paper, they will test untested areas only. So name board shall be affixed at the entrance of each and every office where company is having business, and that name board shall have name of the company, address outside of its office in legible letters. See, this is legible letters, right? Not legible means this one only. Are you able to read it now? So small letters means not legible. Legible letters, and both in English as well as local language. Common seal, not mandatory. Official documents, that means company invoices, company bills, company bills of exchange, promissory notes, everything. On those documents, name of the company, registered office, address, SIN and contact details should be present. Shall be printed on all business letters, bill heads, letter notices and official publications. After completion of class, if you are using Geo, go to my Geo app, download previous invoice. On that you will find all these ingredients: name, registered offices, SIN, telephone number, mail ID, website address, fax, if any. These 7 ingredients will be present. Even notice calling for general meeting also, you will find all these elements. Instruments means bills of exchange, promissory notes. So company name should be printed on hundis, promissory notes, bills of exchange, name change. This is another important point, ma. If company changes its name, next to 2 years it should display new name as well as old name. Remember the time limit. How many years? 2 years. Once you change the name, from the change of name, you have to mention in brackets previously formerly known as. Why? Because company will be identified only through its name. Company will not have facial expressions, right? So that's why whenever you change the name, next to 2 years you have to disclose old name. OPC. OPC shall be mentioned in brackets under the name of the company wherever it appears. Next one. Every time when you are changing registered office, within 30 days of shifting your registered office, communication shall be filed with ROC. Suppose in flat number 101 you have registered office. Now you want to shift your registered office from 101 to 201. Is this a change or not a change? Yes, this is also change. This change shall also be communicated with ROC. Within how many days? Within 30 days of shifting. Next one. Shifting of registered office. Shifting of registered office is of 3 ways. How many ways? 3 ways. One is within city. Second one is change in city but no change in state. No change in state. And last one is change in state. Change in state. In the second one, you had another two alternatives. One is no change in ROC, no change in ROC, change in ROC, because Tamil Nadu and Maharashtra are having two ROCs. Tamil Nadu and Maharashtra having two ROCs. Tamil Nadu, Chennai, Coimbatore, Maharashtra, Mumbai and Pune. Up to this attempt only, because next attempt onwards, this entire structure is going to get changed. For September attempt, mostly for September attempt, this structure is getting changed. So ICA will notify, then I'll discuss as an amendment. Within the city means what? T Nagar to Nungambakam. Within the same city. Change in city but no change in state. For example, Chennai nearby city name? Kanchipuram. Okay, Chennai to Kanchipuram. Imagine both are following in same ROC. Third one is Chennai to Coimbatore. And fourth one is Tamil Nadu to Karnataka. Tamil Nadu to Karnataka. So for each and everything, separate procedure is there. Just I'll write equations here itself. Within the city, board resolution plus ROC filing is enough, ma. No need of members approval. Board resolution plus ROC filing. Just address has been shifted. Communicate with ROC. But coming to case 2, equation board resolution plus special resolution plus ROC filing. So why special resolutions are? The general meetings are conducted either at registered office or any place in the city, town, village where registered office is situated. Getting my point? General meetings where will be conducted? At registered office or city, town, village where registered office is situated. When you are shifting registered office from Chennai to Kanchipuram, next year general meeting in Chennai possible or not possible? Not possible. That means members should know about this change, right? So that's why members approval is required. First case, both are in Chennai only. T Nagar, Nungambakam, both are in Chennai, no problem. No members' interest will be affected. But second case, members' approval is required. Third case, equation is board resolution plus special resolution plus RD approval plus ROC filing. One more additional approval added, RD. Why? Because you are having many pending dispute cases in Chennai jurisdiction. Because of that only you are shifting your office from Chennai to Coimbatore. Now, if this shifting is allowed, you tell me all these pending disputes will be, all these victims will be affected or not affected? Definitely affected. Jurisdiction is getting changed. In Chennai, total some 260 pending cases are there. Now, silently if you are going to Coimbatore, means what about these pending cases? So that's why go and get approval from RD. And change in state. Change in state, the equation is board resolution common, special resolution common, RD approval also common, but RD will give approval only if creditors gives you approval. And finally, ROC filing is common. Who knows, in Tamil Nadu you took more and more loans. Daily creditors are coming to your premises. That's why you want to shift your registered office from Tamil Nadu to Karnataka. Hope creditors will not come to Karnataka. Now tell me, creditors interest affected or not affected? Affected. That's why first take creditors approval, then RD will give approval. So let's put it into equation one more time. 1 2 3 4. What is case 1, ma? Within city board resolution plus ROC filing. Case 2, change in city but no change in ROC, board resolution plus special resolution plus ROC. Case 3, change in ROC, board resolution, special resolution, RD approval plus ROC. Case 4, board resolution plus special resolution plus creditors approval plus regional director approval plus ROC filing. In case 4, you may see central government, but power already delegated to whom? Regional director. My question. Out of these 4 cases, in which case MOA will be altered? Out of 4 cases, in which case MOA will be altered? Fourth case. Because in first 3 cases there is no change in state. My situation clause will be not amended. Whereas in case 4, change in state, I need to change MOA. You understood? So here just to remember time limits, one more chart to remember time limits for case 3 and case 4. Case 3, case 4, remember time limits. So company first it will go to regional director. This is nothing but application. Regional director, either he may approve it or he may reject it, but this should happen within how many days? 30 days. Within 30 days of receiving application, regional director should either confirm or reject. And once company receive a order from RD, company should communicate with the old ROC within 60 days. Communication with ROC should be done within how many days? 60 days. ROC will register and give document to the company within 30 days. Now company going to Coimbatore with ROC Coimbatore, it has to file a document within 30 days. INC 22. No need to remember form names, form numbers, no need to remember. Just remember the time limit. What is the time limit for RD to approve the application, approve or reject the application? 30. RD order should be filed with ROC within how many days? 60. ROC will register and give certificate within how many days? 30. So here the equation will be like this: 30 plus 60 plus 30 plus 30. Understood? So this is for RD, this is for company, this is for ROC, and this is for company filing with ROC. Filings. RD should approve or reject within 30. Company should communicate with ROC next 60. ROC will certify the same within next 30, and company will file INC 22 with new ROC within 30 days. Case 4, same diagram, there is no change. Company, RD, old ROC, new ROC. There is no change at all. Same diagram. But in case 4, tell me what additional approval is added? Creditor's approval. So that's why RD need more time to dispose the application. So here 60 days. Company to ROC 30 days. ROC to company 30 days. Again company to ROC 30 days. Only one limit got interchanged. That's it. There 60-30. Here it is 30-60. So simply if you ask me in equation form, 60, 30, 30, 30. So RD to give order, RD is having time limit of 60 days in case of case 4. Filing with ROC, company is having 30 days. Confirming RD's order, ROC is having a time limit of 30 days. And again filing a new form with new ROC, company is having time period of 30 days. That's it. Understood? But in case 3, case 4, the additional document here you will see is altered MOA. In case 3 there is no alteration of MOA, but in case 4 altered MOA is required. That's it. Beyond this, no differences at all. Only these two limits are getting changed. If you remember that, you can write entire answer. Can I proceed? Sir, here you told CG approval, no sir, but already power C, you see, power delegated to RD. CG means what ma? Narendra Modi ji, MCA. Wherever you see the word CG in Companies Act, CG means MCA. Wherever you see CG word in Income Tax Act, Finance Ministry of Finance, MOF. So MCA, down the line MCA you will find, just one second, down the line MCA you will find regional director. Down the regional director you will find ROC. ROC is for state, RD is for region, southern region, east, west, like that. MCA, India as a whole one, authorities. So that's it ma. Time limits you can read it, no problem. Just to remember this one, 30, 60, 30, interchange, 60, 30, 30, that's it. With this shifting of object, shifting of register office also completed. Next one, alteration of object clause. This we can discuss in prospectus chapter. Here you can keep this point pending because similar content you will find in prospectus also. Alteration of AOA, section 14 and section 18. Sir, Why do we alter AOA? Primary reason, for conversion of companies, we alter AOA. I told you starting of this session how to identify a private company and public company. And what is the answer? Restricts, limits, prohibits their private company, not their public. Suppose if you want to convert private to public, then delete these three. If you want to convert public to private, then insert these three. Insertion, deletion is nothing but alteration. So company can alter AOA by passing special resolution subject to the provisions of Companies Act and MOA. Why subject to provisions of Companies Act? Because if you take Section 8 company, mere special resolution alone is not sufficient. For alteration of AOA, ROC approval is also required. Understood? Alteration for conversion of the company, private to public, public to private. CG approval is required only for case B, not for case A. Case B only required. Why? In public company, you can have public money, but private company, public money should become 0. In public company, you can have maximum number of members unlimited, but in private company, maximum number of members is 200. So whether public money became 0 or not, whether number of members reduced to 200 or not. So some independent person should verify it, that independent person CG. So CG approval is required for conversion of public to private. But for private to public, CG approval required or not required? Not required. Remember this point. Next one. Once you alter AOA, within 15 days of alteration, company has to communicate the same with ROC. Company has to communicate altered AOA with ROC. How many days? 15. My MOA 30. For alteration of MOA, time limit for communicating with ROC is 30. But for AOA, 15 days only. This point, important point. Not tested, that's why important. Suppose you got examination schedule like this. Remember, what is the original examination schedule? 3 accounts, right? 3 law, 5, 7. Next 9, 11, 13. Oh, super. In 1 week, just 10 days, you are going to complete exams. Next time, for example, due to war pandemic, for example, they revised schedule like this: 13, 15, 17, 19, 21, 23. Imagine. Again, they revised it to 23, 25, 27. Next one, for example, 1, 3, 5. And all these notifications, imagine, date of notification is not there. Date and time of notification is not there. And they didn't mention revised timetable. Now, which timetable is applicable to you? First one, second one, third one. You don't know the order also. By the time you wake up, 3 notices there in your Telegram group without any date, without any time, without any, the word revision. Now, which is applicable to you? Confusion, yes or no? So, similarly, when you alter MOA, make a note of it. Which clause got altered, make a note of it. Without such disclosure, if you give original MOAs, original AOAs, for each copy you give, you will be penalized with 1000 rupees. Getting my point? Alteration to be noted, section 15. This is not only applicable to AOA, but also applicable to MOA. Same point. In MOA also this point is there. Next one, section 17, request. Who is our lawmaker? Young and dynamic, experienced and outdated? According to experienced and outdated lawmaker, MOA, AOA is in manual form or electronic form? Manual form. So, if you want this manual form of MOA, AOA, my dear members, you can request the company, and it is the duty of company to serve these documents within 7 days of written request and upon payment of the fees. Remember carefully, I'm not telling the word 7 days. I'm also added 2 conditions. Within 7 days, from which date? Written request plus payment of prescribed fees. In many times, a question was asked like this. Member requested for the documents, but he didn't pay any fees. Company didn't serve the documents. Is company at default or not at default? Not at default. Company will get obligation only upon receipt of application fees, prescribed fees. So written request plus payment of fees. Written request important, payment of fees is also important. Why I used outdated lawmaker, because all these documents, by paying 100 rupees you can download it from mca.gov.in, but lawmaker is not having that much knowledge. That's why if company fails to comply with this, then for each day how much is the penalty? 1000. Maximum 1 lakh rupees. 90 days delay 90,000. 120 days delay 1 lakh only, because maximum punishment is 1 lakh. Can I proceed? Commencement of the business. Section 10A, commencement of the business. See, this section is applicable only to the companies with share capital. Come on, tell me, is this section applicable to all companies or company with share capital? Company with share capital. And this section came into the force with effect from 2nd November 2018. Already 8 years, almost 8 years over. So no need to remember this time limit. No need to remember this time limit. Now, any company with share capital coming into the picture, it can commence business only after completion of two duties. How many? Two. One is communication with registrar about verification of registered office, that is INC 22, and the second one is INC 20A. Let me write here. Company can commence business. Company can commence business, or company can exercise borrowing powers. Company can exercise borrowing powers after fulfillment of two duties. Duty 1, INC 22 should be filed within 30 days of incorporation. Tell me, how many days? 30 days of incorporation. Duty 2, INC 20A, it should be filed within 180 days of incorporation. How many days? 180 days. With whom this document should be filed? ROC. INC 22, you all know the purpose. What is the purpose of INC 22? Verification of registered office. What is INC 20A? Subscribers at the time of incorporation of company, they promised that they will subscribe these many shares. Suppose I promised to subscribe 10,000 shares. Face value 10 rupee. Paid up value also 10 rupee. Now how much amount I should deposit with company after incorporation? 1 lakh rupees. So subscribers deposited subscription amount. Subscribers deposited subscription amount. That is all about this declaration. So directors should declare that all the subscribers to MOA, they subscribe these shares they agreed to take at the time of incorporation, and all that amounts are credited to the bank account. So you tell me, within how many days INC 20A should be filed? INC 20A, 180 days. Without complying these two duties, if company start any business or if company exercise any borrowing powers, all those transactions are ultra vires acts, void ab initio. Getting my point? So please tell me the time limits, ma. What is the time limit for INC 20A? 180 days. What is the time limit for INC 22? 30 days. Time limits are very, very important. If no declaration is filed within 180 days, ROC may remove the name if it is of opinion that company didn't start any business. Suppose company is doing business, there is delay in filing. For delay in filing, company penalty 50,000, officers 1,000 per day, maximum 1 lakh rupees. Reading the word penalty is like harsh, right? So let's read like this. Donation for development. So how much company should pay for development? 50,000. And how much officer should pay? 1,000 per day of default, maximum 1 lakh rupee. See, this is for delay in filing. This is for delay filing. And this is for non-filing. Students get confused between these two. Delay filing attracts penalty. Non-filing attracts removal of the name. Can I proceed? In the incorporation, one point I highlighted and I told, this is post incorporation complaints. That is this point only. Companies requiring approval from sectoral regulators like banking companies, stock exchange companies, they need to take permissions from RBI, SEBI. That's it. And who will verify this document? Professionals, that is CA, CMA, CS in practice. Next, conversion of companies, already discussed with you, section 18. In this section 8, if they want to ask a tricky question, they will ask question like this. Reliance Industry Limited took a loan of 500 crores from SBI. 2 years later, they converted their constitution. They changed the constitution from Reliance Industry Limited to Reliance Industry Private Limited. After 1 month, SBI approached company to collect installment. Now company is selling. You gave loan to public company. Who am I? Private company. That company is not there. That public company is not there. So I'm not liable for 500 crores. You tell me, valida, invalida? Tell me, valida, invalida? Answer me. So answer is, the conversion does not affect debts, liabilities, obligation, contracts that was entered into before conversion. This can be enforced as if conversion never happened. Even same point is applicable for alteration of name also, ma. In case of alteration of name also, old name, how much amount you borrowed, after change of name also, that much amount you are liable. Max to max, they can ask this question only. So there will be no change in existing obligations, contracts, debts, etc. Next, section 19. Another important section. From this chapter, important sections are, OPC, section 8, section 19. These are top priority topics. If they want to test, they will select these 3 topics only. Most underrated topics, last 5 to 6 years not tested, that is doctrine of ultra-vires, constructive notice, indoor management, and shifting of registered office. These are underrated topics, but each and every topic is important only. Reason, we can't predict, we can't predict. So section 19, important. So far 3 times it came. One is May 14. That is my CA IPCC attempt, and I wrote successfully a wrong answer. That's why I remembered this topic. Next time I think May 18 it came. Next time very recently, after 22-23 only it came. 3 times this question was tested. So what is the point? Subsidiary company is prohibited to hold shares in holding company. A Limited is holding 60% of paid up share capital of B Limited, and B Limited is holding 65% of paid up share capital of A Limited. Now answer my question. Who is controlling which one? Which company is controlling which company? If you tell A is controlling B, B is also controlling A only. So circuitry action. Getting my point? And if this section 19 is not there, what happens? A Limited is having a 1 crore money. With this 1 crore money, they will incorporate B Limited and they will invest 1 crore in B Limited. Imagine this is a wholly owned subsidiary, or first of all, this is a subsidiary, right? This is a subsidiary. Now what B Limited will do, A Limited, I will also invest 1 crore in your company. Now A Limited already paid up share capital previously, how much it is? 1 crore. That's why they are having 1 crore. In balance sheet, if you take A Limited, paid up share capital is 1 crore, investment in B 1 crore. Understood? Now if B is making investment of 1 crore in A Limited paid up share capital 1 crore becomes 2 crores. And again A is making investment in B Limited, investment in B becomes 2 crores. Again B is doing that. Now A Limited 3 crores, investment 3 crores. You tell me, with 1 crore doing 3 transactions, net worth of A Limited increased to 3 crores. Yes or no? Yes or no? So to avoid this cyclic actions also, this section came into the picture. To identify the real owner, yes, subsidiary. Once you become subsidiary, don't invest any single rupee in your holding company. But to this general rule, we had 3 exceptions. General rule they will not test. They will test what? Only exceptions. Exceptions, 3 points are there. In these exceptions also special points. These are special points. As a legal representative, subsidiary can hold shares in holding company. As a trustee, subsidiary can hold shares in holding company. In both the cases, voting rights are allowed. And the third one is, if a company holds shares in holding company before becoming subsidiary, it can retain those shares but no voting rights. In the beginning, I gave one example, right? For example, H Limited company is there, S Limited holding a subsidiary. Holding company, 60% paid up share capital of S Limited it is holding. One day, S Limited managing director, who is holding H Limited's 10% of the paid up share capital, suddenly died. Before death, he named S Limited as legal representative to his son, who is a minor. I changed particulars. Previously, I told MD of H Limited holding shares in S Limited. This is a different case. Now, S Limited is holding 10% of the paid up share capital of H Limited. Can it hold this 10% of the paid up share capital? Yes, because as a legal representative, as a trustee, allowed. But you have to remember, in these two cases, voting is also allowed because subsidiary is not holding shares for itself. Subsidiary is holding shares for son of deceased managing director. Beneficial owner is different fellow. Clear? And the third one is, this is a live example only, ma. Reliance Industry Limited, Reliance Petro Products Limited. Two companies are there. RPPL acquired 10% of paid up share capital, say for example in 2003. For example, 2 years later, Reliance Industry Limited acquired 60% paid up share capital of RPPL in 2005. In 2003, there is no relationship between these two companies. But in 2005, there is a relation. Reliance is holding, RPPL is a subsidiary. The question that came in my exam is there any obligation on subsidiary to surrender this 10% paid up share capital? And the answer is no need. Before becoming subsidiary, if you are holding shares, you are continued to hold those shares. No need to return. But fresh allotments, fresh transfers, not allowed. Getting my point? And in this case, voting allowed or not allowed? Voting not allowed. Why? Because this is already in the control of Reliance Industry. So in Reliance AGM, definitely RPPL will cast vote according to the will and wish of Reliance Industry only. Getting my point? But in one attempt, question was asked like this. Listen carefully. Last but one point only. After this, only some small concepts only. Just 5 minutes. I'm going to close this chapter. Listen carefully. RPPL is holding 25% of Reliance Industry paid up share capital. In this, 15% as a legal representative or a trustee and 10% before becoming subsidiary. Before becoming subsidiary, it acquired 10% of the paid up share capital. Now the question is, in Reliance Industry Limited AGM, whether RPPL is allowed to vote or not. If allowed, how much percentage? Are you getting my question? Hello? So answer me, whether subsidiary is allowed to attend the general meeting of holding company? If yes, voting allowed or not allowed? If allowed, how much percentage? Answer me. Correct only bigger. How much percentage? 15%. Why? Voting right is prohibited only with respect to the shares held by it before becoming subsidiary. As a legal representative, as a trustee, allowed. So 15% allowed. Once this session is over, download question bank from the website. Go through the previous examination questions. We had a concept called MRP. MRP stands for MTPs, RTPs and previous year question papers. So all the examples I'm telling, all these are past examination questions only. In my regular class also, before I start discussing the provision, I use it to narrate the story. Why? Because institute is narrating the stories everywhere. And 60% of the story is simply to waste your time only. So first you should be accustomed to the stories. Then in examination there will be no surprise attack. Majority of the students today are unable to write full marks because surprise attack. First question when you are seeing, your eyes will come like this and again it will go back. Okay, fine. Next one, ma. Service of documents, very simple, ma. How to serve these documents? In two modes, either manual or electronic. Who is our lawmaker? Experienced outdated lawmaker. That's why he used the word post, speed post, courier, leaving at register office. Finally, if you want electronic mode. If you become lawmaker, please remove all this stuff, okay? Don't tell sir, we will remove the laws, sir. If Chartered Accountants Act 1949 got repealed, no use of studying CA also. That's why don't remove the laws. Bring new laws. Okay. Demat securities in share capital I'll discuss with you. Ignore. But mode of sending the documents is electronic mode. See, this section covers 2 points ma. If you want to communicate with company or company wants to communicate with you, what are the different modes? You can communicate with company either via registered post or leaving at registered office or electronic mode. Similarly, if company wants to communicate with ROC or member, for them also same, post, registered post, speed post, courier, delivery at office address, electronic mode if prescribed. If you see AOC 4, financial statements filing, MGT 7 already prescribed in which forms? Electronic forms. In that case, AB points will come, will not come. But member can request. If member is also an outdated person, he don't know how to use the technology, he's having a keypad mobile, then upon his written request and upon deposit of sufficient fees, company is bound to serve documents in the mode specified by the member. This in AGM we will discuss. In management and administration chapter we will discuss. 48 hours important time limit. There I'll discuss with you. There I'll link this point. Next one ma. Section 21, section 22. Last point. Section 21 is all about authentication of the documents. Suppose there is a purchase order. Company wants to enter into a contract with supplier. Supplier individual, he will sign the document, no problem. But on behalf of company, who will sign? On behalf of company, who will sign? Authorized person. How that authority will be given? That is the point. See, it can be signed by KMP, officer or employee. Sir, who is a KMP? CEO, MD, manager, company secretary, whole-time director, CFO, officer one level below the directors. One level below the directors, but who should be in full-time employment and designated by the board as KMP. Okay, KMP definition is also important. Just read it once. Any other officer as prescribed. Definitions, just give one time reading, not that much relevant. Officer in default, one time this was tested for 5 marks. Officer in default, very easy to remember. Write all the names that you have read in KMP, that is whole time director, KMP, director specified by the board. Person responsible for the accounts or records, persons advising the board, simply shadow promoter ma. Shadow promoter. Directors aware of consenting to the contraventions, share transfer agents, registrar, merchant bankers. So simply write promoter definition and write KMP definition. At last you add this E point, share transfer agent, registrars and merchant bankers for share issues or transfers. Clear? Next one, authentication of negotiable instruments. Here also authorization will be given in case common seal is there, if there is no common seal. Simply just how authorization will be given. On behalf of company, MD will sign the negotiable instruments. Suppose imagine Reliance Industry is having 20,000 branches. All 20,000 branches are rented premises only. To all these people, according to outdated lawmaker, payment should be via checks only. Now you tell me, MD is signing 20,000 checks. So MD time will be dedicated to signing the checks only. Yes or no? So that's in that case, MD can authorize branch manager to sign the checks. That authority, how it will be given? If common seal is there, if common seal is not there. If common seal is there, common seal plus 2 directors signing the document, or common seal plus 1 director and 1 company secretary signing the document. If there is no common seal, 2 directors signing the authorization document or 1 director and 1 company secretary signing the document, yes, you will get the authority to represent company for signing the financial statements. Sorry, not signing the financial statements, signing the negotiable instruments. Clear? That is all about this section 22. Let's continue with acceptance of deposits. From this chapter, you can expect a question from exempted deposits. He will narrate a story and he will ask you whether it is a deposit or not. Or you can expect the limits of deposits, to what extent a company can accept deposits. Clear? So first of all, deposit is not a security. You have to understand this point. Debenture is a security, deposit is not a security. I told you in prospectus chapter, security means every tradable instrument. Every tradable instrument is a security. Deposit is not tradable. Only the deposit holder, simply depositor, will get money back on maturity. Getting my point? Company point of view, from various sources of finance point of view, the difference between debenture and deposit, to meet short term requirements, companies prefer deposits. Long term requirements, companies prefer debentures. Getting my point? Both are debt instruments only. Both are debt to the company. Company can't retain them for longer duration. At one point of time, company has to repay them. But the only difference is deposit is not tradable security. Debenture is a tradable security. You got my point? Okay, fine. Now let's see what is meant by deposit. The term deposit refers to any money received by a company as a deposit, loan, or in any other form, except for the amounts excluded by the rules set in consultation with the Reserve Bank of India. See, this is another inclusive definition. It refers to any money received by the company in the form of deposit or loan or in any other form. Then it becomes a deposit. But deposit excludes exempted deposits. So what are excluded? Let's see one by one. Amounts received from the government, loans received from the government or amounts received from the government, both central government, state government, amount from the sources guaranteed by CG, SG, amounts received from the local authorities, municipal corporations, amounts received from the authorities constituted under an act of parliament or state legislature. For example, ICA came under Chartered Accountants Act 1949. So now amounts received from the government as well as government authorities, all are treated as deposits or exempted deposits. Exempted deposits. That means this chapter and rules are not applicable to those amounts. Next one, amounts from foreign sources. Amounts from foreign governments, foreign international banks, multilateral financial institutions and foreign financial institutions, export credit agencies, collaborators, body corporate, citizens and authorities subject to FEMA 1999. Next one is loans from the banks. Banking companies, State Bank of India, notified banking institutions, cooperative banks. So loans from banks are also not treated as deposits. Next one, loan from public financial institutions like LIC for example. Public financial institutions, regional financial institutions, insurance companies, scheduled banks. Loans received from these entities are also treated as depositor, exempted depositor, exempted deposit. Amount received against issue of commercial papers or instruments issued as per RBI guidelines. Amounts received against issue of commercial papers or instruments as per RBI guidelines. See, commercial papers are nothing but short-term promissory notes. So as per RBI guidelines, if we are issuing commercial papers, we are receiving the amount. Is it a loan or not a loan? Loan. Is it a depositor? By virtue of definition, it may be a depositor. But under exempted deposits, it was mentioned. So therefore, it is not a deposit. Next one, loans received from the company, intercompany loans. Intercompany loans. For example, Reliance Industry is giving loan to Jio Fincom company. Or Adani company is giving loan to the Reliance company. So they are also treated as loans. They are not treated as deposits. Share application money. This is a tricky point. Observe carefully. Share application money received for securities pending allotment, if not allotted within 60 days, will be treated as deposit if not refunded within 15 days. Observe carefully the timelines. Yes. See, day 0, company received application money. Day 0, company received application money. Now it is a duty of company to make allotment by day 60. By day 60, allotment should be done. If allotment is done within 60 days, it is not a deposit. Sir, company didn't made any allotment. Then check whether company refunded within next 15 days or not. By day 75, refund refund is there, sir, then it is not a deposit. Sir, failed to refund, sir, then from 61st day onwards, 61st day onwards, it will be treated as deposit. It will be treated as deposit. In section 42 private placement also I mentioned the same point. Company has to pay interest not from 76th day, company has to pay interest from 61st day onwards. Getting my point? So application money, tell me, is it a deposit or not a deposit? It is not a deposit up to 75th day of receipt of money, provided company has refunded that application money. If not refunded, then it will be treated as deposit. Up to here it is very clear, ma. But in examination they will ask you like this: instead of refunding this money, company adjusted that money against other payables by the member. Member is having some payables to the company. Company adjusted this amount against other payables. Now will it be treated as refund? No. That means, is it a deposit or exempted deposit? Deposit. Deposit. Actual refund should be there here. Actual refund should be there. Can I proceed? Next one, loan from the director. Loan from the director. Any amount received from a person who was a director of the company or a relative of the director of the private company at the time of receipt of money. Observe carefully, two persons are there and two types of companies are there. Here two types of companies. One is public company, other one is private company. Public company, private company. Public company can take loans from directors. Private company can take loans from both directors as well as relatives to the directors. Relative to the directors. Private company can take loans from both directors and relatives to the directors, whereas public company can take loans only from directors. Now the point is whether these loan amounts are treated as deposit or not treated as deposit. It depends upon two conditions. Condition number one, there should be a declaration from the lender. The declaration should specify that loan amount is out of savings. Loan amount is out of my savings, not out of borrowings. This is my own money. And condition number two, disclosures. Disclosures in the reports, board reports. If these two conditions are satisfied, then that loan is not deposit. It is exempted deposit. Getting my point? Which two conditions to be satisfied? Declaration from the lenders specifying that loan is not out of borrowings, loan is out of personal savings. And second one, express disclosures. In my question bank you will find a practical question like this. The question is, company C Limited is there, director D gave a loan of 20 lakhs which he got from his mother as a gift. As a gift. Now you tell me, gift means borrowing own money, own money. So now director giving own money of 20 lakhs to the C Limited, is it a deposit or exempted deposit? Exempted deposit. Understood? So director shall provide a written declaration stating that amount is not sourced from the borrowed funds, loans, deposits from the others. That is nothing but savings. And company shall disclose details of the money received in the board report. Next one, bonds and debentures. Remember this point. Secured debenture. Secured debenture is not a deposit. Secured debenture is not a deposit, but charge should be created on only tangible assets. Charge should be created only on tangible assets. That's what you can see here, excluding intangible assets. Next one, convertible debentures are also not deposits, are also not treated as deposits. Non-convertible listed on recognized stock exchange are also not treated as deposits. Three debentures you have to remember. See why this much list is there. The reason, if you look at the definition, any form of receipt of money, you can see amount received by the company in the form of deposit, loan, or in any other form. So now debenture is also loan to the company, debt to the company, whether it is a deposit or not. For that you have to go through the rules. According to the rules, secured debenture is not a deposit, convertible debentures is not a deposit, non-convertible debentures which are listed on recognized stock exchange is also not a deposit. So if you ask me, the combination is like this: unsecured debenture which is not convertible and unlisted, it is obviously a deposit only. Exactly reverse I told. Unlisted plus non-convertible plus unsecured, it becomes a deposit. Next one, amount received from the employees not exceeding their annual salary in the form of non-interest bearing security deposit. Again here also two conditions are there, Two conditions are there. On employee advances, two conditions. So condition number 1, maximum how many months salary? 12 months salary. Maximum 12 months salary. And second one, that advance should be non-interest bearing advance. Non-interest bearing advance. Suppose C, a cashier joined company D Limited. C was appointed as cashier in D Limited. His monthly salary is 40,000. And company asked him to deposit 6 lakh rupees as a security deposit. Now whether it is a depositor or exempted depositor, it becomes a deposit. Why? Because 12 months salary means 4.8 lakh. Suppose, sir, C deposited only 3 lakh rupees, for which company will pay interest every year. Now also it is not exempted deposit, because two conditions to be satisfied: maximum 12 months salary, and it should be non-interest bearing security deposit. Next one, trust. Any non-interest bearing amount received or held in trust. In the first session I told you these examples. H Limited, S Limited, two companies are there. MD of S Limited, before his death, he transferred all his assets to S Limited, who will act as a trustee for his son, minor son. Suppose S Limited received some 20 crores cash from MD. Now this amount held in the trust will also be treated as depositor, exempted depositor, exempted deposit. But the only condition is non-interest bearing. Next one, business advances. You have to be very careful with these business advances. Total 7 points are there. Remember, goods or services. Simply Netflix subscription, Jio subscription, internet subscription. For goods or services, any advance which can be adjusted within 365 days from the date of acceptance is not a deposit. 365 days you have to remember. These are regular services, regular goods, not capital goods. Getting my point, everyone? So what is the time limit? You have to remember 365 days. Adjustment should happen within 365 days, not a deposit. Next one, immovable property. Advance received as consideration for an immovable property shall be adjusted as per the agreement or arrangement. Suppose My Homes laid out a venture. So they are constructing a residential villa, for example. Is it a 365-day contract? That means within 365 days can they complete the construction? No, as per agreement it takes 3 years. Now I made a deposit, I made an advance for booking a flat. I made an advance. Is it a deposit to the company? No, because this is immovable property. Security deposit for goods or services. A deposit received as security for fulfilling a contract related to goods or services, that is also not a deposit. Advance for long-term projects. An advance received for long-term projects involving supply of capital goods. Supply of capital goods is also not treated as deposit. Next one, advance for AMC contracts. In this you have to remember this time limit. September 25 attempt, question was asked on this time limit only. Annual maintenance contracts so maximum 5 years advance can be deposited. Maximum 5 years. But remember, another hidden limit is also there, provided the service period does not exceed 5 years, or the standard business practice, whichever is shorter. That means whichever is less. Very simple you bought some 10 Dell laptops and you deposited some advance money. For next 3 years you have to come and you have to check all my systems. You have to keep them in working condition. So for this I am depositing some money. So that deposit shall not exceed standard business practice number of years or 5 years, whichever is shorter. So you have to go through that industry. Suppose that industry is for 3 years only. That industry standard business practice is 3 years. Now 3 or 5, whichever is less means 3 years only. Suppose our industry is having 7 years standard business practice, sir, but as per Companies Act 5 only statutory limit. Whichever is shorter means 5 only. That's why I told maximum 5 years. Minimum industry standard business practice. Sectorial permitted advances. Advances approved by the sectorial regulators or in line with the government directions. Next one, advance for subscriptions. I told you, right? Netflix. An advance for publication subscriptions, print or electronic media, to be adjusted against publication delivery. So this is like magazines, business magazines. So for the next 12 months, my article should come on third page or fourth page. For that, I am depositing some money in advance. So which will be adjusted against future deliveries, future publication deliveries. Now this is also not treated as deposit. Clear ma? 7 things you have to remember. In 7 things, 2 time limits are there. 365 days, 5 years, or standard business practice, whichever is shorter. And this 365 days also, if you see the note point, the advance involved in legal proceedings, then 365-day limit does not apply. Suppose some consumer case is going on regarding the quality of the goods and services. You received bad goods and services, you file a case on the company. So now 365-day time limit will be suspended. Once case is closed, then again this time period will continue. And you have to remember this 1 2 4 points. 1 2 4 means 1 is first one, goods or services. 2 is immovable property, and 4 is long term projects. Remember this 3 items ma. 1 2 4. With respect to these 3 items, if they become refundable, the refund should be done within 15 days. The refund should be done within 15 days. If refund is not made within 15 days of becoming due, the amount will be considered as demote deposit and interest will be payable accordingly. 1, 2 and 4, these items, once they become refundable. Suppose you cancel the contract ma. You cancel the contract. I didn't like the property they are building, so I terminated the contract. From the date of termination onwards, within 15 days, my advance money should be returned back. Next one, loan from the promoters. Amount brought in by the promoters or his relatives as unsecured loans due to stipulation of lending institutions exempt until financial institution loans are repaid. So here 2 conditions you need to understand. One is, loan from the promoter or relative is an exempted deposit when condition 2 is when the other condition. What is the other condition? Sorry. 2 conditions is unsecured first. Second one, as a stipulation of the lending institution. Suppose ma, you want to start a business ma. That business require 1 crore money. Do you think banker will finance entire 1 crore? Banker will tell, sir, where is your margin, sir? Where is your contribution? So bank will expect 25% of the project cost from you. It's like a down payment ma. Simply, if you want to buy a vehicle, will you make down payment or not? Simply for business loans also, 25% is a promoter's margin. So yes, you approached you approached bank for 1 crore loan for a project. Banker told, we are ready to finance this project, but 25% of the project cost promoter should contribute. As a result, promoter is giving an unsecured loan to the company. Now whether this unsecured loan is treated as deposit or not treated as deposit, not treated as deposit until financial institutions are repaid. Getting my point? Very simple. 1 crore, 25 lakhs is from promoters, 75 lakhs is from bank. So these 75 lakhs will be repaid within 7 years, for example. Until the completion of the 7 years, the 25 lakhs unsecured loan from the promoter is treated as exempted deposit. Once this loan amount becomes 0, you have to repay this amount, or else this amount becomes deposit. Next one, amounts received by the Nidhi company is not a deposit. Amounts received by chit fund companies is also not treated as deposit. Amount received under any collective investment scheme in compliance with SEBI regulations, not a deposit. Startup companies, you have to remember 2 conditions. Condition number 1, under a single tranche, that means under a single transaction, company should receive 25 lakhs minimum amount. How much minimum amount? 25 lakhs. That means 25 lakhs or more under a single tranche, and this should be convertible into equity within 10 years. Either this should be repaid within 10 years or this should be converted within 10 years. Sir, suppose convertible in 6 years, sir. Depositor, exempted depositor? Exempted deposit only, because 6 years is less than 10 years. Suppose convertible happens after 10 years. Now it is not an exempted deposit. Getting my point? Limit you remember 25 lakhs or more, and convertibility 10 years. Maximum 10 years. And amount received from, observe carefully, amounts received from alternate investment funds, venture capital funds, infrastructure investment trusts, real estate investment trusts, mutual funds in compliance with SEBI regulations are also treated as exempted deposits. How to remember? For this, I had a chart. How to remember? I had a chart. Let's see this chart once. I categorized all these 18 items into 5 boxes based on their nature. Suppose here you can see institutions. Here you can see institutions. Amounts received from the government, foreign institutions, banks, intercompany borrowings, AIF, REIT, IIT, venture capital funds, mutual funds. All these are institutions. Amounts received from these 6 institutions, exempted deposit. Next one, these are recipients. These are recipients. If these companies receive amounts, even though they look like loans or deposits, they are not treated as deposits. What are those 4 recipients? Nidhi company, chit fund company, trust. Any non-interest bearing deposit held as trust or held by the trust and collective investment scheme. And next one is about securities. Issue of commercial papers, securities application money. Tell me, what is the duration for refund? 15 days from the expiry of 60 days. Next one, secured debenture, convertible debenture, listed debenture. Next one, convertible note. It should be converted within 10 years or it should be repaid within 10 years. And how much amount company should receive under a single transaction? 25 lakhs minimum. These are the securities. And these people are the persons. If you take amount from these natural persons, then also not treated as deposits. 3 people are there, employee, promoter, director. Employee, maximum 12 months salary. Interest without interest. Promoter, unsecured loan because of stipulation imposed by the financial institution. Director of the public company, director and relative of director of the private company can give loans provided 2 conditions satisfied. One is declaration and the other one is disclosures in the board report. And these are business advances. 7 points are there. All trade advances, immovable property, security deposit, long-term project, AMCWC, sectorial regulatory advances, and subscription for publication. This AMCWC, remember, standard business practice or 5 years, whichever is shorter. Trade advances, 365 days. It should be adjusted within 365 days. But 1, 2, and this long-term project, if becomes refundable, refund within 15 days. Clear? Everyone? So categories: institutions, recipients, securities, persons, and trade advances. You can download this handwritten notes from the website. In free resources tab it is available. Next one, with this exempted deposits completed. Next one, depositor. See, 2 people can be depositors under this chapter. One is member, other one is non-member, simply public. Observe carefully. Here companies are classified into 2 types. Companies are classified into 2 types. Companies which can accept deposits only from members. Companies which can also accept deposits from the public. Getting my point? So who can accept deposits from the public? From both members and public, that is eligible company. Eligible company can accept deposits from both members and public. Other companies can accept deposits only from members. Okay, na? So member of a company can be the depositor in case of section 73 companies. Any person means maybe member, maybe public, who has made a deposit with a public company under section 76 of the Act. So 2 companies, simply section 76 company, section 73 company. What is section 76 company? Eligible company. So depositor may be member or a non-member of the company. Depositor is anyone who has deposited money with the company whether or not he is a member or not. Next one, section 73. In this entire chapter, exempted deposits 73, 76. Only 3 areas are important. Section 73 deals with acceptance of deposits from members. 76 deals with acceptance of deposits from public. No company can accept or renew deposits from the public. Which company? Company covered under section 73 cannot accept deposits from the public. It can accept deposits only from members. But this rule is not applicable to 4 companies: banking company, NBFC, housing finance companies, any other company specified by the central government in consultation with RBI. So to these 4 companies, technically 3, fourth one will be prescribed in future. So what are those 3 companies? Banking, housing finance companies, and NBFC companies. For them, this section 73, this chapter applicable or not applicable? Not applicable. So simply, Reliance Industry Limited, Adani Ports, Adani Enterprises, Asian Paints, Infosys, Wipro, all these companies, Tata companies, all these companies are covered under the above rule. Whereas SBI, Axis Bank, Bajaj Finance, L&T Finance is covered under second point. See the difference between banking company and NBFC. Banking company provides both services. Like they will give you accounts also. You can maintain your savings in that banks. Whereas NBFC will provide only loan services. Banks provide both loan and deposit facilities, whereas NBFC provides you loan facilities. Next one, CRDA. Remember CRDA. Sir, what is meant by CRDA? C stands for circular. R stands for ROC filing. D stands for debenture repayment reserve. And A stands for auditor certificate. Auditor certificate. In my state, CRDA means Capital Regional Development Authority, I think CRDA means. So here you remember CRDA. 4 points. These are the 4 conditions that a company should satisfy for accepting deposits. For accepting deposits, these 4 conditions to be satisfied. What are the 4 conditions? Circular, ROC filing, deposit repayment reserve, and auditor certificate. Okay. Yeah, let's see. A company shall pass an ordinary resolution in general meeting to accept deposits from its members. To accept deposits from members, so tell me, approval from members is required. What type of approval? Ordinary resolution. And second one, just now I told you, CRDA. Tell me, if company wants to go to public at a large, which document company should issue? Prospectus. To the identified persons, private placement offer cum application letter. In case of existing members, letter of offer. For deposits, the word circular is used. Ultimately all are like resumes only. We send resumes for jobs. So these companies are sending some documents for getting money. Depending on the purpose, name will be changed. And here for acceptance of deposits, company will prepare a document, we call it as circular. So issue circular. Company must issue a circular to its members including financial position of the company, nothing but balance sheet, credit rating. Natural persons like us need CIBIL score. If we had good CIBIL score, banks will give loans. For companies, credit rating. Credit rating. Total number of outstanding depositors and amount due on previous deposits. So as on date, how many depositors are there and how much outstanding deposits is there, and any other prescribed details in the required format. So simply these 4 are contents of the circular. So prepare a circular with the following contents: financial position, credit rating. Next one, status of existing deposits and existing depositors. Next one, mode of circulation. Everyone knows, either manually or electronically. It must be published in 2 newspapers, English as well as vernacular newspaper. So C completed. Next one, auditor certificate. Auditor certificate regarding what? Let's see. Statutory auditor, company auditor certificate must be attached confirming no default in deposit repayment or interest payment. That means only active compliant companies, not defaulting companies, only active compliant companies must use this privilege. So previously company has not committed any default in repayment of deposits and payment of interest. Suppose any default is there, then 5 years ban period. 5 years ban period. See, if company had defaulted, certificate must state that default was rectified and 5 years have passed since rectification. You remember that 5 years concept, in incorporation chapter also I told you. Subscribers, directors, if they are debarred, how long they will be debarred? 5 years. Same here also, 5 years. So auditor certificate should contain either of these 2 points. First one, since incorporation company never committed a default, or if default was committed, upon rectification 5 years has been elapsed. Next one, authority and validity. The circular must be authorized and issued in the name of board of directors. It remains valid until the earliest of the following three dates. Three dates you can see. First one, 6 months from the closure of financial year, that is 30th September 26. Right now 30th September 26, date when financial statements were presented at the AGM. Suppose date of AGM, imagine 31st August 26. We conducted AGM on 31st August itself. Or the last date an AGM should have been held. You all know the time limit for AGM, right? What is the time limit for AGM? Within 6 months from the closure of financial year. That means again 30th September 26 only. Out of these three dates, whichever is earliest means 31st August 26. That is the validity of the circular. Can you tell me what is the validity of the prospectus? 90 days from the date of filing with ROC. What is the validity of shelf prospectus? 1 year from the date of first public offer under shelf prospectus. And what is the validity period of circular? 6 months from the closure of financial year or actual date of AGM or due date of AGM, whichever is earliest. And a new circular must be issued every financial year for inviting the deposits. Next one, filing of circular with ROC. Right now C completed, A completed, right? Circular I completed, auditor certificate also completed. Next one is filing with ROC. Company must file a copy of circular with ROC within 30 days before issuance. So before I go to members, 30 days before I go to members, I need to file it with ROC. Prospectus filing on or before publication. Red herring prospectus filing 3 days before offer period. Information memorandum filing 1 month before subsequent public offer. Circular filing 30 days before issuance to the members. DRR. Company must deposit at least 20% of the maturing deposits for the next year in a separate bank account by 30th April each year. So this is also similar to debenture redemption reserve, but that is 10%. This is 20%. Clear? So debenture repayment reserve, how much? 20%. So with this, R completed, D completed. Total CRDA. What is C? Circular. R, ROC filing. D, debenture repayment reserve. And A, auditor certificate. Remember, these are not applicable to the few companies. That 7th point I'll discuss, but before that 2 points are there. Certificate of no default. Just now I discussed with you. Company must certify that it has not defaulted in repayment of deposits or payment of interest on such deposits. Those deposits may be old or new. That means before commencement of the act or after commencement of the act. If a default has occurred, company must confirm that default has been rectified and 5 years have passed since the rectification. Same should be certified by whom? Company statutory auditor. Okay. 6th one, security. Security. Sir, for accepting deposits, security mandatory or not mandatory? Not mandatory. It's optional. Secure deposits require charge on assets. Unsecured deposits must clearly be stated in the circular. But one important point, see, debentures can be either secured or unsecured. It can't be partially secured and partially unsecured. Suppose my deposits I accepted is 100 crores ma. Interest that I am going to pay for these deposits, imagine 20. Now what is my outstanding liability by the end of the deposits period? 120 crores. So I should provide securities, I should provide assets as a security which should cover not only principal amount but also interest amount. So the market value of asset which I am providing as a security should cover minimum 120. If yes, we call it as secured deposit. Sir, only 1 rupee shortage, sir. 1 rupee only shortage. Can I call it as partially secured, partially unsecured? No. It is completely unsecured. Even 1 rupee shortage is there, it is unsecured deposit. Can I proceed? Relaxation for private companies. Ma, how many of you remember section 67? Exceptions. 67 general rule exception. The private company in which no other member is a body corporate. Maximum loans, loans from the banks or financial institutions less than twice of the paid up share capital or 50 crores, whichever is less, and no default in repayment of the above loans. There I told no other body corporate is a member. But here if you see, this is neither associate nor subsidiary of any other company. Neither associate nor subsidiary of any other company. And remaining 2 conditions are common. Borrowings from banks, financial institutions less than 2 times of the paid up share capital or 50 crores, whichever is less. Not defaulted on repayment of such borrowings at the time of accepting the deposits. So this is one private company. Like that, there is another private company that is a startup for 5 years from its incorporation. And one more private company is there, that private company accepting money from its members not exceeding 100% of the paid up share capital plus free reserves plus securities premium. For these 3 private companies, CRDA is not applicable. Getting my point? Circular, filing with ROC, depositing a certain amount, that means deposit repayment reserve, certifying no default. CRDA is not applicable to 3 private companies. Which 3 private companies? Accepting deposits up to 100%, up to 5 years of incorporation in case of startup, and a private company which is neither associate nor subsidiary to another company. Total borrowings less than twice of the paid up share capital or 50 crores, whichever is less. No default in repayment of above borrowings. These 3 private companies, CRDA rules are not applicable. However, these 3 private companies should file the details of money accepted with ROC in return of deposits, that is form DPT3. So that means after completion of financial year, you will have 3 months ma. So by 30th June 2026, file DPT3. Prior intimation is not required. ROC filing, prior intimation is not required, because circular no need to prepare, no need to file circular with ROC. But after completion of year, so throughout the year, what amounts you accepted, what amounts are deposits, what amounts are not deposits, you clearly mention and prepare a report. In which form? Form DPT3. Next one, repayment of deposit. Similar to the debentures ma. Here also specific performance. Every deposit must be repaid with interest according to the terms and conditions. If company fails to repay a deposit, depositor can approach NCLT for an order to recover the amount. And use of DRRA shall be utilized only for deposit repayment. In examination, they can ask you like this. Company want to declare dividends. Can they declare dividends from DRR? Company want to write off preliminary expenses from DRR. Write off possible? Company want to make buyback from DRR. Possible? Not possible. DRR can be utilized only for one purpose, specified stated purpose. That is repayment of deposits. Now coming to the tenure of deposits. What is the minimum tenure of deposits? 6 months. Maximum tenure 36 months. How we should understand, company cannot accept deposits for a period less than 6 months. For less than 6 months duration, deposits acceptance allowed or not allowed? Not allowed. And acceptance of deposits for a period more than 36 months also not allowed. Minimum 6 months, maximum 36 months. Above 36 months not allowed, below 6 months also not allowed. But we had one exception. Exception is short-term deposits, very short-term deposits. That too, minimum 3 months. And there is also restriction on quantum of deposits also. The quantum is 10% of the paid up share capital plus free reserves plus securities premium. Now answer me. Can a company accept deposit for 45 days? No. 60 days? No. 3 months? Yes. If it is up to 10% of paid up share capital plus free reserves plus securities premium. Getting my point? Everyone? Okay. Next one. Maximum amount from the members. It would be better, if I show my handwritten notes with respect to the tenure, the limits. No, it is not there. So limit on deposits, companies cannot accept unlimited deposits. Company can accept maximum 35% of total paid up share capital plus free reserves plus securities premium from members. Section 73, companies can accept deposits only from the members, you remember. Private companies, IFSC companies can accept up to 100%. We had exception. I told 3 private companies earlier, right? 3 private companies. Private company which is a startup, private company up to 100%, private company which satisfy 3 conditions. Out of 3, 2 comes under exceptions. But there is one small difference. The difference is earlier startup 5 years benefit is there. Here 10 years benefit. Actually both are 5. Here lawmaker increased, their lawmaker forgot. Okay na? See, sir, that 3 private companies, these 2 private companies, what is the difference? That 3 private companies, CRDA not applicable. These 2 private companies, limits are not applicable. Let me write it and show. Let me write it. See ma, quantum of deposits, whether you are a public company or private company, maximum 35% ma, 35% of paid up share capital plus free reserves plus securities premium. This is general rule, universal rule. Remember, whether you are a private public, not a matter, for you 35%. Companies can accept deposits 35% of paid up share capital plus free reserves plus securities premium. But there are 2 more limits. Private company, IFSC company, IFSC company can accept deposits up to 100% of paid up share capital plus free reserves plus securities premium. This is limit 2. What is the universal limit? 35%. And second limit is for only private companies and IFSC companies. And third one, no limit at all. No limit at all. Which companies, sir? Startup. Startup also private only. Startup also, private startups. Up to how many years? Up to 10 years only. That means 11th year onwards again limits will apply. In sweat equity also I told the same point. 10 years only up to 50% sweat equity capital. And second one is private company which satisfy 3 conditions. Neither associate nor subsidiary. Neither associate nor subsidiary. Next one, loans less than 2 times of paid up share capital or 50 crores, whichever is less. No default. So for these 2 companies, what is the limit of deposits? No limits. No limits. Getting my point? Again, for clarification, I'm telling you, this private company and these 2 private companies, total 3 private companies, CRDA not applicable, but startup here limited to 5 years only. CRDA exemption. Getting my point? Can you remember this? Okay. Zero to 35, 35 to 100, 100 to unlimited. Here just I'm writing all companies. 100 is for private company, IFSC company, and unlimited is for startup. Remember 10 years. And a private company, in brackets I'm writing 3 conditions. And here you know what? Here companies are classified into 2 categories. Eligible company, others. For others, whatever story I told, that story is applicable. For eligible company, you know what? 10% they can accept from members. 25% is from non-members. Reverse is not possible. Like 25 from members or 10 from non-members, not possible. And this bifurcation is not applicable to government company. This bifurcation is not applicable to government company. Government company in aggregate 35%. Okay na? See, once you do 2 to 3 revisions, you will easily remember the limits. Can I proceed? Everyone? However, these companies are required to file DPT3. That is common point only. Trustee same like debenture trustee, depositor trustee. And same here also, meeting will be conducted if there is a demand from 1/10 of the depositors in value or if any default occurs. And special points, all these are common for 73 as well as 76. Special points are common for 73 as well as 76. In this you have to remember these points. Joint deposit holding allowed maximum 3 persons only. in one attempt, MTP, I think the question came like this: Ravi along with his wife and 3 children want to hold deposit certificate jointly. Allowed or not allowed? Not allowed. Why? Total how many? 5. Only 3 allowed. Only 3 allowed. Next one, next important one, updation. Receipt must be provided within 21 days of deposit. You remember section 56, right? In section 56, share certificate shall be given within 2 months of incorporation, 2 months of allotment, 1 month from the date of submission of documents for registration of transfer. 2 to 1. But for deposit, the time limit is 21 days. From the date of receipt of deposit money, within 21 days, company should give deposit receipt. Next, DPD3, I told so far, DPD3 must be filed by 30th June every year. And this one you have to remember, if company commits a delay, company must pay interest at the rate of how much? 18%. If you remember, same interest rate we studied in non-payment of declared dividend. Delay in payment of dividends, company has to add interest at the rate of 18%, I told. Next one, punishment for contravention. If deposit rules are getting violated, fine 5,000, additional fine 500 per day for the continuing contravention. If rules are violated, this is the punishment. If section is violated, punishment is section 76A. 2 punishments are there in deposits chapter. 76A is for non-compliance of 73 and 76. Whereas this 5,000 rupees 500 per day is for deposit rules non-compliance. Can I proceed? With this 73 completed. In 73, come on, in 73 you have to remember CRDA. What is the limit for deposit repayment reserve? 20% on or before 30th April. CRDA is not applicable to 3 private companies. Limits are not applicable to 2 private companies. That's it. Eligible public company. Any public company with net worth 100 crores or more or turnover 500 crores or more, it becomes eligible company. Observe carefully. A limited, net worth 130 crores, turnover 250 crores. Is it an eligible company or ineligible company? Eligible, because here the word or is there, not end. Next one, B limited, net worth 60 crores but turnover 600 crores. Eligible or ineligible? Eligible. Similarly, C private limited, net worth 700 crores, turnover 7,000 crores. Ineligible only because it is not a public company. Private company cannot accept money from public. Clear? So eligible company means always public company, and it should satisfy either net worth or turnover limits. Next one, under 73 you tell me what is the resolution required for accepting deposits OR. But 76 yes sir, some cases OR. Sir, what is that some cases, sir? Very simple. Take outstanding debt plus proposed deposits. How much you are going to accept? Proposed deposits. If it is up to 100% of paid up share capital plus free reserves plus securities premium, then OR is enough. Nothing but borrowing powers only. What is the total outstanding debt plus proposed deposits? Up to 100% of the paid up share capital plus free reserves plus securities premium, OR is enough. Exceeding that, SR is mandatory. Clear? Next one, special resolution must be filed with ROC. Here also you will find same CRDA rules, but CRDA rules exemption is not there. Why? CRDA rules, CRDA points are exempted only to the private companies, not to the public companies. That means, here also you will see circular, preparation of circular, obtaining credit rating. And this you have to remember, rating must be at least investment grade or other specified credit rating. So there will be grades like, AAA plus, AAA minus, AA plus, AA minus, depending on the company's past history and future repayment capacity, this rating will be given. So according to the lawmaker, the company should get at least minimum, at least investment grade which was prescribed. If that grade is achieved, company can accept deposits, or else not allowed, or else new deposits cannot be accepted. If company is accepting secured deposits, create a charge only on tangible assets within 30 days of acceptance of deposits. Sima, you can create charge on intangible assets also, But coming to the deposits, you have to create charge only on tangible. If you are creating on intangible also, they will not be considered, only tangible assets will be considered. Clear? Next, this is the important point. Total value of security. Value means market value. Market value of security should not be less than deposit amount and interest payable. Suppose deposit amount 100 crores, interest payable 20 crores. So market value of the security which you are providing should be minimum of 120 crores. Company cannot create charge on intangible assets, for example goodwill, patents or copyrights. Market value of these assets subject to charge shall be assessed by or valued by registered valuer. The security shall be created in favor of trustee for the depositors on specific mobile and immobile properties of the company. Same points. In debenture trustee we have seen, right? Next one, tenure for deposits, same points ma, nothing new, 6 to 36, but it can't be less than 3 months. That too up to 10% of the paid up share capital plus free reserves plus securities premium. And this is disqualifications of depositor trustee. Disqualifications of depositor trustee, same points you will see, but small changes are there, small changes. Here you can see same points ma, KDP EO, KMP director, promoter, officer, employee. Also depositor is also covered here. Depositor is covered. Next one, owe money to the company or its related entities. One more company is added. Owe money to the company means debtor. Have a significant financial relationship. There the relationship has been defined like 2% of the turnover or income or 50 lakhs, whichever is lower. But here it was not defined. They simply told significant financial relationship. Next one, surety also disqualified. Related parties related to the above people are also disqualified. Relatives also disqualified. Next one, removal of trustee. There we have seen for removal of trustee, 3/4 of debentures value. 3/4 of debentures in value we discussed. Here we will see for removal of depositor trustee, all the directors present at the board meeting approve the removal. Suppose ma, in a company there are 15 directors ma. To that board meeting, which board meeting? For removal of trustee, one board meeting was conducted. In that board meeting, only 8 directors attended the meeting. Now, how many directors should approve the removal? Is it 15 or the attended directors 8? The attended directors 8. All the directors attended the board meeting approve the removal. And if company is having independent director, at least one independent director must present at the meeting. One independent director must present at the meeting. So we are not asking consent of all the directors of the company. We are asking consent of all the directors present at the meeting. If company is having independent director, one independent director should attend the meeting and he should also approve the removal of the depositor trustee. Already over. And maximum amount of deposits, just now I covered, from members 10%, from others 25%, whereas government company aggregate 35%. There is no bifurcation. And issue of circular, filing a circular 30 days prior to issue, advertisement in 2 newspapers, website, circular validity, all these are covered, all these are already covered. DRR 20% covered, 20% maturing throughout the financial year. For debentures, current year as well as next financial year, whereas for deposits current year only. Why difference are? That is one lawmaker point, this is another lawmaker point, that's it. Rate of interest and brokerage, we have seen underwriting commission, right? Maximum 5% in case of shares, 2.5% in case of debentures. But here there are no limits. Companies Act is telling that the rate should not exceed RBI prescribed rates. That's it. Time to time RBI will prescribe the rates. So interest and brokerage rate should not exceed RBI rates. That's it. Special points already covered ma. Remember joint names maximum 3. And this is common point ma. Depositor at the time of deposit he should give a declaration. The declaration is this amount is from savings, not out of borrowings. Deposit receipt shall be issued within 21 days of receipt of money. All are common. Yeah, this point ma, this point. Premature repayment, if premature repayment occurs, this point is tricky point. See ma, 2 years ma, company accepted deposits for a tenure of 2 years, and after 1.5 years after 1.5 year, a member is coming to the company, no, depositor is coming to the company and asking, I need my money back. Now, is there any obligation on company to return the funds? Yes, company has to refund the money, but company can levy penalty. Sir, how much is the penalty? 1%. That means depositor should pay that amount. No, no, no. For example, you agreed to pay 10% interest, right? You agreed to pay 10% interest for 2 years. For 2 years, you agreed to pay interest at the rate of 10%. Now you pay only 9.5% for 1.5 year. That's it. 1% rate cut. That's it. 1% rate cut. Of course, during emergency situations and to comply Rule 3 and war pandemic situations, that times if company is repaying, prematurely repaying deposits, that time interest cut will not be there. Pandemic time, interest cut will not be there. That's it. Next, a register of deposits. You will see the contents, you will see the particulars in the register. What are the particulars should be there? Name, address, guardian details, nominee details. Just give one time reading. And this is important point from MCQ point of view. Entries must be made within 7 days of issuing the deposit receipt. So what is the time limit for updation of the register of deposits? Register of deposits shall be updated within 7 days. Within 7 days of the event. Simply within 7 days of the issue, within the 7 days of repayments, the deposit register should be updated. And how long this register should be preserved? 8 years. 8 years from the issue of, 8 years from which date, sir? 8 years from repayment of the deposits. Once deposit balance in my balance sheet becomes 0, from the date onwards, 8 years. No, 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 no. You should not think like that. You should think like this. The point is, in that register, when the last entry was made, obviously, at the time of repayment only, last entry will be done. So when the last entry was made, from that date onwards, 8 years, this register should be maintained. After that, you can scrap these registers. And same point, contravention of the rules, the punishment is 5,000 plus 500 per day. Next one, right now, this is a useless section, this section talks about old deposits. Old deposits means deposits which were accepted before commencement of Companies Act. This particular section was commenced, this 73, 76, they came into force with effect from 1st April 2014. You all know Companies Act, entire Companies Act didn't came on 30th August 2013. Phase wise, few sections were enacted one day, remaining sections were enacted on one day. So on 1st April 2014, section 73, 76 was enacted. So before that date, whatever deposits you accepted, I call them as old deposits, those deposits should be repaid within 3 years or the period which has been prescribed. You might have mentioned that, within 2 years we will repay it. So original maturity date or 3 years, whichever is earlier. Based on the original terms. Here you can see. So repay the deposits within 3 years from 1st April 2014 or as per the original terms, whichever is earlier. But before that, you just give information about your old deposits. By 30th June 2014, that means within 3 months from the commencement of this section, you just file a statement of the deposits. We will get to know the status of existing deposits. Next one, punishment. Of course, this 3 years can also be increased. You can see here, tribunal may grant extension depending on financial condition of the company, terms of the deposit, interest payable, and other relevant factors. So now the point is, if you are not paying them within 3 years, then the punishment is officer in default up to 7 years imprisonment, fine 25 lakhs to 2 crores, both. Whereas company, minimum 1 crore, maximum 10 crores. Non-repayment of deposits within 3 years or original due date, whichever is earlier, this punishment will be attracted. 5,000 rupees is for violation of rules, whereas this punishment is for violation of section 74. And next, last section, that is section 76A. Section 76A. Non-compliance of 73, 76. For example, for my company CRDA is applicable, but I didn't comply. Or I can accept maximum 35%, but I accepted 40%. So non-compliance and accepting deposits, in that case, punishment to the company, minimum 1 crore or twice of the deposit accepted, whichever is lower. Suppose company accepted deposits worth 25 lakhs, so twice of the 25 lakhs means 50 lakhs or 1 crore, whichever is less means 50 lakhs only, whereas maximum 10 crores. And officer in default, imprisonment up to 7 years, end, see there is no or, so it is end, imprisonment and fine. How much is imprisonment up to 7 years, and how much is the fine? Minimum 25 lakhs, maximum 2 crores. Same like above, but here there is no or, just end. And here for 1 crore there is an other alternative is twice of the deposits accepted, whichever is less. And last one, in case of fraud, 447 will be attracted. Like Satyam Ramlingraju sir, if you take Satyam scam only, best example. Or else another example I'll tell, generally I teach in the classes is, suppose my turnover is 200 crores, my expenses is 150 crores, so how much is my net profit? 50. I'll apply 30% rate of taxation. I need to pay tax of how much? 15 crores. So now I'm worried about paying taxes of 15 crores. So that's why what I did, I reduced turnover from 200 to 160 only. Sales you can cancel, but the collection from the debtors, can you cancel it? No. So the amount I collected from the debtors, I will show it as a deposit. I can show it as a deposit, yes or no? So if I'm doing like that, 40 crores turnover I'm making concealment, as a result government is losing how much amount? 40 crores into 30%, government is losing a turnover tax of 12 crores. So this is a cheating practice, cheating tax authorities. So then 447 comes into the picture. Officer in default, section 447 is applicable. Understood? So in the entire deposits chapter, again I'm telling you 3 points. Exempted deposits. In exempted deposits also 5 boxes are there. Institutions, recipients, persons, and next instruments, finally advances. Next one 73, that is CRDA plus OR. 76 special resolution plus CRDA. The 3 joint names, 21 days for updation, 21 days for issue of deposit receipt, and updation of registers 7 days. Enough. Clear? So with this deposits we completed. Let's continue with the next topic, charges. As you all know, we are having 2 types of finances. One is own finance, other one is debt finance. Own finance, what comes under own finance? Equity. Debt finance, debentures, deposits. This debt finance is of 2 types, secured debt, unsecured debt. So from lender point of view, nothing but creditor or debenture holder or depositor point of view, which one is safe? Secured. Because tomorrow even if company fails to pay, that fellow will come and sell the property, will realize his dues. So which one is more risky? Unsecured debt. So secured debt means we are providing, company is providing its assets as a security. Getting my point? Technically called charge. Suppose I am the owner of this land and building. I want 2 crores loan. I went to SBI. I told that I need 2 crores. For this, I'm ready to mortgage my land and building. So in case of mortgage, what happens? All my rights over this property are getting transferred to the banker, or only few rights are getting transferred to the banker, few rights. For example, without banker consent, I can't sell this property. See, I can use this property, but I can't sell this property without banker consent. And banker will get right over this property if I fail to pay installments. Are you getting my point? So if you look at the definition of the charge, an interest or lien created on property or assets or undertakings as security is nothing but charge. So we are creating some rights over the property and we are transferring some rights to the person, maybe banker or maybe debenture trustee or depositor trustee. Getting my point? Sir, what is the difference between property and undertaking? Property means individual property. Undertaking means group of assets. Suppose you take for example ITC. ITC stationery division. Plant and machinery in the stationery division. Buildings in the hotels division. Division as a whole, we call it as undertaking. Particularly, naming one land and building, we call it as property, whereas group of assets falling in one division, one branch, we call it as undertaking. And charge includes mortgage. Our chapter is not about just charges. Our chapter is about registration of charges. So once charge is created, it is the duty of company to register the particulars of charge with ROC. So far we have seen many filings with ROC, right? So why we need to file all the documents with ROC? Because it ensures transparency. Once you file a piece of paper with ROC, it becomes public document. That means it is accessible to the public. Now once you register charge with ROC, subsequent lenders will not finance the company against same property. It protects subsequent lenders. That is the objective of registration of charges. And in this chapter, you will find duties of company to register the charge. And next one, modification of charge, satisfaction of charge. Total 3 types ma: creation, modification, satisfaction, CMS. So based on that only, we are going to remember section numbers. CMS, C stands for creation, M stands for modification, S stands for satisfaction. 77 to 87. So it is the duty of company to register the charge. So section number is 77. If company forget to register charge, then power transmitted to charge holder. If company forget, charge holder can register the charge. 78. And modification 79. So creation 77, 78, modification 79. Once charge is registered, it becomes, the registered charge becomes demood notice. That means doctrine of constructive notice is applicable here. That is section 80. Whatever charge you created, modified, everything shall be updated in the register, and these registers are of 2 types: register maintained by ROC, register maintained by the company. Register maintained by ROC, section 81. Register maintained by the company, section 85. In these registers, you will find all these 3: creation, modification, satisfaction. Satisfaction of charge means what? Once the purpose of creation of charge is fulfilled, we call the charge is satisfied. In case of satisfaction, yes, it is a duty of company to intimate ROC about satisfaction. That is section 82. And the powers of ROC to register satisfaction of charge, 83. Appointment of official receiver, 84. And finally, non-compliance punishment, 86. Powers of central government, 87. So these are the 11 sections of the registration of charges. So far, in examination, section 84 once tested, 77 and 79 were very, very frequently getting tested. 77 and 79 are very frequently getting tested. Let's see the material Let's see the material. Types of the charges. See, we are having 2 types of the charges: fixed, floating. If charge is created on identified asset, which asset? Identified asset. It's not fixed asset, identified asset. Then we call it as fixed charge. If charge is created on the assets which are fluctuating in nature, for example, stock, book debts, inventory and book debts, we call it as floating charge. Very simple See, I am having 1 kg gold bar. I'm a practicing chartered accountant. I'm having 1 kg gold bar. If I create charge on it, it's a fixed charge, because I'm not a gold business, goldsmith. I'm not doing any business with respect to gold. So if I create charge on this 1 kg gold bar, it's a fixed charge. But the same gold bar is with Kalyan Jewelers, for example, Lalita Jewelers. If they create charge on their inventory, gold ornaments, it becomes floating charge. The difference between fixed and floating: in case of asset covering under fixed charge, if asset is covered under fixed charge, you can use it, but you can't sell it. Suppose charge was created on this land and building, I can use it, I can have possession, but I can't sell this. Whereas assets covered under floating charge, you are free to sell them, you are free to deal with them. But there is a problem with floating charge. The problem is, sometimes the floating charge may be converted into fixed charge. We call it as crystallization. Crystallization means process of converting floating charge into fixed charge. Sir, when this happens, sir? Whenever creditor enforces security, whenever company goes into liquidation, the creditor will convert this floating charge into fixed charge. So once charge got crystallized, whatever book debts I'm having, whatever inventory I'm having, I can't deal with them. Charge holder will come forward and will collect those amounts. See, crystallization of floating charge. Remember these 4 points. When crystallization happens, when the terms of floating charge are violated. For example, in FM you all know current ratio, right? Current ratio, ideal current ratio 2:1. For every 1 rupee current liability, there should be 2 rupees current asset. Suppose, my financial statements current ratio fall into 1:1. So terms violated, therefore they can crystallize the charge. Company stops operations. If I stop business operations, can I produce new inventory? Can I make new sales? Can I get new book debts? No. So therefore, existing inventory, existing book debts will be crystallized. That means entire rights will be transferred to the charge holder. Our company goes into liquidation. Creditor enforces the security covered by the floating charge. So if creditor using his rights, if he enforces security covered by the floating charge, that's it, crystallization happens. On violation of these terms, definitely creditor will enforce the security. He will take charge over the charged assets. Next one, duty of the company to register the charge. Duties of the company to register the charge. First of all, who will register charge is the point. In charge you will find two parties, company C Limited and the financer, say for example State Bank of India, and we are having a property. C Limited is having a factory establishment. C Limited is having a land and building, factory establishment. So on this, C Limited borrowed a loan of some 200 crores. C Limited borrowed a loan of 200 crores by mortgaging this property with SBI. Now how many parties are involved here? C Limited company, SBI charge holder. Who can register charge with ROC? First duty, company. Within 30 days of creation of charge, company should register the charge with ROC. If company fails, charge holder will register the charge with ROC. Sir, why charge holder, sir? See, there is a point. If charge is not registered, the charge holder is not treated as secured creditor, he will be unsecured creditor. That means if company suddenly enters into the liquidation, charge holder gains priority in the settlement order. He will stand along with unsecured creditors. That means after selling this property, he will not get first priority, he will get fourth priority. First, secured creditor. Next, preferential creditors. Getting my point? In that preferential creditors, you will find, workman use like that. Next, unsecured creditors. So charge holder may register the charge with ROC. Suppose C Limited sold this property to D Limited. Now who is D Limited? The acquirer of the charged property. The acquirer of the charged property. Now it is the duty of D Limited to register the charge with ROC. So total 3 parties are involved in registration of the charges. One is company, second one is charge holder, third one is acquirer of the charged property. So company, charge holder, purchaser. But remember, all these three, company, acquirer should be a company first of all. Should be a company. Suppose, it's not D Limited, it's Mr. D. To Mr. D, Companies Act applicable? No. To Mr. D, Companies Act applicable or not applicable? See, individually, if I take loan on this property, is there any obligation on me to register this charge with ROC? No. Companies Act is applicable only to the companies. So acquirer, that means purchaser, should also be a company, purchasing company. Generally, you will see this kind of points in amalgamation. In amalgamation, you will see this kind of points. Next one, charge form CHG1, particulars of charge in CHG1 along with the copy of instrument creating the charge duly signed by the company and the charge holder shall be filed with the ROC within 30 days of creation of the charge along with the prescribed fees. See, charge document is like an agreement between two parties. One is company, other one is lender, nothing but charge holder. Both have to sign these documents, and once charge is created, within next 30 days, registration of charge should be done. Next one, verification. Verification of instrument of charge. Verification. See, verification is like, for simple understanding. You got a courier, or you got a letter from ICI. The postman who is delivering a letter to you, simply will he deliver and will he go, or he will take signature from you? Signature. That means you took that courier. Authorized person only took that courier. It's like confirmation. It's like confirmation. Here also verification. Already charge creation is over. But again on the charge documents, a certificate should be attached, verification certificate. Who should sign this verification certificate? Let's see. If property is located outside India, if property is located in India, I forgot to tell you, see this chapter, registration of charges. Sir, if charge creates in India, if company creates charge in India, then only this chapter is applicable. True or false? Answer is false. Charge may be created either in India or outside India. Company gets obligation to register the charge with ROC. It's immaterial whether property is located in India or outside India. So if property is located in India, that instrument, that verification can be done by director of the company, CS of the company, or authorized officer of the charge holder, simply branch manager, bank branch manager. So verification can be done by company director or company secretary or company or authorized signatory, authorized officer of the charge holder. But if the property is located outside India, in case company is having common seal, verification certificate should be under common seal of the company. No common seal, sir, then director or CS or an authorized officer of the charge holder should verify the documents. Up to here this is same, up to here this is same. Another point is there, signed by any other person who is interested in the mortgage, signed by any person interested in the mortgage or charge, but not the company. Any other person, maybe outside a branch, foreign branch we are having, for example, that branch head, any person, all our directors and all our secretaries, or all our company directors and secretary is in India. We created charge on our property located outside India in favor of some foreign bank. Charge creation outside India, charge holder also outside India only. Now the charge instruments can be verified by any person. Any person, need not be director, need not be secretary, need not be authorized officer of the charge holder, maybe that branch head. Next one, if company is in a working position, simply if company is in going concern, if company is having going concern, above people will sign it, director, secretary. Suppose if company is in liquidation phase, say for example Kingfisher, all the directors already resigned. Imagine Kingfisher is in liquidation phase. Now who will sign these applicable forms? The answer is insolvency resolution professional or liquidator. Any one of these persons will sign it. Internal reconstruction did the problems, right? It's nothing but revival of sick unit. In case of revival of sick unit, till that revival process is over, directors will have zero powers. Directors will lose the powers. During that period, IRP or RP will get complete powers as a director, as if a director. So now who will sign all these forms? IRP or RP or liquidator. Verification by a person outside India, outside the company, applies only to the property located outside India, but not property located in India. Next one, time limits. What is the time limit for registration of charge? This fourth point technically not relevant right now, because almost 8 years completed. Before amendment, what is the time limit? Charge creation happened day 0, for example. You can register this charge by day 30. Sir, I missed it, sir. No problem. By day 300 also you can register it. That means additional how many days we are giving to you? 270 days we are giving to you. Additionally 270 days we are giving to you. So registrar may allow registration within 300 days from charge creation. Sir, not registered within 300 days, sir. Registration allowed within 6 months from 2nd November 2018 with prescribed additional fees. Sir, what is the importance of this date? 2nd November, that is amendment date. From that date onwards, amendments came into the picture with respect to this section. So 300 days already missed out. No problem. Additional 6 months we are giving to you. Whereas for new charges, that means after amendment, for new charges, lawmaker is telling that why 300 days? Why 300 days? So he is telling that by day 30, register the charge by paying normal fees. Say for example 600 rupees. For example, if capital is 1 crore rupees, 600 rupees is the normal fees. Sir, I missed out, sir. Array, no problem, I'll give you another 30 days. That means day 60. But here you have to pay additional fees. In addition to normal fees. Sir, this limit also I forgot, sir. Don't worry, another 60 days I am giving to you, that means day 120. But here, along with normal fees, you need to pay ad valorem fees. Ad valorem fees in GST, you might have heard about ad valorem. Ad valorem is proportionate basis, like 1%, 2% of the loan amount, like that. Getting my point? So three limits you have to remember, ma. What is the normal limit? 30 days. What is the extra time limit? Extra 30 days. And what is the further additional time limit? 60 days. So simply 30 plus 30 plus 60, which will be 120 days. Getting my point? Earlier it is 300, but right now 120. Procedure for extension: to seek a time extension, company shall apply to the ROC. ROC permission is to be taken. Of course, that application shall contain a declaration from the company signed by secretary or director stating that late filing will not affect rights of any other intervening creditors. Sir, we took loan on 1st April 2026 by mortgaging this property, and we are registering this charge on 30th June 2026. Within the time limit, outside the time limit, out within the normal time limit, above the, beyond the normal time limit, beyond. 30 days over, another 30 days also over. Now here, there should be a declaration from the company side. The declaration is, sir, during this period of 3 months, whoever new creditors entered into the company, whoever new creditors came into the company, their interest is not affected, sir. We will pay them, no problem, sir. That means subsequent finances we didn't did. That means, subsequent finances on same property. Subsequent finances on same property we didn't did. Only one finance we took on this property. ROC will grant extension only if satisfied that company had valid reasons for not filing the particulars and the instrument of charge, if any, within the initial 30-day period. Further, additional fees or ad valorem fees as applicable shall be paid. Additional fees up to 60 days. Ad valorem fees after 60 to 120 days. Next one, certificate of registration. Upon registration of a charge, company and the charge holder will receive a certificate of registration in form CHG2, and which will be a conclusive evidence. Once we file documents with ROC for registration, the confirmation message will be in certificate only. We'll get confirmation message in certificate. That certificate will act as conclusive evidence. Next one, subsequent registration. This is important, ma. In examination, 2 times this point was tested. Important. So listen carefully. Example, company C Limited having one land and building. The market value of this land and building, imagine 100 crores. C Limited created charge on this property in favor of State Bank of India, dated 1st April 2026. When this charge was created? 1st April 2026. According to the Companies Act, it should be registered by 30th April 2026, right? But company didn't register the charge. The next month, C Limited provided same property as a security to Axis Bank. This happened on 1st June 2026, for example. Axis Bank immediately ordered the company to register charge with ROC, and the date of registration of charge, DOR, date of registration is 10th June 2026. Later, SBI ordered the company to register the charge, and the date of registration of charge in favor of SBI is 10th July 2026. 10th July 2026. 4 dates are there, ma. 4 dates are there. So for easy understanding, let me summarize here. Creation, registration. Creation, registration. You tell me, in favor of SBI, when charge was created? 1st April 26. When it got registered? 10th July 2026. In favor of Axis Bank, when charge was created? 1st June 26, but it was registered 10th June 2026. Now if company goes into liquidation, who will get first priority is the question. Suppose, ma, loan borrowed is 60 crores, ma. From SBI 60 crores, Axis also 60 crores. Total how much is the loan amount? 120 crores. Whereas what is the value of the property? 100 crores. Now you tell me, if company enters into the liquidation, sale proceeds of the property 100 crores. This amount, first adjustment will be done in favor of SBI or Axis Bank. Axis or SBI. So first priority is Access. Second priority is SBI, because creation is not relevant, registration is relevant. Whose charge was registered first, only that fellow gets top priority. So creation is irrelevant, registration is relevant. Can I proceed? Subsequent registration. Any charge registered within the extended period will not affect any rights acquired over the property before charge was actually registered. For example, Axis Bank. Axis Bank got rights before State Bank of India. Registration is merely a legal formality, meaning concept of charge remains valid despite late registration. However, failure to register may prevent creditor from gaining legal priority or advantage. One small point, ma. In case of non-registration of charge, don't think loan is void. Loan is valid only. Company's liability is enforceable only. But the only difference is, difference is registration, non-registration. In case of registration, you will get top priority. In case of non-registration, you will lose priority. So unregistered charges are not considered by the liquidator. Non-registration of charge shall not negate the contract or repayment obligation. That means cannot nullify. Simply charge was not registered, therefore loan becomes null and void, false. Non-registration of charge shall not nullify the repayment obligation. Your repayment obligation will be still continued. Charge holder loses priority to other creditors with earlier registration. Charge holder loses priority to the other creditors with earlier registration. That's what here. SBI, one example. Earlier registration, Axis. SBI lost priority compared with Axis. Next one, 77. This point is not that much important, but remember, 77 does not apply to the charges prescribed in consultation with RBI. Lucky Bhaskar movie, if you remember, banks will maintain some amounts with RBI. And banks, whenever they need extra money, they will borrow money from other banks. Union Bank may borrow money from SBI, SBI may borrow from Axis. Sometimes these banks may provide security, these banks may not provide security. Sometimes they may provide security. Now each time whenever you are providing security, SBI, you should also register charge with ROC, means their day-to-day business affairs will be affected because they are in the lending business. So if SBI is taking loan from RBI, creating any property, showing any property as a mortgage, providing any property as a mortgage, for that this chapter is applicable or not applicable? Not applicable. You can see here, charges created by banking companies under this section 17 subsection 4 clause D of RBI Act, chapter 6 is not applicable, because they're in lending business. To lend money, first they should have money. That money they may borrow from other banks or they may borrow from RBI. May be secured, unsecured. Imagine if it is secured, registration of charge required or sir? Not required. Okay na? Can I proceed? Next one, ma. Charge registration by the charge holder. Section 78. You tell me when charge holder will register the charge? When company fails to register the charge, or company already registered the charge? Fails to register the charge. If company fails to register the charge, charge holder will register the charge. Why? To get the priority, to gain the priority. What is the time limit for company to register the charge? 30 days, extra 30 days, and further extra 60 days. But for charge holder, there is no time limit. Charge holder will pay additional fees. Straight away, he will pay additional fees. Sir, actually, who should pay this normal fees or additional fees? Company. But who is paying right now? Charge holder. Therefore, charge holder will get a remedy. You will see here, charge holder will get recovery right from the company, the fees or additional fees paid to the ROC for registration of the charge. See, whenever charge holder is filing a application with ROC for registration of charge, ROC will not register charge silently. ROC straight away will not register the charge. First, ROC will give an intimation to the company, and ROC will wait for 14 days. 14 days. So within this 14 days, if company is having any objection, company has to raise the objection. Imagine if there is no reply from the company, then ROC will assume that company borrowed the money. or this charge should be registered. So if no objection is raised, ROC will allow registration within 14 days after issuing the notice, subject to payment of the prescribed fees. This point you have to remember. 14 days time period you have to remember. Same kind of notice we have seen in section 56 in case of partly paid up shares, where transfer application is executed by transferor alone. Company should not register the transfer unless it gives 2 weeks notice to the transferee. Here also, ROC shall not register the charge application which was filed by the charge holder unless 14 days intimation has been given to the company. Next one. Yeah. Company acquiring a property already subject to the charge. Section 79. Section 79. Section 79, 2 points are there. First point, charged property was acquired by another company. Second point, modification of charge. Section 79, 2 points are there. Charged property was acquired by another company. Reliance Industry Limited mortgaged a factory with Axis Bank. Later, Adani Enterprises acquired this property. Now, what is the duty of Adani Enterprises is about fourth point. If any property with existing registered charge is sold with the charge holder's consent, the company acquiring the property, nothing but Adani Enterprises, shall ensure that charge is registered as per section 77. And the earlier charge means charge by Reliance in favor of Axis Bank should be vacated, and a new charge shall be registered by the acquiring company. Clear? And next one is modification of the charge. Modification. For example, Reliance Industry Limited mortgaged one property in favor of Axis Bank. The terms and conditions are like this. Loan amount is 80 crores. Rate of interest is 8%. Tenure is 10 years. Now, any change in terms and conditions, any change in parties. Suppose, Reliance Industry Limited, it requested SBI to take over this loan. SBI paid money to the Axis, and Axis transferred this security to SBI. So change of party, change of loan amount. Suppose Reliance Industry took some top-up loan, increased loan to 100 crores, increased tenure to 20 years. Whatever changes happen, we call it as modification, and those modifications shall also be registered with the ROC, or else those modifications will be treated as null and void. Next one. Deemed notice of charge. This is nothing but doctrine of constructive notice. Doctrine of constructive notice. Suppose company is the owner of this property, and company mortgaged this property with SBI for 6 crores. You bought this property from the owner of this property. You bought this property. After 1 month, SBI sent a notice to you. When are you going to pay installment? You said, which installment? What installment? I don't know about this, so I'm not liable for this. So tell me whether your liability there or not there? Answer is there. Sir, I don't know about these charges, sir. Doctrine of constructive notice. Before dealing with any property of the company, it's your duty to check whether it is encumbered property or charge-free property. So, when a charge on company property or assets undertaking is registered under 77, any person, individual or company acquiring those assets or shares is deemed to have notice of the charge from the date of registration. So that is what constructive notice means. So person acquiring the property or asset is deemed to have the notice. Again, doctrine of constructive notice only. If a person enters into transaction without inquiry, later suffers the loss because of the charge, they cannot claim against the company. This is because they are deemed to have notice of the charge. Again, doctrine of constructive notice only. In doctrine of constructive notice, outsiders will be protected, company will be protected, company will be protected. Next, section 82. What is section 82? Satisfaction of the charge. Reliance Industry Limited took 80 crores from Axis Bank by mortgaging one property. Once this loan amount becomes zero, it is the duty of company to register satisfaction of charge with a ROC. Sir, what is the time limit? 30 days. What is the time limit? 30 days. Sir, I missed out this normal time limit of 30 days, sir. Is there any extension? Yes. But here the extended period is 300 days. Getting my point? That means for creation of charges, originally 30-300 concept is there, but right now after amendment 30-60-120, that means 30-30-60. But here there is no such breakup. Only 130 days is there. The registrar may allow such intimation even within 300 days on an application by the company or charge holder with additional fees. If 30 days is missed out, 300 days is with additional fees. So upon receiving the intimation, now remember, listen carefully. C Limited is filing satisfaction of charge with ROC. Straight away ROC will not register this satisfaction. First ROC will ask charge holder, is it true? Is it true or not? If charge holder is telling yes, it is true, then ROC will process this application. Or if there is no objection from the charge holder within 14 days of sending this intimation, if there is no objection from the charge holder, then also ROC assumes that charge is satisfied. And ROC shall register the charge and issue the certificate of registration of satisfaction of charge. And that will be the conclusive evidence. That will be the conclusive evidence. Suppose if charge holder is showing the reason, sir, don't register satisfaction of charge, there is some outstanding balance, then ROC shall record the note in the register of charges and same he will inform the company. Section 83, I'll discuss next point. So in case ROC enters memorandum of satisfaction of charge in full, he shall issue certificate of registration of satisfaction of charge in form number CHG5. Can I proceed? Next one. 83. First 83 I'll discuss. Next registers I'll discuss. 83. Yeah. Powers of ROC to make entries of the satisfaction. Suppose Reliance Industry Limited mortgaged a property with Axis Bank for 80 crores. This happened on 1st January 2015. 10 years over, and during this 10 years, Reliance paid complete amount to the Axis Bank along with interest. And Reliance Industry Limited sold this property to Mr. X. Registration is also over. But X came to know about this charge. X immediately inquired company, what is the status of the charge? We paid complete amount. In that case, X can request ROC, sir, company, the company borrowed amount and provided one property as security. Right now, complete amount was repaid. So you do something. So if you observe carefully, here intimation to ROC, is it done by charge holder or is it done by the company? No, some external source, some outsider. So in this case, can ROC register the satisfaction of charge? As per 82, no. But as per 83, ROC is having suo motu powers. Suo motu powers on his own motion. On its own motion, it can process the satisfaction of charge application. So registrar is empowered to make entries about satisfaction or release of charges even without intimation from the company. Even without information from the company. But they will check, ROC will check whether property subject to charge is sold or neither the company nor the charge holder intimate satisfaction of the earlier charge. So ROC will verify the evidences, whether charge is active or inactive, like that. Simply whether loan amount paid or not. Based on the evidences, ROC can enter memorandum of satisfaction indicating debt has been paid or part of the property has been released from the charge or property has ceased to form part of company assets. Very simple See, suppose I'm having 100 grams gold. I pledged this 100 grams of gold with Canara Bank, say for example for 10 lakhs. 8 months later, I paid some 8 lakh rupees and I requested Canara Bank to give some portion of the gold. I paid 80% of the loan, no. So give me some ornaments. Immediately Canara Bank told, okay, take some 6 lakhs worth of gold ornaments. Like that, Canara Bank released that gold. Similarly here also, part of the property, part of the undertaking has been released from the charge. Our property has ceased to be form part of company assets. That means company already sold that asset. In this example, you can see Reliance Industry Limited already sold that property to X. That means it is not part of the company assets. So based on this evidence, ROC will register the satisfaction of charge. Inform to the affected parties. Registrar must inform affected parties within 30 days of making an entry in the register of charges. So non-applicability of 82, that's what, ROC can act even without receiving intimation from the company. And finally, issue of certificate. Once certificate is issued, it will act as a conclusive evidence. Clear? And one more concept, one more concept, that is 84. Listen carefully. Company is owner of this property. This property is of, say for example, G plus 5 floors. Ground floor is completely parking. 5 floors, floor 1, some saloon is there. Floor 2, gym is there. Floor 3, all these are tenants only. All these people are tenants. Floor 3, some software company is there. Fourth floor, some business unit is there. Fifth floor, owner is living, for example. So it's not owner. I told company, right? Suppose fifth floor company is carrying business operations. So at the time of taking loan, company told we are getting 4 lakhs rental income from this building. From each floor we are getting 1 lakh. Fifth floor we are doing business operations. So every month we are getting 4 lakh rupees income. We can use it for EMI payment. So give us some 2 crores loan amount, like that. Company made an application with banker. Banker said okay. But banker, at the time of giving loan, banker may keep a condition that continuously 3 months if you are not paying installment, I will appoint my nominee. I will send my nominee to your building and you will lose powers over the building tenants. My nominee will collect all the rental amounts from the tenants. First, he will adjust that amount against outstanding installments. Once outstanding installments become 0, then my nominee will get back. I'll take back my nominee. So that nominee is none other than official receiver. Official receiver will manage the charged property. Appointment of official receiver might happen as per the court order or maybe as per the charge instruments, charge documents, terms and conditions. See, if a person obtains court order for appointment of the receiver or manager to manage charged property, or if a person appoints such a receiver or manager under the power granted in the instrument, maybe under court order or maybe as per the charge instrument, if I'm having power to appoint receiver and if I am appointing receiver, then I should give intimation to the company and ROC within 30 days of such appointment or within 30 days of court order. And on payment of prescribed fees, ROC shall register the particulars of the receiver or instrument in the, particulars of the receiver. Upon cessation, I told, right, some 3 months he took control over this property and 3 months he collected all the rents and he adjusted against the installments. Over, outstanding installments become 0. So upon cessation also, the person, charge holder, the person appointed shall give intimation to both company and ROC using form CHG 6. Registrar shall register the cessation notice. See, whenever I appoint a receiver, maybe as per charge instrument or as per court order, I need to communicate with company as well as ROC. Once purpose is fulfilled, the appointed person will give intimation to both company as well as company as well as ROC. Getting my point? Next one, registers. 81 and 85 registers. In registers you will find the details of the charges created, modified, satisfied by the company. For better transparency, lawmaker is asking company to maintain a register. The difference between register maintained by the ROC and the register maintained by the company is, in ROC register you will find charges of all the companies falling in ROC jurisdiction, whereas in company register you will find only charges related to company. Suppose ROC Chennai, say for example 4 lakh companies are there in Chennai. All 4 lakh company related charges you will find in ROC register, that can be accessible through MCA portal. On payment of 100 rupees you can download all that information. Whereas particular company register you will find charges created by only that particular company. So register shall include all the charges including floating and fixed charges affecting any company property, assets, undertakings along with the prescribed particulars. So same points are getting repeated. See, all charges registered with registrar on its property, assets, undertaking, details of any property acquired subject to the charge, that means subsequent purchaser company, any modification, satisfaction. Entries should be made immediately and that entry shall be verified by, authenticated means verified by company director or CS or any authorized person. Inspection, remember these 2 points. Who can inspect registers? Any person, any person. But if that person is a member or creditor of the company, entry fees is 0. If he is an outsider, that means other than member and other than creditor, then there will be some entry fees. There will be some entry fees. And these registers shall be preserved permanently, whereas instruments shall be preserved for 8 years from the date of satisfaction. So what is the difference, sir? Sima, register means you will find the details of the charges, whereas instrument means CHG1, CHG2, CHG3, which you are filing with ROC, right? Instruments, deeds, documents. So mortgage deeds, charge instruments shall be preserved for a period of 8 years from the date of payments, from the date of satisfaction of charge. Whereas register book, it should be preserved till the liquidation of the company. If you remember, same point I discussed with you, section 7. All documents with respect to incorporation shall be preserved permanently at register office. Here also, charge register shall be preserved permanently, whereas charge instruments CHG1, CHG2, CHG3, these instruments shall be preserved up to 8 years from the date of satisfaction of the charges. Next one, non-compliance of this chapter. Any particular rule violated, any particular section violated, company 5 lakhs penalty, officer in default 50,000 penalty, and in case of fraud 447. 87 rectification by CG in register of charges. You tell me rectification, when this word rectification will come? Only when there is a mistake or error. These mistakes or error may be in ROC filings. Sir, earlier I filed forms with ROC. Those forms contain some wrong particulars. Or company is maintaining register. In that register some mistakes happened. Income tax return can be revised. GST return can be amended. What about MCA charge returns? Can be amended or not is the question. The answer is, without central government permission, you can't amend them. So that power, central government is having this power under section 87, but power already delegated to RD. Your based on your registered office address, particular RD will be assigned. So power delegated to RD. RD can order rectification in the register of charges. In the register, any mistakes you committed, you can rectify them with the permission of RD. Cases of default, no intimation given to ROC regarding payment or satisfaction. I told you, what is the normal time limit for filing satisfaction of charge? 30 days. And what is the additional time limit? 300 days. Suppose 300 days also over. 300 days also over. Now for beyond 300 days, how to register satisfaction of charge? Go and get permission from CG. Go and get permission from CG. And there is an omission or misstatement in previous filings with respect to creation, modification, or satisfaction of the charges. Some mistakes happened. Rectification is possible only with the permission of CG. But CG will give permission only if it is satisfied that, if CG is satisfied that the error or mistake is purely accidental, not intentional. If CG believes that it is an intentional mistake, that means it is a fraud. Section 447 will be applied. Sir, accidental, sir, unintentional, sir, and there is no negative impact on the creditors, no negative impact on the shareholders, sir, then okay, no problem. CG will grant permission. And CG can impose terms and conditions it considers appropriate when ordering the rectification. So CG, based on application in form CHG 8, rectify omission or misstatement in previous filings, also extend the time for satisfaction of the charge if not made within 300 days of payment or satisfaction. Clear? So with this, charge is also completed. So in this entire chapter, important concept is crystallization of charge, identification of fixed and floating charges. Rest of the things, they are procedural questions like what is the time limit for registration of charge? 30 days. Additional 13 additional fees. Further 60 ad valorem fees. And they can ask you the question like this: what are the consequences for non-registration of charges? So creditor will lose secured status. Creditor will lose priority. Clear? Whether loan is valid or void. Loan is valid. Repayment obligation is also legal. Repayment obligation will also be there. But creditor will lose secured creditor position. Let's continue with the next topic, management and administration. Section 88 to 122. This chapter is of two parts. Part 1, registers and returns. Part 2, general meetings. General meetings, section 96 to 122, and registers and returns 88 to 95. So remembering section numbers, every company is required to maintain registers with respect to its members, beneficial owners, significant beneficial owners. Register of members, register of beneficial owners, register of significant beneficial owners. 88, 89, 90. These registers can be closed. Section 91. Next one, coming to the returns, we are having two types of returns. Annual returns, section 92. Changes in promoter stake returns, section 93. And these registers and returns are available for inspection, and if you maintain registers and returns according to Companies Act, they will act as evidence. They will act as evidence. So registers, returns 88 to 95, register of members 88, beneficial owners 89, significant beneficial owners 90. Closure of the registers 91, annual returns 92, and 93, return of changes in promoter stake. Available for inspection, will act as evidence. Part 1. Part 2, general meeting. We are having two types of general meetings, AGM, EGM. AGM called by company, called by NCLT. EGM called by NCLT, called by company. Out of these four, first three are mandatory. AGM called by company, AGM by NCLT, EGM by NCLT. These three are mandatory. So non-compliance attracts punishment, section 99. Whereas EGM by company, section 100. General meeting, to call it as a valid general meeting, it should satisfy 4 PCs, prerequisites, 4 PCs. Properly convened, properly constituted, properly conducted, properly concluded. For properly convened, we will check notice calling for general meeting. Along with notice, for special business items, explanatory statement should be given. Notice 101, explanatory statement 102, properly convened. Next, properly constituted. For properly constituted, we check quorum under section 103. Who will check quorum? Chairman, section 104. While checking quorum, proxy is excluded and representative of president, representative of governor, representative of body corporate are included. So up to proxy 105 and representative of president, governor, president 1, governor 1, 112. Body corporate 113. With this properly constituted, over. Next, properly conducted. At meeting, what happens? Voting will happen. And the result of voting, we need to check whether resolution is passed or not. Voting, yes, we are having restrictions on voting and we are having types of voting. Restrictions and types of voting. Coming to the types, we are having 4 types of voting. It's SEPB. SEPB. S for show of hands, E for e-voting, P for poll, B for ballot. It's like September month, okay? SEPB. Show of hands 107, e-vote 108, poll 109, postal ballot 110. And the result of voting is resolution. Under resolution, you have to remember CTSAR. CTSAR. It stands for, C stands for circulation of resolution, T stands for types of resolution, S stands for resolution requiring special notice. A stands for resolution passed at adjourned meeting. R stands for resolutions to be filed with ROC. ROC filing. Cities are circulation, types, special notice, adjournment, ROC filing. So 111 to 117. And finally, properly concluded, for that the evidence is minutes 118. So inspection of minutes 119. Maintenance of documents in electronic mode 120. Finally, whether meeting is conducted, properly conducted or not, reported to ROC, that is report on AGM 121, and relaxation to one person company, last section 122. Clear? 35 sections are there. First, we will complete general meeting related provisions. Important. First, we will complete general meeting related provisions. Then I will come to part 1, that is registers and returns. So starting with 96. What is section 96? AGM by the company. AGM by the company. So we are having, as I told, we are having two types of meetings, AGM and EGM. What is the difference? every year mandatory general meeting is AGM, and any general meeting other than AGM we call it as EGM, or it is a meeting conducted between two annual general meetings. So first we will see AGM. So this AGM again is of two types ma. First AGM, subsequent AGM. First AGM and subsequent AGM. So in section 96 we will see four conditions with respect to AGM. Page number 107. Okay. So in AGM we will see four conditions. I'll write here itself. Yeah. First one, time limit of AGM, and second one DTP or else TDP. In my state one political party name is TDP. Okay, time limit, time, date, place. These four conditions you have to remember for every general meeting. So coming to the first AGM shall be conducted within 9 months from the closure of financial year. What is the time limit for first AGM? Within 9 months from the closure of first financial year. I repeat. What is the time limit for AGM? Within 9 months from the closure of first financial year. Sir, what is the first financial year closure date, sir? It depends on date of incorporation ma. If date of incorporation is on or after 1st January, then financial year closure date will be 31st March of following financial year. Simply, if date of incorporation is 1st January 2026, then financial year closure date will be 31st March following year, that means 27. So in that case you will find first financial year with how many months? 15 months. So first financial year closure date plus 9 months, it will be 31st December 2027. That is the time limit for first AGM. Sir, other cases, other cases, you know, 31st March of relevant financial year. For example, company was incorporated on 1st September 2025. So then financial year closure date will be 31st March of relevant financial year, nothing but 26. To this add 9 months. So due date for first AGM will be 31st December 2026. Understood, everyone? So if you observe carefully, every company has to conduct AGM every year. Every company except OPC has to conduct AGM every year. But if you observe in these two examples, in the year of incorporation, no need of AGM. Two examples you can see. In first case, year of incorporation is 2026, but first AGM was conducted in the year 2027. Second example, you see, year of incorporation is 2025, but first AGM was conducted in the year of 2026. So what is the time limit for first AGM? 9 months from the completion of first financial year. Subsequent AGM time limits. We had 3 time limits. First one, 6 months from the closure of financial year. Second one, time gap between two AGMs. Shall not exceed 15 months. Time gap between two AGMs shall not exceed 15 months. And every year one AGM. Here year refers to calendar year. So suppose previous AGM, for example 25-26 AGM was conducted on 31st August 2026. Now for financial year 26-27, when the first AGM when the subsequent AGM shall be conducted? Very simple. 26-27 closure of financial year will be 31st March 27. To this add 6 months, 30th September 27. When previous AGM was conducted? 31st August. To this add 15 months, because time gap between two AGM shall not exceed 15 months. So adding 15 months means September, October, November. 30th November 2027. Every year one AGM means year closure date will be 31st December 27. Every year means calendar year. So for 27, you know, 26 one AGM conducted. For 27 the last date will be 31st December. Out of these 3 dates, whichever is earliest, so obviously it is 30th September 27. And remember one important point, ROC can grant time extension up to 3 months for subsequent AGM. ROC can grant time extension up to how many months? 3 months. Up to 3 months for subsequent AGM. So for first AGM, there will be no extension. First AGM, there will be no extension. Whereas subsequent AGM, ROC can grant time extension up to how many months? 3 months. Can ROC grant time extension of 1 month? Yes. 2 months? Yes. 3 months? Yes. But 4 months? No. So with this, time limit condition over. Next one, TDP. T stands for time. D stands for date. P stands for place. Sir, where AGM should be conducted, sir? Where AGM should be conducted? Either at registered office or any place, any premises where, in the city, town, village where registered office of company is situated. Any place in the city or in the town or in the village where registered office of the company is situated. Suppose company registered office is situated in T Nagar. At T Nagar registered office, or at Nungampakam or Kodambakam, any place in the Chennai jurisdiction. So place over. Next day. Next one, day. Coming to day of general meeting. General meeting can be conducted on any day except national holiday. We are having only 3 national holidays. Republic Day, Independence Day, Gandhi Jayanti. Except these 3 days, you can conduct general meeting on any day, including Sundays also, including festival days also. There is no problem. But there is one problem. The problem is, suppose company fixed 26th September 2026 as AGM date. After company giving notice calling for general meeting, after fixing this day, central government declared 26th September 2026 as national holiday. Now, can company continue to hold meeting on that day or postponement required? Postponement required or can continue? Can continue. Getting my point? See, the day was declared as national holiday after giving notices. So that year, that particular year, you can conduct meeting even on that national holiday. But next year onwards, you should not plan general meeting on 26th September. So with this, day completed. Next, time. Commencement time of meeting should be between 9 and 6. Actually, it is business hours. The business during business hours only, general meeting should be called for. And the timings is 9 a.m. to 6 p.m. See here, commencement should not be before 9, after 6. Sir, can I start meeting at 2 o'clock? Yes. Can I continue meeting even after 6? Yes. You can continue meeting even after 6 also. There is no problem. Commencement time should be between 9 and 6. Clear? Everything? So 4 conditions. Due dates. Next one. Day, time, place. Now relaxations. Relaxations are, with respect to unlisted company. Relaxation. Unlisted company. With the consent of all the members. How many members? All the members. That means 100% members. AGM of unlisted company can be conducted at any place in India. Exemptions are very important points, tricky points, important points. So AGM can be conducted at any place in India with the consent of all the members, prior consent. Listed company, there is no alternative. Unlisted company only I am telling. Next one, coming to section 8 company, this date, time, place of AGM are decided by the board considering any directions given by the company in its previous general meeting. Say for example, in the year 2025, when general meeting was conducted on 30th September 25, members gave a direction. Next year also you conduct meeting on 30th September only at registered office only. Now board has to comply with the directions. Next one, of course, these benefits, these benefits are possible only if company is regular in filing section, 92 annual returns and 137 financial statements. Next one, government companies. In case of government companies, meeting can be conducted at registered office or any other place approved by CG. Any other place approved by the CG. So these are the exemptions you have to remember. Of course, these exemptions are possible only for the companies who are regular in filing ROC returns. That's it. All the points I covered. Time, place, and extension. Remember, extension is not possible for first AGM. Extension is possible only for subsequent AGMs. Who is having power to grant a subsequent AGM? Who is having power to extend subsequent AGM due dates? ROC. Next one. Suppose under section 96, company failed to conduct AGM. There is a beautiful story. You can read it in question bank. In one examination question, when one paper, I saw the story. The story is, company was incorporated exactly on 1st December 2025. 4 months only completed. And during these 4 months also, company is in the progress of setting up the project. Sales 0, profit also 0. So directors passed a resolution not to conduct meeting for that financial year. Whether the resolution passed by the directors valid or invalid, or is there any obligation on the company to conduct meeting for that financial year? Getting my point? So yes, do you agree with the resolution or not? Answer is no, such exemptions were given. So in this case, aggrieved party member can file a petition with NCLT. Sir, company is not calling for general meeting, we need general meeting. Now NCLT is having two powers. Either NCLT can call for the meeting, or NCLT can direct board of directors to call for the meeting. As per Act, meeting should be conducted on any day except national holiday, time 9 to 6, place at register office. But these norms are not applicable to the AGM called by NCLT. NCLT is having supremacy with respect to section 97. That means 97 is powerful than 96. Getting my point? Actually, who is having power to call for meeting? Board of directors. But who is calling here? NCLT. Now whether meeting valida, invalida? Valid. Shall be deemed to be an AGM of the company subject to directions of the tribunal. And here you need to understand, tribunal will react only when an application is filed by the member. Tribunal will react on suo motu basis only based on the application filed by the member. Application filed by the member. Can I proceed? Next one. Powers of the tribunal to call the meetings of the members other than AGM. Other than AGM is nothing but EGM. EGM. Suppose a company filed an application with an authority regarding some claiming some benefits. For example, we have discussed in section 66, right? Capital reduction is there, reduction of capital is there, right? So yes, board of directors filed an application with NCLT. NCLT, while verifying the application, it observed some material scams, some manipulations happened in the books of accounts. And NCLT is of opinion that yes, meeting should be conducted. It should be intimated. The same about manipulation should be informed to the members, like that NCLT decided. Now whether NCLT is having power to call for EGM? Answer is yes. Observe carefully, difference between 98 and 97. 98 and 97. In 97, NCLT will react only when there is an application from the member. But 98 EGM, NCLT can order meeting on suo motu basis. Best example, section 66 only. Or when there is an application by the director, or when there is an application by the member, then NCLT will react and NCLT will order a meeting to be called, held and conducted and give necessary directions. Such directions may include one member present either in person or proxy is deemed to be a valid quorum. See, in section 103 we will discuss about quorum. Minimum quorum with respect to public company is 5, private company is 2. But when a meeting is called by, or when meeting is conducted by NCLT, even one person attending the meeting constitutes valid quorum. Getting my point? And this meeting valida, invalida, is deemed to be valid. That's all about 98. Now 96 AGM mandatory. 97, when NCLT is passing an order to call for AGM, it is also mandatory. 98, when NCLT is passing an order to call for EGM, it is also mandatory. So non-compliance of these three sections attracts punishment. Any one section non-compliance, punishment will be attracted. So what is a punishment? If a company defaults in holding an AGM or complying with the directions issued by the tribunal, company as well as officer in default, the punishment will be 1 lakh plus 5,000 per day during such default continues. There is no ceiling limit. First you failed to comply with 96, right? 1 lakh standard punishment. How many days delay happened? Multiply with 5,000 rupees. Can I proceed? Next one, EGM section 100. Section 100 EGM. Here you need to understand who is having power to call for EGM. Who is having power to call for EGM? EGM can be called by board of directors. EGM can be called by members. Here technically we call them as requisitionist. Requisitionist. Board of directors may call EGM either on suo motu basis or based on requisitionist requisition, based on requisition. Getting my point? If board of directors are calling EGM on suo motu basis, this meeting can be conducted at any place in India. At any place in India, need not be registered office, need not be premises in the city, town, village where registered office is situated, because EGM is nothing but to discuss some emergency matters. EGM will be conducted. Now looking at the day, time, place, we can't fix the meeting, emergency, right? So at any place in India. And here you need to remember one more point. Suppose our company C Limited is there, in which 100% of the paid up share capital is held by a company incorporated outside India. 100% of capital was held by company incorporated outside India. That means any resident member is there, all the members are non-residents, all the members are non-residents. So if this C Limited wants to conduct EGM, this EGM can be conducted either in India or outside India. Remember this point. Generally, meetings should be conducted in India only. But if you are a company which is a wholly owned subsidiary to a company incorporated outside India, you can conduct EGM either in India or outside India. Logic very simple. All of your members are non-residents outside India. It's an emergency. So in case of emergency, coming to India, conducting meeting in India is logicless. Can you remember this point? So same points, based on requisition, based on either on suo motu or based on the requisition, same rules will apply. Particularly requisition related point, requisition related point. Observe carefully. Here, who can file requisition is important. Who can file requisition is important. From requisition point of view, companies are classified into two types: company with share capital, company without share capital. Company with share capital, company without share capital. If it is a company with share capital, the persons who are filing this requisition shall have 1/10 of the paid up share capital entitled to vote. Entitled to vote as on date of receipt of requisition. As on date of receipt of requisition. In case of company without share capital, members should possess 1/10 of voting power. Voting power entitled to vote. Entitled to vote as on date of receipt of requisition. So when company is receiving this requisition, on that day, the people signing this requisition, see, today I am sending requisition, today I am having zero capital, but no problem. Company is receiving requisition tomorrow. By tomorrow, if I possess 1/10 of the paid up share capital, or if my group possess 1/10 of the paid up share capital, then that requisition will be valid. Getting my point? So day 0, for example, day 0 is the requisition date. Imagine we are sending this requisition via mail. Via mail we are sending requisition. That means day of requisition will be date of receipt of requisition only. Because today I am sending mail means today itself you will receive it. Now the time limit is from day 0 onwards. Lawmaker is giving 21 days time period to the company. That means by date 21, dispatch notice calling for EGM to all the members. And by 45th day, conduct meeting. So by day 45, meeting should be conducted. Any one non-compliance means what? Suppose on or before day 21 I am not sending notices, or on or before day 45 I am not conducting EGM, then power will be transmitted. Power from board of directors will be transmitted to the requisitionist. And from the date of requisition, they will be given 3 months time. How many months time? 3 months time. So within 3 months, they need to conduct EGM. So simply, what is the extra time limit they are getting? 3 months minus 45 days means 45 days. Getting my point? So 45 days is up to the power of board of directors. 21st day, on or before 21st day, if they are not sending notice, or before 45th day, on or before 45th day, if they are not conducting meeting, then automatically power will be transmitted to the requisitionist. Sir, for calling general meeting, notice shall be given to the members. A register of members is maintained by the company. Register of members is maintained by the company. Then how requisitionist will know the information of the members? How requisitionist will know the details of the members? Very simple. When power already transferred, from date 21st day onwards, by 45th day, during this time period, board of directors should send an updated copy of register of members to the requisitionist. And looking at that register, they will prepare a notice to each and every member, and they will send a notice to each and every member of the company. One important point is, generally if you discuss special business at general meeting, you need to attach explanatory statement. But if requisitionist is conducting general meeting, or if based on requisition board of directors are conducting general meeting, in these two cases, explanatory statement is exempted. Explanatory statement is exempted. Getting my point? So in this EGM, you have to remember total five limits. One is 1/10 of the paid up share capital, 1/10 of the voting power, 21 days, 45 days, 3 months. Just look at the material ones. So board of directors on suo motu basis. Yes, this point I explained you. Wholly owned subsidiary of a company incorporated outside India can conduct meeting either in India or outside India. IFSC companies, private companies, IFSC companies, board can call EGM anywhere in or outside India with the consent of all the shareholders. This exemption points only important. And 1/10 of the paid up share capital, 1/10 of the voting power. It depends on company status, with the share capital or without share capital. So meeting shall be called within 21 days. It should be conducted within 45 days. If board does not call meeting within 21 days, then requisitionist may call the meeting within 3 months. Requisitionist must call and hold the meeting in the same manner as board would provide. Sir, the point is here, who is conducting EGM? Requisitionist. That means meeting expenditure, who will incur? Requisitionist. Actually, who should incur that expenditure? Company. Company should incur that expenditure, but requisitionists are incurring that expenditure. So therefore, company will reimburse them. Reasonable expenses, all reasonable expenses will be reimbursed, and company will deduct that expenses from the remuneration of directors who are in default. Directors who are in default, from their remuneration, these expenses will be deducted. It's like penalty only. Next one, EGM by requisitionist. So members can requisition an EGM by providing the requisition in writing or electronically at least 21 days before the proposed date of meeting. What is the length of the notice of meeting, ma? That means if you decide AGM as 1 day, what is the minimum time period you need to provide, or what is the time gap before which you need to give notice calling for meeting? It is 21 days. It is 21 days. So simply the time gap between date of the dispatch of notice and date of the meeting should be 21 days. Same point here also they are telling 21 days before proposed meeting date you have to dispatch notices, and that notice shall specify date of the meeting, place of the meeting, day, hour, nothing but time, and business of the meeting. Business means what? Decision matters. Location. Remember, EGM can be conducted either at registered office or any place in the city, town, village where registered office of the company is located, and it can be conducted on any day except a national holiday. Simply the rules that are applicable to AGM are also equally applicable to EGM by requisitionist. EGM by board of directors, these rules are not applicable because board of directors know the emergency. Can I proceed? Next one. If special resolution is proposed, notice must comply with section 114. There I'll discuss with you. Signing of notice, generally who will sign the notice? Board of directors. But here who is giving notice? Requisitionist. So on behalf of requisitionist, one will sign it, or all the requisitionists will sign the notice. First of all, who are requisitionists? Members who are demanding the meeting. Explanatory statement is not required. Remember. Notice requirements. The notice of the meeting shall be sent to the members listed in the register of members within 3 days of requisitionist submitting a valid requisition. See, this is as per rules, ma. As per section, it is 21 days. As per section, 21 days. Once company receive requisition, it should be forwarded to all the members within 21 days. But as per the rules, to whom we need to forward that letters? To the members whose name appears in the register within 3 days of receipt of requisition. Listen carefully. See, today company is receiving requisition. I need to send notice calling for meeting within how many days? Within 21 days. To whom? To the members whose name appear in the register within 3 days. That 3 days means once I receive requisition, I need to update the registers. In 3 days, I need to update the registers and I need to freeze the details. To those people, I need to send the notices. And what is the time limit? 21 days. If meeting is not convened by the directors, requisitionists have right to receive a list of members with their registered address and number of shares held. Company shall provide this list updated as of 21st day from the receipt of a valid requisition along with any changes before 45th day from the date of receipt of requisition. So it's like a opportunity for the directors to call a meeting within 21 days and conduct the meeting within 45 days. If directors failed here, then during this time period, board of directors should give a updated list of register of members to the requisitionist before 45th day. You may get a doubt, sir, why board of directors will give register of members, sir? Why board of directors will give register of members? In that case, it becomes impracticable to call for EGM. Then member can write a letter to the NCLT. Sir, we need EGM, sir, but board is not allowing us to conduct EGM. Now NCLT will call for EGM under section 98. Understood? Method of notice, manual or electronic mode. Non-receipt or accidental omission of notice does not invalidate the meeting. So that thing I'll discuss with you under section 101. So with this types of meeting provisions completed, 96 to 100. 96 AGM, 97 AGM by NCLT, and 98 EGM by NCLT, 99 punishment for non-compliance, 100 EGM. In EGM we had 2 points, EGM by board of directors, EGM by requisitionist. Time limits, total 5 time limits are there. 6 limits are there, okay, but 5 is 1/10 of the voting power in case of without share capital, 1/10 of the paid up share capital in case of limited by shares, and 21 days, 45 days, 3 months. As per rules, 3 days time period is also there. That's it. So 96 to 100 we completed. Next one, section 101, prerequisites. Section 101, notice. Can you tell me the page number? Section 101. Yeah, I think page number 89. Notice of a meeting. Notice of a meeting. Who will give notice? I mean, who is having power to fix the contents of the notice? It's board of directors. It's NCLT. Also requisitionist. Because in case of section 100, you can see requisitionist shall also send notices. But general rule, board of directors by passing board resolution shall decide the contents of the notice. Contents of the notice. See, there is a question, which was asked a decade back. The question is, company secretary without board resolution prepared a notice calling for general meeting and dispatched that notice to the members. Whether notice valid or invalid? And the answer is notice is invalid. And what is the remedy? If ratified by the board of directors subsequently, then the notice will be valid, or else notice will be invalid. Now, who is having power to issue notice? Yes, we have seen board of directors, NCLT, requisitionist. Sir, what is the contents of the notice, sir? What is the contents of the notice? Very simple, ma. DTP agenda. DTP agenda. D stands for day of meeting. T stands for time of meeting. P stands for place of meeting. Agenda means business matters to be discussed. Okay, na? Next one, sir, to whom we should give notice, sir? To whom we should give notice? All the members of the company, right? All the members of the company. Sir, suppose if one member died, sir, then legal representative. In case of deceased member, legal representative. Sir, one fellow become insolvent, sir, then official assignee in case of insolvent member. Sir, only members, sir? No. All the directors of the company. Only directors, sir? No. All the auditors of the company. Cost auditor, company auditor, secretarial auditor. So notice shall be given to all the members, legal representative of a deceased member, official assignee of the insolvent, all the directors and auditors. Sir, what is the mode of sending the notice, sir? What is the mode of sending notice? Already I discussed with you under section 20. So companies serve the documents either in manual mode or in electronic mode, whatever decided in AOA. It is decided by articles of association. And you know, two important points in the notice, two important points. One is shorter notice. Before shorter notice, first you need to understand length of the notice. Sir, what should be the length of the notice? 21 clear days. What is meant by length? The time gap between dispatch of notice and day of meeting. What is the time gap? 21 clear days. Clear indicates what? Clear indicates dispatch date and meeting date shall be excluded. So simply 1st September, if I am dispatching notice calling for general meeting, I am dispatching notice calling for general meeting, what would be the probable date of AGM? We need to check. Sir, can I fix 21st September? No. Why? Because both dates are excluded. So if you observe, the time gap is 19 days only. But what is the statute is telling? 21 days. So 23. Even if 23 and 1 is excluded, you will find 21 days. And here one more point is there, section 20. What is the mode of sending notice? Is it manual or is it electronic mode? If it is electronic mode, no problem. If it is manual, 48 hours shall be deducted for transmission. For putting the letter into transmission, 48 hours time will be deducted. In that case, if you fix, suppose if you fix postal mode and if you fix 23rd September as due date, 23rd September as date of AGM and dispatch is 1st September. Now we will calculate. See, 1st September excluded, 23rd September excluded. How many days are there? 21 days. From 21 days, you need to deduct 48 hours. Then you will get 19 days only. 19 clear days. 19 clear days. Allowed or not allowed? Not allowed. That means in that case total 25 days. Getting my point? So it is, remember this simple rule. 21 clear days. Clear days indicates date of meeting, date of dispatch excluded. If it is through post, 48 hours shall also be added. Then if I give notice for a duration less than 21 clear days, we call it as shorter notice. Whether shorter notice valid or invalid, straight away invalid, but it will be valid. However, it will be valid with prior consent of the members. Sir, how much consent I need to take from the members? It depends on the meeting. AGM, EGM. If it is AGM, consent from 95% of the members entitled to vote. Here I am not giving importance to the value. Here I am giving importance to the members. You may hold 1 million shares. I may hold 1 share. But both are important according to this rule. Getting my point? At least 95% of the members entitled to vote must give consent. If preference shareholders are also entitled to vote at that meeting, that case, not only equity, you should also consider preference shareholders in that 95%. If it is EGM, again you need to classify companies into two types. Company with share capital, company without share capital. Company with share capital, company without share capital. Company with share capital, two conditions to be satisfied. Sir, what are the two conditions, sir? Majority. More than half of the members. Majority. And they must possess 95% of the paid up share capital. Majority of members possessing 95% of the paid up share capital giving consent, then shorter notice is valid. If it is company without share capital, members holding 95% of the total voting power. Easy to remember. How to remember? First importance is given to members. Next, members and paid up share capital. Last it was paid up share capital only. Of course, paid up share capital means voting power comes from paid up share capital. Since it is a company without share capital, voting power. First, members important. Next, majority members 95% of the paid up share capital. Last, 95% of the total voting power. and here end condition is there. Observe carefully. Majority of the members holding 95% of the paid up share capital giving consent, then shorter notice is valid. Chance is there. This kind of questions, chance is there in examination. Next one, omission of the notice. Next important one is omission. Omission, burden of proof lies on the management. Is it accidental omission or intentional omission? If you are able to prove accidental omission, general meeting is valid. All the decisions taken at the general meeting are valid. If it is intentional omission, general meeting is void and all the resolutions passed at the general meeting stands null and void. Getting my point? Shorter notice and omission both are very, very important. Remaining points easily you can remember. Can I proceed? Yeah. So just look at the material 21 clear days. To whom we should give notice, and what is the length of the notice? I told you 21 clear days. For Section 8 company, privilege. What is the privilege? 14 clear days. Next one, Section 8 company can enjoy this privilege only if they are regular in filing financial statements and annual returns with ROC. Omission, I told you. Accidental omission, no impact on the meeting, but burden of proof lies on the management of the company. Next one, meetings at shorter notice. You can see AGM, 95% of the members entitled to vote. Other than AGM, nothing but EGM, company with share capital, majority at least 95% of paid up share capital. Without share capital, members at least 95% of total voting power. If member has a voting rights only for specific resolutions at a meeting, say for example preference shareholders, they will be counted only for those resolutions where they are entitled to vote. Contents of the notice, I told you, DTP and agenda. Who is having authority to call general meeting? Board approval. Individual director had no power to call for meeting unless ratified by the board. Section 100, requisitionist also had a power. Section 97, 98, NCLT is also having a power. Mode of sending notice, manual, electronic mode. But if it is electronic mode, some conditions they prescribed. If it is email, then copy the text and paste it, or attach the notice, or place notice in one website and you give that link URL, copy the link and mention in the mail. 3 ways copy the text and paste the text in mail, or give attachment, or copy the link, copy and paste the link. Subject line should be name of the company, type of the meeting, AGM, EGM, and number of the meeting, date of the meeting, place of the meeting. That is the subject line of the mail. Notices shall be displayed on company's website. Email shall be sent via secured programs. Email failure beyond company's control discharges company from liability. Absolves liability means company is not under default. Email shall be sent to the person entitled to receive it as per company records provided by the depository. So if you are a demat account holder, so you will receive notices to the mail. You will receive the notices to the mail which was registered with the depository, and company must give an opportunity at least once. Remember the frequency remember the frequency. In one attempt this was tested as a 1 mark, 2 marks MCQ, I think. So what is the frequency? How many times company should give opportunity to update their mail IDs? At least once in a financial year. All the members are whose email IDs are blank, who have not registered their email IDs. For them at least once opportunity should be given. If it is noticed via post, 48 hours will be considered for putting the letter into the transmission. 101 over. Next one, 102 explanatory statement. I talked about agenda, right? Agenda means business, decision matters. In this chapter, resolution means formal process of obtaining approval. What is resolution? Formal process of obtaining the approval. Business means decision matters. Business means decision matters. Now this business is of two types: ordinary business, special business. Ordinary business items, ADDA. A stands for adoption of financial statements. D stands for declaration of dividends. These both are connected with financial statements. Next one, director's appointment auditor's appointment and fixation of the remuneration. Director's appointment, auditor's appointment and fixation of the remuneration. These four are ordinary business matters. These four matters compulsory you need to discuss at AGM only. And other than these four matters, every matter is known as special business, like change of name, alteration of object clause, bonus issue, buyback, private placement of equity shares, further issue of shares. Getting my point? All these are special business items. And for special business items, explanatory statement is compulsory. So what is this explanatory statement? It is just a justification. Reasons for that business, reasons for that decision, that's it. You'll find only reasons for that decision. In this explanatory statement, one information is compulsory. That what information? Nature of concern or interest, whether it is a financial interest or non-financial interest of directors, manager, KMP, relatives of the above. So simply KMD, KMP, KMP, manager, director, and relatives of the people. If they are having any interest in the proposed business transaction, in the proposed decision matters, they need to reveal, they need to disclose their interest. It may be financial or non-financial. For example, Mukesh Ambani sir is a director in Reliance Company and Adani Company, for example. Reliance Company is entering into contract with Adani Company, for which members approval is required. Now, Mukesh Ambani sir should disclose his directorship interest, which is a non-financial interest. Suppose Mukesh sir is holding 10% paid up share capital of Adani Enterprises. Now that monetary limit, that financial interest, sir, I'm the 10% shareholder of the company, like that Mukesh Dhirubhai Ambani sir should disclose. And any other information to help the members understand the meaning, scope and implications of the business. Any other material information which can influence the decision making of the decision making of the members. I told you ordinary business matters, 4 matters ma. Remember this point ma. Every appointment of director is not an ordinary business. Only the appointment of director in the place of retiring director is an ordinary business matter. Suppose appointment of a new director, new position, it's a special business matter. Okay. So special business items requires explanatory statement. Explanatory statement is not required for ordinary business. Additional disclosures. Just now I told you. There is a contract between Reliance Industries Limited and Adani Enterprises. For example, Mukesh Dhirubhai Ambani sir is holding, for example, 2% of the paid up share capital of the Adani Enterprises. Now he need to disclose the extent of shareholding also. Opposite version, if the holding is less than 2%, no need to disclose. If the holding is less than 2%, no need to disclose. Effect of non-disclosure. And this point also, mention the time and place for inspection of the documents. Why? Because members are the owners of the company. They are the ultimate risk takers. So they should be communicated completely. That's it. Effect of non-disclosure. See, if first point is not complete, and whatever benefit the director or manager or KMP or promoter is getting, that benefit they are not legally entitled to. It is like a wrongful gain, and that gain they should possess in the form of in the position of trust only. That means you all know trustee will hold properties, but trustee cannot enjoy with the properties. So trustee has to return the properties to the beneficial owner. So here they shall compensate the company for the benefit they received in addition to any other legal action under this section. Any other legal action means simply punishment. What is the punishment? Minimum 50,000 rupees, maximum 5 times of the benefit you received because of non-disclosures in the because of this business matters. Without disclosure, how much benefit you received into 5 times. So 50,000 or 5 times the benefit received, whichever is higher. That means minimum 50,000, that's it. Maximum 5 times of the benefit he received, that is a punishment. And IFSC companies, under each and every section like 101, 102, you will see if AOA of the private company or IFSC company provides that this section is not applicable, then this section is not applicable to them. Okay, na? So in entire section 102, you need to remember nature and extent of interest in the business matter. Who? KMP, manager, promoter and relatives. Effect of non-disclosure. They should compensate the company the benefit they received. In addition, they need to pay penalty. How much? 5 times or 50,000, whichever is higher. And for disclosure, what is the extent of shareholding? 2% or more. You remember these points. And one more point, explanatory statement is compulsory for special business item, but in one case explanatory statement is exempted. Which case? Just now I told, section 100, requisition. In case of requisition, explanatory statement required or not required? Not required. See, they will ask a question like this, examiner will ask question like this, like requisition is send a notice to the company. He didn't send any explanatory statement. Based on this, directors rejected that notice. Whether the rejection by the directors valid or invalid. Why? Notice is enough. Explanatory statement not required. Next one, quorum of the meeting. Quorum of the meeting. In your material, just this sentence you add it, the highlighted sentence you add it. Unless AOA provides for larger number. Unless AOA provides for larger number. That means what? A number mentioned in AOA or number mentioned in Act, whichever is higher. Whichever is higher, we need to follow. Can I proceed? So here we are having two types of companies, private company, public company. For private company, if AOA is silent, quorum is 2 members personally present. Personally present means what? Personally present excludes proxy. Sir, 1 member and 1 proxy present, sir. Now what is the quorum? 1 only, because proxies are not counted for the purpose of quorum. So with this 1 member, can I continue the meeting? No. No quorum, no meeting. Coming to the public company, slab system. Up to 1000 members, no confusion at all. Up to 1000 members, applicable quorum is 5. 1001 to 5000, applicable quorum is 15. And 5001 and above, applicable quorum is 30. Getting my point? And quorum, who will be counted? Members personally present. Representatives added or not added? But 2 representatives are added, Who are the 2 representatives? Representative of president or governor, representative of body corporate will be added for the purpose of quorum. So members personally present refers to members entitled to vote on the meeting of the agenda. That means, say for example, there is a company C Private Limited. C Private Limited. There are 100 equity shareholders and there are 100 preference shareholders. Private limited company, no need to check number of members. Straight away, what is the applicable quorum? 2. Suppose to the meeting, 1 equity shareholder came and 10 preference shareholders came. In that meeting, preference shareholders are not entitled to vote. Now for the purpose of quorum, how many members are there? 11 or 1? Only 1. Lack of quorum, what would be the consequence? Meeting stands adjourned. Meeting stands adjourned. If quorum not present within 30 minutes of the scheduled time, meeting will be adjourned to the same day, same time, same place in the next week or as determined by the board. Meetings if called by requisition is, such meeting stands cancelled. Very simple, you yourself calling the meeting, you being a member, you are calling members meeting and no other member is trusting you. That's why they are not coming to the meeting. What is the purpose of adjournment? Straight away meeting will be cancelled. Getting my point, everyone? So remember, because in past 2 times a practical question came on this point. Meeting was called because of requisition filed by requisitionist, and in that meeting there is no quorum. Immediately board of directors adjourned the meeting. Whether that adjournment valid or invalid? Invalid. Because if meeting is conducted by requisitionist or called because of requisition, no quorum, meeting stands cancelled. Other meeting stands adjourned. If a meeting is adjourned or there is a change in the date, time and place of the meeting, the company must give at least 3 days notice to the members. See, what is the time period for original meeting? 21 days. What is the original length of the notice for original meeting? 21 days. But for adjourned meeting, 3 days only, because adjournment happens to the same day next week. That means we are having only 7 days. So 21 days is not possible. So 3 days notice is required. This can be done either individually, giving notice individually, or publish an advertisement in 2 newspapers. One is English newspaper, other one is vernacular newspaper. If quorum still not present at the adjourned meeting, members present shall form the quorum. So here one important point to understand. Sima, AGM was called on 22nd September 2026. Okay. Register of members. As per register of members, total 990 members are there. Company C Limited. Now what is applicable quorum? 5. Original meeting 50 members came. 50 members came. And you know agenda is 10 matters. How many matters? 10. After discussion of 8 matters, it was too late. So directors decided to adjourn the meeting. And adjourned meeting was conducted on 25th September 26. At the adjourned meeting, only 4 members were personally present. Now can company continue the meeting or adjournment required? Company continue the meeting, adjourn the meeting. Louder. Adjourn the meeting. Adjourn the meeting because there is no quorum. Sir, adjourn the meeting on adjourn the meeting to 20th September 26. That meeting only 2 members personally present, sir. Now you can continue the meeting. Sir, why not here, sir? Why can't I continue here? See, here you need to check why the original meeting was adjourned. If the original meeting is adjourned due to lack of quorum, at adjourned meeting, no need to check quorum. Members personally present shall constitute the quorum. If original meeting is adjourned due to other matters, other reasons other than quorum, then at adjourned meeting also you need to check the quorum. Getting my point? What is the reason why original meeting got adjourned is the point. Original meeting got adjourned due to lack of quorum. Then adjourned meeting, members present shall constitute quorum. Everyone? Suppose company, C Limited company, it is having 8 members. 8 members. What is applicable quorum? 5. Exactly day before meeting, 4 members died. Now how many members are there? 4. Balance 4 members attend AGM. No need to check quorum. Why? Because you can't bring 5th member for the purpose of quorum. That's it. These are the practical case scenarios. Next one, President of India, Governor of the State, representative can attend the meeting and they will be counted for the purpose of quorum. And that person can also appoint proxy for the meeting. Similarly, representative of corporations also. Simply, these representatives are deemed to be members. That means they will be considered for the purpose of quorum. If at all they need, they can also appoint a proxy. Understood? Everyone? Next, special points. See, what is the time limit for checking the quorum? What is the time limit for checking the quorum? Here it is there. If quorum not present within 30 minutes. That means time limit for checking quorum is 30 minutes. Sir, 31st minute quorum came, sir. 30th minute, 1st, 2nd meeting already adjourned. Okay, na? Next one. Should quorum present throughout the meeting or initially if quorum is present enough? No, quorum should be present throughout the meeting. You can see here, as per secretarial standard, quorum must be present throughout the meeting because one practical question is there in our question bank. Examination question. That in that question, they quoted SS2, secretarial standard 2. So the question is like this, total 7 matters to be discussed at general meeting. For 5 matters, quorum is there. For 2 matters, there is no quorum. What about these 2 matters? Valida, invalida? Answer is invalid because quorum should be present throughout the meeting. And members using remote e-voting are counted for the purpose of the meeting, for the purpose of quorum if attended. See, I already exercised voting power under remote e-voting. And I attended the meeting. Will I be counted? Yes, I'll be counted. Related party members present are counted for the purpose of quorum. If you are having interest in the proposal, you must disclose your interest and you should not exercise vote. Why? Because your vote is not independent vote. It is influenced vote. That's why you are not eligible to vote. Of course, you will be counted for the purpose of quorum. And quorum rules do not apply to postal ballot transactions, because in case of postal ballot, I will not conduct a meeting. I'll send ballot papers directly to you. So quorum rules will not apply. Related party definition, just give one time reading. Important only. Related party means, director and all the director relatives, promoters, KMP, all these people become related party to the company. Shadow promoter is also related party only. And that group companies, associate, holding, subsidiary, all those also comes under related party only. Next one, chairman in the meetings. Section 104. In chairman, remember only one point, that is casting vote. That is casting vote. So, sir, what is this casting vote? Ma, we are having two types of resolutions, right? OR, SR. Can you tell me equation for OR? Equation for OR. Votes in favor greater than votes against. Special resolution equation. Votes in favor greater than or equal to 3 times of votes against. Correct? Suppose if votes in favor is equal to votes against, this is the situation. We call it as hung. If this is the situation, whether ordinary resolution is passed or not passed is the question. So to eliminate this kind of situations, company AOA may give power to chairman of the meeting, to exercise a vote to remove such conflict. If chairman casts vote in favor, OR is said to be passed. If chairman casts vote against, then OR is said to be dropped. If AOA is silent, then that ordinary resolution is said to be dropped. Getting my point, everyone? So if you see the casting vote, you will find that casting vote means in case of equality of vote, chairman can cast a second vote. Sir, what is this second vote, sir? That means, is he having first vote? First of all, if you see chairman, who is the chairman? Members personally present shall elect chairman by show of hands unless articles state otherwise. So we 50 members attended the meeting. We elect one among ourselves to take the position of chairman. That means, who is the chairman? Already a member. Already he exercised vote. Now in case of equality of votes, he will be given second vote. Getting my point? And how chairman will be elected? Either under show of hands or poll. If poll is not demanded, chairman elected under show of hands will continue the meeting, will conclude the meeting. If chairman is elected under poll, then chairman elected under show of hands will continue till chairman was elected by, another chairman was elected by under poll. So just remember casting vote, ma. Just remember casting vote. Sir, for special resolution, no casting vote. If you observe special resolution, equality is allowed. Votes in favor is equal to 3 times of votes against. Equality is there. But in case of OR, there is no equality. Can I proceed? 104 over. Next, 105. Appointment of the proxy. Appointment of the proxy. So who is the proxy? Members representative is the proxy. Members representative is known as proxy. Generally, meetings will be conducted on working days only. Member is having some work. He is unable to attend the meeting. However, he can send his representative. That representative is proxy. In the proxy, you have to remember 3 limits. 3 time limits. You have to remember 3 time limits. What is the time period for deposit of proxy form? 48 hours before meeting. Proxy form. Company should receive proxy form from the member at least 48 hours before commencement of the meeting. The next important point is inspection of proxy forms. If you want to inspect proxy forms, you must give prior intimation. You must give prior notice to the company at least 3 days before meeting. And inspection will start 24 hours before commencement of the meeting. So how many limits are there? 3 days, 48 hours, 24 hours. Technically 3 days, 2 days, 1 day. 3 days before meeting, you have to give notice of inspection. 2 days before, you have to deposit proxy forms. 1 day before the meeting, inspection will start. Getting my point? Let's see. Proxy. Very, very, very important point. One attempt, 2 marks came on the first point itself. 2 marks came. Who can appoint proxy? Tell me, who can appoint proxy? Member entitled to attend and vote. Entitled to attend and vote. The question is like this, ma. Suppose, X is a member of the company, C Limited. Under remote e-voting, under section 108, he already exercised voting power. Now at AGM, can he attend the meeting? Yes. Can he attend the meeting? Yes. Can he exercise voting power one more time? You tell me, can he exercise voting power one more time? No. Now, can this person appoint proxy to the meeting? No. Why? Who can appoint proxy? Entitled to attend and entitled to vote. Only when these two conditions are satisfied, he can appoint proxy. Sir, who can be proxy? Any person. Maybe a member, maybe a non-member. But if you are a Section 8 company, you can appoint only other member as the proxy. You can't appoint outsider as the proxy. All companies, proxy can be member, can be non-member. But Section 8 company, proxy should also be a member. Next one. Proxy rights shall not have right to speak. Shall not have right to speak. That means what? He cannot ask doubts. He cannot question the management. However, he can demand the poll and he can exercise voting power under poll. Even in case of show of hands, proxy has no right to exercise voting power. Under show of hands also proxy has no right. Remember, proxy is having disabilities as well as privileges. Even though he is a non-member, he can attend the meeting. He can demand the poll. He can exercise voting power under poll. These are the 3 benefits. 3 disadvantages are there. No right to speak. Not counted for the purpose of quorum. And not allowed to exercise voting under show of hands. No vote under show of hands. Not counted for the purpose of quorum. And no right to speak. Remember this ability, privileges and disabilities. Proxy benefit is applicable to all the companies except companies without share capital. Companies without share capital, proxy benefit is not there. Of course, if AOA provides that our company will also have a benefit of proxy, then proxy benefit is there. But if AOA is silent, by default, companies without share capital, they won't have benefit of proxy. And CG may prescribe few companies in future which cannot appoint the proxies. Section 8 companies, as I told you, only member can be appointed as the proxy. Can I proceed? Next one, proxy limitations. This is another important limit, very, very important limit. A single proxy can represent maximum 50 members only. Tell me, how many members can be represented by a single proxy? 50 or 10% of the paid up share capital. Or 10% of the paid up share capital. Suppose I'm holding 5%. My friend is holding 5%. Another friend of mine is holding 5%. Total we 3 holding how much? 15. Can we 3 appoint a single person as a proxy? No. Sir, you told maximum he can represent 50. No. Yes, he can represent 50. At the same time, he can represent maximum 10% of the capital only. To avoid concentration of power in the few hands, this point is there. Maximum 50 or maximum 10% of the paid up share capital. Remember, very, very important. Suppose myself holding 20% of the company's capital. Now, can I appoint proxy? Yes. Sir, you told maximum 10 only. No. But for me, exemption is there. Any person holding more than 10%, see, any person holding more than 10% can appoint single proxy, but that appointed person cannot represent another person in the meeting. I'm holding 20%, right? So I can appoint single person as a proxy, but that person should not act as proxy for other people. Understood? So tell me, first of all, what is the time limit for deposit of proxy with company? 48 hours before meeting. What is the inspection time? 24 hours before the meeting. For doing inspection, notice shall be given at least how many days before meeting? 3 days before meeting. Proxy can represent maximum how many members? 50. How much capital he can represent? 10%. If any single member is holding more than 10%, can he appoint proxy? Yes, but the appointed person cannot represent other members of the company at the meeting. And proxy instrument, it is MGT 11, signed by the appointer or authorized attorney. For corporate members, instrument will be under the seal. Of course, instrument should be verified under common seal or signed by the officer or attorney. AOA cannot impose additional requirements. Like, what is the time limit for deposit of proxy? 48 hours. Suppose AOA told 72 hours. AOA told 72 hours. Now you tell me 72 hours or 48 hours? 48 hours only. AOA cannot impose additional requirements. And you student, you CS student, proxy benefit. Do you expect all the members of company know this benefit? No. So that's why members should be given an intimation via notice. So every notice calling for the meeting shall disclose that, shall state that member is having right to appoint proxy if he is entitled to attend and vote at the meeting. Non-disclosure of this point, 5,000 penalty. Non-disclosure of this point, 5,000 penalty. Tell me who can be proxy, whether member or non-member. But Section 8 companies, only member can be appointed as proxy. Let me ask you one question. I forgot in quorum concept. Quorum. Suppose C Limited, one company is there In C Limited, A Limited is a member, B Limited is a member, and also D Limited is a member. C Limited register of members, it is showing 990 members. Out of 990, 3 body corporates are there, and remaining 987 are individuals. To the meeting, 2 people attended the meeting 2 members attended the meeting. Mr. P, Mr. Q. Sorry, three members attended the meeting. P, Q, R. P is actually not a member P is a non-member. However, he is a representative of A Limited, B Limited, and D Limited. Q is equity shareholder. R is also equity shareholder. Now you tell me whether quorum present or not present. You understood the question first. 3 members attended the meeting. P is a non-member actually. Q equity shareholder, R equity shareholder. P represents A Limited, B Limited, D Limited. Now how many members attended the meeting is the question. Quorum, I told you, quorum is members personally present. Quorum is members personally present. Now the question is, how many members attended the meeting? Members personally present means it excludes a proxy. But I told you, representatives will be added. Representative of body corporate, president, governor will be added. Now the question, how many members attended the meeting? And the answer is 1, 1, 2, P count will be 3. Because P represents A, B, D, so the count will be 3. So 1 plus 1 plus 3, so total 5. Getting my point? Everyone? This question also there in our question bank. This was tested 2 times so far. So after completion of marathon, immediately if you open question bank and if you go through the question bank, you'll get a lot of clarity. So just do it. At least for the remaining chapters also you do it. We are in the 7th chapter. Dividends already over. That means 8 chapters we are completing by today. We are left with 7 chapters more. So half of the syllabus almost over. At least do it from today onwards. Any doubts I'll answer in the next, I'll resolve in the next session. Okay, fine Come back to proxy. Proxy form should be deposited 48 hours before the meeting, even if AOA requires longer notice period. I told you right, even if AOA contains 72 hours, if you deposit proxy form 48 hours before meeting, your proxy form will be valid. Inspection time period is 24 hours before the meeting and until meeting concludes. So when meeting is getting concluded, till that time proxy forms can be inspected only during business hours. And for that, prior intimation should be given. How many days prior intimation? 3 days before meeting, you have to convey your intention. And this is a tricky point. See, appointment of proxy is a benefit that member is having. It's an absolute benefit. It's not restricted benefit, absolute benefit. Now selection of proxy is up to the member. Company cannot impose a restriction like this list is having some 50 persons who are willing to act as a proxy. You have to choose only one person among these 50. Like this, if company is sending any invitations, if company is sending any invitations, then the officer in default will get punishment of 50,000. Getting my point? It's an absolute freedom. But we had an exception. That exception is, suppose sir, I'm new to this locality. I'm not having friends, I'm not having neighbors. If I request company in writing, sir, I don't know these people, you give me the list, I will choose one person who will act as proxy on behalf of, who will act as proxy for me. Now company giving that list to the requested member, officers will not get any punishment of 50,000. In the entire proxy section ma, two punishments are there. Non-disclosure in the notice, 5,000 rupees is the punishment, and circulation of list of proxies without members request, 50,000 is the penalty. 5,000 to 50,000. And what are the time limits? 3 days, 48 hours, 24 hours. And what is the limit on the proxy? 50 members or 10% of the paid up share capital. Over. Proxy over. Next one, 106, restrictions on voting. Restrictions on voting rights. Only in two cases company can impose restrictions on voting rights. Sir, what are the two cases? Call amount is pending, or member is having some juice to the company, that's why company exercise lien right. Remember carefully, some amount is due and company exercise lien right over the shares held by the member. And in these two cases, company can exercise, company can place restrictions on voting rights. The two, AOA specific permission is required. Suppose if AOA is silent, I'm holding shares with calls in arrears, will I get voting rights? Yes, absolutely, I'll get voting rights. Getting my point? Restrictions can be placed via AOA, and restrictions can be placed only in two cases. One case, some amounts are due, and second case, company exercise lien right over the member shares. Everyone, this point already covered in section 47. A member who is restricted from voting cannot sign a requisition for an EGM. Correct ma? If you remember section 100, I told 1/10 of the paid up share capital. 1/10 of the paid up share capital alone I told, or did I add in some point? See, 1/10 of the paid up share capital entitled to vote. Suppose I am holding shares with calls in arrears. Via articles of association, company exercise restrictions on my voting rights. Now if I sign this requisition, whether requisition valida, invalida? Invalid. Getting my point? Here I clearly told entitled to vote. Entitled to vote means you should not be under restrictions. Next one ma. If shares are forfeited or re-allotted, new allottee cannot vote until all pending calls are paid. Correct. Voting by joint shareholders. If shares are held by A, B, C jointly, who will exercise voting power? Then you have to check the order. Suppose order is A, B, C. A can exercise voting power. Sir, to that meeting A didn't attend the meeting, both B, C attended the meeting, sir. No, B can exercise the voting. B can exercise the voting. Voting order is based on the order of names in the register of the shareholders, with seniority determining the voting rights. If all ABC attends the meeting, A will exercise voting power. Suppose director is also a shareholder, sir. Director is also a shareholder. As a director, you fixed the agenda of the meeting. Now as a shareholder, you should exercise voting power independently. You should not think like this. I made a proposal. If I am making a proposal, how can I cast vote against to it? So such kind of influenced decision you should not take. You have to take independent decision. Next one, preference shareholders, 47 already done. Modes of voting, we are having four modes of voting. Show of hands, electronic voting, postal ballot, poll, postal ballot. So tell me, in case of Nidhi company, all members will have normal voting powers, or is there any restriction? Yesterday only I told you. What is the restriction in case of Nidhi company members voting power? Maximum how much they can exercise voting power? Maximum 5%. You remembered, right? That is important point ma. So far not tested, but in case scenario MCQ booklet, if you see that point, on that point MCQ is there. I took almost 20 minutes to understand that answer. A particular member is holding 7% of the capital of the company, but in option correct answer they told only 5% he can exercise. I thought answer is wrong, but why it will be wrong? Like that, 20 minutes I took, and later I realized, okay, Nidhi company voting power is restricted to 5 only. So, already I discussed all the case scenarios last year. completed some 7 to 8 times. I already taught some 50 plus batches in one academy, and in online recording also completely I taught for almost 8 times. Case scenario booklet already I taught. Question bank I taught. So any topic, before I start, for me first comes in my mind is relevant recent practical questions and case scenario questions only. So after reading this text, after reading these matters, if you feel that, sir, I'm not confident whether my preparation is up to the mark or not, I'm not confident, sir. In that case, open case scenario booklet, read scenario, read questions. If you are able to answer, if you are able to pick up correct answers, your preparation is up to the mark. No need of demotivation. Getting my point? If you had a doubt that whether your preparation is up to the mark or not, go through question bank and go through the case scenario booklet. Fine. Next one, 107. Show of hands. You have to remember this one point. Yeah, chairman's declaration in the minutes book is conclusive evidence whether the resolution is passed or not. Under show of hands, because according to the experienced lawmaker, big boss is not in his scope. If big boss is in his scope, when meeting is conducted like this, some 4 to 5 CCTV CC cameras would be installed. Chairman announcing a proposal, members raising the hand, CCTV capturing it. It would be possible. But right now, minutes, manual, book minutes is there, video minutes is also there. As per act, as per outdated lawmaker, minutes means document only. Okay. Show of hands. What is the conclusive evidence whether resolution is passed or not? Chairman's declaration. Can insolvent shareholder vote at the meeting? Yes. Until his name is removed from the register. Until his name is removed from the register, he can be he is allowed to attend the meeting. He is allowed to exercise voting power. But coming to the dividends will be paid to the trustee, not to him. And this point I already covered in dividends exceptions, operation of law. Can I proceed? 107 over 108 e-voting. Poll e-voting. Show of hands. Show of hands poll. First show of hands poll. What is the difference, sir? Show of hands. After announcement of the proposal, chairman will ask, show me your hands who are in favor. Show me your hands who are against. But coming to the poll, ballot paper will be given to each and every member of each and every person. Simply, both proxy as well as members. Ballot papers will be given and chairman will give some time. You need to express your opinion, whether vote in favor or vote against. You need to fill up and you need to you need to put it in the ballot box. Later, scrutinizer will come, unbox it, and he will go through the votes. He will maintain a record. Votes in favor, how many? Votes against, how many? He will give a result card. He will give a result to the chairman, and chairman will announce whether resolution is passed or not. In case of show of hands, each member one vote only. In case of poll, every member will get votes depending on number of shares he is holding. Clear? Poll is a manual mode of voting. If the same thing is happening online, we call it as e-voting. Poll, e-voting, both are same only with respect to voting powers. But the difference is one is manual, other one is online. And e-voting is of two types. Remote e-voting, normal e-voting. Normal e-voting is an e-voting which will be exercised at the meeting. At meeting, chairman will give time, half an hour I am giving, exercise all your voting powers. Remote e-voting is a e-voting which will be conducted before general meeting. Before general meeting, remote e-voting will be conducted. That means it's not connected to the general meeting. On the date of general meeting, at the meeting, if you are exercising voting through electronic means, it is a normal e-voting. Before general meeting, if you are exercise voting, remote name itself is clear. You will exercise voting power from remote areas, from remote locations, from your residence only, from your office address only. Very simple ma. Big Boss season is going on, right? In case of Big Boss, to choose your favorite contestant, will you go to Big Boss and will you cast vote, or from your home only you will exercise voting power? That is remote e-voting. That is remote e-voting. And e-voting is mandatory to two companies. E-voting is mandatory to two companies. First one, listed company. Second one, companies with 1,000 members or more. Remember, this is important point ma. Which companies are required to provide e-voting? Every company which has listed its equity shares on recognized stock exchange, because all the members, do you find them at one location or throughout the country? Throughout the country. Getting my point? All members are scattered. So remote e-voting, sorry, e-voting is mandatory for listed companies, and e-voting is mandatory for the company with 1,000 or more members. September 25 attempt, I think. Section 8 company is having 1,200 members. Whether e-voting applicable or not applicable, they asked. If you see every company, there is no exception here. So section 8 company also 1,200 members means e-voting applicable or not applicable? Applicable. That is what exceptional question means. Next one, we had two exceptions. These two exceptions also you need to remember. Nidhi company. I told you Nidhi companies are popular where? Rural areas. In rural areas, do you think internet technology will be there? And do you think village residents will have rich knowledge about internet? Opening a website, user ID, password, selecting the business matters, submitting. So that's why Nidhi companies are exempted. Why? In Nidhi company you may find more than 1,000 members. But remember, greater than or equal to 1,000. That means if a company is having 999 members, if it is unlisted company, e-voting is not applicable. Okay, na? Nidhi company may have 1,000 members, but still Nidhi company is exempted from e-voting. And next one is SME trading platforms. Enterprises or institutional investors as per SEBI issue of capital and disclosure requirements regulations. So companies which have listed their shares on small medium enterprises trading platforms, even though they are listed, they are also exempted. So two companies applicable, two companies exempted. Tell me ma, if a private company having register of, having 199 members, e-voting applicable or not applicable? Not applicable. Private company having 1,000 members means, private company maximum number of members is 200. Sir, maybe employees 900 are there, sir. Then e-voting is applicable. Then e-voting is applicable. Next one ma, cutoff date. Sir, what is the importance of cutoff date? See ma, company shares are transferable or not transferable? Transferable. When members are keep on transferring, when a person is keep on transferring the shares, when shares are keep on getting transferred, who is the member entitled to vote at the meeting is a point. For that, lawmaker told cutoff date. Say for example, meeting is on day 7. Day 0 is the cutoff date. That means as per register of members or as per register of beneficial owners maintained by depository, whose name appears in the register of members or register of beneficial owners, those members are entitled to vote under e-voting at the general meeting. Cutoff date means identifying the persons who can exercise voting power. E-voting system, display electronic ballots, all these are rules only. E-voting rules, if you remember, same points you can write for postal ballot and poll also, same points, but you need to change time limits. Okay, record votes, count the numbers, store voting results in centralized server with cyber security. Cyber protects information and systems from unauthorized access, disruption and destruction. This is very simple during IPL season also, before match begins or during the match, they will raise some questions and they will ask you to express your opinion. After 1 hour or 2 hours, poll will be displayed. Same point this also. Remote e-voting allows members to vote electronically from general meeting place anywhere outside the meeting venue. And voting by electronic means includes both remote e-voting, e-voting at the meeting. Procedure. First, this year we are conducting voting under e-voting system. You have to communicate with the members. Such communication is possible only through the notice. That notice can be manual or electronic mode. and display the notice on company's website as well as agency website, for example NSDL website or CDSL website. And the contents of the notice, this time facility of electronic voting is allowed, and availability of voting by ballot or polling at the meeting is also available. Members who voted by remote voting cannot vote again at the meeting. You have to display this. The notices must specify procedure, how to log in and how to retrieve the passwords. Everything should be disclosed. E-voting time, particularly remote e-voting time. Remember, remote e-voting shall be opened at least how many days? 3 days. And it will be closed at 5 p.m. exactly day before meeting. Suppose 26th September 2026 is the date of general meeting. Now till 25th September 5 p.m. evening 5 p.m. remote e-voting should be on. How many days? 3 days. So 24th September, 23rd September, 23, 24, 25 evening 5 p.m. 3 days covered. Option for remote e-voting. Members holding shares as on cutoff date can opt for remote e-voting. Votes cannot be changed after being cast. Members can attend the meeting but cannot vote again if voted remotely. One time only voting power will be given. Now the question, I already discussed with you. Based on this point only question came. Can this member appoint proxy for the meeting? Answer is no. Why? Already voted at meeting, no voting power. After e-voting period ends, voting facility will be blocked. Like your May attempt, if you see exam application, once deadline is over, if you try to access that website, if you try to access that exam application, URL not found, or it is blocked, or it is closed, that message will appear here also like that only. Publication of the notice. You have seen the contents of the notice, right? Now how this notice should be, how this notice should be given to the members. It's like a mode. Advertisement at least 21 days before general meeting. One in newspaper, one in vernacular newspaper, other one is in English newspaper. Advertisement must include statement that business will be transacted through electronic voting. Start date, start time. End date, end time. Cutoff date. Eligibility. What is the eligibility criteria? 7 days before meeting, if your name is present in the register, you will exercise voting. You are having voting powers. Instruction for shareholders who acquired shares after notice dispatch to obtain login credentials. And statement that remote e-voting won't be allowed after the deadline. All these are procedural norms, just to give one time reading, nothing to explain much, just give one time reading. Next, scrutinizer. He's like EC, election commission, independent person, that means employee of the company, officer of the company, outsider. So maybe a CA, CMA, CS in practice, or an advocate, or any other reputed person who is not an employee of the company, it will be considered by the board. The scrutinizer may seek assistance from the non-employee expert familiar with the EVS, electronic voting system. Suppose 6 years advocate came, 6 years advocate was appointed as scrutinizer. He know nothing about technology. Now in that case, he can take assistance from IT person. So that IT person, employee of the company, non-employee, non-employee. So chairman allows voting at the meeting for the members who haven't voted remotely with the help of the scrutinizer. Now counting. So first he will count remote e-voting, and next he will count votes cast at the meeting, and unblock remote e-voting. In the presence of 2 independent witnesses, he will count everything, and within 3 days after completion of voting, he will prepare a consolidated scrutinizer's report which will be handed over to chairman. Chairman will declare the results, and the way members voted shall remain confidential, will not be accessible to the chairman until votes officially cast at the meeting. Getting my point? See, remote e-voting will be completed before meeting. Remote e-voting will be completed before meeting. Now in this case, scrutinizer should not disclose anything. Remote e-voting already votes in favor greater than votes against. This kind of confidential information should not be given to the company directors, company chairman. So confidentiality to be maintained. Access to the voting details. Scrutinizer can access the details about the members who voted remotely to ensure they will not vote again at the meeting. Maintenance of the register. Publish results on the websites and declare whether resolution is passed or not. This point, chairman may declare, for example, meeting was conducted on 26th September, but results were announced on 30th September. Now, what is the effective date for passing the resolution? When resolution was passed, is it 30th September or 26th September is the question mark. Getting my point? Meeting was conducted on 26th September. Results were declared on 30th September. So now resolution is set to be passed with effect from 26th September, 30th September. Answer is 26th September. See the point. Resolution is deemed passed when the required votes were received at the general meeting, not subsequently. And a resolution for e-voting cannot be withdrawn once proposed. So procedure, just give one time reading. Next one, poll. Next one, poll. If you see show of hands, unless voting is demanded by poll, unless electronic means applicable, voting shall be conducted through show of hands. What is the meaning of this point? E-voting already completed, ma. In case of e-voting, two types of voting is there, remote, normal. Under remote e-voting, member will exercise voting power based on the number of shares he is holding in the company. Now at the meeting, if I ask show of hands, say for example, I am holding 10 Reliance Industry shares, I am having 10 votes under remote e-voting. At the meeting, if chairman call for show of hands, Mr. Mukesh Dhirubhai Ambani having some 5,000 crore shares, for example, 500 crore shares of the company, he will get how many votes under show of hands? 1 vote. Logically correct or incorrect? Incorrect. So that's why if electronic means is applicable or if poll is demanded, then show of hands is not applicable. Show of hands is applicable only if electronic means not applicable and poll is not demanded. Clear? Sir, why? Logic is simple. Show of hands, very easy to conduct. Time saving only. Cost saving only. Because you can see in e-voting regarding maintenance of the website, scrutinizers remuneration. Again, 3 days time period is there for preparation of the report. Time taking thing, costly thing. So first option is easy way. Second option is costly thing. In entire e-voting, remember that point, applicability of e-voting. 2 companies. Which 2 companies listed? And next one, 1,000 or more members. Not applicable to Nidhi companies, SME institutional trading platforms. Next one, 21 days, that is common for advertisement of the notice. 7 days cut-off date. 3 days is the period of opening remote e-voting till 5 p.m. before day of meeting. And once meeting is done, within next 3 days, scrutinizer should prepare a report, should hand over the report to the chairman. Chairman will declare the results. Clear? Next one, poll. In the entire concept of poll, first 3 points are very, 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 very important. Entire concept is in 3 points only. For example, I am having 60% of voting power. You are having a 40% only. But you are, say for example, 5 in number, I am 1 in number. A proposal came, I am against to the proposal. So votes against, 1 vote. Votes in favor, 5 votes. So under show of hands, resolution passed or not passed? Passed. But my ego, affected or not affected? Yes, definitely. What will I do? I'll demand for poll. Why? Because under poll, the voting power is proportionate to the holdings. My holding to the paid up share capital is my voting power. So once I demand poll. Sir, when can I demand poll? On or before declaration of results under show of hands. Show of hands voting is done. Chairman declared the result. Immediately I will order for poll. Now resolution passed under show of hands will be nullified, will be void. So for demanding poll, how much I should possess? The answer is 1/10. 1/10 of the voting power. If I possess 1/10 of the voting power, or if I am having paid up share capital of 5 lakhs, any one condition satisfied, the demand for poll will be valid. Sir, who can demand poll? Member as well as proxy. Anyone can demand poll, ma. Anyone can demand poll. Member or proxy can demand for poll, but the only condition they should satisfy is if it is a company with share capital, they should possess 1/10 of the voting power or 5 lakhs paid up share capital. If it is a company without share capital, 1/10 of the voting power. Once demand is made, The next step, chairman has to conduct poll for that resolution. And what is the time limit? What is the time limit for conducting demand for what is the time limit for conducting poll is the third point. The poll must be conducted immediately for adjournment of the meeting, appointment of the chairman, not later than 48 hours for other questions. Listen carefully, ma. See, there are some 10 matters. There are some 10 matters to be discussed at the meeting. Chairman was appointed under show of hands, and he was not independent, he was influenced by one group of people. Immediately I demanded poll. Now can chairman tell like this, Mr. V, just wait, 10 proposals are there, right? After completion of 10 proposals, demand for poll will be accepted. Getting my point? 10 proposals are there. After completion of 10 proposals, poll will be conducted for election of the chairperson. What is the use of conducting poll already when 10 proposals discussion over? Getting my point? Next one, regarding adjournment of the meeting. Some information the directors are not telling. Immediately we demanded adjourn the meeting, and we demanded poll for adjournment of the meeting. Now immediately chairman is telling, just wait, another 8 matters are there, no? After completion of 8 matters, I'll accept your proposal. After completion of 8 proposals, what is the matter of adjournment? Already meeting will be over. So that's why appointment of chairman, adjournment of the meeting, no delay, keep all the proposals aside, conduct poll. Whereas other proposals, say for example, appointment of the auditor. One group is demanding poll. That group is having 1/10 of the paid up share, 1/10 of the voting power. 1/10 of the voting power they are having. So now what a chairperson can do, okay, this fourth matter, appointment of the auditor, I'll keep it aside. Remaining matters I will transact now. And this matter, poll will be conducted next day. Acceptable or not acceptable? Acceptable, because for this matter, poll can be conducted within 48 hours. Getting my point? Time limit for conduct of poll, immediately 48 hours. Immediately for 2 proposals, appointment of chairperson, adjournment of the meeting. 48 hours for all other proposals. And the group which demanded poll can withdraw the demand at any time, even when poll started also. Sir, poll already started, no sir? No problem. They are withdrawing the demand, no? Stop the poll, continue. But chairman ego will hurt. That's why chairman will continue on suo moto. So poll can be conducted based on 2 things, either on suo moto by the chairman, or when there is a demand from the specified persons. Specified persons means proxy plus members. What eligibility criteria they should satisfy? Company with share capital 1/10 of the voting power. I told paid up share capital, but okay, meaning is same only. 1/10 of the total voting power, or paid up share capital 5 lakhs. If it is a company without share capital, 1/10 of the total voting power. What is the time limit for demand of poll? On or before declaration of the results under show of hands. And what is the time limit for conduct of the poll? 48 hours for all proposals, immediately for adjournment of the meeting, appointment of the chairperson. And rest of the procedures, ma, appointment of the scrutinizer. Remember, ma, postal ballot, e-voting, poll. Out of these 3, these 2 are planned things, right? These 2 are planned. Postal ballot, yes, we are conducting voting under postal ballot. E-voting, we are conducting voting under e-voting. These are planned. So scrutinizer is appointed by board of directors. But demand for poll, is it expected thing? Is it planned thing? Unplanned thing? Suddenly group of members are demanding for poll. Now chairman asking directors, come on, you form a group, you conduct a meeting, pass a resolution to appoint scrutinizer. Practically not possible. That's why under poll only, scrutinizer is appointed by chairman. You can see here, chairman appoints scrutinizer. And the procedure, scrutinizer duties, powers of the chairman, procedure for conducting of the poll, everything. Just to give one time reading. This one point you remember, within 7 days from the date of poll, he should submit report in MGT 13 to the chairman. Chairman will declare the results. There it is 3 days e-voting. Here it is 7 days. Can I proceed? Within 3 days, prepare consolidated scrutinizer report. Here it is 7 days. Can I proceed? Next one, postal ballot. In postal ballot, you have to remember 3 points. 3 points. First one, postal ballot is mandatory for 10 items. Out of 10 items, 7 items you studied at CA interlevel itself. 7 items you studied at CA interlevel itself. Sir, what are those 7 items, sir? See, alteration of object clause of memorandum, alteration of AOA, including conversion of company, inclusion or removal of provisions of private company, that means conversion of the company, alteration of situation clause, alteration of objects specified in the prospectus. First 3 are from incorporation chapter, and next one, this is from prospectus, and next 2 is from share capital. Sorry, next 3 is from share capital. Next 3, differential voting rights, you remember, right? Listed company, ordinary resolution shall be passed through postal ballot, section 43, I told you. Next one, variation of rights, also I told you. If meeting is possible, special resolution. But if postal ballot is applicable, 3/4 value, consent of 3/4 value. Buyback of shares also, special resolution. And remaining 3, small shareholder director, sale of undertakings, like, amalgamation, for example. Sale of whole or substantial undertaking. It's not amalgamation, but selling of branches, selling of some divisions. Providing loans, guarantees or securities exceeding prescribed limits, section 186. Out of 10 matters, 7 matters are at C enter level. Only 3 matters you have to remember. Small shareholder director, selling of units, and investments, exceeding the prescribed limits. Guarantees, investments, loans exceeding the prescribed limits. These 10 matters, postal ballot is mandatory. But this postal ballot is not applicable in case of companies having members up to 200. That's what. If postal ballot is not applicable, in case of variation of rights, you can call for a meeting, special resolution is enough. Remember this limit, up to 200 members. E-voting is not applicable in case of up to 999 members. Up to 999 members, e-voting is not applicable. 1000 members only, e-voting is applicable. Postal ballot, up to 200 not applicable. 201 onwards applicable. Everyone? And very, very, very important point, this one only, this one. And in this also, this is another important point. First, observe this must and may. Must refers to compulsory. Must, compulsory, right? Every company must transact specific business items declared by CG via postal ballot only. Which items? Just now I discussed 10 items. May transact other business items if at all needed, postal ballot. But ordinary business items, just now I told you, ADDA, adoption of financial statements, director's appointment in the place of retiring one, declaration of dividends, auditor's appointment and fixation of remuneration. These 4 matters plus director, auditor having right to be heard. Easy to remember. Removal of the director, removal of the auditor. In these cases, they are having a right to be heard. So these 6 matters, ordinary business items, auditor having right to be heard, director having right to be heard. These 6 matters, postal ballot is prohibited. Remember, postal ballot is prohibited for ordinary business items. For auditor right to be heard, director having right to be heard. These 6 matters, postal ballot is compulsorily prohibited. And 10 matters, postal ballot is compulsory. Of course, for these 10 items, there is also a substitute. Instead of postal ballot, you can conduct remote e-voting. Normally, remote e-voting, what is the minimum tenure? 3 days. But postal ballot, it is open for 30 days. Postal ballot type of voting is open for how many days? 30 days. So remote e-voting for postal ballot will also be opened for 30 days. Getting my point? And appointment of the scrutinizer, advertisement, everything is common only. Everything is common only. Just remember the time limits. Everyone? So with this, 110 also over. Next, 111 to 122, small topics only. Very quickly I'll discuss with you. 111. 111 circulation of members resolution. Circulation of members resolution. At AGM, what to be discussed? The matters stated in the notice. What not to be discussed? The matters which are not stated in the notice. Getting my point? Suppose 8 matters were specified in the notice. Now only these 8 matters can be discussed in the meeting. Other than these 8, no other matter can be discussed. Suppose you reading this notice, you thought that this 9th matter is very important. This has to be discussed, and for this also resolution should be passed. In that case, you must send a notice to the company at least 6 weeks before general meeting. At least 6 weeks before general meeting, if you send notice, then it is the duty of the company to add that point or to circulate that point among the members. That's what circulation of members resolution and statements. So what is the time limit? Let's repeat. What is the time limit? 6 weeks before meeting. Sir, it's not about 9th matter, sir. Out of these 8 matters, additional clarification for one matter. Suppose 2nd matter, I want to add one point, sir. Just a point. I want to make a statement. In that case, I need to send it at least 2 weeks before meeting. 2 time limits you have to remember. 6 weeks to 2 weeks. 6 weeks is applicable if you are seeking resolution at the meeting. No resolutions are just a statement to discuss. Resolution is not required. Then at least 2 weeks before meeting, you have to send it to the company. And because of your notice, again company should send it in. Company should circulate among the members. Is it an expenditure to the company or not? Yes. So that's why company will expect a reimbursement from you. You have to deposit sufficient amount. Even if you tender that amount, even if you are ready to pay that amount, if you are giving check to me, no problem. So that, misuse of this provision can be eliminated. Getting my point? Remember, 2 time limits, 6 weeks if you want resolution at the meeting. 2 weeks if you just want to discuss the matter. So that's what resolution requires 6 weeks notice. Statements require 2 weeks notice. And remember eligibility. What is the eligibility criteria, sir? Eligibility, if you remember section 100 requisition, same 1/10 of the paid up share capital, 1/10 of the total voting power. Company with share capital, 1/10 of the paid up share capital. Company without share capital, 1/10 of the total voting power. A sum reasonably sufficient to meet company expenses in giving effect to proposing the resolution is deposited or tendered. When the money is tendered, no payment is made, but an unconditional offer is made to pay the money is enough. Next, read this note point. The time period mentioned above does not apply if an AGM is scheduled within 6 weeks after the copy is deposited. Suppose my plan is to remove the director of the company. What is my plan? Remove the director of the company. So that is the 9th matter. So far company didn't give any notice calling for general meeting. As on 1st August 2026, I am sending a notice to the company. Sir, include this matter for which resolution is required. So I am sending a notice to the company. To avoid this notice, what company did Company fixed a AGM date as 28th August 2026. And if you observe, my notice was given on 1st August and AGM was on 28th August. You tell me the time gap between these 2 dates. Is it 6 weeks or honestly 4 weeks? So after giving intimation, if company is sending notice calling for general meeting, their 6 weeks time period is not required. Verifying 6 weeks time period is not required. Getting my point? Preventive measure, simply. Preventive measure. Observe carefully. Time period mentioned above does not apply if an AGM is scheduled within 6 weeks intentionally. If the necessary prerequisites are not met, company is not obligated to circulate the resolution. Sir, what is that necessary prerequisite? Suppose I am having just 5% of the paid up share capital To send this letter, I should possess how much? 10%. Prerequisite satisfied or not satisfied? That's it. Next, exceptions from circulating the statement. Suppose the statement I gave to the company to circulate among the members contain prejudicial matters. It affects the reputation of the person. It contains some negative statements and baseless allegations. For time pass, I'm doing it. For example, in that case, company can approach CG. Of course, power transfer to RD. So if RD is believed that okay, Mr. V misused this power, this statement should not be circulated, then company can stop circulation. Or else company is bound to circulate it. Company is bound to circulate among the members, or else company will get penalty of 25,000. Company as well as every officer. Company as well as every officer will get 25,000 rupees penalty. Getting my point? And even the order may also require that requisition is to reimburse company costs even if they are not part of the application. The meaning of this point is, who went to the RD? Tell me, to stop circulation, who went to the RD? Company people went to the RD. Whether Mr. V went to the RD? No. But RD is having power to pass an order ordering me, simply to pass an order compelling me to pay all these legal expenses incurred by the company. For going to RD, definitely legal expenses will be there, right? Who incurred this expenditure? Company. Even though I'm not a party to that application, but still I'm liable to pay that amount if RD orders me. That is the point. Okay, na? In 111, tell me how many limits are there? 4 limits, ma. Eligibility criteria: 1/10 of the paid up share capital, 1/10 of the voting power. And what is the time limit for deposit of these statements and resolution copies? Resolution copies 6 weeks, statement copies 2 weeks. Sir, after sending resolution copy, if they call for general meeting, no need to check 6 weeks point. Okay, na? If company believed that this is a baseless allegation, then company can forward it to central government. Central government may nullify that statement. Can I? 114, very simple, ma. Section 114. Ordinary resolution means, just give reading first 2 points. Ordinary resolution means simple majority, votes in favor greater than votes against. And notice should be given properly. Proper notice should be given. Notice under section 101 should be given. Special resolution means votes in favor at least 3 times of the votes against. And this is important point. This is important point. Now for a particular proposal, say for example buyback, what type of resolution I need? Special resolution. I gave a notice calling for meeting, but I didn't mention the type of resolution. If I didn't mention the type of resolution, particularly special resolution, then that notice is invalid. Even you get unanimous resolution also, that resolution is invalid only. If company's intention is to take special resolution, if company's intention is to get special resolution, it should disclose its intention of getting special resolution in the notice. Express disclosure is required, or else special resolution is invalid. Can I proceed? Next, 115. 115, resolutions requiring special notice. Resolutions requiring special notice. Just remember, director, auditor. Director removal, auditor removal. Appointment of another person in the place of retiring director. Appointment of another auditor in the place of retiring auditor. Getting my point? 4 points, ma. Appointment of auditor other than retiring. Appointment of new director in the place of removed director, or removal of the director, or retiring auditor shall not be reappointed. That means these 4 matters are talking about only 2 people, director, auditor. Retiring auditor not to be reappointed, or another person to be appointed as an auditor in the place of removed auditor, or retiring director should not be reappointed, or appoint another person as a director in the place of retiring director. If it is your intention, if you want to communicate with all other members, if you want to communicate this, you give special notice to the company. See, ma, generally, who will give notice to whom, ma? Who will give notice to whom? Company give notice to the members, right? Company give notice under section 101 to the members. No sir, I don't want this director, I don't want this auditor. Then members having 1% of the voting power or 5 lakhs paid up share capital. 1% of the voting power or 5 lakhs paid up share capital, they can give intimation to the company. I call it as special notice. And what is the time limit for special notice? At least 14 clear days before meeting. First of all, you tell me, notice, what is the time period? At least 21 clear days. And what is the time limit for special notice? 14 clear days before meeting. Once company receive this special notice, company should give to all other members at least 7 clear days before meeting. This can be happen either individually or you can advertise it in 2 newspapers. So in section 115, you have to remember eligibility criteria. What is eligibility criteria? 1% of the voting power or 5 lakhs paid up share capital. And what is the time limit for deposit of special notice? At least 14 clear days before the meeting by the members, at least 7 clear days before the meeting by the company to the other members. Clear? That's it ma. Limits 1%, 5 lakhs. I told at least 14 days, right? But there is also maximum limit, not earlier than 3 months. So if you are writing it, here itself you write maximum 3 months before the meeting. That's it. But easy to remember, 21 for normal notice, 14 for special notice, 7 for dispatch of special notice among the dispatch of special notice to all other members. Multiples of 7, right? Can I proceed? If examiner want to give tricky question, he will ask this question. You read it this point, I'll ask you one example. Just read it one time. So here 3 meetings he is telling ma. Adjourn meeting of the company, that means maybe general meeting. General meeting. Holders of any class, that means class meeting. Board of directors, that means board meeting. So he is telling adjourn general meeting, adjourn class meeting, adjourn board meeting. If resolution is passed on adjourn meeting, it will be, the resolution is said to be passed on the actual date of adjourn meeting, but not earlier date. But not earlier date. See ma, AGM was scheduled on 28th September 26 ma. Total 10 matters to be discussed. 9 matters already discussed. Lack of time, meeting was adjourned to 30th September 26 and that one matter resolution was passed on 30th September. Now the question is, this particular matter resolution is effective from which date? This resolution is effective from original meeting 28th September or adjourn meeting where actually it was passed 30th September. Answer is 30th September. For these 9 matters, original meeting date. For this one matter, adjourn date. That is the meaning. It is said to be passed on the adjourned meeting actual date but not earlier date. Can I proceed? Next one, resolutions and agreements to be filed with the ROC. In this entire text, for what purposes we need to file the form, you can see here up to F points, 6 points are there. Special resolutions, class resolutions, and agreements with the managing director. Next one, winding up resolution. Resolution passed under section 179 subsection 3. That means, board powers, board of directors exercising the powers. Some 6 matters they specified, all this to be filed with ROC. That is not that much important. Important point is applicable form. Applicable form is MGT 14. What is applicable form? MGT 14. So simply company ROC. Company ROC. Whenever special resolution has been passed, whenever class resolution has been passed, whenever board of directors exercise powers under section 179, or resolution for voluntary winding up. And next one, agreement with managing director, whether it is a appointment, renewal, variation, whatever it might be. All these cases, company has to communicate with ROC in form number MGT 14. And what is the time limit? 30 days from the date of event. And what are the attachments? Copy of special resolution, and if at all agreement is there, attach agreement. Also explanatory statement. Copy of explanatory statement. File with ROC within how many days? 30 days. This is important. In case of delay, punishment. What is the punishment? Just look into the material. Punishment for company 10,000 with additional 100 per day. Simply, if punishments comes like this, write in equation like this, 2 lakhs. Office rent default 10,000 plus 100 per day up to 50,000. That's it. So 30 days MGT 14. You have to remember these 2 points. If resolution alters the articles, copy of altered article should also be filed. For banking companies, certain resolutions, that is section 179, there is an exemption. No need to file matters relating to section 179. Banking company, NBFC, housing finance company. If this point is getting tested, that is really worst paper only. Banking company, board of directors passed a resolution under section 179. However, banking company didn't file MGT 14 with ROC. Auditor raised an objection. Whether auditor objection is valid or invalid because exemption. Banking companies are not required to comply with section 179 MGT 14 filings. Getting my point? For specified IFSC companies, time limit is not 30 days, time limit is 60. Clear? So the next concept is minutes. Important topic in this management and administration chapter. So minutes is nothing but summary of the proceedings happened at the meeting. In the minutes, the important point is every company. So you tell me AGM is applicable to all companies, huh? No, except OPC. Other, for all companies AGM is applicable. OPC AGM is not applicable. Okay. So every company which is conducting meetings, whether it is a board meeting or general meeting, minutes is compulsory. So minutes is required for general meetings, board meetings, committee meetings, and postal ballot resolutions. What is the time limit for updation of the minutes? 30 days. Within 30 days of the meeting or resolution passed under postal ballot, minutes should be kept ready. It should be consecutively numbered pages. Serially numbered, like material you can see serial numbered like that. Next one, minutes of the board meetings and committee meetings must be signed at or before the next meeting. So this point, signing point, I'll discuss later. Just wait. Contents of the minutes. Minutes should contain fair and correct summary of the proceedings of the meeting. Suppose votes in favor 20, votes against 19. This should be recorded like this only. You can't change it, like votes in favor 19, votes against 20. No, this is not correct summary. It must include all the appointments made at the meeting. Who are the directors appointed at the meeting, who is the auditor appointed at the meeting. So everything to be noted in the minutes. For board meetings and committee meetings, you have to mention name of the directors present, name of the directors dissenting and not concurring with any resolution. See, MCQ point of view, this is important point, MCQ point of view. For general meeting minutes, name of the members attended the meeting, no need to add, no need to mention, because members, they are unlimited in number. But directors, maximum how many members? Directors, how many number? 15, maximum 15 directors. So name of the directors present at the meeting, write all the names. On a particular proposal, 7 directors casted votes in favor, 3 directors casted votes against, and 2 directors are silent. Now whose names we need to record in the minutes? The answer is 7 directors who casted votes in favor, no need to record their names. You need to record the name of the directors dissenting, that means against to the proposal, and not concurring, that means who are silent on the matters, who are not exercising voting power on this matters. So those director names shall also be added. So for board meetings and committee meetings, extra disclosures, ma. What is the extra disclosure? Name of the directors present and the name of the directors who are against to the proposal and who are not giving their consent to the proposal shall be recorded. Exclusion from the minutes. From the minutes, these three matters can be excluded. What are the three matters? Defamatory content, irrelevant or immaterial content, detrimental to the company's interests. But this is absolutely at the discretionary powers of the chairman. Chairman is having absolute discretion to decide whether to include or exclude these matters. Other than these three matters, any other matter, even chairman had no power to omit. Every matter should be recorded. Only detrimental, irrelevant, defamatory, these three matters can be deleted at the option of chairman. Next one, minutes will act as an evidence of the proceedings. Valid meetings and resolutions are presumed unless proven otherwise. So tomorrow, what is the evidence whether meeting was conducted or not, whether resolution is passed or not? Show the minutes. Already discussed under show of hands. In show of hands, you have seen declaration of result under show of hands by the chairperson in the minutes will constitute a valid evidence. Next one, appointment of the directors, auditors, KMP are deemed valid because of maintenance of the minutes. Prohibition, minutes should not be circulated at the expenditure of the company. That means without any without any written request from the member. Without any written request from the member, company should not give copy of minutes. Only when there is a written request from the members, company should give a copy of the minutes. Next one, secretarial standards for general meetings and board meetings are applicable. Penalty for non-compliance, 25,000 for company, 5,000 for the officer in default. Tampering, that means unauthorized changes to the minutes. Unauthorized changes to the minutes, imprisonment up to 2 years and fine between 25,000 and 1 lakh. Clear? This is all about section content, rules content, distinct minutes book. Distinct means separate minutes. For example, one book is there. Front side onwards accounts, back side onwards income tax, middle side, middle, one side indirect tax, one side law. Generally we keep book like that only, right? But minutes should not be like that. For general meeting, postal ballot resolutions 1 minute, board meetings 1 minute, committee meeting 1 separate minutes. Minutes should be updated within how many days of the meeting, 30 days. Postal ballot resolution, enter a brief report including resolution, proposed voting results, scrutinizer report. Each page should be signed or initialed and the last page should be dated and signed by the chairman. So here, important to remember the limits, minutes updation. See, minutes updation, signing of the minutes. Here we are having two types of minutes, board meeting minutes, committee meeting minutes, and general meeting minutes, postal ballot minutes. BMCM means board meeting, committee meetings. GM means general meeting, postal ballot. Everything should be updated within 30 days. There is no other alternative. Within 30 days, minutes should be updated. Coming to the signing, general meeting minutes, postal ballot minutes should be signed within 30 days of event, within 30 days of general meeting or within 30 days of postal ballot declaration of results. Postal ballot resolution, within 30 days of postal ballot resolution. Whereas signing of board meeting minutes, committee meeting minutes, time limit is not applicable. Time limit is not applicable. Getting my point? So here, let me tell one more time. Updation, both the cases 30 days only, but signing only for general meeting minutes, postal ballot resolution minutes 30 days. Whereas for board meeting minutes, class meeting minutes, time limit is not applicable. And sir, who will sign the minutes, sir? Who will sign the minutes? Who will sign the minutes? If it is general meeting minutes, it should be signed by chairman of the said meeting. Chairman of the said meeting. Yeah. Chairman of the said meeting. In case chairman is absent, chairman died, or chairman not available, then any director authorized by the board shall sign the minutes within 30 days of event, that is general meeting or postal ballot. But coming to the board meeting minutes, committee meeting minutes, it can be signed by chairman of the said meeting or chairman of the next meeting. Chairman of the meeting or chairman of the next board meeting or next committee meeting. So that's why there is no time limit for signing. Getting my point? Who can sign the minutes, ma? General meeting, postal ballot, time limit is there 30 days. That's why chairman has to sign. If there is no chairperson, director authorized by the board. Coming to the board meeting minutes, committee meeting minutes, there is no time limit for signing. So chairman of the said meeting, that meeting, or chairman of the next meeting can sign it. That is the only point you have to remember. Very, very tricky, important point. So minute books of general meeting. This is also important point, ma. Minutes book of general meeting shall be kept at registered office and will be preserved permanently. That means till the liquidation of the company. Whereas minute books of the board meetings or committee meetings, either they may be kept at registered office or another location decided by the board. Inspection is allowed only for inspection is allowed for general meeting minutes. Whereas board meeting minutes highly confidential, so inspection not allowed. That's why these minutes can be maintained either at registered office of the company or some other location as decided by the board. Understood? So this is confidential. That's why you can keep at registered office or any other location decided by the board. So section 8 company, section 118 does not apply to section 8 company, except minutes must be recorded within 30 days of the meeting conclusion, especially if AOA provide for confirmation by circulation. If AOA provides for circulation, circulate the minutes without any member's request. That's why 118 is not applicable. Of course, this privilege is applicable only once section 92 and 137 has been complied. Next one, ma, inspection of minutes. Who can inspect minutes and which minutes? Sir, board meeting minutes, committee meeting minutes, inspection not allowed, ma. Only general meeting, postal ballot resolution related minutes can be inspected during working days. That too during business hours. Remember, during business hours, and that too on business days only. On holidays, not allowed. And where minutes of the meeting will be kept, ma? Minutes of the general meeting will be kept at registered office. So inspection will be carried out at registered office. And who will have custody of the minutes? Company secretary. So company secretary having possession of the minutes, having custody of the minutes. Every minute one member is coming and asking for inspection, calling for inspection. Now secretary should present at the minutes. Secretary should allow the people to inspect the minutes. In that case, secretary becomes watchman. Yes or no? Actually, secretary is a KMP. He is having n number of works. So throughout the day, if someone is coming for inspection, means secretary time will be wasted. That's why law is telling that you can place reasonable restrictions, not like complete day. You can fix 2 hours per business day for inspection. Minimum 2 hours member should be allowed for carrying inspection. And if any member requests for a copy of minutes, then company shall provide it within 7 working days on payment of the prescribed fees. This is 17th section as usual. Mine section 17, I told you any member can request for the documents. Only written request alone is not sufficient. Not sufficient. Need to deposit sufficient fees. When 2 conditions are satisfied, company has to submit requested documents within 7 working days. Same point. Refusal of inspection, same punishment, 25,000 to the company, 5,000 to the officer in default. And member can request tribunal, sir, company is not allowing me to inspect the minutes. Tribunal will order for inspection. Next one, if you want hard copy, printing cost 10 per page. You have to pay. Sir, I want soft copy only, sir. Then it will be free of cost only, free of cost. Sir, internet charges will be there, no sir. Or unlimited data minus 1 GB is equal to unlimited only. Yes or no? But you have to remember this point. You will get soft copy minutes maximum how many financial years? Last 3 financial years. Remember 3 financial years, important point. 3 financial years soft copy minutes is available at free of cost. Okay na? And section 120 is like, maintenance of certain documents in electronic form. You all know who is our lawmaker? Outdated lawmaker. According to him, electronic mode is optional. But right now everything is in electronic form only. See, in electronic form, MD, CS, director officer designated by the board is responsible for maintenance of these electronic records and security of the electronic records. And to which companies electronic records are mandatory? Listed companies, companies with at least 1000 shareholders. If you remember, this is same for e-voting also. This is same for e-voting also. Okay na? So here standards for electronic records, formats, accurately recorded, readable, retrievable, printable. Sometimes what happen, our system, actually we will select English language only, but whenever something got corrupted, it comes, Japanese language. Some Korean language will also come in our system. So like that, the document should not be there. It should be readable, retrievable, printable. It should be digitally signed. It should not be edited. It should not be altered. And it should be updated as per the act with the date of updating the record. You all know, in a computer, if you edit a document, last update, you will find the date and time. Same thing should be there here also. And responsibility, these 3 people, MD, CS, any other director or officer designated by the board is responsible for maintenance and security. And that responsibilities include, protecting the records, prevent data loss, signatory cannot deny the validity of the signed records, secure and validated computer systems, ensure system detect invalid or altered records, records that are accurate, accessible, reproducible, readable, printable, non-rewritable, non-erasable format. One daily backup is compulsory. Restrict access, frequency is there, means you have to remember that points. Backup should be taken on daily basis. Next one, ensure that conversion of physical into electronic records is complete, authentic and legible. Organize and index records for easy access and retrieval, and take necessary security measures to ensure integrity and confidentiality of the record. You all know that Excel or Tally, if you remember the Tally, I can post the entry. I can also delete the entry. If that is the case, can I trust the electronic records? So that's what all these points indicates. Next one, section 121, very small section, report of AGM. Section 121, report of AGM. Report of AGM, remember, this section is not applicable to all companies. This section is applicable only to the listed public company. So I'm writing here, just observe, listed public company, listed company has to file MGT 15 with ROC. Sir, what is the time limit, sir? Within 30 days of AGM. Within 30 days of AGM, file MGT 15 with ROC. And this MGT 14 shall be signed by chairman of the meeting or 2 directors if chairman is unavailable, including MD and CS. Chairman of the meeting will sign this MGT 15. If chairman is not available, 2 directors, one should be MD and secretary. Sir, what are the contents of this MGT 15, sir? Very simple, day, date, hour, venue of the meeting, chairman appointment, number of members attended the meeting for checking quorum present or not, complaints with act, rules, secretarial standards, business transacted and results, adjournments, postponements, other relevant points. If not filed or delay in case of filing, then punishment, 1 lakh plus 500 per day up to 5 lakhs. Officer in default, 25,000 plus 500 per day up to 1 lakh. That's it. Clear, everyone? So simply in this entire section 121, you have to remember it is applicable only to the listed companies, applicable from MGT 15, time limit is 30 days of AGM. Okay, na? And all these points how to remember, sir? Are just write 4 prerequisites are there. No, properly convened, properly conducted, for properly constituted, quorum present or not, chairman appointed or not, adjournments are there or not, postponements are there or not, summary of the meeting, and date, time, play, venue of the meeting. You just write those points enough. Next one, 122, benefits to the OPC. If you discuss from the beginning, section 96, AGM applicable to OPC? No. What is 97? If company fails to conduct AGM under 96, 97 will come. If 96 is not applicable, then how 97 will apply? And EGM expressly told 98 not applicable to OPC. If 96, 97, 98 not applicable, then 99 also not applicable. Obviously 100 to 111 they told not applicable. Okay. What is 112? Representative of President Governor. In OPC, representative of President Governor, why they will be present? 113, representative of body corporate. How a body corporate become member of OPC? That means those two sections are also not applicable. Then 114, what is 114? Types of resolution. In OPC, member writing a matter, mailing to the company, that's it, resolution is said to be passed. If member is telling, yes, I accept financial statements, I'm accepting dividends, I'm accepting director appointment, I'm accepting auditor appointment, that's it. Mailing to the company, that's it, resolution is said to be passed. So 114 not applicable. 115, special notice, general meeting not applicable. Then why 115 will come? 116, resolution passed at adjourned meeting. Maybe for board meeting it is applicable. In case two directors are there, board meeting, adjourned board meeting will be there. 117, that is common, filing of documents with ROC, that is common. 118, minutes for AGM it is not there. For board meeting minutes will be there. And 119, 120 also common. 121, it is specifically applicable to listed company. That means for OPC 121 is not applicable. So simply relaxations and benefits, I told you, right? Any business requiring an ordinary or special resolution at a meeting may be transacted if the resolution is communicated by the member to the company, entered in the minutes book, signed and dated by the member. Enough. Date is deemed to be date of the meeting for all the purposes under the act. For one director OPC, board resolution shall be entered in the minutes book, signed and dated by the director, and date is deemed to be the date of board meeting. So okay, 118 we can apply to the OPC. That's it. Over. For OPC, non-compliance of any section, for OPC only, non-compliance of any section, punishment will be 5,000 plus 500 per day. If you remember, same punishment is there in deposits chapter also. Can I proceed? And section 20 already over. This is repeated, This is repeated, already over. Mode of service, members request, clear. Now we are left with second part of this chapter, that is 88 to 95. For that, I'll show my handwritten notes, For that, I'll show my handwritten notes because that is not that much important. So very quickly, I'll finish that 88 to 94. 88. Register of members. It is applicable to every company. It is applicable to every company. Company with share capital registers, two types of registers, MGT1 is for members, MGT2 is for debenture holders, other security holders. Form MGT1 is for members, MGT2 is for debenture holders. Company without share capital, the particulars of register will be name of the member, address, SIN, PAN, nationality, membership, start date, end date, guarantee amount, other instructions, that's it. So applicability, every company, register of members is applicable to every company. Index of names, remember this point, index is required in case company is having 50 members. 50 or more members, index is mandatory. That means when index is not mandatory, exactly 49, sir, index not applicable. Sir, 50, sir, index is applicable. That's what. Index is not required if members less than 50. It's not less than or equal to. Less than 50, index is not applicable. And depository maintaining robo. Robo means register of beneficial owners. Depository maintaining register of beneficial owners is deemed to be company register of members. Every day you take Vodafone Idea, 36 crore shares will be in the process of transfers. Listed company shares are in the process of transfers, right? Every day some millions of shares. Even you take Reliance Industry also, 1 million shares will be in the process of transfers. So it is not possible for a company to track all the changes. So who will record all these changes? NSDL CDSL. So register maintained by NSDL CDSL is deemed to be the register maintained by the company. And general requirements, ma, what is the time limit for updation of the register of members? It is 7 days. Within 7 days of board approval for the transactions like allotment, transfer, within 7 days register should be updated. Same point I discussed with you, register of deposits also, register of depositors also, same 7 days concept is there. Changes due to mergers, buyback, forfeitures should also be recorded within the 7 days of the event. Sir, where to maintain all these registers? Yet to registered office, no other option, registered office. But if your members will pass special resolution, then you can maintain them at any other place in the city, town in which registered office is situated. Or you can also maintain them at any other place in India in which at least 1/10 of the total members reside. At least 1/10 of the total members reside. On this point, 2 times question came. Practical question. See, my company's registered office is in Mumbai. Total number of members is 1100. 1100. And out of 1100, 120 members are in Kolkata. Now company wants to shift all its register of members to the Kolkata. Is it possible? With the special resolution, it is possible. Suppose 500 members are there in Spain, outside India. With the special resolution, movement to Spain, allowed or not allowed? Not allowed. Only in India allowed. Clear? Note point, ma. This is very, very, very important point, ma. This is very, very important point. Not tested so far, but chance is there. Chance is there. My company is a listed company. Which company? Listed company. Even in the material also that point is there. You tell me the page number of section 88, ma. Important, ma. Page number 82. Oh my god. Important point. That's why I'm telling you. See, ma. This B and C point, ma. B and C point. My company is a listed company. Which company? Listed company. And in my company, if promoters holding shares in my company, if they create pledge on the shares, suppose Reliance Industries Limited is there, Mr. Mukesh Dhirubhai Ambani is holding 40% of the shares. If we create any pledge on these shares, the same should be updated in the registers within 15 days of such event. Okay, na? B point, simple pledge. Whereas C point, this pledge was created in order to finance a joint venture, for example, in connection with a joint venture. Getting my point, everyone? So these 2 points were not tested so far, but very, very important. Promoters holding in listed company, again I'm telling you, only listed companies only. Only listed companies. Only listed company. Promoters of the listed company, if they create any charge or pledge on their holdings, it should be updated within 15 days of the event. Next one, reference of judicial regulatory orders affecting the shares. What is this point? Section 38 we remember, right? Personation of the shares. Or if any member become insolvent, authority passing an order, don't transfer these shares. You mention that point here against that member. Changes in member status must be updated. Like, member died, member became insolvent. Status should be updated. Rectification pursuant to legal orders shall be indicated in the register. Rectification means section 59. You remember, rectification of register of members. Any rectification you are doing it should be indicated separately in the register. Next one, ma, foreign register. In case my company is having members in outside India, can I open foreign register? Yes, but condition, important condition, AOA authorization and communication with ROC. Communication with ROC, form number is MGT3 and the time limit is 30 days of opening the foreign register. I need to communicate with ROC. Exactly duplicate register I should maintain at registered office. Remember carefully. Sorry, listen carefully. My company is having 1050 members, ma. How many? 1050. My company is having 1050 members. Out of 1050, 150 members are in USA. If I open foreign register, 900 members will be updated in my principal register. The register which I maintain in registered office, I call it as principal register. And 150 details will be referred in foreign register. Exact duplicate copy of foreign register should be opened in India. exact duplicate copy of foreign register should be maintained in India. And within 15 days of updation of foreign register, the same should be updated in the duplicate register. Getting my point? So once 150 names were kept aside, those 150 names should not be included in the principal register. So duplicate register at registered office shall be maintained. Entries must be transmitted within 15 days of updating the foreign register. And all these entries will be verified by company secretary or board authorized person. 88 over. In 88 you have to remember place of maintenance of the registers. With a special resolution you can maintain them at any place in India where 1/10 of the members reside. And updation of the register 7 days time limit. And promoters creating pledge over their securities 15 days time limit you have to remember. 3 time limits remember. Foreign register 30 days. Foreign register 30 days. Next one, declaration of beneficial ownership. Declaration of beneficial interest. Two owners are there, registered owners, beneficial owners. Suppose I am having shares, but I am not the beneficial owner. Have you heard about binamis? In in politics you will learn about binami characters. Suppose I'm a politician, so if I buy any property in my name, income tax department, CBCID, everyone will closely monitor. So that's why I'm asking my brother to buy the shares of the company. But money is funded by me. I'm the beneficial owner, my brother is the legal owner. So if a person is holding shares without beneficial interest, then these two people, legal owner, that means registered holder, and beneficial owner, both have to communicate with the company. Form numbers MGT4 by the registered holder, MGT5 is by the beneficial owner. Within how many days? Within 30 days. Company receiving this information, company should communicate with ROC within the next 30 days. Non-compliance punishment. Non-compliance punishment. For registered holder, beneficial owner, 50,000 plus 200 per day up to 5 lakhs. For company, 1,000 per day up to 5 lakhs. Officer in default, 1,000 per day up to 2 lakhs. But these are not applicable to the mutual funds, trust, venture capitalists, government companies, SEBI approved funds. Government company, simple logic. You tell me, government company, who is the beneficial owner? Public only. Who is the legal owner? President of India. Yes or no? Mutual funds also you take, mutual funds. We are depositing our savings with Aditya Birla mutual funds. And with that money, they are purchasing shares of the listed company. So they may be the legal owners, but who are the beneficial owners? It's us. Practically not possible. We filing these forms, mutual fund companies filing these forms, practically not possible. That's why exemption was granted. Getting my point? If the declaration is not filed, tomorrow I cannot claim benefits associated with the shares. That's what? No declaration, no benefits. 89 over ma. Remember, time limits 30, 30. That's it. Registered holder communicate with a company. Beneficial owner communicate with company. Company communicate with ROC. Over. 90. Investigation of beneficial owner. Significant beneficial owner. My 89 to 90, the difference is 89 normal beneficial owner. 90 significant beneficial owner. Sir, what is the difference, sir? Significant. Yes, correct. Significant. Significant means how much? 10%. Significant means how much? 10%. Getting my point? I'm the beneficial owner with a 10% interest. Then significant beneficial owner. Listen carefully. Individual alone with and others, directly or indirectly, having 10% of the class capital, having 10% of the voting rights, or having 10% of the dividend rights, then that fellow will be treated as significant beneficial owner. SBO should file Ben 1 with company. Company should file Ben 2 with ROC. What is the time limit? 30 days. 30 days. But this section was not there since since Companies Act 2013. When Companies Act got enacted, from the date this section is not there. It came in middle. So some transition period will be there. Like from the commencement of these rules, 90 days I am giving time period to the old SBOs. Maybe you are already an SBO. Right now rules came. To understand this, to comply this, extra time period is required. So old SBO, for you 90 days time period is there to file Ben 1 with company. Whereas new SBOs, 30 days time limit. Once rules got commenced, later you becoming SBO, within 30 days of becoming SBO, communicate with a company. Ma, here SBO means directly plus indirectly, ma. Suppose, directly I'm holding 49% capital, ma. No problem, I'm not an SBO. I'm the legal owner as well as beneficial owner. Suppose I'm holding 2% directly and 8% through my binamis. Now 2 plus 8, 10. I'll be significant beneficial owner. So company has to maintain register in Ben 3, inspection at least 2 hours, and inspection fees is 50 rupees. This chart, try to understand, I have mentioned time event dates also. First event, second event, third event, and fourth event, fifth event, sixth event, like this. First, company should identify the person who is having significant beneficial ownership. So company should give an intimation, and company should ask why we should not consider you as SBO, because your name is not there in records, but you are claiming 12% of the dividends. Total, if you are paying dividends of 12 crores, you alone taking 1.44 crore, 12% of the dividends you are taking. So we are having a doubt. You might be SBO, comply with the rules. Now that person should give answer within 30 days. Within 30 days, he should give answer. Sir, I'm not SBO. Either if he fails to answer or if he provides unsatisfactory information, immediately company should file an application with NCLT within next 15 days. After expiry of 30, within next 15 days, file an application with NCLT. Now NCLT will pass an order. Either restrict this person rights. With respect to the shares, he is claiming dividends, right? Those shares, rights associated with the shares, restrict them. Suspend voting and dividend rights. And this order will be passed within 60 days of filing application. Once this order was passed, this fellow can request NCLT to remove the restrictions within 1 year. Sir, you passed an order, right? Please remove the restrictions. Like that, within next 1 year, he can request NCLT. Suppose if there is no request, NCLT will order company to transfer all the shares to IEPF. Understood? Identification of SBO, this is nothing but that SBO should respond within 30 days. If not, next 15 days, go to NCLT. NCLT will take time of 60 days and order for suspension of the rights. If there is no response next 1 year, shares will be transferred to IEPF. That's it. But this section is not applicable to these entities. Remember, one attempt, they asked this direct question. SBO is not applicable to government entities, local authorities, government controlled bodies, mutual funds, REIT, investment trusts, other SEBI regulated entities, investment vehicles regulated by RBI, IRDA, and IEPF authority. Because IEPF authority, you take, shares are held by legal owner, IEPF authority. But who is the beneficial owner? Original owners. Default, punishment, give one-time reading. Next, last but one point, power to close registers. I told you cutoff date, right? Same point here also. See, when members are keep on changing, you tell me to whom I should pay dividends, to whom I should give voting rights, to whom I should give bonus shares, to whom I should offer right shares. When members keep on changing, who are eligible to take dividends, bonus shares, right shares? For that, I will close the registers. Closure of registers means freezing the registers. So this closure period will be at a time 30 days, maximum 30 days, or throughout the year it should not cross 45 days. One time if you close it, maximum closure will be 30 days. Sir, in a year 4 to 5 times I will close, sir. 4 into 30, no, maximum 45 days only. Okay, na? But before that, 7 days intimation is compulsory. 7 days before closure, you have to communicate with the members, so that members will take all necessary appropriate actions. Okay, na? So register of members, debenture holders, other security holders can be closed. How long it will be closed? At a time 30 days, maximum 30 days, and in a year 45 days. Notice shall be given at least 7 days before the closure. Manner of the closure, listed companies, manner of the notice. Listed companies or companies in the process of listing, do advertisement in 2 newspapers. Also publish it on the company website as well as government notified website. Clear? Without notice period, or if you are closing the registers for more than 30 days or more than 45 days, then for each day punishment will be 5,000 per day, maximum 1 lakh rupees. Can I proceed? 92, annual return. Contents, give one time reading. But here important is MGT 7A is applicable to OPC small company, whereas MGT 7 is applicable to all other companies. Form, annual return form. For OPC, MGT 7A, small companies, MGT 7A, whereas all other companies, MGT 7. Remember this point, ma. In May attempt, they may ask you, private limited company, turnover 20 crores, paid up share capital 2 crores. MGT 7A applicable, MGT 7 applicable, MGT 7A only. You know, limits are 4 crores and 40 crores only. For May attempt, 4 crores and 40 crores, you remember. September attempt onwards, 10 crores and 100 crores. Signed by director of the company as well as CS of the company. Sir, in my company there is no CS, sir. Then practicing company secretary will sign it. Sir, what is the difference between these two? Array, this fellow is our company employee. This fellow is independent professional. In case if you are not having CS, go outside, get out, bring one independent CS, ask him to sign the annual return. But for OPC, single director signing is enough. Not only OPC, for small company also, director signing it enough. No need of secretary signature. Time limit, ma. One attempt. This point came for 2 marks MCQ. What is the time limit for filing annual returns? 60 days of AGM. Sir, if AGM not conducted, then what is the due date of AGM? We calculated, right, out of 3 dates, whichever is earliest. So from that date onwards, within 60 days, file annual return and also specify the reasons why AGM was not conducted. And next one, annual return should be disclosed. You know, the website where annual return was uploaded or published, that link should be updated in the board report. MGT 8 is applicable to these two companies, listed companies and companies with paid up share capital 10 crores or more or turnover 50 crores or more. For these two companies, MGT 8 is applicable. What is MGT 8? Certification of annual return. Who will do this? Practicing CS will do this. In this entire section, non-compliance punishment, you know, company 10,000 plus 100 per day up to 2 lakhs. Officer in default 10,000 plus 100 per day up to 50,000. Practicing CS, if he is doing mistake, 2 lakh rupees for false certification. Okay, na? Entire section you have to remember 60 days and signing. Certification limits also remember. Listed companies and or companies with paid up share capital 10 crores or more or turnover 50 crores or more. 94, 95 is not there in our syllabus. So 94, this is the last section. Sorry, 95 is there. 93 is not there. 94. Place and inspection, place of keeping and inspection of the register's returns. Place, registered office, already you know. Or any place in India where 1/10 of the members reside, provided special resolution has been passed. This is okay, ma. How long I should preserve these registers? Members, there is no time limit, ma, permanent. Debenture holders, there is a time limit, 8 years from redemption date onwards. You have to maintain them 8 years, not from issue date, 8 years from redemption date. Foreign registers, same rules apply. Annual returns, you have to maintain from 8 years, 8 years from the date of filing. Penalties, as usual, 1,000 per day up to 1 lakh rupees. Inspection is allowed during business hours, minimum 2 hours. Same for minutes, ma. Same for minutes logic only. For members or debenture holders, no fees, no entry fees. Outsiders, entry fees is 50 rupees. If you want to take copies, you can take copies. As I already told you, hard copy, what is the rate? 10 rupees per page. And within 7 days of written request, company should dispatch them. Of course, personal information like PAN, email, Aadhaar number, address, these details will not be visible. These details, you know, it will be available in star marks. Understood? Simply to protect privacy. And the registers, indices, annual returns you maintained will act as an evidence under this Companies Act. Clear? Only annual return, you have to remember the time limits. MCQ possibility is there. With this, MGT and administration completed. Let's continue. Our next topic for marathon is declaration and payment of dividend. From this topic, you can expect one descriptive question, 5 marks, or 2 to 3 multiple choice questions, 4 to 6 marks. Small chapter, simple chapter. Dividend. It is derived from a word dividendum, a thing to be divided. So here dividend is all about distribution of company profits among the members. Clear? So before declaration of dividends, generally you will see sales, you will see all expenses and you will see net profit, right? Suppose sales 1000 crores, expenses 900 crores, net profit is 100 crores. Generally, company won't declare entire net profits in the form of dividends. They will transfer certain portion to general reserves and remaining portion only they will distribute it as dividends, right? Sir, how much portion to be transferred to general reserve? Is there any limit? The answer is no such limit. Under old Companies Act 1956, there are some limits regarding transfer of net profits to the general reserves. But under new Companies Act, it is up to the decision of Board of Directors. Board of Directors discretionary powers. 2 times this point was tested. Company declared dividends without transferring amounts to the general reserves. Is the action taken by the company valid or invalid? Answer is valid only. Clear? So board of directors will decide. So for expansion, how much profits to be retained? That's why we call them as retained earnings. And balance amount only they will distribute in the form of dividends. So in this chapter, we are not going to discuss how much is the percentage of dividends. We will discuss procedure for declaration and payment of dividends. Clear? So definition, dividend includes interim dividend. So what this definition teaches us? The answer is, what are all the provisions you are following for declaration of dividend and for payment of dividend? Same provisions are also applicable to interim dividend. Unless otherwise stated, final dividend includes interim dividend. Next one, types of dividends. We are having 2 types of dividends, interim, final. What is the difference, sir? Final dividend is recommended by, tell me, final dividend is recommended by Board of Directors, whereas declared by members at general meeting. Whereas interim dividend, recommendation, declaration, both is done by Board of Directors. It is a dividend declared between 2 AGMs. Interim dividend. It is a dividend declared at only at AGM. Final dividend. Understood? Everyone? Next one, sources. Sources for interim dividend. Sources for interim dividend. We are having 3 sources. 3 sources. First one, surplus in profit and loss account. This is nothing but current year profits. So surplus in profit and loss account means what? Current year profits. Profits of the current financial year. That is also same meaning only. Profits generated up to the quarter preceding the declaration date. I'm sorry. Listen carefully. We are having how many sources for interim dividend? 3 sources. Surplus in profit and loss account means opening balance. Opening balance in profit and loss account. That means carry forward profits. Getting my point? Reserve balance. Profits of the current financial year means this is current financial year profits. And profits generated up to the quarter preceding the declaration date. This is also current financial year profits. Depending on the context, the meaning of these terms will change. For example, standing on 31st March 26. Yes, this is a financial year closure date. 1st April 25 to 31st March 26 is a financial year closing date. I want to declare dividend on 30th April 26. 30th April 26. So definitely I'll use profits of financial year 25-26. Or I may use opening balance of financial year 25-26. So this is nothing but surplus in P&L account. Surplus in P&L account means as on 1st April 25, what is the opening balance? What is the opening balance? So here you can see S1 and S2, source S1 and source S2. Suppose I am declaring dividend exactly on 31st January 26. 31st January 26. Here also I will have 2 options. Option 1, source 1, that is surplus in profit and loss account. And next one is source 3, profits generated up to preceding quarter. So what is the preceding quarter closure date? 31st December 2026. Here complete financial year I can't tell because financial year not yet over. So here 1st April 25 to 31st December 25. These 3 quarters profit I can use for payment of interim dividend, declaration and payment of interim dividend. So in one context we got S1, S2, in another context we got S1 and S3. That is the meaning of these 3 points. So in case of losses also you can declare interim dividend, but that interim dividend rate should not exceed average of the previous 3 financial year dividend rates. Previous 3 financial year dividend rates, for example 8, 10, 12. Now what is the average? 10%. Interim dividend cannot exceed 10%. 3 to 4 times question came. Like preceding quarter company is in losses, but board of directors want to declare interim dividend. And the last 3 years dividend rates is 8 to 10 to 12. Board of directors decided to declare interim dividend at the rate of 20%. Is the action taken by directors valid or invalid? Invalid, because maximum 10% only allowed. Next one, the dividend once declared must be deposited in a separate bank account within how many days of declaration? 5 days. All the provisions applicable to final dividend are also equally applicable to interim dividend. That is already definition is telling the same point. Next one, final dividend. One point you need to remember. Suppose board of directors recommended 10% dividend rate. Members want to increase it to 15%. Can members increase final dividend rate? Answer is no. Members either they can reduce or they can maintain the rate mentioned by directors, but they can't increase the rate of dividends. Clear? So the rate recommended by the board cannot be increased by the members. If they pass any such resolution, that resolution valid or void? Void. Next one, comparison between interim dividend and final dividend. Just now I told you, one is at AGM, other one is between AGMs. One is declared by members, other one is recommended and declared by board of directors. Timing only, payment timing only different. Time of declaration, before preparation of FS, after preparation of FS. Revocation, interim dividend can be revoked, whereas final dividend once declared can't be revoked. It becomes debt, it becomes liability. Remember the point, dividend is never a liability, but once declared it becomes a liability. Provision in AOA, it is declared only when the articles specifically permit. Interim dividend requires AOA authorization, whereas final dividend doesn't require AOA authorization. You tell me one company is prohibited from declaration and payment of dividend. Which company? Section 8 company. Entire Companies Act, 2 companies are prohibited from payment of dividends. One is Section 8 company, other one is Section 73 non-compliance company. What is Section 73? Deposits. You accepted deposits and you failed to repay those deposits. Now, until the default continues, you are prohibited from declaring and payment of dividends. You are prohibited from declaration and payment of dividends. Remember, only 2 companies are prohibited from payment of dividends. One is Section 8 company, other one is Section 73 non-compliance company. Next one, preference shares, equity shares. Give one time reading, not that much important. But one difference is there. Preference dividend is generally prefixed, predetermined, and it will be fixed throughout the tenure of preference shares. Whereas equity dividend is not predetermined. It is variable in nature. In costing we had 2 costs, right? Variable cost, fixed cost. Preference dividend is like fixed, whereas equity dividend is variable. One time it may be 0, one time it may be some 5%, 10%, 20%. So variable in nature, equity dividend. And which one is compulsory? Preference dividend. If there are profits, company is not exempted from payment of preference dividends. Company must pay preference dividends if there are profits. But equity is not like that. It is up to the discretionary powers of directors. Next one, declaration and payment of dividend. First one is source. Tell me how many sources we are having? 4 sources. How many sources? 4 sources. First one, current year profits, current financial year profits. Second one, undistributed accumulated profits. Third one, combination of A and B. And fourth one, money provided by CG and SG in pursuance of guarantee given by the government. Suppose you see Vodafone Idea company. It is a loss making company actually. There are no profits at all and company need money. Company is coming for public offer. So company is asking, come and subscribe my shares. Members are telling, public is telling, you are in losses. Even next year also you will be in losses. From where you pay dividends? Now government is giving assurance, don't worry, even if company is in losses, we will declare, company will declare 10% dividends every year. For that we will arrange funds. Now whatever guarantee is given by CG or SG, that money you can utilize for payment of dividends. So total how many? 4. Current year profits, accumulated undistributed profits, combination, and last one is money provided by CG or SG in pursuance of guarantee. But in AB points, you have to remember one adjustment. There is an adjustment. That adjustment is depreciation. So am I talking about cash profits or am I talking about book profits or book profits? Because cash profits will not subtract, there will be no subtraction of depreciation in cash profits. So here you need to adjust depreciation. Sir, the depreciation as per our Visha, no, the depreciation should be as per Schedule 2. As per Schedule 2, depreciation rate is 25%. Now you have to charge 25% depreciation. You can't reduce it to increase your dividends. Getting my point? So tell me sources, current year profits. Current year profits after adjusting depreciation, accumulated profits after adjusting depreciation, combination of above, and last one is money provided by CG or SG in pursuance of guarantee given by the government. And if you are using profits of the current year where previous years you are having losses, all the accumulated losses should be set off, like income tax calculation only. In income tax calculation, carry forward losses will be first set off. Here also, previous losses and depreciation must be set off against current year profits before declaring dividends. Capital profits, that means on sale of properties, capital gains cannot be used for dividends as they are not considered as business distributable profits. Tell me, dividend, is it a charge to P&L or appropriation to P&L? Charge or appropriation? Appropriation. Is it an expenditure, deductible expenditure? No, that is not a deductible expenditure. Because of company, government is getting benefited, Taxation point of view, small point, let me add here. In case of partnership, share of profits is exempted in partners. In partners individual returns, share of profit is exempted. Why? Partnership firm already paid tax. But coming to the company, on net profit they will pay tax. After receiving depreciation, you will pay tax. That means same profit getting taxed twice. If you ask government, what is this? Separate legal entity. Yes or no? They had a logic. Company earned profit, company is paying tax. You earned dividends, you pay the tax. Whereas partnership firm, there is no separate legal entity. Firm already paid tax. So in your hand, share of profit is exempted. Nice logic. But company main biggest disadvantage is dividend distribution tax only. Okay, forget about it. Next one, discretion on transfer to reserves. Tell me, transfer to reserves mandatory or optional? Optional. Transfer of profits to reserves is at the discretion of the company. Company may transfer any portion of its profits to the reserves or may choose not to transfer any amount at all. Next one, free reserves. Accumulated profits point is there, right? Accumulated undistributed profits point is there, right? So in these free reserves, what to be included, what are excluded is the point. Exclusions is very important. These two are excluded. Which two? Revaluation reserves, fair value adjustments. Revaluation reserve. 20 years back when I purchased this land and building, for example, 20 years back, the value is just 10 lakhs. But today, due to increase in population, 10 lakhs worth of property went to 2 crores. I decided to revalue this property. So yes, asset balance increased. Liability side, reserve balance will increase. Can I use this amount for distribution of dividends? No, because this is not actually realized in cash. Getting my point? So revaluation reserves excluded. They are not part of free reserves. Next one, fair value adjustments. Fair value adjustments. Branch accounts, if you remember. Integral, non-integral, foreign branches is there, right? Suppose, I gave a service to a foreign company. At the time of service, our dealing is $1 million. $1 million. At the time of invoice, 1 million, dollar price is 90. So total 9 crores I'm going to get. In my books of accounts, I wrote an entry like this. Debtor account debit 9 crores to sales account 9 crores. Credit period 3 months. But meanwhile, 31st March came. As on 31st March, current assets should be valued at closing price. Suppose as on 31st March, dollar value went to 95 rupees. So I will increase my debtor balance, right? Previously debtor balance is 9 crores. Now I will increase it to 9.5 crore. That 50 lakhs I'll credit to fair value adjustments, FCTR, foreign currency transaction reserves. So can I use that amount for distribution of dividends? No, because who knows, at the time of collection, by the time of collection, if dollar value come to 85, you will be at a loss of 50 lakhs. So notional gains, revaluation reserves, fair value adjustments, all these are allowed or not allowed? Not allowed. That means from these sources you can't declare, you can't distribute, you can't pay dividends. Is it clear, everyone? So free reserves excludes how many amounts? Two amounts: revaluation reserves and fair value adjustments. Branch accounts, best example. Next one, need for providing depreciation. You know, the depreciation should be calculated as per schedule 2. Reasons you can see here: wear and tear, effects of time, improvements in technology. If you don't provide depreciation, what would be the consequences? Maybe tested. If you don't provide depreciation, what happens? Asset will be overstated, profits will be overstated. Generally these two are the reasons. You know, if closing stock valuation, if you give high valuation, what happens? Asset side value will be overstated, profit side profits will be overstated. That's it. Same point here also. Next one, yeah, this is important concept: declaration of dividends in case of inadequacy or absence of the profits. Current financial year, company is in loss, but company still want to declare dividend. Why? To maintain its reputation, to maintain its goodwill. Suppose, you know, company was incorporated 1960. Past 65 years they are declaring dividends. Current year some loss is there. To maintain brand, to maintain that goodwill, company decided to declare dividends. In such case, for them, what is the source of money for declaration of dividends? As I told you, total how many sources? 4. Current year, past years, and combination, and money provided by CG or SJ. So here current year there is a loss, so obviously previous year. To declare dividends out of accumulated previous year profits, 4 conditions to be satisfied. Condition number 1, what is that condition number 1? Rate of dividend. Rate of dividend, it can be average of 3 years dividends. Which 3 years? 3 preceding financial years. Clear? In my CA final, I think I still remember, suppose, you know, we are in which financial year? 26-27. Imagine 25-26, 24-25, 23-24, 22-23, 21-22, 8, 10, 12, 14, 16. Now calculate me average rate of dividend. Average rate of dividend, you know, what is the maximum rate of dividend I can recommend? Calculate and tell me. 14, right? But majority of the students, they took first 3. Getting my point? Sometimes, you know, they will ask question in a reverse way, like first they will show 25-26, next 24-25, 23-24, like that they will give. Now last 3 years you should not take, you have to take first 3 years. Getting my point? The point is latest 3 immediately preceding financial years. So immediately 3 preceding financial year means 25-26, 24-25, 23-24. So based on these 3, what is the maximum rate of dividend I can recommend? I can declare 14%. This is condition number 1. This is about rate ma. On rate only one condition is there, but money, funds, I need to gather funds, right? For that, condition 2 is maximum I can withdraw 1/10 of the paid up share capital plus free reserves. After withdrawal, C3, this I need to check post withdrawal. Post withdrawal, the money in free reserves should be greater than or equal to 15% of paid up share capital. Clear? Out of these 3, out of these 2, whichever is lower you have to take. Getting it? Next, condition number 4 is C2 or C3, whichever is less, minus current year losses. Minus current year losses. Now C1 or C4, whichever is lower is the answer. to understand this, let's have a problem. Paid up share capital 100 crores. Free reserves 60 crores. Current year loss 10 crores. Average rate of dividend, I'll give straight away. Average rate of dividend is some 20%. Okay. So condition 1, already they gave answer. Condition 1, what is the maximum rate of dividend I can declare? 20. Condition 2, 1/10 of paid up share capital 100 plus free reserves 60. 1/10 of 160 means 16. Condition number 3, post withdrawal. Post withdrawal free reserves should be greater than or equal to 15% of paid up share capital, right? So I don't know how much to withdraw. As per our mathematics, unknown figure we will take it as yes or no. So we don't know how much to withdraw, so unknown figure is x. So free reserves is 60 crores I am having, minus x should be equal to 15% of paid up share capital, that is 100 crores. 60 crores minus 15% of 100, if it come this side, 15 is equal to x. X will be 45 crores. I can withdraw up to 45. But as per condition 2, I can withdraw how much? 16 only. 16 or 45, whichever is less means 16 crores. And what is my current year loss? 10 crores. So 16 crores minus 10 crores, I can withdraw only 6 crores. So condition 4, 6 crores. Whereas condition 1, 20%. 20% of 100 crores means 20 crores. Rate okay, 20% okay. But how much source I am having? 6 crores only I am having. 20% or 6 crores, whichever is less means 6 crores only. If I convert this 6 crores into percentage, 6 divided by 100 crores, my paid up share capital is 100, no? 6%. So 6 or 20, whichever is lower means 6%. Simple 4 conditions. So in the material also you can see the same. Average rate of dividend, RD1, RD2, RD3 by 3. But this condition will not apply if company is not paying dividend last 3 years. If company is not paying any dividend last 3 years, this condition will not apply. Condition 2, total amount from accumulated profits. How much? 10% of paid up share capital and free reserves. Condition 3, set off the losses first. I kept this 3 as 4. I kept this 3 as 4 and this 4 as 3. In an order I did it. After withdrawal, balance of reserves shall not fall below 15% of the paid up share capital as per the latest audited financial statements. And these rules are not applicable to 100% government company. Remember this important point. 100% government company means, you tell me, 100% of the capital is with whom? Government only. Government will make rules, but government will not apply these rules. Okay? Is it clear? So 100% government company. Suppose if 1% is held by public, then these rules are applicable. If 100% of capital is held by government, then these rules are not applicable. Directly they can take profits whenever they want. Next one, deposit and payment of dividends. Important timelines you need to remember. Important timelines. This I call it as day 0. Day 0 means declaration of dividend. One time I'll give this chart. Section 124, 127 also will be completed. Declaration of dividend. Day 0. What is this day 0? Declaration of dividend. Within 5 days. That means by day 5, separate bank account should be opened and dividend amount should be transferred to separate bank account. This is for transfer to separate bank account. Next one, day 30. Day 30. You tell me 30 plus 5 or 30 including 5? 30 including 5. That means extra how many days you are having? 25. By day 30, payment to members. Payment to members. Now here I'll make it as day 0. Day 30 I'll make it as 0. From here onwards, day 7. Day 7. Transfer unpaid dividends. Unpaid dividends to unpaid dividend account. Day 30 I'll treat it as day 0. Getting my point, everyone? Now from here onwards, 90 days time limit is there. From where? From transfer to unpaid dividend account. From transfer to unpaid dividend account, you will be having 90 days time limit to prepare a statement containing the particulars of members. Particulars of members whose dividend remains unpaid. Whose dividend remain unpaid. And from here onwards, day 7 onwards, why 7? 7 years completed. 7 years completed. Then transfer all these dividends to IEPF account. IEPF account. Now in this entire timeline, 127 comes here. Punishment for non-payment of declared dividend. 127 comes here. Day 30, 127 comes here. And within 7 days, if I don't transfer unpaid dividends, section 124 will come. Section 124 will come. These are sections. And this 5 days limit, here section 123 will come. No need to remember sections, but punishments, simply interest you need to add. That interest section numbers are different. 127 talks about non-payment to the members. 124 talks about non-transfer of amounts to the unpaid dividend accounts. 125 simple section IEPF. 126 another simple section, only 2 lines section only. Major, the soul of this dividend chapter is utilization of accumulated profits. That 4 conditions. And second important point is this time limits only. Once you are done with these 2 points, 127 exceptions important point, and remaining all are blank only. Not that much useful, not that much, there is no difficulty in remembering those points. Can I continue? So day 0 is declaration of dividend. Within how many days I need to transfer to separate bank account? 5 days. And students are confused between these 2 limits. Sir, what is the difference between day 5 and day 30? See, day 5, I'll open a separate bank account for distribution of dividends. That account is also mine account only, my account only, my new account. From my company bank account, funds will be transferred to there. From that account onwards, payments will be done to the members. Ultimate payment to the members will happen within 30 days. But before that, a provision transferring that amount to the separate bank account should be done within 5 days. Sir, within 5 days, I'll directly make payment to the members only, sir. Okay, good only, no problem. Getting my point? Now let's see the notes. So deposit in a separate bank account. Tell me, what is the time limit? 5 days of declaration. Of course, this rule is not applicable to 100% government company. You see the point, entire share capital. That means what? 100% government company, this rule is not applicable. Why for them waiting for 5 days? Already government is hungry only. Let them take money only. Let them take money. Payment of dividends to the shareholders. You can make payment to the registered shareholder or to their banker. Our lawmaker is outdated person, ma. So according to him, dividends can be paid through dividend warrants also, dividend coupons also. But right now, dividend is getting paid through NEFT RTGS channels. Dividend can be claimed by the purchaser until name is registered. Section 126. There I will connect this point. Don't worry. If shareholder authorizes bank, payment to the bank is deemed to be payment to the shareholder. Yes, I'm having account with SBI. If company paying dividend to SBI, that means making payment to me only. Dividend on partly paid shares. Section 51. On this one time 2 marks point was 2 marks question came. You see, face value 10 rupee, paid up value 10 rupee. This is class A shares. Class B equity shares, face value 10 rupee, paid up value 8 rupees. Now company declared 10% dividends, ma. Important interesting point. Tell me, listen to me. 10% is the rate of dividend. Now this 10% I need to apply on face value or paid up value. Face value or paid up value. If articles is silent, 10% should be applied on face value. If company is authorized by articles, then 10% will be applied on paid up value. Company can pay dividend proportional to the amount paid up on shares if authorized by article section 51. If AOA is silent, 10% will be applied on face value only. Is it clear? You tell me which one is beneficial, face value beneficial or paid up value beneficial from company point of view. Company point of view. Company point of view, paid up value. But members point of view, face value. So dividends payable in cash, not in kind. In the absence of this point, what happens, Reliance Industries Limited, instead of paying dividend, they will give free data. Yes or no? This year, your dividend is 100 rupees. Enjoy 100 GB data. Now you tell me, is it payment of dividend or sales promotion? Sales promotion only. That's why dividends in kind not allowed. Dividend should be paid in cash. Cash means not physical cash. Cash means through banking channel only. But in kind not allowed. Dividends in cash can be paid via check, warrant, electronic mode. That means not physical cash. That is via banking channel. Dividends shall be paid within how many days of declaration? 30 days. If dividends is paid via warrants, they must be posted to the registered address within the prescribed time. For your understanding purpose, any account payee checks. Right now, dividend warrants concept is outdated. For your knowledge purpose, checks. Imagine account payee checks. Next one, exception. Capitalization of company profits. This is nothing but bonus issue. Bonus issue. Can a company do bonus issue? Yes. Issue of bonus shares is allowed. There we are not distributing profits, we are capitalizing the profits. Which profits we will capitalize? Retained profits we will capitalize. So that case, sir, dividends we are paying in shares, no sir. That is entirely a different concept. Section 63 I'll discuss with you. Applicability Nidhi companies. Nidhi company will pay dividends by creating members account if not claimed within 30 days from the declaration. Sima, Nidhi company is like a bank. It's a mini bank only for the members. Getting my point? So if you are a member of Nidhi company means you are account holder of Nidhi. If you are not claiming dividend amounts, I'll directly credit you your account in my bank. In my bank means which bank? Nidhi bank only. So they are transfer to unpaid dividend account, transfer to IEPF, those rules will not apply. Nidhi account, if you are not taking money from me, I'll directly deposit in your bank account which you are maintaining with my company, Nidhi bank account. So remember this point, so far not tested. So here transfer to unpaid dividends will not come. I'll wait for 30 days. If you're not coming, directly I'll deposit in your account which you are maintaining with me. Next one, prohibition on declaration of dividends. I told you 2 companies are prohibited from declaration of dividends. Which 2 companies? Section 8 companies, non-compliance of section 73, 74. Next one, unpaid dividend account. So tell me, within how many days I should transfer amount to unpaid dividend account? 7 days. 7 days from which date you tell me? 7 days I calculated from which date? Day 30. That means after expiry of 30 days from the date of declaration, within 7 days transfer amount to unpaid dividend account. Remember 7 from the expiry of 30. So if you ask me, this is literally D37. D37. Next one, if company fails to transfer amounts to unpaid dividend account, then company has to add interest. How much interest? 12% per annum interest. Suppose day 10 they are transferring. How many days delay happened? 3 days. Into 3 by 360, 3 by 365 into 12%. That interest they need to add. Of course, that interest will be used, that interest will be available to the members in proportionate to the unpaid amounts. Ratio, simply. 2 members dividends unpaid, one person 100 rupees, another person 200 rupees. Interest will be divided in 1:2 ratio. That's it. Any person entitled to money in unpaid dividend account can apply to the company for payment of unpaid dividend. And within 90 days of transferring to unpaid dividend account, company must prepare a statement in one attempt. MCQ, 2 marks MCQ. Options will be like this. First option is containing name of the entitled members. Second option, it is containing name of the entitled members and last known address. Third option, it is having name of the entitled members, last known address, amount of unpaid dividend. Now which option you need to select? Third option. Getting my point? Or in one attempt question was asked like this. Statement was prepared. Company prepared a statement containing the particulars of names of the entitled members and last known address. But in that statement, this is missing, this is missing. Now whether company complied with the provisions or company defaulted? Company complied or default? Default. In statement, 3 ingredients should be there. Entitled member names, last known addresses, and amount of unpaid dividend. Each word is also important. The statement must be placed on company website and other website approved by the central government. Next one, transfer of unpaid dividend to IEPF. You tell me, transfer to unpaid dividend account, what is the time limit? 7 days, or else interest 12% per annum. Once you transfer, prepare a statement containing 3 particulars. Now wait for 7 years. Up to 7 years, if the person is not claiming the dividends, transfer all the dividends, also shares. Transfer all the dividends and shares to IEPF account. Why? Because if that person is not there for 7 years, means maybe that person is not there. Getting my point? So any management person comes to know about this point, what that fellow will do? He will force the transfer deed and he will try to take the shares. But in Indian Contract Act, as per our law, no one should become rich at the cost of others. That point is there. Unjust enrichment. No one should become rich at the cost of others. But to this rule, one exception is there. Government. Yes or no? Array, you are earning 1 crore profit, for example. In that 1 crore, 30% you have to pay to whom? Earning 1 crore is your efforts, your luck. But 30% share who is taking? That means unjust enrichment is not applicable to. Sir, are you scolding government? No, no, I'm not scolding government, because government is for the public, of the public, by the public, to the public, etc., etc. So unjust enrichment, you should not be benefited at the cost of others. That amount should be credited to government account only. So if a person is not claiming dividends for 7 consecutive years, shares plus dividends shall be transferred to IEPF. Any money transferred to unpaid dividend accounts remains unpaid or unclaimed for 7 years from the date of such transfer shall be transferred along with interest accrued to the IEPF. You tell me, unpaid dividend account means it's a ledger account which we maintain, but officially it is a bank account. If you are keeping some balance in bank account, you tell me bank will pay interest or not? Yes. So unpaid dividends plus interest, both the amounts shall be credited to IEPF. Shares with unpaid or unclaimed, how many years? You tell me 7 consecutive. Here one important point. Suppose Mr. X is a shareholder. First year he didn't claim dividend. Second year he didn't claim the dividend. Third year also unclaimed. Fourth year unclaimed. Fifth year he claimed the dividend. Fifth year he claimed dividend. And next year he didn't claim the dividends. Now for transfer of shares, the next year, is it 1 or 6? 1, because 7 consecutive years. Any year if he is claiming dividends, the chain is broken. So next year if he didn't claim the amount, it is not next number, it is 1. So any year if he claim dividend, again you have to count 7 years for transferring the shares. If any dividend is paid or claimed during the 7 years, the shares shall not be transferred to IEPF. Note point. And company shall file a statement with IEPF authority detailing such transfers. Authority will issue a receipt as evidence of the transfer. Sir, why company should file a statement? Even after transferring to IEPF, if a member wants to claim those dividends, want to claim those shares, he can file an application with IEPF authority. IEPF authority will verify this statement. If your name is there in the statement, IEPF will refund those amounts to the eligible member. Claimant of the shares transferred to IEPF can reclaim the shares by following the prescribed procedure. And punishment for contravention, company, how much donation, how much? 1 lakh rupees plus 500 per day and maximum 10 lakh rupees. Equation. Company non-compliance 1 lakh, fixed penalty. And in case the delay is continuing, for each continued day 500 rupees per day, maximum 10 lakh rupees. And officer in default, the punishment is 25,000 plus 100 per day, maximum 2 lakhs. So 124 also completed. In entire 124, we had 3 time limits: 7 days, 90 days, 7 years. And one interest rate we are having 12%. Can I proceed? Next one, 7 days, 90 days, 7 years, 12%. IEPF, just give one time reading Credits to IEPF. Credits to IEPF, but common thing is 7 years, 7 years, 7 years. Different types of securities, application money, mature deposits, mature debentures. But the highlight is mature deposits, they told excluding banking companies. Why? Because in banking company, automatic renewal concept is there. Whereas in normal companies, other than banking companies, renewal of deposits is not there without application. So if mature deposits, if a person is not claiming deposits, if it is pending for 7 years, those deposits interest thereon shall be transferred to IEPF account after 7 years. Sale proceeds from fractional shares. So that comes from bonus or mergers or amalgamation. You all know in amalgamation purchase consideration calculation, some percentage, some ratio will be given into 2/3 or into 3/2. So if any fraction comes, you can sell it that fraction. That amount, sale proceeds from fractional shares, shall be transferred to IEPF accounts. So just to give one time reading, straight away they won't ask you direct theory question, but if they ask, you need to write the points. That's why just give one time reading. Credits and debits. Debits important. Refund of the above amounts. Awareness and protection. For that you can conduct programs. You can sponsor those programs. Suppose in Chennai, investor education and protection awareness programs I want to conduct. I can get funds from this fund, IEPF, Investor Education and Protection Fund. This one in prospectus I'll discuss with you. Prospectus, I mean already discussed in the prospectus. Okay, section 38 will come. Next one, reimbursement of legal expenses. This is also section 37, 38 covered there. Other incidental purposes as per the rules under IEPF rules 2016. Clear? So total 5 debits are there. Refund of above amounts as per the application filed by the eligible person. Next one, program expenses. Next one, distribution of amounts among the suffered investors, and reimbursement of legal expenses incurred by the members for making for filing suits. IEPF authority, you will see these three people. First one, chairman. Who is the chairperson of IEPF authority? Secretary of MCA. Secretary of MCA automatically becomes chairperson of IEPF authority, and other members not exceeding 7, and CEO. Total max to max you will see 9 people. One is chairperson, 7 other members, and CEO. Next one, in each and every city, in each and every state, if you want to establish IEPF branch units like that, so for establishing such units, appointment of the officers, employees, central government will provide necessary resources like allotment of the land, allotment of land, and C&AG for maintenance of books of accounts, audit of accounts, everything IEPF authority will consult C&AG. C&AG will prepare an annual report. Financial statements are audited by C&AG. So next one, annual report, audit report will be prepared by C&AG. So financial statements, audit report, everything will be placed before Parliament every year, both the houses of the Parliament. Clear? Next one, section 126, small section. In accounts, you might have heard about a concept called ex-dividend and cum dividend. Ex-dividend means excluding dividend. Cum dividend means cumulative of the dividend. See, for example, in dividends, we will have a record date like 15th September 2026. What is the meaning of this record date? As on 15th September 2026, whose name appears in register of members, for example A, B, C, D, E, only these people will get dividends. We made announcement 1 week before that only. Exactly 3 days before record date, B transferred shares to B transferred shares to P. Even company also received this information. Company received the details about this transfer as on 12th September 26. Now once this transfer got registered, in the place of B, whose name will come? P, and dividends will be paid to A, P, C, D, E. Understood? But there are some information is missing, or some clarification had to be taken. That means this registration of transfer, is it going on or is it pending? Pending. So as on record date, who is the member? B name only appeared in the register, but company is having evidence B already transferred shares to P. Now company is in a dilemma, to whom we need to pay dividends. As per register of members, B is entitled to receive dividends, but we are having transfer documents. According to transfer documents, P is the transferee, so to whom we should pay the dividends? There is a dilemma, right? So don't pay any dividend, directly transfer amount to unpaid dividend account. Once transfer gets registered, then pay dividends to P. Getting my point? Sir, meanwhile, company announced bonus shares, company announced right shares. What about this concept, sir? All these benefits, all these privileges will also be held, will also be kept in abeyance. Abeyance means hold. Let me read that small section. See, if a share transfer has been delivered for registration but not registered, the company shall transfer the dividend related to those shares to unpaid dividend account unless registered holder authorizes company. Suppose B is telling to the company, sir, already the transaction happened at cumulative of dividend, cum dividend basis only. I received amount from that fellow, don't worry, you pay dividends to that person. Like that, if registered shareholder is authorizing company, then company can pay dividends to transferee P, or else amount will be kept in abeyance, nothing but hold. Company shall keep any right shares or bonus shares on hold for those shares also. Simply this concept arises only when on record date company receives some transfer documents and registration of transfer is pending. Only in that case section 126 is applicable. Clear everyone? And coming to the final section, section 127. Second important concept of this chapter. First important concept is 4 conditions for declaration of dividend out of accumulated profits. Second important concept is exemptions from the punishment. In that biggest important point is B only. I'll explain, just listen. So punishment for failure to distribute dividends. So tell me, what is the time limit for payment of dividends? 30 days. If company fails to pay dividend within 30 days, then punishment to the company is you add 18% interest. In the entire dividend chapter only 2 rates are there, 12% to 18%. 12% is for unpaid dividends. Don't get confused. Unpaid dividends, how much? 12%. In case of delay in payment of dividends, 18%. 18% will be paid to whom? 18% will be paid to the members. This is punishment to the company. Then what is the punishment to the directors? Directors may face imprisonment up to 2 years and fine of 1000 per day for each default continues. Clear? Punishment, directors up to 2 years imprisonment and fine 1000 per day during such default continues. And for company, there is no extra fine. Company has to pay interest to the members. How much rate of interest? 18% per annum. Next one, exemptions from the punishment. Exemptions means what? In the below cases, even though you are not paying dividends, even though you are not paying the dividends, non-payment, will you get punishment or exempted? Exempted. Sir, what are those 5 cases? First one, dividend could not be paid due to operation of law. Dividend could not be paid due to operation of law. Member became insolvent. Court ordered company not to make any payments to that insolvent member. Now is it company fault or operation of law? Operation of law. Shareholder directions for dividend payment cannot be complied with and the company has informed the shareholder. Particular shareholder gave account details. Sir, this is my account number. This is my account IFSC code. You transfer amount to this account. Shareholder told. Shareholder name, for example, K Pooja. K Pooja. Shareholder, as per register of members also, her name is K Pooja. But recently she got married to some person. As a result, surname has been changed. She updated bank account, in her bank account, she updated surname, but she forgot to discuss the same with company. So as per company records, what is her name? K Pooja. Now company sent an instruction to the banker, make payment to K Pooja, so and so account number, everything, company did it. But mismatch of name, what happened? Payment was not honored. Payment was dishonored. That means shareholder gave a direction, can be completed, cannot be completed, cannot be completed. Now will company get exemption? No. You have to check whether company informed to the shareholder or not. 3 to 4 times question came on this point. In the 3 to 4 cases, company failed to communicate with shareholder. Now will company get punishment or exemption? Answer is punishment. Here 2 conditions are there. First one, non-compliance of unable to comply shareholder direction. Same has been informed to the shareholder. Any one event is missing, company will get punishment. Company will not get exemption. Getting my point? Next one, there is a dispute regarding ownership. Suppose father is a member of the company, father died, he is having 2 sons, S1, S2. They both are fighting for shares. So there is a dispute of ownership. In case of dispute of ownership also, keep the dividends aside. No need to make any payment. Dividend has been adjusted against lawful use. Suppose shareholder didn't pay call amount, company adjusted dividend against call amount. Is that adjustment valid or invalid? Valid only. Next one, default caused by external factors like banking failure, postal strikes, lockdowns. If you are using, Yono SBI or Google Pay, Phone Pay, majority times, server down message will come. So is this a problem from company side or banking side? Banking side. Or suppose, we are ready to pay dividends because of war, pandemic, lockdown is there, postal strike is also there, unable to pay dividend. Is it company fault or other than company's default or other? So company will get exemption. Getting my point? Next one, Nidhi company. This is also important point. If dividend payable is 100 or less, material amount or immaterial amount? Immaterial amount. The company can announce the dividend in local language in a local newspaper and on the notice board for at least 3 months. No need to send checks for 100 rupees also. You just make an announcement in newspaper and publish it on the website. Publish it on the notice board. So member going through the notice board, he will come and he will collect the amount. That's it. But this time period of 3 months is very important. You need to remember at least 3 months. They may ask you at least 2 months, true or false. Answer is false. Are you getting my point? Everyone? So exemptions from the punishment, 5 cases, operation of law, dispute of ownership, unable to comply shareholder direction, same has been informed. Same has been communicated. And next one, external factors, adjustment against lawful use. So with this, dividends topic over.